Hey guys, welcome to the Tuesday edition of Splash.
Tuesday, all
jumped
day.
ahead. And I keep saying Splash into Futures. I'm like programmed like a dog. I shouldn't do that. Forex Focus.
It
How
can
are
be
you?
Splash into
Yeah,
Futures.
I'm going to let you do it from now on.
Throwback episode of Splash into Future. Not so many futures.
Not so many
Sorry.
futures. Not so many futures at this time. Don't want to dangle
Sure.
anything out in the future, but lots of cool things coming down the pipe. How are you today?
I'm pretty good. It's raining. Woke up a little late.
Is it raining?
I had to Uber in. Yeah.
That's not good.
Which was fine, but
Well,
pretty solid
you
Tuesday.
got soaked last time, so.
Yeah. I try to mix the good with the bad. When I see the rain, I'm like, it might not be so much of a fun walk in, but maybe the rest of the day
What do you
will
need
be
for the
really
bike
good.
to come out? What temperature do
For
you
the
need?
bike?
Yeah.
No, first of all, no rain. Bike plus rain is an absolute no-go for me. But probably like 50 degrees.
Okay.
I would say 50 degrees. Finn, our friend
he's hardcore.
and colleague, he bikes every day of the year, which I don't understand how that even works when it's snow and 0 degrees sometimes. But
He's a trooper.
he's a harder man than me, I guess. But what's going on with you?
Nothing. I'm
You
just
are-
admiring the whole. We had Blue Supreme yesterday,
God.
Black Supreme today.
I'm wearing my best digs for bigwigs that
Oh
are in
yeah,
town.
we've got. Guess the part of the board of IG is in. So
And Big Cliff.
hands up early. I like the way you roll the dice. Sure, I'm sure he's going to be thrilled with that. But
He's a really, really funny guy.
He actually is.
The meeting yesterday, he was... I don't know if maybe, you know how sometimes you get in that mode of like he's traveled here from London. After a day of traveling, you get past that period of like, I'm no longer tired. I'm like a different person at this point. Like almost like a Jordan flu game kind of situation. And yeah, yesterday afternoon, God bless him, it's like 4 p.m. He must have been, between traveling and being here all day,
Right.
a long 24 hours.
Which is
and
like
he was
2 hours past my bedtime in UK time.
on
yes.
fire
Yeah.
with the jokes and the, all the experience and everything else. It was a great talk.
Yeah, it was.
Appreciated it. And then we did the GOAT Awards,
Yeah.
the Tasty Goats, another run.
And our boy Glenn won.
Glenn, yes, from North Carolina, big winner of the GOAT Awards. So good for him.
Yeah. Well deserved.
And then we got just a very normal start to March. Very normal.
How about it? I mean, it's so funny if you were given the secret card that said, hey, this time he's actually going to put the tariffs
Sure.
on
Yeah.
and he will leave them alone. You would be like, okay, whose car can I sell to sell more Aussie and sell more Canada? And that wouldn't have worked out so well. So we're seeing, again, tariffs get put in place on Aussie, on Canada. China, I can't even keep track anymore. China, another 10% on something. Obviously, countries are now responding with tariffs in kind. But rather than seeing, it was interesting because I think the first time we went through this, I had showed you a JP Morgan research piece that talked about dollar Canada's at 144. At that time, it was 142. That if tariffs actually get put on, they see dollar Canada
What was it,
being
like 155 or
155 to 160
Yeah.
quickly. Not so much the case after the 148 highs post that one day. So the market, in its classic fashion, doing exactly what you would expect it not to do. So the tariffs are in place. U.S. equities taking a drubbing yesterday, another
Yeah.
one this morning.
Yeah.
It's already starting out. And it really feels like, it always feels like this in down movements in equities, but people aren't quite sure where to go. Gold is well above 2,900. 29.30, I think, last time I took a peek.
I mean,
this
they
morning.
tried to take that market down.
Oh, they pounded the heck out of it a
And
month end
it's-
on Thursday and
yeah.
Friday. They knocked $130 out of it.
But put another 50, 60 into it yesterday.
But we're 29.30 right now, And at 635, I mean, we're up $30 in gold after the $60 they tagged on yesterday.
Jeez.
You would think, wow, that's a pretty big rally to sell. Personally, I've got no interest in stepping in front of that train right now. But digital assets suffering a little bit. And, you know, a mixed bag, and things like yen and Swiss were stronger all last night. Canada lower, Aussie lower, Kiwi lower, Euro was kind of the anomaly. Now everything, the dollar is being sold across the board. We're going to go through everything here, and we're, you know, well above. We talked about, well, what happens when we finally clear 105? What happens when we clear 150 to the downside in dollar yen? Well, we're there.
Yeah.
And are we going to start to see, these are new levels we haven't seen in a long time, will we start to see that velocity that can be endemic in FX when new levels are hit?
Well, so it's interesting, all the asset classes that you just referenced are seeing pretty extreme, I would say, aside from the 2 days in gold last week, pretty one-sided moves. For equities the last couple of weeks, and cryptocurrencies, and a number of those more risk-on assets, they've just been getting hit pretty hard, steadily the last really 2 weeks, if you want to look at it that way. Currencies here have seen a ton of back and forth. And to your point, just in the first trading day of this week, the first 36 or so hours of this week, we've seen two sides of each of these markets in pretty extreme fashion. Let's dive into, let's do the dollar CAD piece just really quickly, because I think that's been the biggest headliner, and we're going to do some more. We're going to talk about tariffs and how they affect exchange rates and currencies in a second. But yeah, just staying in the platform here, you see on the 15-minute chart, this is really just the action from this week alone. The, first of all, sell-off in dollar CAD, Pete, below 144, which is no small feat. We went out last week above 144.60, came all the way down to below 144, and this is the morning of yesterday. So the U.S. session is in when this Canadian dollar starts to rally. By yesterday's close, Trump and all the tariff stuff comes out. Oh, it's going to go into effect tomorrow. The tariffs on Canada and Mexico. Market gets all the way up to 145, and that's probably when you're thinking with the JP Morgans and the everything else, where it's like,
next
okay,
stop 150.
Yeah, we might be headed towards 150. Has anything changed in the last 12 hours or so, or is the market just doing what the market does, which is not necessarily do what the economists or analysts or armchair traders say?
Right, and I think it goes back to this idea of expectations, and the market's already efficiently pricing and forward thinking. And okay, the tariffs are in finally. Okay, how long they last? Now the question becomes, I think that the tariff. I was actually, for me, out late last night, all of 9:45 at night. It was surreal. But I was driving home and listening to news in the car, because you know I don't like to listen to music. And there's one guy in there still saying, well, he's still got 2 hours to pull this back. And it's like, he's not pulling anything back. I don't know what clock you're looking at, but at 12:01, this is all real. But I think the fact is, okay, these are in place. There's lots of talk about the long-term damage they can do to the economy or whatever. Or depending on who you talk to, they're equalizing the battlefield. But the question is now, okay, you've done your worst. The tariff's in place. The market already thinking ahead, I think, is like, okay, eventually there's not universal, but solid economic consensus that this will just raise the price level in the U.S. And that's going to be both politically and economically untenable.
Sure.
So when do they come off? What excuse do they take to pull them off? And when they come off, where's Canada going to be? Somewhere below 140? Where's Aussie going to be? Back somewhere above 67 cents?
Well, and you put
the market's already starting to move on that journey of of that these are not going to be here forever.
Sure.
Maybe they are. And the market, again, we always talk about it pricing efficiently. It does for this moment in time. Do traders get it wrong? And does this become a long-term battle? Sure. And that's where I think, the estimates are that it takes 3% growth in Canada, takes it anywhere down to flat to -1.
Mm-hmm.
And they're already spinning up, the amount of, everybody is now, how quickly we've gone from 1 rate cut in the U.S. to them pricing in 3 as of
over the course of the last couple of weeks. Yeah.
The last 24 hours, going from 1.5 to almost 3 rate cuts with the fall in SPOOs yesterday. So everybody's going to race back to 0. We'll see if that happens.
Sure.
But I think that forward-looking aspect of it is a really important piece. So we're seeing that play through. So does this make no sense? Well, the tariffs are in. Why isn't the dollar dramatically higher? We've gone through that. The market's thinking past that already.
Well, and we talk about this all the time. At price extremes like this, there is in trading, it's not something that you can say 100% of the time this is the way that it works. But we've witnessed this so many times that I would say it is a phenomenon that exists. This law of diminishing returns at price extremes, which is to say, we've been dealing with the tariff talks for the last several weeks. And the first time that it was like, oh, he's going to put this in play at the start of February, and this is the Sunday open in the first trading day of February, we got all the way up to 148,
right,
which is a massive price extreme for this market going back to, I think it's 2003.
Yeah.
Okay. And so then they take it all out. Oh, they're delaying the tariffs and they might not actually come through. And now they start to put it all in because he's, saying, oh, we're going to do these tariffs. And then the tariffs, I guess, go into effect. And everyone is like, oh, well, now that they're, to your point, now that they're actually in effect, this market has to go higher than 148 for sure. And it's like the market is what the market is. And at these price extremes,
well, that's it.
It's really hard to take this market through another price extreme, especially on a Monday afternoon into a Tuesday when everybody is there versus when this happened, which was a Sunday open,
right,
where there's not so many participants. I'm not saying this market's not going to get up to 150. I have no clue.
Right.
But to your point, it's a lot more nuanced than today's the day the tariffs are in effect, and so this market should be at an even higher price extreme than it was when they were going to be in effect and then they were rescinded. You can't, we always tell people the same thing with Fed rate cuts or rate hikes. The market prices a lot of this stuff in the lead up to the actual event, and it's not like, oh, this is the day of the event and they're going to hike, so I'm going to sell bonds today. It's like, the move's already happened.
And I almost go back, Tom is a big believer in pot odds. And if you're going to say, okay, well, what's the worst he can do? He can double the tariffs. Will we get a reaction from that? Absolutely. We'll see. That may be Morgan's magic tool of getting to 150. But more than likely than not, we're at multi-decade highs. And if they relent at all, pot odds says we're back well below 140 and fishing around a still relatively high level of the mid-135s. I don't know if that's the direction, but this is why I'm less reliant on news to drive long-term opinions, because that's sometimes, again, if you had taken the news and acted on it, if I'd handed you the secret paper that said
tariffs are going into effect,
it's real this time, you wouldn't have had a very good night or day today.
Well, you definitely wouldn't have sold the dollar at any point in the last 24 hours.
You would have been long the dollar against everything else.
A great trade in any market.
Yeah, it would have been painful. So that idea of pot odds, that, as you said, a lot of this is already priced in. I think what we get now, which is great, is we get two-way action. Now, this move in euro has been dramatic, up to 105.5. And so we're going into the day up 62 pips already, right up near the highs, in an area we haven't been at in a while. This is, again, for a trader, this is what I love. So some of the guys leaning who have done so well being short for that quick trip down from 111 to 102. Well, now you're starting to get a little bit challenged.
Yeah.
You're back to levels we haven't seen in a while. Have we cleared that whole congestion area from December on? No, not yet. But we're seeing, I mean,
this is a hell
I'm
of
not a
move.
candle guy, but we're seeing two strong up days with both. And it'll be interesting to see if today we close at the upper end of the range, then if you're a longer term strategic short, you think the dollar's higher, you've got some deciding to do because tape and market structure is changing underneath your feet.
Well, it's going to be an interesting week no matter what. Even you raise a great point for this euro dollar market where you might say, oh, well, there's not so much, of this tariff news around Europe. It's all focused in Canada and I should be trading peso and CAD and all these different things. But yeah, man, this is a strong euro market and I am very interested to see whether we close this week higher or lower than 105.50 because that's a really, really interesting price for this market looking at the last several
weeks. And you look at this,
here.
do you think, and part of it is, oh man, I knew it was cheap at 103 and it sat there. It does what it does right now.
Yeah.
We never get a flush and then a 300 pip bounce. That was 20 years ago.
It's been 2 months plus, yeah.
Yeah, it wears you out a little bit being long. You know what? Let's take a look at Kiwi because we're kind of currency indifferent. Are we off the 55 cents? Yeah, but very different looking chart than euro.
Yeah, talk about a market that's grinded you out the last couple of weeks here.
Absolutely, but if you're looking for something that's still cheap, now you can make the argument it's not the healthy one. Euro's the healthy one, and I don't disagree with that. And playing catch up in currencies sometimes is frustrating. But this is the case. If there's a sea change in the market about the assumption of a strong dollar, stuff like this becomes really interesting. And you don't feel like I didn't pin the low. And guys, we've all tried pinning the low. That is, from 43 years, my probably single greatest takeaway is, again, dollar yen got up to 168, 172. We were at 150. 25 years ago, the other side of the coin is when we traded from 83 yen, just think about that, down to 78 yen, and me getting stubborn about, oh, this yen can't get any stronger, the dollar can't get any weaker, and it did. So getting those last, 100 pips is not the goal here. It's to find the opportunity when we start to see the markets change a little bit.
And it's nice that there's every market that you go between. We just went between CAD, which is absolutely at its historic lows, to euro, which is bouncing back, pound bouncing back, kind of middle of the range, actually looking kind of strong. And then you've got Kiwi and Aussie, which are near their lows, but not trading through them as much as Canadian dollar. And so many different colors here to trade it. It's
Swiss
really interesting.
Yen, safe havening a little bit. It's a day.
But let's
get back into that because we've got some good content.
Yeah, let's get into our segment here because it's going to be very, very relevant to what's going on. Taking a look at how tariffs affect currency prices and exchange rates, Pete.
How topical.
So much going on.
You're not like a secret Doge guy, are you?
I am not a secret Doge agent. But I am here to help explain. Over the last 2 years, Pete, we've done so much explaining of how inflation and interest rates can affect currency prices and exchange rates and the whole dynamic of not only just the Forex market, but all markets. And now, as you and I know, the one thing you can count on with the market is you don't know what's going to be moving the market in the future. But we do know right now it's been tariffs, not so much the interest rate action or inflation numbers or anything like that. But first, let's take a look at how exchange rates work. Exchange rates or Forex prices, same thing as for our purposes here today. They fluctuate based on relative supply and demand dynamics between two currencies. Taking a look at US dollar, Canadian dollar, you can see here the exchange rate for the amount of Canadian dollars you get for a US dollar going between, in the last year or so, 135 up to a price extreme there on the upside of 148. Just really quickly, Pete, what is some basic supply and demand dynamics that move a Forex pair like this, U.S. dollar and Canadian dollar, one way or the other?
Sure. Rate differentials, both nominal, which is the rate differential at this time, and the expected direction of travel of that rate differential. The supply and demand of goods being exchanged between the countries and the value of those goods, whether that be, from what I understand, much of the upper Northeast is completely dependent on Canada for not just crude oil, but for diesel fuel, for gasoline, all of it. So it's that trade back and forth and that relative balance of trade.
Well, and you have done, for me, you've made this so clear, which is, is there a greater demand for Canadian dollars? And if so, then this pair here, U.S. dollars versus Canadian dollars, might move lower. The Canadian dollar might strengthen in this scenario. And to your example there, with the interest rate differential, if Canadian interest rates were moving higher than U.S. interest rates, there would maybe be more demand for Canadian dollars to invest at a higher interest rate. Or the other example you use, if, the Northeast is dependent on Canada for oil or whatever, if the U.S. is importing oil from Canada, then there is inherent demand for Canadian dollars to pay for that oil. And vice versa on all of those things. Keep in mind, this is a relative supply and demand dynamic when you're looking at exchange rates. Now let's throw tariffs into this. Tariffs can greatly disincentivize imports from the region witnessing the tariff, which can hamper that currency's demand. For example, the U.S. accounted for 75.9% of Canadian exports in 2024, amounting to an estimated about $350 billion. The entire Canadian GDP was $2.5 trillion in 2024, so a big chunk of product coming out of Canada. A 25% tariff from the U.S. on Canada could greatly diminish Canadian production and the demand for Canadian dollars. Hence, that chart that we just saw, if the U.S. is going to put tariffs on Canada, the demand for that Canadian dollar might soften.
Yeah, absolutely. And on the other side of that coin, the Canadians put tariffs on U.S. goods. The demand for those U.S. dollars in Canada shrinks commensurately. Yeah.
So there's your example. Now let's get into a real world example of some of this stuff playing out, because we've had it's no matter what you think about Trump or what's going on, what is really nice is
get
the
caught
fact
up in the politics. We're traders. And that's the joy of this. We all have our political views, but within this, we're getting markets. We look for opportunity and volatility. This is great. Let's not tie our mask to a political agenda. It doesn't mean we all don't have an opinion. We all don't care. But that's not what our job is. And our job right now is to find opportunity.
Well, even outside of trading, if our job right now is explaining how tariffs affect exchange rates, what's really nice is that we had the head fake of we're going to put these tariffs in, and then they didn't put them in, and now they may finally be putting them in. So as an example, you get to see actually exactly how much this tariff was potentially worth, because this U.S. dollar, Canadian dollar market went from around 144 all the way up to close to 148, which is a big move for an exchange rate or a currency market. And then the tariffs were delayed, came all the way back to where it was trading beforehand. And now it looks like those tariffs might be put back in place. And so you get to see this stuff play out live once again with these exchange rates. Tariffs can often be interpreted as strong for the region imposing them and weak for the one receiving those tariffs. Now the question becomes, how long do these tariffs last? Of course, that can be, like we just saw in that example, days. It can be.
There's been steel tariffs that have been put on the Chinese and the Japanese for 20 years. So it's not, again, to say that, well, this seems so cataclysmic, it's just a bluff. The market's interpreting there's a My impression is market's saying there's a finite timeline to these. We don't know that.
Exactly right. And you go back to the late 1800s, early 1900s, and for about 50, 60 years there, that this was the main way that the U.S. conducted business in terms of preserving U.S. businesses, and also keeping in mind that Trump did introduce tariffs in his first administration, which have remained throughout the Biden administration.
Absolutely.
And so again, but that is what spurs on the volatility and opportunity in a market like Forex is the unknown. If we all knew, oh, we put these tariffs in and they're only going to last 30 days and then they're going to be taken out, the market probably wouldn't really have moved at all. But you can see here on the monthly chart, this US dollar CAD market is right there at extremes going back to 2003. We'll see what happens from here, Pete. But that's how tariffs affect your currency prices and exchange rates.
You know, that was a great walkthrough of a solid example, and it doesn't. You can go down this rabbit hole and get lost in macro and numbers, and it doesn't get you any further in making good trading decisions. It's a great piece of content.
Awesome. And we will stop there, but we'll be back for more tomorrow. Stay tuned for Tom, Tony, and Vanetta coming up next.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than, boom, trade like a trader. Tasty Trade. Make your move.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision, there wasn't a lot of innovation, and I think that left a door open for us, which we really liked. After almost 20 years of open outcry, standing in the pit trading, I felt like all the markets were moving from kind of traditional open outcry to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. Most of our competitors have legacy technology, and some of them are multiple firms. Their technology has just been rolled up into a single platform. That's not the best way to build a platform. We built ours literally from scratch. It's from the ground up, so we were able to design it in the way that we wanted to design it with the flexibility that we wanted. And obviously beyond that, we do have, in my mind, the greatest customer service in the industry. You want to reach out to me, you want to talk to JJ, it doesn't make a difference who you want to talk to. We're always available, and not only are we available, we look forward to your questions. We're here to support whatever you're looking to do. So you can trade stocks, you can trade options, futures options, crypto. We're agnostic to product. We have the tools that you need to be a successful trader.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Hello.
Hello.
La la la.
Oh, look at Vanetta. She's got like two lovebirds kissing on her shirt. That's very cute.
Yeah, they're lovebirds.
That's like you and I, Tom. That's like you and I, two lovebirds. Don't you think?
Yeah, exactly.
Mm-hmm. That's what I saw.
Have you seen the lady on TikTok that makes the funny shirts that they have birds on them, but it says "nice tits" because it's a titmouse is a bird, and then nice boobs like a blue-footed booby. No, anyway.
No. I've never seen that person on TikTok.
No, but Vinny's got one of those bracelets now for Breast Awareness Month, isn't it? Is it this month? Is it in March?
Normally it's October. Normally Women's Month is March. Well, it was, but then it was banned. But normally October.
I think he's mixing it up with Black History Month.
Normally October, in partnership with the Susan.
Then he must like black boobies because it says "I love boobies." That's what it must be.
Is in October. I don't know where this is going, but I had to disinfect your desk. I had to wipe this. I had to wipe everything down. How are you feeling?
Sosnoff got me sick.
I definitely did not because I'm perfectly healthy.
Yeah, you are annoyingly healthy. Yeah, that is true.
And he is he's dying. He was hacking up a lung here yesterday.
I think it is the titration of you just disobeying like food safety laws. I think it has worked in your favor.
For sure.
For sure.
I think it has.
Yeah. I don't think it's replicable and like a general population, but I think for you specifically, like there's a stasis.
Do you want me to bring you in some 7-day-old lasagna?
No, please, no.
Some
Thank you, though.
unrefrigerated chili.
I have some unrefrigerated meat and ribs. I need it.
That's what keeps you healthy?
Yeah.
Oh, God. Oh.
I have unrefrigerated tuna fish. Would you like that?
There you go. Now you're talking to me.
Do you know I had tuna for lunch yesterday for the first time in like forever?
From where?
I was at home. I worked from home yesterday, genius. So I go to this thing called the grocery store and I buy food and then I keep it in my house.
You didn't make your own tuna fish, did you?
No, it was in what? Because I'm just being super annoying now. Because I'm trying to get more protein. Like I need.
Oh, you didn't buy this tuna fish in a pouch, did you?
It was but it was a zesty lemon.
No.
But it was 19 grams of protein.
No,
Look, your
gross.
girl's got to get 130 grams of protein a day.
Gross. That stuff's gross.
It was zesty lemon.
No,
I don't
it's
think you're
gross.
listening to me.
I've had it
And it came with
before.
the little crackers. It was
I know.
good.
It's disgusting.
Okay.
No. I like tuna fish, but I hate making tuna fish. And I have figured out the key to tuna.
Then why don't you like the flavored ones in the pouches?
don't
They
like
have
it.
like habanero.
Because they don't have
They
any
have
because I like
sriracha. I got a sriracha one.
because I don't like tuna fish without mayonnaise.
But it's healthier for you.
I don't like it.
Okay.
So anyway, I buy tuna fish all the time.
Such a baby. You know, you could just call it tuna.
Okay, I buy tuna all the time. But I have found the key to tuna.
Yeah. What's the key? Yeah.
Is you just mix in tons of hot jardiniere
Again,
inside the tuna, and then you have a really good. Then it's delicious.
those are your specifications. Yeah.
If you take Bari hot jardiniere and you
Yeah.
mix it into a big bowl of tuna, it is unbelievable.
I think your colon would beg to differ.
I just can't. I can't like if you ever go to Whole Foods, you cannot buy their tuna because it doesn't have enough mayonnaise in it. It's gross.
Again, counterintuitive to the health journey that I am trying to embark upon. I can't just dump a ton of mayonnaise in there.
Well, you're lucky because today's Taco Tuesday.
I know, it's good.
And a Flaco taco is a really good taco.
Yeah.
Do you know what Flaco means, Tom?
Nope.
Skinny.
Does it?
Yeah.
Flaco taco?
Flaco?
Skinny
They have
taco.
a very good El Pastor.
Their El Pastor. Yeah, it's pretty good. Yeah, I agree with you.
It's good. They
Yeah,
have a
yeah.
good. The only thing I don't like is their habanero.
Something is seriously deeply wrong with you.
When you know all the habanero sauces around at every place,
I just think that there's something that just happened. Like, I just don't think you can taste food.
I can taste.
I don't think.
I like habanero.
Okay.
I don't think he can either. He's lost a lot of his taste buds.
Right?
I've lost all of mine so far too.
Right, like I become
today.
more sensitive to heat as I get older. Like I just can't handle spice like I used to. It's fine, but I think
No, I like more spice now than ever. Yeah.
something just ain't right. I don't know. Why don't you send Bat some food since he's not feeling well? You should send him.
Yeah,
like,
why don't you send me some soup or something like
Send him
that?
some matzo
I
ball
would enjoy
soup.
that. I love soup.
Yeah.
I could send Bat some food. What do you want?
No, you couldn't because you can't DoorDash anything to me. You don't have anything, any way to
You don't
send it
have
to
a
me. You'd have to use some.
credit
You don't have a credit card.
I was just trying to act like nice on air, but I'm not sending you anything.
Aw, you should send him something.
Oh my God.
I can help you.
It's fine. I got other problems.
What are your other problems?
You have to help me fix my phone because my face thing isn't working.
Again? Your Face ID?
Wait a minute. Your face thing? Your face thing? You mean, you seriously? You mean it doesn't recognize your face
It
when
doesn't.
you try to.
My own phone doesn't recognize me.
You know, you got to get a new phone. When you talk to somebody, we spoke last night.
I know my phone's broken. I've been telling her.
Literally,
Who you been
not
tell-
my job.
What do you mean you've been telling her? What is she, tech support or
I
something
know.
like that at Apple?
No, but she said she's going to help me buy a phone.
I mean, I
And
say a lot of
You
things.
just walk into the store and buy a phone. What
I
the hell's wrong
know,
with you?
I can't. I don't know where the nearest. I don't know what I hate.
What do you want,
You
like a
don't know
tax
where the
write-off
nearest
before you can buy the
Apple
phone
store
or
is?
something like that?
I know. But every time I go to buy a phone, then they say, "Are you Beth Snyder?" And I go, "No." And they go, "Well, she owns your password."
Well, even Beth Snyder's not Beth Snyder. She's Beth Filoramo now.
I know.
That is true. That is true.
So Beth, you're going to have to go with me. Because for some reason, my phone is under your name.
Yes, it is.
And it's like,
Not even her name, though. She's just
Whatever.
catching strays. So
I'm
she,
in control.
Beth, you better bring 2 forms of ID with you, Beth.
yeah.
and you know what? In order for Beth to unlock this, you owe her an engagement present, a wedding present,
Oh, my God.
2 baby presents.
And an anniversary
2 baby
present.
presents.
Yeah. So
And a birthday present.
So yeah, so do you, and a Mother's Day present? Do you several? Do you want to fulfill your?
I'll buy you a phone too, Beth.
It's actually a pretty good deal. You didn't offer to buy me anything.
Because you got a little uppity.
I know that you did not just call me uppity.
I think he did.
I know, as I am about to take off these earrings, that you did not just fix your fat face to call me names. I'm about to throw hands. No, ma'am.
You're getting tough with me.
No, ma'am.
So,
But now your phone's going to be more expensive. Tariffs. Tariffs. I'm just
Oh,
saying.
that's right. You screwed up, man.
You should have done the
screwed up.
Vecchio. You should have bought the phone back in October. Like
it no, it doesn't matter. Beth has to buy it.
Okay. Well.
Beth has to buy it.
That's a lot of power.
I don't know how it happened, Beth, but some reason I can't even control my own phone.
It's okay.
Every time I go to buy my phone, they're like, "Well, you're not registered on this phone." I'm like, oh my God.
Oh, come on, ma'am. You don't look like a Beth.
I know.
Mm-hmm.
Anyway, so yeah, my phone. You're right. My phone doesn't work when you talk to me. My phone doesn't recognize me.
Are we sure that this is just not all just user error?
Well, I don't think it's user error when I'm talking to Tony and he can't hear me for some reason, and I'm talking to somebody else and he can't hear me.
It almost sounds like, did you get your phone wet or something? Because it almost sounds like every other word you can hear it. Like your speaker's not right. Maybe you got something stuck in there.
I don't know. I need a new phone, so I gotta go get it. I'll get it this weekend.
Okay. Well, I don't work
Oh,
weekends.
Beth, I know what you're doing. Hey, Beth, I know what you're doing this morning. I mean, this weekend.
No, she'll
You
just be
going
on
to-
standby. She'll be on standby.
You could just Just
You're
order
going
it and
to
have
breakfast.
it mailed here. Like, just have it shipped here.
Oh.
You don't have to go to
I like to
brick
go myself.
and mortar store. Okay.
Oh, it's so hard.
So what'd you do last night then?
I went to the Blackhawks game.
And they won 5-1. It's very exciting.
Yeah, it was great.
Yeah.
New kid is.
You saw a great game. What was Spencer Knight, right? That new goalie.
Yeah, they traded for this 23-year-old kid goalie from Florida. And last night was his first game.
Well, they didn't trade for him. That's what they got for their.
They got him in a
assistant
first-round draft
captain.
pick for a guy that they didn't really want to play on the Hawks. And so the kid's
He did not want to play on the Hawks.
The kid's first
Nobody
start
wants to play on the Hawks.
His first start was last night. He was amazing.
Big fat goalie?
No, he played. I think he played
Panthers.
No, I know he's
Florida
played the Panthers, but I think he played at Boston College. I think he might have won a national championship. I don't remember, but kid was amazing last night.
Okay.
And
He stopped more attempts last night in the first period than the whole Panthers game the last time he played.
They have better defense than we do.
Wow.
Yeah, I think so. 18 shots in the first period. I think he stopped 17 of 18, something like that.
And the kid
but
was
he only
great.
faced like 18 or something, or
who'd
17
they play,
shots
the
the whole
Kings?
game.
Yeah, they played the Kings, but here's the best part. So we're at the game, right? And I bought these tickets before the season started.
Yes.
So like back in October.
Okay. Got you, girl.
And they were in the second row.
Second row behind the glass?
Yeah, second row behind glass.
Wow.
So, but I bought them back like September, October. And I don't know why I bought March 3rd, but I bought March 3rd back in September.
Because it's your birthday week.
No.
You're a birthday
So anyway.
bitch. That's what you do.
So anyway, I bought
You
these tickets.
figured you get a little pregame for her,
So I bought
like,
the tickets
inaugural
in the
visit.
second row, right?
Yes.
So Corinne and I go to the game, and she's bitching me. I don't really want to go to a hockey game on a Monday night,
Sure. It's
blah, blah.
cold.
Cold. I don't want to go to a hockey game. The Hawks stink. I don't know the players anymore. Blah blah blah.
Those are legitimate.
Full
concerns.
disclosure, Vanetta. Full disclosure. He did invite his work wife to go first. Then he invited his real wife.
She said, "Find anybody that wants to go with you."
But Bat was sick.
No, he wouldn't go anyway. But nobody wanted to go. So
I
I'm
had
like,
a game
okay.
to go to.
So she's like, "Nobody wants to go. I'll go." So,
Well, it's a school night.
right. So anyway, we go to the game, and by the way, the Hawks now you can park in the good lot because they can't sell out. So you just park right there. So anyway, so we go to the game, sit in the second row. The guy in front of me is a friend, somebody I know, sitting in the first row.
Uh-huh.
Well, the people he's with, he came with 4 people. 2 of the 4 had to leave, so they left. So he goes right.
Come on over.
So he's like, "Come on,
squat.
come on down to the glass."
Yeah.
Perfect. We jumped over the seats. I actually hurdled the seats.
You did
Like
not.
a gazelle. Like a gazelle.
Like a gazelle.
Sure.
And got to see the whole game on the glass.
Were you on TV?
No, I don't know. It was
Ooh.
great. It was great. And they won, and it was fun, and
That was very nice of your friend.
it was great.
Yeah.
And so
I wish I could have watched the Hawk game to see you on TV, Sosnoff, sitting on the glass. Nothing would have made me happier to see you enjoying yourself on the glass. But I had to watch my son, that's right, with the game-winning goal and a 2-1 victory for the Stars. We're going to the Cup, Sosnoff. The Cup tonight. That's right. 2-1 with a dirty backhanded goal, Sosnoff.
maybe I'll be there. What time?
Early, 5:30.
Oh, that's too. I can't do it. I have to work.
You just have to leave work. You have to leave work right at the bell. That's all. You'll be fine.
5:30? Who plays at 5:30?
Well, they played at 8 o'clock last night, and it looked like they were asleep for 2 periods. So I'd rather play at 5:30.
No.
School night.
What?
School night.
Oh, yeah.
Yeah. Last night was a school night. I was out late.
How was the food? Did you eat before? Or did you eat at the stadium?
No, I didn't eat at the stadium.
So you ate before?
Yeah, I just had Garrett's popcorn.
That's not a meal.
I'm saying I ate before. I just had popcorn at the game. Popcorn, and we drank a lot.
You did not. You did not. I mean, I'm sure your wife did to get through the evening with you.
Oh my God, she's got to get sloppy drunk.
Right, yeah.
Oh my God.
I bet she said to the attendant, she's like, "Look, I'm going to give you this money. You keep them coming. You don't look at him. You look at me. I'm your boss.
Oh no! When Sadnov jumped over the railing there like a gazelle, as he said, he got free drinks.
Oh
At
yeah, the
that
first
point,
row
'cause
gets
you
free
get
drinks.
Oh, okay.
Free drinks on the
Free
first
drinks,
row.
free food.
So
Wow.
Yeah.
yeah.
You have to put
So
your
he was-
boobs on the
he-
glass.
Did you flash them, Saz? Did you give them with the gold? Did you give them a little something?
Oh
That would
my
have been so
gosh.
good.
I'm sorry, Ben. I'm
That would
sorry,
have been so
actually,
good,
everybody.
Saz.
That would have been something, right?
That would have been something.
The mental images I have right now.
I'm so sorry. Sometimes the comedy just like gets the better part of, and I don't think things through. I was like, oh man, the joke's right there, and I just go for it, and then there's consequences, Beth.
And those guys all night long, they smash on the glass and everything shakes.
Yeah. Oh, I'm sure. I've never been to a hockey game, but I'm sure it's
Great.
thrilling. So
Great. When they win, it's great.
yeah. All right. That's very exciting.
Mm-hmm.
Well, congratulations. So Bat, that means we're in for a world of hurt when Tom goes out on a school night. It's never fun.
Oh no, I'm fine. Game was quick. It was only like 2.5 hour game. There's no whistles. It's good.
Okay. All right.
Yeah, that was fun.
That sounds pretty good. That's pretty good. Well, we got a great show for you today. We got tacos. We got Bat all hopped up on NyQuil. We have so much to give.
Flacco's Tacos.
Flacco's Tacos on this terrific Tuesday. Sorry, I just got distracted by something. It's fine. It's a terrific Tuesday here at Tasty Live, and that means a lot of good content. At the top of the 8 o'clock hour, we're going to do an options jive today, comparing strategies, theta per BPR. What does that mean? Like your daily theta per your buying power reduction?
Yeah.
Okay.
Yep.
We're going to talk about that at 8 o'clock. Then at 8:40, let me explain. We got Chris Vecchio in the house. What are you talking about with Chris?
I think we're going to have a lot to talk about today because there seems to me to be a lot going on.
Oh, is there stuff going on?
Well, the markets, there are in the markets.
There are in the market.
Be ca-
So, yes.
Be careful what you ask for, right, Sadnov? We were talking yesterday, right before the close, when we had that monster 50-60 handle rally on the E-mini S&Ps, and we have to open lower. And now here you are. Be careful what you ask for.
Yeah, be careful what you ask for, right? Down 40 this morning.
Ugh.
Yeah.
Well, we will see what happens when Chris offers his insight. That's going to be at 8:40. Then at 9 o'clock, we have a market measures. How to spot opportunity in options. I need to make a lot of money very quickly. Can you help me?
Yeah, it's a little bit of a misleading title because really what we're saying is when you look at an option chain, there are lots of different ways to look at the pricing on an option chain. It's more like that. It's more like an in-depth view.
Interesting. Okay.
Yeah.
Okay.
Like nothing's overpriced.
So then how can you could just fix it to how to spot opportunity in option chains?
Could.
I'm just saying, like if you're telling me that it's just how to spot opportunity in options, I'm going to think that I'm going to get rich with the quickness.
Then you better watch it.
All right. That's going to be at 9 o'clock. And then around 9:20, live from the trade desk, big boy Scotty S. Scott Sheridan counting down all the top trending tickers over at Tasty Trade. Having a good time over there. So, hey, tomorrow is Wednesday. So that means it's Assume the Position Wednesday. And we need your trade ideas for what's your assumption. If you have a trade idea with an underlying and a directional bias in this wacky market, Tom and Bat would love to hear from you. You can submit your trades at the top of the page. But hey, in the meantime and in between time, do you guys want your daily dose?
Of course.
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story. Breaking news. Across the wire. Our leading story. Top story. Just in. Today's headlines.
This just in.
Breaking news.
All right, everybody. Today's a terrific Tuesday. It's March the 4th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Sure.
Ready for the news.
Any upcoming earnings, Mr. Bat?
Maybe crowd. That's all I see right now.
CRWD. That's the time we get rowdy. CrowdStrike. Let's go, CrowdStrike.
CrowdStrike. CRWD. That's the time we get rowdy.
CrowdStrike. No,
CrowdStrike. That was pretty good off the cuff like that. I'm not gonna
not
lie.
bad for a theater kid.
Yeah, not bad at all.
Hey, this headline says option traders are bracing for a stock market crash. And I only bring up this headline because demand for crash protection soared last week, according to SIBO data. Demand for deep out-of-the-money call options tied to the SIBO VIX index surged last week. How prescient was that? I'm just saying, like, it's stupid. Like, if yes, it's surging now, but this was last week, and then with the massive move. Yeah, I'm just saying, that's not bad. That's not bad. Like they saw some people saw.
I mean, we
something.
haven't gone anywhere. Let's be fair here. I mean, what's the market
let's be
down?
fair. We're not exactly crashing.
You don't call this a crash?
VVIX volatility closed at 118. It's at the higher end of its range, but not anywhere near the 170 level that we saw back in August or anything like that. So you do have volatility /VX with a big uptick today, Sosnoff. That's up almost 6-7%. That's up $1.40 almost to 21.75. That's the canary in the coal mine right now.
Yeah, I agree with you.
So what do you do?
Pre-market, that's about the biggest vol move we've seen pre-market in a long time.
So what do you do?
What do? You put your head between your legs. You brace for crash, right?
Yeah.
And you kiss your arse goodbye.
Yeah.
Hey, in other news, President Trump is now alerting American farmers to get ready for external tariffs starting April 2nd. Of course, the big matzo ball package of tariffs kicked in this morning, China, Canada, and Mexico. But now America's farmers are going to have to brace for impact. I'm only bringing this up because I want to talk about the softs.
They're all down today.
Okay, let's talk about it.
And they're all on their butts.
Yeah.
I don't think this is... if you're an American farmer right now, you are very concerned. I mean,
sure, a lot of their output went to U.S. aid, which has been stopped.
You're
and
in trouble for
tariffs,
multiple reasons.
Sure, yes.
1, U.S. aid. 2, the tariffs. 3, it's hard to find workers.
Mm-hmm.
So, there's just video after video of these farmers, threatening bankruptcy or worried about bankruptcy because they literally have nobody.
Yes.
To work the fields.
Yes.
Listen, you know what? In the farm community, I hate to say this, you got what you voted for.
Okay, let's talk about the softs.
I mean, you voted for this. This is what Trump did not mince his words. He said all along, this is what he was doing. I mean, he's not doing something different. He said it. And
where are you seeing the most opportunity? Is it in corn? Is it in wheat?
I don't think I have positions on in corn, soybeans, and wheat. I don't necessarily think there's opportunity in any of them. They're pumping vol in all three. Well, obviously with this news, corn, soybeans, and wheat. The vol is up in all three this morning, and they're all kind of on their butts, I would say, price-wise.
Okay.
Corn is actually in a free fall. It's basically crap. I mean, Tony, if you looked at corn, it's basically
Now let's be fair. Corn was lower than this in August under a different administration with no tariffs. I mean, the corn, wheat, and soybean market never took off after the war that everybody would have expected. It was almost like when you least expect it, and it never happened. It's worked exactly
the last week has been really.
Last week has been dismal. No doubt about it.
For all of these softs, the last week, they are down.
Oh my God, corn went from 500 and change to 440. Those are huge moves. Yes, 100%.
Yeah, these are huge moves across the board. Corn, wheat, and soybeans. They're all like on 10-day benders to the downside.
Mm-hmm.
And I mean, from a trader, because I have positions on in all of them because the IV ranks are high.
Yes.
You can't defend that kind of a down move.
Sure, and they're pumping so much vol in now too.
You're pumping vol in. You can't defend the down. And usually, with agricultural commodities, if you get a down move, they kill volatility.
Mm-hmm.
It's just the opposite. So you look at it as an opportunity, right? Go put spread.
Yeah, I mean, when corn or wheat, soybeans go lower, vol goes to 0 because it's not like an index.
Right.
because you can only go so low. There's no downside at some point. So usually vol gets killed and vol's actually up. So it's a very weird right now. I mean, are we getting to the point where corn, wheat, and soybeans are probably interesting if you want to sell some out of the money puts? Yeah.
Okay.
Yeah.
Yep.
They're
All right,
probably
let's go.
pretty close.
Let's go.
We haven't done it yet. We're staying flat right now, but we're losing money by being flat.
Sure. Traders place record bets on rising Japanese yen, eyeing further rate hikes. The yen has strengthened by 4% this year as stronger inflation data has pointed to more rate hikes, calling into question the once hugely popular yen carry trade. President Trump also yelled at Japan and China. He's like, stop lowering the value of your currency. And they're like, homie, we're not doing this on purpose. But I want to talk currencies as a spectrum.
Yeah, we've been.
Things are happening in Europe. Things are happening in Canada.
Mexico,
and
getting annihilated today.
And the yen, yes.
Now we've been really bearish on the dollar for a long time, and so we're finally getting paid. The yen's up big. The euro's up huge today. The Canadian dollar's up big, and even the British pound is up big. It's back up to 127. Yeah, they're all up big today.
Nice. Net long positions in yen futures among non-commercial traders, such as hedge funds and other speculators, soared to 96,000 contracts in the week ending February 25th. So that's an increase from 61,000 the week before.
Yeah.
Hey, the FDIC, are they still around? Well, their board of directors approved a proposal yesterday to roll back a Biden-era policy that ramped up scrutiny of large bank mergers. The proposal will temporarily reinstate the merger policy that was in effect prior to 2024 as the FDIC conducts a broader reevaluation of the bank merger process. So what we need now in this time are even bigger big banks. What are your thoughts on this?
What are my thoughts on this?
Yeah.
I mean, listen, this is what got us in trouble. It depends how far they want to push.
Right.
So there are certain times when regulations are necessary.
Sure.
And there are certain
and they
times,
can be onerous.
And there are certain times when they overstep their bounds. The problem is, without regulation, you go too far, and then you end up in 2008, 2009.
But you got Dracula watching the blood, right?
Yeah, it's kind of like, so you have to be careful here. It depends. Right now, you already have a bank, certain banks that are too big to fail. Like JP Morgan is too big to fail.
Right.
But I would also argue that Bank of America, Citibank, and Wells Fargo are too big to fail. So, you do run the risk when you roll back merger policies. I mean, it just depends, what you're scared of in the world of corporate finance.
Sure, and I think it's more like mid-sized banks, something that's in like a KRE, something like that, like your Comerica's and things of that ilk. But without the guardrails of a Consumer Financial Protection Bureau, the banks can just do whatever they want, and then everyone.
That scares me. What scares me much more than this,
because now you can have these super powerful financial entities that literally have no recourse as a consumer.
What scares me more than bank mergers is consumer recourse. So what scares me more is when the Capital Ones, and the Wells
You're just
Fargo,
forced into arbitration, which you will lose.
But it just
please don't use Wells Fargo as an example.
But
they're the evil empire.
It just scares me though when
for consumers.
If you're fined $2 billion, you're usually fined $2 billion for a reason.
Sure.
And then just to waive all these fines and say, hey, you know what? Everything is, that was a mistake. It's not. And it just scares me that we have to be very careful here because you cannot. What history has shown us is that if you give these large financial institutions too much leash, they will hang themselves and hang you.
Yeah, good times. Bat, let's look at like a KRE or something. We haven't talked about that in a hot minute.
KRE 61 and change, about the same price where it opened. I don't know. I guess it's gotten as high as 70. It's been as low as 40 something. I would say it's at the higher end of its mid range for the last 12 months.
All right.
So there's still opportunity. A good IB rank of 43.
Hey, I might have did something there. Hey, in commodity news, oil extended losses from the lowest in almost 3 months after OPEC Plus signaled plans to revive halted production. What are you seeing in crude oil?
It's ugly this morning in there. It got, where is it right now? It's, it's 67 and a half.
67. Yeah, down
I mean,
by
listen,
80
when I say
cents.
it's ugly.
Because I saw it close at 71, and then...
No. That was a
yesterday.
couple days ago.
Yeah, okay, well, that's the last time I
67
looked
and a half
at
this
it.
morning. I mean, listen, I don't know anybody that wants higher oil prices, so I don't really care that. I mean,
that would be good for the consumer, right?
Yeah, right. Like I mean, I would like to see oil go to $50.
Sure.
But I mean, 67 and a half is about the lowest we've seen. But you know what? There's not a lot of juice in there, and nobody's really trading much oil right now. It's a pretty dead product at the moment. Like I think of all the commodities right now, oil is.
Gold is the hottest.
Well, gold is hot. All the currencies are hot. All the softs are in play. You know,
gold up another $34. Sadnov going to flirt with new highs another day like
everything's
today.
in play. Crude oil is like boring to me right now. I'd rather natural gas is more interesting than crude oil.
Aw. Hey, well, speaking of something that was once hot, oh man, it's flip flop. Bitcoin's rally faded Monday as traders grappled with concerns that proposed tariffs were on track to take effect. Bitcoin tumbled 9%, reversing most of the rally that the announcement of a new crypto reserve had pumped into Bitcoin. What is it doing this morning, and what are you doing in digital assets?
Enough. I mean, crypto's actually lower than it closed on Sunday night before this announcement. Mm-hmm. So it just broke.
Yeah, not on its lows of 78 and change, but where it closed.
No.
Yeah,
Lows,
you're 100% correct.
Lows are where it closed last Friday and on Sunday.
Yep.
But it's below that number. So they've reversed that whole rally from yesterday.
Yes.
Again, you can't artificially move the stuff anymore. Markets are too big. I mean, the big jump up yesterday, people took advantage of it and just whacked it. It's down again today, about $3,000 this morning, so it's 83,000. I mean, honestly, we didn't do anything. We're not doing anything. I mean, we're a little bit long Coinbase. It's down about $6 this morning. It broke 200.
Oh.
So we're a little bit long Coinbase.
Was that its level of support? Which
I have no idea.
Okay.
I mean, we're short some 70 puts. 170 puts, so I think we're okay. But we're a little long Coinbase. We're flat MSTR, but we have some strangles on in there, and we have our Bitcoin position. We're just holding forever. I mean,
Ether was down 15%.
Yeah. So did it break? It's not. It's still over 2,000, right?
I think it's like 2,100.
E is definitely there. 2,060 and change. Yeah.
Yeah. So I'm waiting.
2,100, like Vanessa.
I'm a buyer under 2,000.
Okay, I mean it's right there. You're on the dance floor, man.
Yeah, I know. I mean,
right.
they're hitting everything. So there's no rush.
Did you trade Target for earnings? Getting to some earnings. So Target warns February sales were soft after their earnings top expectations. Uncertainty over consumer demand and tariffs will weigh on the current quarter's performance, the retailer said. Target reported fourth quarter earnings of $2.41 a share, coming well ahead of analyst consensus of $2.26 a share. Net sales fell 3.1% year over year to $30.9 billion because they've now equally pissed off people on both the left and the right. Congratulations to you, Target.
What's Target doing? I sold puts in there last night.
It was up $1 pre-market. It's down about $3 right now, 117 and change.
Oh no, I saw it at 125 this morning.
Yeah. Okay. Yeah. I said it was up $1 pre-market, up a little bit more.
So it was up 5 when the number came out. Now it's down 3. We sold the 110 puts with 4 days to go. I think we're fine.
Okay. Did you trade Okta?
No.
Well, they exceeded Q4 expectations. Their stock was up 11.2%. I think it's down now because just everything is down. The software maker said sales were up 12.7% on the year to $682 million. Adjusted earnings per share came in ahead of analyst estimates. Sometimes you trade it.
No.
OKTA.
I don't think we've traded in a long time.
Okay. I just thought I would mention it. That's all it was. Amazon-backed AI firm Anthropic is now valued at $61.5 billion after its latest round of funding. The $3.5 billion round was led by Lightspeed Venture Partners. Amazon, of course, would throw some coins into that. The startup plans to use the latest funding to expand its computing capacity and to accelerate expansion in Asia and Europe. What is going on with these valuations of these AI companies?
I don't know, but I know when we're shown this deal that it's probably way overpriced. Because if it gets to me and it gets to a bunch of us here, then when we get shown stuff, I'm guessing that. So, I mean,
they've been to the class acts already.
Yeah, they've gone to everybody else. So
they've gone to Bill Gates already. They've gone to all of those people.
If they've gone through every single person, I think the evaluation was exactly 60 or 61 billion.
Yeah.
And they're like, we got a little bit left, and I'm like, every time I hear that, I'm like, you know what? I think I'll take a pass.
I think we're using Claude now on the enterprise side as IG.
But
so Anthropic makes Claude. They all have different names, and so it's hard to keep them straight.
I mean, I'm just saying that we're gonna, who knows? Maybe it'll be worth 200 billion, but I'm not interested.
Well, you can't trade Anthropic, but you can trade Amazon. What's Amazon doing this morning?
Ooh, good question. AMZN, good IB rank of 55, is trading 202 and change, down around 2.5 or $3, back near its most recent lows for this year.
You doing anything in Amazon?
Yeah, we're kind of be a little bit caught long this morning, but not much.
Good IB rank across the board here. 55 or so, no earnings looming.
Taiwan Semiconductor, TSMC, plans to make a fresh $100 billion investment in the United States that would involve building 5 additional chip facilities here in America in the coming years. The CEO announced with U.S. President Donald Trump on Monday. TSMC?
It's been TSMC. We do have a position on in there.
Where are these companies getting all of this money? That's like liquid.
You know what's funny about that?
Like Microsoft and Meta. I mean, yes, I know that these are very, very valuable.
It's like down $1. It's nothing.
They're just like, yeah, we have $100 billion. I'm like, where? What?
It's like down $1, and the stock dropped. Stock's already dropped like $50 off its where it was trading. But here's the most interesting thing: if you told me like they're going to build 5 facilities for $100 billion, where does it cost $20 billion to build like what costs $20 billion?
Well, you gotta pay workers now. I don't know.
No, I'm just saying, like the Bears want to build a new stadium, right?
Sure.
And they're talking about, I don't know, 3 billion, 4 billion, whatever it is, 5 billion max, something like that. Okay.
Sure.
These guys are talking about building a plant for 20 billion. It's like 5 stadiums. I'm just saying, it sounds like the numbers are just like humongous.
To be fair,
you did some build outside and off. Between the permits and between the getting product.
I mean, if you want to ask me about building a coffee shop, I'm happy to tell you what it will cost per square foot.
But again,
but it was a lot more than what you anticipated.
There's a wide spectrum in the sterility of the men's bathroom, and then for what you need for processing chips. You see what I'm saying here? Mm-hmm. Like you get a trough, and then you need like a very clean room. So maybe that's where all the money's going.
I'm just telling you, $20 billion per facility sounds like a lot.
Hey, I got to keep it moving. Nvidia shares fell 9% yesterday on tariff fears. The company shares are now trading at the same price they were in September, before we even had a U.S. presidential election.
If you liked them yesterday, you're going to like them more this morning.
Nvidia has shed its $3 trillion market cap, now worth a paltry $2.79 trillion. Knocked another $265 billion off the company's valuation. What's it doing this morning? And what are you doing?
Down
in
another
Nvidia?
$5.
Down about $5, and I'm about to buy Nvidia here, just for.
Don't do it, girl.
I just did it. At 109.50. Here we go. Our first little Nvidia purchase this morning for a scalp.
We'll see what happens.
Yeah, I think down. I mean, I wanted to buy a little on the close, and I didn't. So I'm happy it's $5 lower. I don't know. What do you think, Pat?
In other Nvidia news,
I think the Ivy rank is high, in the 60s right now, maybe even higher. I think you got a bunch of gifts here on stocks that have great markets with high implied volatility. Place your bets. I think two-sided option trade with a little bit of long delta to it might be the play.
Yeah, I think you got to buy.
Option trades today, every Tuesday and Thursday, Vanetta. Maybe we'll do something.
I think you got to nibble on a few shares of Nvidia down here, right?
Yep. I agree.
So yesterday, Nvidia and Broadcom, which I know you also have a position in, they are running manufacturing tests with Intel, demonstrating early confidence in the struggling company's advanced production techniques. What changes if Nvidia and Broadcom give like a massive infusion to Intel?
Well, I'm telling you right now.
I'm telling you right now.
Intel's only down 20 cents.
Okay.
And Intel traded 25 yesterday morning. It's 22 and a half right now. I have no Intel position on. You know what? You just talked me into this.
Yeah, I love it when I talk you into losing your money.
There is a certain sort of giddiness to your voice when you make him do this.
I don't really like to buy a lot of stock.
Yeah. Oh, you're just buying straight stock?
Well, that's all you can trade right now.
Look at you. Oh, yeah, that's true. Look at you, Daddy Warbucks.
So I bought a little Nvidia here.
You mean Intel?
You bought a little Intel also.
Intel also. I bought Nvidia too. And a little Intel. Now, before anybody goes thinking, oh my God, you're bullish, or oh my God, you're buying stocks, it's just a scalp.
It's just price.
It's just a scalp.
CoreWeave, which is a company that sells cloud-based processors from Nvidia, is headed to the public market. The cloud provider generated $1.92 billion in 2024 revenue, up 737% for the year. Microsoft accounted for 62% of CoreWeave's revenue. So it looks like now they're going to do a little IPO dance. So congratulations to CoreWeave on that. Too bad the market is doing what it's doing right now. So, moving on, Apple CEO Tim Cook teases something's in the air this week. On X, formerly known as Twitter, the social network, there was a short 6-second video that played that said something's in the air this week. Of course, probably alluding to the MacBook Air 4, the M4 MacBook Air unveiling is imminent. How is Apple faring in this churning market?
Apple Ivy rank of 56 is pretty good. I mean, how is it faring? I mean, as good. I mean, it started the year right here. It's right here right now. I mean, so Apple was a little bit lower than where it started the year. It was a little bit higher than where it started the year. It's basically unchanged. Good Ivy rank of 56. Place your bets.
What are you doing?
That's how this whole market is. Right?
Apple is we're flat.
Okay. Another sad one yesterday, Canopy Growth, CGC. Well, there's a blast from the past. Their stock fell to a new all-time low on the...
What's the symbol?
CGC.
Oh, yeah, we used to trade this.
Yeah, I know. Okay. So the cannabis company said...
That's why she said blast from the past.
Company said they would sell up to $200 million of its stock. But the company's current market cap, you want to guess?
250 million.
Yeah, it's like 240.
Yeah, you're right there, Saz. Good
damn
call.
good guess. Can you believe this company was like 10 billion or something?
It's unbelievable. I mean, you can almost see the handwriting on the wall. I mean, it was always so touted, as soon as they legalized, cannabis, this is going to be the stock. I mean, it was such a, I don't know.
Yeah, but more states
the artificial
have
news. Same thing that happened
legalized
to
it.
Bitcoin.
Like I don't know. It just hasn't caught up. But yeah, it was kind of like the whole industry was just like, oh man, we thought this was going to be.
I don't really understand what happened to cannabis. I guess I just
They
don't
need to, the big thing that needs to happen is they need to reclassify how it's scheduled. Right now, it's still a Schedule 1 drug, and there's still just an onerous sort of set of laws at the federal level that impacts how the businesses can do their banking and other financial things. But one of the big thing is removing it from being a Schedule 1. So right now, cannabis is classified the same as heroin, which is a choice. But that's the big thing.
Oh, I mean, that's pharmaceuticals. That's the big pharma right there, right? I mean,
yeah.
all things being equal.
Yeah. Well, speaking of big pharma, this big pharma wants to go private, and that's Walgreens. Walgreens is getting ever closer to nearing a $10 billion deal to go private with Sycamore. The deal price is being ironed out, but it could be completed as soon as this Thursday. WBA, Walgreens Boots Alliance, Chicago-based company.
We do not have a position on in there. We had one at the end of the year. I think we sold our stock at $9.50 or $10. Where is it now? 11.
It's 10.25 or something like that. It might be 10.75 on the opening, up 50 cents.
I'm just saying be careful because, of course, this has been swirling in the air, but now they're saying it could get done as soon as Thursday. So
Okay.
do with that what you will. YouTube is reportedly working on a massive upgrade to fight Netflix and Amazon. YouTube's been trending towards becoming more of a streaming service for a few years now, and they want to reconfigure that initial menu. They want to integrate other streaming services so you have more options right from the YouTube platform. Not sure what Google, which owns YouTube, and Netflix are doing this morning.
Google is trading 166 and change. Looks basically unchanged, maybe down around 50 cents. Even the S&P is down 37, and volatility sounding off, just sold off a little bit. It's 21.52 after trading up to 21.85 or so.
What about Netflix?
Netflix and chill, Sadnoff. When was the last time you did that? I bet it's been quite some time, or maybe even just last night. 9.73 or so, down around 50 cents.
Do you have a Netflix position?
No.
No? Okay.
Netflix is hanging in there. Netflix Ivy rank of 44.
I'm skipping a story here. Here's something interesting. I loved just the free trade of ideas between Chicago and New York, because now if you watch any influencer's video on New York and the top spots you got to go in New York, almost every single person mentions Au Cheval, and I start to giggle because Au Cheval was created in Chicago, but now New York is like, oh, we have Au Cheval, and I'm like, please. But it goes both ways because Chicago is getting an H&H Bagels here in Fulton Market. Woo! One of the most beloved bagel makers is opening a Chicago location in Fulton Market. It's part of the company's ongoing expansion announced last year. What are your thoughts?
Okay. So I have very mixed thoughts on this because I'm very happy to have a New York bagel in Chicago.
Yeah.
But H&H is not the same as H&H originally was. Like original H&H is famous, right?
Uh-huh.
It's like goes like Russ and Daughters to famous.
Right, yeah, it was on Seinfeld.
Yeah.
Yeah.
But then, okay.
Then what happened, girl?
Well, I think I don't remember the exact story, but I think the owner, the founder, whoever it was, he got indicted for fraud and
one of the H's.
One of the H's. And I think there was this huge scandal or fraud case, and then the company went out of business. They went into bankruptcy, and they went out of business. And then I might be wrong and just talking on my butt.
Okay.
I'm not sure.
No, it said
and then some private equity firm bought it out. Bought the name.
Yes, Helmer Toro and Hector Hernandez.
Yeah, that's H&H.
Right, yes. So they were indicted in 2010 for tax fraud, grand larceny, falsifying records, and violating labor law. He spent 50 weekends in jail and paid a $500,000 fine. The company closed all of its shops and filed for bankruptcy.
Yeah.
And in 2014, former Wall Street investor Jay Rushkin bought the company and paved the way for a nationwide expansion.
Right. That's exactly the story.
Last month, they opened a California location. So there are now locations in New York and D.C. and California, and then now Chicago.
Listen, there's no question that we benefited from Levian Bakery coming here.
Yes, Levain. Yes.
We did not
benefit. It's Levian to him.
We have a milk bar now, the Christina.
I have not been there.
Yeah, I haven't been there. I saw it on the gram.
Prince Pizza is absolutely the freaking worst.
Okay.
I give them 0 stars. So that we did not benefit from.
Okay.
But H&H,
it's the water. We know it's the water. It's the water that makes it different.
That's true.
Actually tried importing
so they say.
Water from New York.
There's already a bagel place on the north side that ships their water in from New York so they can make New York bagels.
I tried doing that in the 80s.
But there's a place on the north side that does it. Tony's Deli does it on the north side.
Yeah.
It's okay, not great.
Makes a difference, maybe not.
I want to see if they hold up to Gotham.
All right, we will. It's going to be right here at Peoria, like 162.
I know, it's right around the corner.
Yeah, I know, but I broke the news to you. Yeah.
I know.
Hey, this is fun controversy in sports. Are you watching any footage from the combine right now?
A little bit.
I'm obsessed. I love the big O-line. Did you see the guy with the mullet and the flow? Like his mullet was just like, it's like this big O-line guy, I think out of Georgia, Tate something, I don't know. But chef's kiss to that. And I just love when the big men run. But Travis Hunter says him playing both ways in football is more difficult than Shohei Ohtani pitching and hitting. And all of the sports nerds are like, well, actually, what are your thoughts? True or false?
I agree with Travis Hunter.
Yeah, I think
I agree with Travis Hunter. It's way harder to play because professional football players are so damn big and strong and fast. I mean,
so he wants to play wide receiver and cornerback.
Yeah, I know.
I'm telling.
I mean, Shohei Ohtani is unbelievable because, I mean, since Babe Ruth, nobody can.
Come on, nobody did it like Bo Jackson, Sosnoff. Give him his props.
No, but that was two sports.
No, that's two different sports. This guy's playing two positions in the sport.
Totally get it.
Yeah.
I understand.
So, I mean, Shohei is unbelievable because pitching, but he hasn't pitched. He didn't pitch last year. He's talking about pitching later this year.
Right, yes. Well, he had
pitching,
surgery. Yeah.
Pitching and hitting, he's unreal. But Travis Hunter, this kid, oh my God, playing cornerback and wide receiver.
Has anyone ever done that?
Yes.
Played like an Iron Man sort of.
I mean, not
in the modern era.
And not the whole game. Like this kid, you can't drag him off the field.
Right.
I mean, there's been a couple players like, that played a bunch of different positions like Dion and stuff like that.
Sure, prime time.
Yeah. And on the Bears, who was the kick returner that just won the Hall of Fame?
Devin Hester?
Devin Hester.
Sure.
Devin Hester would return kicks, and then he also played, like occasionally he played wide receiver.
Sure, yeah, he played wide out on a couple of
but he didn't play, he wasn't a starter. This kid's legit starter on both sides of the ball.
I just thought it was interesting. It's an interesting debate. Do with that what you will. Hey, finally today for my viral video.
This kid's going to be the first pick in the draft.
For my viral video of the day, you owned a Mastiff, and they are big dogs with big hearts. But sometimes they can get into big trouble. Pooh Bear the Mastiff. You can follow him on Instagram and his harried owner. Oh, Pooh Bear, what did you do? Watch this.
Did you eat the floor? Did you eat that floor in there? Did you do this? What are you trying to dig to? China? Come on, man.
Oh my God.
Unbelievable. Did you eat the floor? Did you eat that floor in there?
That's crazy.
Did you do this?
Pooh Bear.
What are you trying to dig to? China? Come on,
man. Pooh Bear.
Oh my God. Oh my God. Oh my God.
Okay, Tony, let's talk about this.
Someone in the comments said, obviously he thinks you need to remodel.
All right.
Oh my God.
So let's say one of the Batista dogs did that.
Listen, a Batista dog 2 nights ago threw up on a rug, and she almost got put out back and shot. If it wasn't for my wife. So this would have been death by firing squad for sure. I mean,
wow. Look at the fit. Oh, Pooh, you can't be that mad at Pooh Bear.
Oh,
I don't know. My mom, Tanya ate up my mom's linoleum in her kitchen one year, and then Tanya went to the farm. So I think this dog would have gone to the farm, Sosnoff.
It's not the dog's fault if it has separation anxiety. Anyway, that's my time.
I don't know how Pooh Bear got dug into the foundation.
That's unbelievable. That's unbelievable.
That's unbelievable.
Pooh Bear. Anyway, what's coming up next?
That's the most damage I've seen. That's unbelievable. Anyway, good job out of you, Vanetta. Even the S&P down 34. We'll see what happens in the market in just a minute. But we got confirm and send next. Be back in 90 seconds.
That dog.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market, Sadnoff. Even the S&P is down 39. They're about $10 lower than this, Sadnoff. We are at last night's low of 58.21. Not telling you the whole story here. We traded all the way up to 58.84 last night. We were up most of the night until the wee hours of the morning. NASDAQ down 157. Russell down 26, Dow down 130, volatility 2156, still quite elevated here, Sadnoff, with volatility up almost 6%, with even the S&P now down 41. I think you need a little volatility contraction for this market to get any signs of an up move here. Right now, not looking so good. Be careful what you ask for. We both said we need a little bit of a down market for a up opening. We're getting it right now. Bonds up 14, 119.08. About 8 or 9 ticks off of their highs of 119.18. You mentioned Bitcoin earlier this morning, 83 and change, back near its lows. I know intraday it traded down to about 78 and change about 24 hours ago, sitting at 83 and change right now. Ethereum not under 2,000, but again, near its lows, 2,060 and change, 2,070 and change on the futures. Oil down 80 cents. Gold is the only commodity that seems to be really rallying hard these days. Gold up 33, silver up 13 cents. Nat gas up 20 cents. Nat gas near its highs. I guess I should mention nat gas in the same realm that you mentioned gold. Corn, wheat, and soybeans, completely the opposite. Talked a little bit about that. Look at this chart of corn on the last couple of days or weeks here without an uptick. Wheat doing similar. Soybeans doing similar. That's all I got, Saz.
Let's go, because we're running late.
I'm ready.
These are emails that came into us overnight. Lots of them. When you refer to price extremes and pot odds, what do you actually mean? My interpretation is that you're referring to prices that have moved way beyond their standard deviation curve, increasing the probability that the market will run short on buyers or sellers to keep them moving in the same direction. Thus, the pot odds move in favor of reversal. I want to make sure I get it and that you're not actually talking a lot of underlying fundamentals or taking a lot of underlying fundamentals into account.
No, we're taking a lot of liberties with our own personal opinion and market awareness. Yeah, you got it. You got it pretty much flat out. I mean, everything is priced to us. That's where it comes down to. Everything is price. So,
yeah, I completely agree. You've got it right. I mean, this has nothing to do. We're not taking fundamentals into account. This is strictly a function of price, and it's exactly what you mean. We're not people that sit here and go, "Oh my God, this price has to mean revert." Not at all. But we are people that think that markets are generally pretty cyclical. And with that being said, cyclicality usually leads to, if I'm going to bet one, can I make two, or are the odds, better in my favor? It's just like in poker, they use the term pot odds because sometimes there's enough money in the pot that it's worth it to make the bet, even though you don't really like your chances.
Yep.
Let's go next slide. That's pot odds. It's getting so hard for me not to lean more bearish. Most new labor growth last year came from immigration. So in theory, job growth should already be muted this year. Then you throw in tariff uncertainty and government spending cuts. How do we avoid a recession or growth scare? In times like this, do you lean more bearish or just stay mechanical?
We haven't had the overall market, but you just saw Sosnoff kind of nibble on Nvidia and Intel. I mean, when markets get like this, yeah, we lean a little bit bearish on the overall market, S&Ps, Qs, but we really start to nibble on some individual stocks that may have gotten beat up too much relative to the rest of the market. So I think we stay both ways. We definitely lean with a little bit more short delta than we have had in the past.
I mean, because the market was just a couple days away from being at record highs, yeah, we've been leaning short. Anytime we get near record highs, we always lean a little bit short. Now, this morning we're pretty flat. Yesterday's down move kind of wiped out our short delta. So this morning, if anything, we're going to be flat to a little long. But we're not trend traders. So if the market goes down, we don't necessarily get more short unless I'm very opinionated. So, like, for example, the U.S. dollar's
which you typically are.
Yeah.
I mean, you
but
always
I'm
have
more
an opinion.
opinionated in things like the U.S. dollar, for example. Every time the dollar goes down more, I roll more puts up because I definitely don't. I want to be roll puts up in currencies because I always want to be long currencies right now. I'm not as aggressive with the stock market. Like Tony said this morning, we bought stuff. So I don't look at the markets as like you do here, thinking about labor and growth and uncertainty and spending cuts and recessions. None of that stuff comes into play for us because we believe the market already does a better job of taking all that information, interpreting it, and making it impact price than we could ever do. So we just believe in price. We don't really care about the macro fundamentals. Let's go next slide. I know that seems weird for people. We're not dismissive of it. We just don't think that's how you trade. On the platform, you show delta, probability of a touch, and probability of being in the money. How do those theoretical numbers compare with the actual results? Does it vary if volatility changes or if they're skewed?
I mean, do they change? Sure. When volatility expands, probability of a touch on an option that you looked at yesterday will be less than it was the day before. And if volatility contracts, it'll actually be more with the same product, nothing changing, in the company itself. So yeah, it's a dynamic number. All these numbers are dynamic numbers, but they're the best that we have. And I use them religiously.
That's the real answer right there. It's not like this is the best we have. So It's on the platform. We show delta, probability of a touch, and probability of being in the money. These are the best that there is as far as the measurements you can use or the Greeks you can use. If you want to know the statistical chance of how do these theoretical numbers compare with actual results, the answer is plus 70%. So that's the best I can give you. It's about 70% of the time, we're right 100% of the time. I hope that helps. Let's go next slide. Sometimes following a sell-off or a sharp rally, you guys will say it looks like someone blew out or it was short covering. How do you make that determination?
Again, it's almost like with pot odds. We're just kind of going on our, 40 years of watching the market, which, by the way, you know what? We get it right maybe 55% of the time. I mean, you're looking at, maybe volatility expanding and then contracting pretty quickly, a big sharp move on a lot of volume. You're just trying to make a story or an assumption so that you can place the right strategy for the assumption. That's all you're trying to do.
Yeah, I mean, we don't know. We're just we're saying things based on our own experience. I mean, we've been there when hedge funds like long-term capital management, when they were blown out, when Victor Niedermeyer was blown out, when different banks were blown out. I mean, we've absolutely been there when through situations over the past 4+ decades where people have been blown out by clearing firms, by brokerage firms, by financial institutions, fraudsters, even going as recent as Sam Bankman-Fried or I forgot the guy in Singapore. I just forgot Bill, whatever his name was. But there's plenty of times that we've seen, people being blown out or firms being blown out. And so you kind of develop just a sense sometimes for what's happening. Could we be wrong? Absolutely. But you know what?
Of course.
Part of doing this show is telling it, talking to you like we would talk to each other.
Yep.
I think that's what it is. We're just telling you what we see.
We're working it out. It's just like working out a problem that you don't know the answer to, and you want to kind of have a think tank going. You just kind of talk.
Yeah, I mean, it's just from what you've seen. When Tony Romo's calling a football game, and he says, "You know what? I think they're going to run right this time." He doesn't know, but he just likes what he sees, the formation wise. He's seen it a billion times, and usually he's right. Let's go next slide.
Yep.
Can market makers refuse to take an order?
Can a market maker refuse to take an order? I mean, it's all servers now. I mean, I don't know why would they want to. Of course, they. Believe me, your order is not going to be too large for a market maker, or liquidity provider or a server. I guess they can widen their parameters so that they're not competitive with the disseminated market on the screen. But then you're just giving up paper to. This is your job. Like this is what you dream of. This is what you live for. I mean, as an ex-market maker, when markets got like this, frothy and wide and volatile, this is when I made my nut. I mean, all the other facilitation orders were a pain in the ass. No, I don't think they back away. I guess there are ways that they could fudge their volatility, that they're not in the market.
I mean, absolutely, a market maker can refuse to take an order, but you're thinking about this like there's one market maker. There's hundreds of market makers in most cases, and so the markets. There's always going to be a market, but an individual, they can walk away, sure, but once you make a market, you have to honor that market for at least a certain number of contracts. But the answer here is, I think you're overthinking this. There's not just one market maker. There's a pool, and eventually there's always going to be a market. Let's go to the next slide. Don't worry about that. That's never going to happen to you.
Yeah.
So let's say, for argument's sake, IVR in SPY is 100, and IVR in an individual stock is also 100. Mm-hmm. Where do you get better bang for your buck? In an ETF like the SPY or the individual stock? That's a great question.
You're going to probably get a better bang for your buck in the individual stocks if you measure it by buying power versus credit received. Individual stocks, your Nvidias, your Netflix, your Teslas of the world are going to have a monthly implied volatility that might be 2, 3, maybe even 4 times as high as what you'll see in SPY, Qs, and IWM. for almost the same amount of buying power, maybe even a little bit less buying power, depending on the stock, individual stock prices. So more bang for your buck, probably the individual stock. Probably more risk too. That's why you have more volatility.
My answer is going to be slightly different. I'm not saying that that's wrong because I don't know the answer, but and he could absolutely be right. I'm going to say that if we research this, and I think we have, but I can't cite but I think we have researched this. I just don't remember when it was. That for dollars at risk, it's going to be exactly the same. Meaning that, just like Tony said, if you do the individual stock, you're definitely going to have an opportunity to make more money and you're going to take more risk. And in the index, you're going to make less money and take less risk. But for the actual dollars at risk, it's going to equal 1-to-1. So that's what I believe. We can check, but I'm pretty sure we've done that research before. So it's really just a matter, do you want to take a little bit more risk to make a little bit more money? Or do you want to have a little bit higher, maybe, make a little less money, take a little less risk?
Beautiful.
There's no advantage either way.
Yeah, I agree. But I mean, I think if you measure it just by credit received versus no.
Yeah,
risk
I'm not even
part of
arguing.
it.
I don't know the answer. I don't know the answer.
Yep.
Anyway,
Beautiful.
we're behind, so we're going to take a quick break.
Let's take a quick 90-second break. Even the S&P down 27. So we'll be back in 90 seconds. We got an option jive.
All traders are free market freaks. It's the lifeblood of risk takers. Nowadays, though, I still wonder how a productive free market economy will evolve to face the challenges of a more complex and divided world. So sure, I'm a bit concerned. In fact, as I think about the growth of digitization and AI, I know things are about to change at a pace we probably can't fathom. Regardless, one area we can all agree on is the power of decentralization to bring free markets into the future. The bullish case is that free markets will thrive when more people are empowered to participate through technological advances. Most of us also recognize the importance of sensible regulation to make sure that markets are equitable for everyone and will provide consumer confidence necessary to attract new capital. It sounds so reasonable on paper, but now come some of the challenges. Can we have a true free market when some of the megatech monopolies have a larger market cap than the GDP of most democracies? Can a free market thrive under the weight of income inequality and billionaires dominating the political machines? Can AI and quantum computing disrupt the tech backbone in a positive way to support consumer empowerment? And lastly, will the confusion around regulatory integrity be a meaningful hurdle or a showstopper? If corporate or individual fraudsters are allowed to run wild, then the importance of boundaries is meaningless. The bottom line is that free markets do not have default risk. They'll likely be around forever. But let's be careful not to mess too much with Mother Nature's ecosystem. Everybody has some level of fragility.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It's option Jive.
Thomas, option Jive, go.
Whew, we got a lot going on here today. It is 8:16 in the morning. I'm Tom Sosnoff. He's Tony Batista. But we don't have a lot of time here to chit-chat because we're going to run out of time today. We have Vecchio coming in at 8:40. We've got a pretty healthy market measure today, and Scott coming on it, and we got a busy market. So we're going to be busy right through the close, the close of our segment. Every day, Tony and I, 7 a.m. till 10 a.m. Central Time. Pete and Frank start at 6:30 a.m. Central Time, and then the team in London starts at 1:30 in the morning Central Time. So Tasty goes from 1:30 in the morning all the way till 6:30 at night, all Central Time. Comparing strategies, theta and buying power reduction. Wouldn't really Let's see what the team does here. Option selling centers on accepting risk in exchange for credits. Risk, however, is complex and multifaceted. It's a complex and multifaceted concept with many ways to potentially measure it. Two of the most relevant risk metrics for short options are theta and buying power reduction. Let's go next slide. Theta is the time Greek. It estimates, all else staying constant, how your position values will change per day. Typically computed from the Black-Scholes model, which the platform will do for you. While often considered as a profitability metric, it can be seen as an instantaneous and theoretically grounded risk metric by considering the other viewpoint. Theta is how much better off you are in dollars after a day without the underlying moving. A little heavy, especially if you're new to Tasty, but this is kind of what a lot of our trading methodology is built around. What's interesting about this segment today is we're going to talk about, what you can look at depending on account size, and should you look at BPR? Should you look at theta? I mean, I can tell you right now that we look at theta very much, but we also measure our size by BPR. And BPR is a very good measure of size. Let's go next slide. So the buying power requirement of a position is the regulatory requirement intended to protect both you and the broker. For defined risk positions, the BPR is simply the largest possible loss. For naked option positions, the BPR is calculated as the largest loss incurred by either a 20% change in the spot price or a break of the strike by 10%. It basically works out to a 2 standard deviation move or a 5% chance of getting there. Let's go next slide. Despite both measuring the risk of short option positions, these two metrics can be very different. For one thing, BPR in no way accounts for the time until expiration. So we put a little graph together on the right-hand side of the page here showing theta, BPR, and the ratio of those two. And we just put this up here so you can see the difference between a 45-day straddle, a 1-day straddle, a 20 delta 45-day strangle, which we usually use, and an iron condor, $10 wide, 20 delta short strike, $10 wide. And just so you can kind of see the differences in theta from $32 all the way down to $4.50, or $4.82, and the BPR requirements, working their way down as well.
Got it. Pretty symmetrical. I mean, less buying power, less credit, obviously.
Yep. Let's go to the next slide. In general, theta is higher when you're closer to at the money. Makes sense because the options are more expensive. The lowest BPR short options, however, are about 10% out of the money, where the two ways of calculating buying power reduction, where they coincide, meaning they cross over at some point. That's just how the models work. Let's go next slide. So except for extremely far out of the money, defined risk trades will bring in more theta per buying power. Sure, because you just have, you can see up here, the iron condor brings in more theta per buying power. That's why the ratio is so high. But that's that can be a little misleading. In smaller accounts, defined risk strategies can be the key to being an active trader. Yeah, because it keeps your capital efficiency in check. And as you can see here, again, the ratio is just much higher. But the potential to make money is significantly less. Let's go to the next slide. So, and this is where it gets really interesting. So there are many ways to measure the risk involved in selling options. The most theoretically rigorous way is theta. BPR, on the other hand, is the regulatory mechanism to protect both brokers and traders. It is, but BPR also provides something different. BPR gives you context around kind of what you're really risking on a trade, and theta doesn't really do that. So theta allows you to put risk into context, but BPR allows you to essentially gives you more than just risk into context. BPR tells you really what the real risk is based on the way we view it as a brokerage firm. Smaller accounts looking to take on risk can take advantage of higher theta with using low BPR strategies, such as, like, for example, iron butterflies or iron condors or whatever it is. Larger accounts, where the available buying power is less of a constraint, should likely focus on total theta to judge risk. So, for example, I look at my risk not based on buying power that I'm using. I look at my risk based on how much theta do I have, which is exactly what the research team wrote here. Tony looks at his risk based on how much theta we have, because 100%. We know if our theta is kind of in line with what we want, that our BPRs, the amount of capital we're using, is probably going to be in line as well. And here's a key. Based on how much risk you want to carry in the current environment, aiming for between 1/10 and 3/10 of net lick in theta gives you a good target for total theta. And you can tailor your positions to reach this level however you like.
Very nice. Well done there by the team. Yeah, really good nuggets.
The question we always get is, what is the percentage number? And it's 0.1 to 0.3. So on $100,000, you can argue it's $100 to $300.
Do with it what you may. Good job out of you, South North. Good job by the team. We'll take a quick 90-second break and come back. We got more Tasty Live immediately following these messages. Opening bell next.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
takes the guesswork out of retail trading.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Move with the rhythm. Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with the opening bell imminent here, Sadnoff. In less than 2 minutes, even the S&P down 41. Volatility 2165, Sadnoff. Really not coming in at all here. I think we're going to test new lows here in just a minute. NASDAQ down 135. Russell down 26. Bonds are up 9 ticks, 119.03. Bitcoin hanging at 83 and change, maybe a little bit lower. Oil down 60 some odd cents, and gold up 25. This is going to be an equity market here, Sadnoff. Some of them not looking too good. One you've been stepping on for quite some time now is Tesla. Looks like it's down around 270 and change, going to be down around $14 or so. A little bit of a bloodbath.
I put a I want to sell some Tesla 200 puts in April. Do you think they're going to get to $5?
April 200 puts. Let's see where they are right now. 200 puts. No, but 4.5 maybe.
I know. I think so.
I mean, they're a 10 delta. That delta is going to grow. You might be close. Yeah. I mean, yeah, you could be close. Yeah, you could be close. If they opens at 270 and change.
I mean, if somebody's got to buy something, I don't know. I figured if you sell the 200 puts at $5, that's a pretty interesting trade. I don't know.
Yeah, better than anything that somebody would have had prior to this move, because it's never been lower prior to this move.
We sold some puts in Target yesterday.
You talked about Microsoft the other day too. Microsoft down around $5. So, and Sadnoff, those puts, as foretold, are offered at $4.40.
Hey, I tried.
Darn, I'm good. Sadnoff. Darn, I'm good.
Well, darn, I just sold my Nvidia at 1150.
Darn, you made a scalp. You were the best. You win.
1150. Bought that Nvidia at around 950, right? Yeah.
Yeah, you bought Nvidia 930, 940, yeah, 950, yeah, 945 average price. You were correct.
1150 sounds.
What can't you do?
1150 sound really good,
doesn't it?
Yeah. Tesla, on the other hand, yeah, I'm not going to sell these.
Tesla down 11 and change. Let's see what else is moving this market to the downside. There's your Tesla down 11. Goldman Sachs down 15. Meta down almost 10. Netflix down around 6. Netflix never goes down. Amazon down 5. Target for earnings down 5.
So I sold the puts in Target. I sold puts in Target and at 90 cents. Stock's down $4. Just bought them back at
50 cents.
50 cents. So
directionally wrong. The right strategy. Just because of
strategically correct, directionally wrong is what we want to say. So stock's down $4, but we made 45 cents on the trade.
Yep.
So that's a good thing. All right, let's take a look because we don't have a lot of good positions on based on this opening here today. But the first couple
volatility expanded yesterday, and now it's expanding again today in a big way.
Yes. And with
what's helping this market to the upside? Not a lot, Sosnuff. I hate it when the Baidus of the world are the ones that are the leaders up to, and then you got volatility products, and that's really about it, Sosnuff. A little bit of gold, and Walgreens Boot Alliance up 60 cents. This is a all-out bloodbath in the market. Even the S&P's down 50.
Yeah, I mean, if you're looking for, I'm not sure what we're looking for here. Apple's
Microsoft
up.
Down 7.
Yeah. The question is, at what point do you nibble on a little Mr. Softy?
Even the S&P is making a new low, Sosnuff, too. 58.04 and a Q now.
Yeah. No, it's funny. I was looking at. I wanted to get a little bit long Microsoft at.
Well, it's $7 lower than wherever it was yesterday, which was its low.
I know, but it's crazy because I wanted to get long it like at a very much higher.
At a very much higher.
At a very much higher price. And now I get to buy it at a very much lower price. Is that proper English?
It's proper English if you scalp the stock for a profit. If you don't, then it's not. Why don't you sell a little bit of premium in here too? Premium expanding, 64 IV rank and going higher.
In Microsoft?
Yeah, in April, no earnings looming. I mean, you could do yourself a nice, $10 or $15 wide 1x2 put spread here for a little over $1. I don't know if something like the 360, 345. Break even down around 330, which is a 10 delta.
What I don't like,
battery all over it.
I don't like losing money in positions where I'm in indexes where I, like they pumped a lot of premium into the Qs this morning. And a lot of premium into the SPYs.
Oh yeah, IV rank 21. I mean, IV 2192 just was over 22 just a moment ago.
Yeah, so we're gonna have to make a couple of adjustments here, and like. I'm sure you don't like either.
I don't like it either. Any existing position you had that had short premium, even with a little bit of short delta to it, is not working.
Yeah, no, I know. So I'm putting in some offers above just to make some delta adjustments. I mean, I'm pretty
just
flat.
To make a little bit of noise.
Make a little bit of noise. I'm pretty flat here, but I don't like what's happening.
You didn't get all you can eat?
Yeah, I can't get. I wanted all you can eat, and I didn't get it. All right, let's take a look and see where the problem children are. Where are the problem children today?
Where are the problem children? You give it to me, I can tell you where mine are. When Google is up 46 cents, then you know they're coming for the pigs because that hasn't had an uptick. SMCI is another one up $1.
Yeah, that stock hasn't had an uptick either.
Apple only down 30 cents. No other real bright spots here, Sosnoff.
Well, I'm not going to be too fooled by this market here because it just there's somebody sitting on the S&Ps in a big way, and
volatility is confirming it too. Sosnoff 21.95. Look at volatility.
I know. I mean, all I've done so far is scalp a little stock, and I never scalp stock. I just bought some Microsoft and just took like $2 out of a bunch of Microsoft. I mean, it's crazy. These stocks are moving around. Yeah, literally, I took $2.50 or $2.25 out of Microsoft just in 2 seconds.
Yeah, in about
2 minutes.
No, less than that, Sosnoff. Less than that. Less than a minute. You can believe that.
That's the good news is that we can still scalp.
Yeah, it's 3 minutes. You're right. I apologize. Yeah.
But trading a little Microsoft, a little Nvidia this morning. I traded a little Intel, but I don't think we're actually unchanged in Intel. Yeah, I'm just looking at all my different underlyings here, trying to decide. Oh boy, what looks the most? Look at Microsoft. This thing just traded down to 81, 82, and now it's 86.
I tried to get you in there. I tried.
I did.
I
bought
did.
it. I bought it.
All right. I know. I tried to get you to sell some options in there too. I tried. We talked about it.
I bought it. Taiwan Semiconductor up almost $7. UAL down almost $5. They got a lot of stuff
volatility
going.
2170. Sodnoff just sold off by about 30 cents. Even the S&Ps are down 42. Do you think the down move is over? Put a fork in it, Sodnoff. The down move is over.
I don't know that the down move is over, but what I will say,
I don't know either, Sodnoff, but it sounds good.
What I will say is that if you're waiting for some capitulation on the downside, you may have just got it. You may have just got it. I'm offering,
sir, Senator.
I was going to sell some call spreads in Qs and SPY, and I backed off. I offered them above the market. I'm not filled, so we'll see what happens. But that's a pretty interesting opening.
Yes, it is, but volatility back over 22 for a minute there. Yeah, you're 100% correct, Sodnoff.
Yeah, but here's the thing. It's a little bit misleading because the NASDAQ is actually pretty strong right now, considering, and the Russell.
And NASDAQ's been the weakest of the group, Sodnoff. I totally agree with you. Down less than 1/3%.
And
the Russell's the real weakness.
The Russell's really weak. The S&Ps are really weak. The NASDAQ looks fine to me. And I don't have an opinion on the Dow. I don't really care. Yeah, that's a pretty wild opening. Apple's up. Yeah, there's a few stocks that are up, a few stocks that have come back.
Yep.
Yeah, it would have been nice to get some puts off in Tesla on the opening, but I didn't. All right, I'm good.
Tesla hasn't really rallied as much as the rest. Tesla down $9. Tesla's low is 270. It's 275 and change right now, so I'll give you that. But it's still down, 3%. That's a pretty big move. I mean, Microsoft is down less than 1%, just to put it in perspective right now.
Yeah, this market is not out of the woods, Tony.
All right, well, let's see. We'll take a quick 90-second break. We'll come back. We got Let Me Explain. I'm sure he's going to have the answers for us. That's right. We'll be back with Chris in 90 seconds. Tasty Live.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap. You have to take a vision test.
Yeah, I test. I will pass. Don't worry.
Well, maybe we can test it out. Is there any way that we can test this out, Vanetta?
I think that there is.
Okay, Thomas.
Can you
why don't
read
you read line number?
Line 6.
Why don't you start with number 8?
8? Easy. D, E, F, T, G, T, East.
And you're getting a bus pass. Okay, so whose readers do you have over there? Put them on for the people. Let's do it. Let's do a fashion show.
Oh, these are. Okay. With all due respect,
ma'am. Excuse me, ma'am.
How did I smell walking in? Because I was stuck in traffic next to the 35th Street.
Okay, now I know.
Okay, 35th Street L stop, subway stop, like 35th Street subway stop, and my car parked there for probably 10 minutes in traffic, and it was just like fumes of marijuana coming into my car from all the people at the 35th Street subway stop.
Ladies and gentlemen, good cover. She's high today is what she's trying to tell us.
Yesterday, my son and I put up. We were talking to you, and you were getting a little fresh.
It's the 4 of us.
So we gave you a double, it's not a backhanded slap unless it's a bat slap, and you had the two of us. It really looked funny because the way it was set up, it looked like we were slapping the two of you.
I'm looking at it now. It's a beautiful picture.
Oh, yeah. That's not a backhand. That's a bat hand.
And your son has more. He's got.
Oh, my son's coming from downtown. He's got some anger in his.
Yeah.
I think he's trying to reach all the way over to Sosnoff. We're going to take a quick 90-second break and come back. We got more Tasty Live right after this. You know what's coming up next?
Lunch.
You boomers cut out early, so you guys pieced out right after lunch, and you were like, boomers out, and you like skipped out of the office together holding hands. Meanwhile, the rest of us are like, what the hell just happened?
What'd you call Tom when he just comes for lunch and then leaves?
Oh yeah, you're a lunch badger.
Lunch badger. That's it. That's what we were.
Hey. I'm the only one here.
There are some people right now in production that are about to walk out because they're there too, and they're there every freaking day, Saz. Now, if that's right, I'm talking about James, I'm talking about John and Beth, I'm talking about all the crew there. They're there every day too, so why don't you give them a shout out?
Who?
Thanks, Tom.
Oh, John.
Just turn off his camera now. That's all you have to do.
Huh?
Make it real easy.
No, just get real close.
I was going to say, better yet, zoom in on. There you go.
Oh, I like this. Tasty After Dark. Yes.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. You know what that means. We got somebody with all the answers. That's right. Let me explain, my man Chris next. What's up, Chris?
I'm doing well, guys. Do I have all the answers today? I hope not. That would mean today's going to be a boring day of work. We're trying to figure things out still around here.
I'm trying to figure them out, too. I thought the lows were in for the day, and it looks like we're making new lows or just made new lows just now.
It's not a good-looking rotation out there. The past few days have seen the typical leadership that you'd see in a bear market developing, with retail falling apart, with XLY falling apart. It's ugly right now, and maybe we should put a stake in it. We should just call the bull market dead.
We could try.
You can say it, Tony. Try.
You can certainly try.
Market's
I don't know if the bull market's over when we're 3 percentage points away from all-time highs, 4 percentage points. I know the Russell's 15% off of its high that it made earlier this year, but I think we're going to have a little chop, like we said from the very beginning of the year. I don't think any of that's changed. I will say that volatility is a lot higher than I would have expected. And that leads to your story that maybe there's some more down movement to come, for sure there.
What's really interesting is that if you set aside the sector rotation right now, the seasonality for March is actually pretty good. The past 10, 20 years, you've seen gains about 0.5% or 1% on the 10 and 20-year periods for the S&P. And it's typically a big vol compression month. Over the past decade and 2 decades, the VIX has fallen the most. I know in percentage terms we're not supposed to quote, but it's fallen the most in March, either the number 1 or number 2 spot over the past 10 and 20 years. So I suppose if we can get some of this risk removed off the table, right, the tariffs can be lifted at any point in time. You could see a big vol compression event. But right now, when retail ETF XRT is entering bear market territory from its highs, that is the sector that has historically shown the greatest sensitivity to recession. And it's screaming recession right now.
I don't know. I haven't looked at retail sector in 40 years, and I've been through quite a few recessions, depressions, screaming matches with Tom Sosnoff, crashes. The retail sector has never been something I've looked at. Thomas?
A couple things here. First of all, I hate the whole recession discussion. Of course, you know that, Chris, because I think it's all bullshit.
Do you?
Yes. I think the whole thing is all bullshit. And I also don't buy into any of the conspiracy theories right now that, this is just, this is a setup to get, to lower, to have an excuse to lower interest rates, blah, blah, blah. None of that crap. I think, and I'm also going to dispute a little bit on the seasonality aspect of it. Triple witching in March is one of the strongest market periods of going back for as long as I can remember, like into the 80s. However, the last 4 years, they've destroyed the market into March triple witching, 4 years in a row. The other thing is, this is seasonally, from the February expiration till about March 10th, is incredibly weak. I mean, we've had some of the biggest turnarounds in that period, or big market moves, going back as almost every market move I can remember started in end of February, early March. So this is, I think, a little more typical. And if you're looking for a volatility contraction, which I am, because I'm short vol, I'm looking for all this stuff to go down like second or third week. I think this is the week where you've got to, where there's the risk of a little bit of a swoosh to the downside. Maybe we're seeing it right now. I also think this is probably the week where there's the greatest opportunity for a moment of capitulation. Like, I'm in the same camp as Tony on this. I think we're, as people that have watched,
market move. It's not into perpetuity here.
Yeah, of course. And I also think that we're set up for I'm more worried about a sharp, like as a day trader, as a trader, I'm more worried about where we are today. I'm way more worried about a sharp up move than a down move, just intraday. I feel like yesterday's sell-off late in the day, I just don't think we'll see. We could easily close down 50, 60, 70 today, but I think that the most of the, let me say it better. I said it crappy. We've been waiting for a gap down opening. We got one today. That's all I want to say. I've been waiting for a gap down opening. I got one today. I'm still a little bit.
It's funny that you said we might be down 50, 60, 70 today, because I just wrote somebody and said, you know what? We might close right here today. Like, that wouldn't be the worst thing, I think, from a price point of view in what's going on in the market.
Just getting pinned.
I just thought we needed to have a gap down in order for this market to make a short-term bottom. I am intermediate term bearish here, incredibly bearish. I don't like this market at all. But I think on a very short-term basis, we're oversold, and we needed to open lower one day, just gap down, open lower. Because if we open higher, I thought for sure we're going lower. But if we open lower today, maybe they have a bounce later on in the day. I don't know.
But it's scary when it does this.
Well,
even after all these years.
What's scary is that the VIX futures are up almost 10% for the second day in a row. What's scary is that the VIX itself is approaching 25, and 25 is doesn't get there that often.
Nope.
When I'm looking at this market and thinking about the volatility expansion here, we have started this year with multiple talks of seasonality on let me explain, overtime futures power hour, and typically the market chops around through the Ides of March. So expecting this market to move sideways is not wholly unexpected, right? But I would point out right now that when we think about this market action here, what we saw yesterday, I think, is actually particularly damning. In the S&P, for example, we gapped open higher and then we closed below the Friday lows. That's not something that you have seen occur in the span of the bull market run in terms of price action, really over the past 2 years. I was looking through the charts with a fine-tooth comb last night, and I couldn't see that happen on any occasion when the market was still in the upswing. So there are behavioral price action things that are going on, like with this Bitcoin crypto reserve announcement, whatever that is, where it's fuel injected into the tank, and then we immediately run out of gas. And so these catalysts that should be sparking us, they're really not. And then the price action itself is telling you that people are still very happy to provide supply to this market right now. So short-term bounces aside, the sector rotation needs to hold up. What I find really interesting is, a name like XLU, for example. I know that's an ETF, it's utilities, but the companies that make up the utilities right now, if you think of those as an AI proxy play, they're doing fine. And as rates go down, those fixed interest costs that those utility companies pay, they get cheaper to service, right? They can make a little bit more money. So I think this is an environment where you have to be selective. It's a stock picker's dream. And if vol continues to press up from here, if we can see a washout to 30 in the VIX, I think is actually more likely than this being the high. If only because I'm looking at the breadth in this market right now. Yesterday at the close, 42% of stocks were still above their 20-day moving average in the S&P 500. That is not near a capitulation low. The capitulation lows typically occur when that metric reaches 10% or below.
We don't think we're near capitulation lows other than a trading low. Like, this is not a market capitulation. We're not talking about that. We're just saying from a, where are we going to close this afternoon type thing. I agree with you. We're nowhere near, we're 600 S&P points away from capitulation lows. We could trade 52, 53, 5400 before I think, we're at capitulation lows, maybe 5,000 even. But we're talking about intraday, just like a scalp or something like that, not a capitulation low.
Too fast. I mean, listen, we've done this on the way up to Sadnoff, where we're days early on an up move, and Chris will sit here and say, "There's no reason to sell anything here. All the fundamentals, everything is staying the same." So it works. The sword works both ways.
Yeah, I agree
for sure.
Yeah.
And the other day you asked me where would I be interested in buying the S&P. I mean, at 5,800 on, Thursday, I suppose, if that had come Friday morning, it's a lot different than it arriving today in the form and fashion that it did. It's not exactly like we arrived here in a washout. We tried to bounce back at the end of last week. We've immediately sold it off. We keep grinding lower, and bonds are just, what performs the best in an environment where you're concerned about recession? The long end of the curve, historically speaking. If we look back at 40 years of price action, and bonds just had their best month in February in 2 years. So we just have to be very careful right now. The market's clearly very defensive. If there's a further vol spike from here, I think we can take a short-term opportunity. But I don't think, personally, I'm not trading around any bounces as if they are the lows right now. This is a sell the rip, not a buy the dip kind of environment from my perspective.
All right, give me. You just mentioned bonds. When bonds were going lower, the market was going higher. Everybody was talking about bonds going lower. Interest rates are going to go higher. This is going to be bad
not here, Tony. That's not fair.
No, not you. You were a buyer. No, you were a buyer of bonds. I'm talking more to Chris and the likes. So you were saying bonds are going lower, rates are going higher. This is not going to be good. This is not going to be good for the market. Now bonds are going higher, rates are going lower. It's not going to be good for the market. It can't be both ways.
It can. There are financial regime shifts, right? Throughout 23 and 24, when rates were going down, the market says, great, less inflation. The Fed can cut. Now, all of a sudden, we're seeing rates go down, and it's like, whoa. Why are the rate cut odds going back up? It's because of these recession fears, and recession ultimately undermines corporate earnings. So the fact that since the middle of February, you've seen that lower rates have not picked up the Russell, that's been an alarm bell and a big red flag for my eyes. Right now, it seems that we're shifting in terms of our preferences, and people are looking to, they don't really care about the inflation because the inflation is going to collapse alongside the growth. Which I know there's a lot of these GDP trackers floating around right now. Atlanta Fed is looking particularly damning. Yesterday, they had a projected 1Q25 growth rate of minus 2.8%, which is a sharp turnaround from the high reading of 3.9% earlier in the quarter. I think we should split the baby with where the New York Fed nowcast is, and that's still at plus 2.94. The impulse for growth is certainly slowing down. Are we cratering into a recession that we haven't seen since COVID? That's far too early of a consideration to make. But it's not looking good out there. And the fact that you have XRT plummeting nearly 20% off the highs with bonds behaving the way that they are, we should not ignore what the market's telling us. And as Stanley Druckenmiller said, the market is the best economist he's ever known.
Oh, my God. You're quoting Druckenmiller. All right, whatever.
A couple of interesting little tidbits, Tony. Nvidia just went up on the day. Interesting. I mean, considering it was, that was a crazy.
And I can't take Chris's bearishness, so I just bought E-mini S&Ps at 57.92. I can't take it anymore.
Good for you, Tony. This is my actually reverse psychology. I was so tired of no one else being bullish with me, and I figure if I get really bearish, you all flip.
I just sold those puts in Tesla that I wanted to sell this morning. Remember, I wanted to sell the 200 puts at $5.
$5. Where'd you sell them? Tesla's been getting hammered. Tesla's down 15.
I sold them at 5.15.
Good hold or good weight.
Good weight. Yeah.
Mm-hmm.
So, and I think it's going to sound crazy, but if you want a tariff play, because at any moment Trump's if you want a hedge against Trump pulling the Band-Aid off the tariffs, which the one thing we can all agree about with Trump is that he
does exactly what he said he was going to do.
No. Hold on. Yeah, he does. But then he gets scared and he backs off in a heartbeat. Like he'll change his mind on a dime. He gets scared. Like he doesn't like pressure. He doesn't like to be wrong. So he'll get scared. And what happens is when he gets scared, he'll just flip the cards over the other way. It's just that's his MO. It's always been his MO. If you want the play, I got to play.
Mm.
The play, I think, aside from Tesla, is look at the move down in Boeing.
Yeah, I've got a buddy of mine who writes me all the time. He's called this Boeing top really well. He thought the whole tariff thing was really going to hurt Boeing.
I agree. I agree, Tony, but it's 160 now. I
know. He was talking about it at 184. I got to give him props, my boy Peter.
I know, but now at 160, if you sell some, remember over the summer, in its worst case, it got down to like I want to say 138, 140 in that range.
Mm-hmm.
If you want a positive tariff play right now, like just like a rip the Band-Aid off thing, how about the 140 puts at $2? It takes out it's all the way back to where
back to the old lows that it made when planes were falling out of the sky. Hey, they're still falling out of the sky.
I just sold some at 217. The markets in Boeing are not great, so you got to be a little careful.
Mm-hmm.
I think you can get filled to like 222 or something like that.
You got filled at 217 at the moment.
I know that's where I put it in at, but I think you can do better.
Gotcha.
I think you can get it maybe a nickel better, but it's just kind of like it's a tariff play. That's all. Other stocks that are interesting to me, from the long side. Yeah, I mentioned Tesla. I mentioned Boeing. It's gonna be really tough.
I'm surprised you're not talking 200-day moving averages on E-mini S&Ps.
No, I don't care about that crap.
No, I'm talking Chris.
Oh.
Nasdaq fell below it for the first time in 333 trading days yesterday. So again, signs of the bull market coming to an end. We weren't below the 200-day when we were in the bull market, guys.
What's the 200-day moving average in even the S&Ps? Like 50 or something like that? 57.50 or something close to that?
I have to pull that up. Truth be told, I don't really care for the 50, 100, 200-day moving averages. They're just round numbers. And I know people pay attention to them, but I don't understand the rhyme or reason.
The dangerous thing to the market here is, though, if you get them down today, if you get a lot of panic selling today, because I'm watching the way the NASDAQ just traded, and when we first started the segment, the NASDAQ looked like it kind of wanted to rally. It looked
stronger, you're right. Mm-hmm.
And now it's down 270. And I'm starting to think that the NASDAQ takes out.
Oh, yeah. If Chris costs me money on this scalp, I'm going to hunt him down like nobody's business. I'll find you, Chris, if I have to walk.
Well, he's already cost you money. I mean, you're already.
Yes, he has just about 20 handles. And believe me, I am not happy about it.
I apologize. I just should have said this is a bull market.
Don't apologize. Don't show signs of weakness. That's very Trump-like, according to Sosnoff. Don't flip-flop. Stay your course. Tell me. You told me to be careful.
Speaking of Boeing falling out of the sky, I'm due to fly out to Chicago in a few weeks. I was wondering, Tom, do I get hazard pay for that now, given the state of airfare in the United States?
You mean air traffic control?
Yeah. Do I get hazard pay for getting on a plane?
Sure. Talk to Tony.
Okay. Cool. Tony, let's talk.
I'll pick you up, Chris. I can do that for you.
Beautiful.
Tony's running our limo service. All right, Chris, we're going to let you go. We're going to get to other things.
Sure.
Good job out of you, Chris. Good banter back and forth. We're going to even the S&P down 81 as Chris foretold. We'll be back in 90 seconds with this Tasty Live. What do we got coming up next? A market measure. That's right. Sound off a market measure. We'll be back in 90 seconds.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
The beauty of Thinkorswim was that we were different. From the name to the front-end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back? But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Shake it up, stop when the the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right, with this market measure, sponsored by the SIBO.
It's a little ugly out there, Mr. Batista. I just took off.
Oh, a lot uglier than I thought it would be. 100%, my friend.
A lot uglier. I just took off my S&P Russell trade finally. I mean, I don't know.
That worked out nicely for you.
Well, today it did. It came in 50 handles, but I got plenty of bad trades on today too. So it's not all.
I do too.
Yeah. What else was I going to tell you? Yeah, this is very ugly. It's early too. That's what scares me. The early ugly. Eddie, good news. First of all, good news first. Look what I got.
Please do. I can use some good news.
From John. And I've never been here. Have you been here? Roser's Bakery.
No.
Show the box.
Chicago's oldest family bakery. North Avenue, West Coast, Rose's Cakes. Look.
That's awesome. But I only see the cover. There you go. Oh, look. You got your own private stash. They gave you your own.
No, I'm not. I'm not taking these my own. I'm just showing you on it. These are the push keys.
You got your own private stash. John, you are such a suck up.
Look how good those look.
I've never had those from Rosen's. Rosen's has been there forever.
I've never been there either, but those look amazing. And that's real stuff.
Thank you, John.
Thank you, John.
Thank you, John.
John, you go to the head of the line today for Flacco's Tacos. You're number 1 seed. Well,
100%.
What were the chances that you would see 4 consecutive days of the S&Ps moving 100 handles?
I would have said with the expected move being 100 handles for the week, I would say less than 0.
Exactly. Well, you've just got it. 100 handles, 4 days in a row, 3 of them down, 1 up.
Yep. Unbelievable.
Insane.
It really is.
It's early.
Volatility is here, and it looks like it's here to stay. 2250 on the VIX futures, Sadnoff.
Oh yeah, I'm looking. Meta down $24. Yeah, there's going to be a few problem children today. We're going to have to call the lefty.
No doubt.
Good need a lefty, and I don't even have big positions on. My positions are little.
Nor do I.
My positions are
but
tiny.
I mean, you never realize how big small really is. Isn't that the way you said it when it goes against you?
Yes, sir, Senator. That is exactly how I said. I'm just trying to keep. I'm trying to keep everything like, I don't know, somewhat in line.
Yep.
Anyway, I'm Tom Sosnoff. He's Tony Batista. It's 9:12 in the morning. Don't forget this weekend, go to tastylive.com/events, and you can sign up for our last live event with Mike Butler, Nikki Batista, Katie McGurgle, or that's if you want to see it live this Sunday night, but it's a waitlist only. If you want to stream it live on March 29th, you can do that too. tastylive.com/events. Just sign up, and we'll mint as many copies as we need to, and you'll own it forever. Mm-hmm. And Mike and his whiteboard, which is a fun little story that started about probably, I don't know, back in the old 10 years ago at least. This has been watched. Mike doing a bunch of different videos talking about options. I'm guessing he's probably been watched 25 to 50 million times at this point, all over. Mm-hmm. So pretty remarkable. Now Nikki Batista wants to get in on it. Katie wants to get in on it, but
everybody wants to get in on it.
Yeah. Anyway, this will be fun. It'll be a fun night, and no push keys, but Jimmy bread.
Jimmy bread. Some of the best bread in Algonquin, Illinois. That's right. Voted #1 bakery. Algonquin, Illinois.
Anyway, so we got lots of fun stuff going on, and that's later on this week. Then we'll announce our touring schedule and everything else right afterwards. So today we have, I don't know if we have Scott today actually, so it might just be you and me talking to the close. But
maybe we can take phone calls too if people want to talk. I think
it's a good day.
Game day decision.
Actually, I think it's a good day to take phone calls. So
I agree.
1-855-238-2789. 1-855-238-2789. And let's talk about risk. Let's talk about some positions. Let's talk about what do you do. I mean, it's another tough day for it's another tough day for, unless you were like
markets across the board, Sosnoff.
Yeah, but you know what? It's kind of weird because, and on one hand, I want to say it's a tough day if you're trading zeros, but the other side of me wants to say, you know what? If you get it in and out, stuff's moving all over the place. Like I've been scalping stock all day. It's been fine.
Yeah, I got a bunch of emails from people that are doing fine with 0 days. I haven't really got any bad ones from anybody, but I mean, listen, you wanted volatility. We got volatility. Change the way you think and trade. Be nimble out there. Keep your size in check.
There's
the moment you've been waiting for.
There's an expression we have, which is no hero crap.
Yep. That's right.
Yeah, we're not at the level yet where you can pull the hero stuff. All right, let's do it. Let's take a look at what we have. It's a market measure. It's a little heavy, so we might go back and forth with some of the stuff that's happening in the markets because we're kind of at that, right when you get down 100 and it's only 9:15 in the morning, starts to get our
blood in the water.
What?
There's blood in the water.
There's a little blood in the water, and some of these. Well, I was going to say some of these commodities are turning around a little bit, but yeah, there's a little blood in the water. That's a better way to say it.
Yep.
And also gold came down a little bit, surprisingly. It was so damn strong this morning, and now it's gone completely the other way.
Yep.
Tough.
Yep. Gold up 19 and change after being about $20 higher than that.
Really, really tough trade in there. Now we're down 102, Tony.
Yeah, it's a bloodbath.
Yeah. So much for the thinking maybe they're going to bounce here, whatever it is. All right, let's start this market measure, and hopefully we can get through it. Unless the market starts to, I was going to say crap out, but it's already crapped out. But unless it starts to get really ugly, then we'll come off the market measure, talk about markets, and because there's both a combination here of risk and also opportunity. Opportunity for some people that have been, we always talk about this. Like a lot of people like to sell puts because they think it's a great way to make money. But we always say when it gets to your number, you're going to think differently.
Yep.
Like I really wanted to get long Meta at about where is the stock right now? It's 628. I thought it's 666. Yep. It was going to be pretty good there, but it's 628 right now. Now I don't want to be long it. Nvidia
risk versus reward.
Nvidia's back down to 110.5. Tesla's down $20 right now. Coinbase is 195. There's some stuff.
No doubt about it.
Sometimes be careful what you wish for. SPOO's down 17. Now, if you're wondering, I'm sorry.
SPOO's down 17.
No, SPOO's down
110.
I was going to say 107.
Gotcha.
Sometimes when you start to see this where there's not a lot of bids right here, and you want to be careful. You're like, I don't really want to panic, and I don't want to start selling stuff in the hole. But the other side to this is you have to be somewhat mechanical. And sometimes you just got to, you can't let
you got to reduce delta by 50% at least, Thomas. That's the mechanical thing. I've rolled down in Tesla a few times. I've rolled down in Microsoft. You have to stay mechanical. I sold calls against even the S&Ps, which absolutely stink now. So, you got to stay mechanical. When you're wrong, you're wrong.
Yeah. It's like we sit here and we're like, I really don't want to roll these down in the hole, but I kind of feel like I got to, and it's challenging because when you get down 112 and you have this kind of a move, there's a lot of times when the next part of this is a lot less manageable.
Yep.
Right now they're still pretty orderly, but there comes a time when they get a little less manageable. And we haven't seen one of those times in a long time.
This is true.
It's clearly an indictment right now of what people think and what they're seeing, and they're a little nervous.
Yep,
and I'm going to tell you something else. Nobody's liquidated anything yet. I mean, they just have not liquidated yet. All right, let's start this market measure, and then we'll come back if we have to.
Yep.
How to spot opportunity in options. And the reason I say this is a really interesting piece, but it's a little less appropriate today than it would be on other days. Because today, you can spot opportunity based on price extreme more than talking about a specific option price. But let's go to the first slide. So understanding option pricing is one of the keys for premium sellers. To calculate it, we introduce something here called normalized volatility risk premium. It's a ratio that compares implied volatility to realized volatility to identify prices of options. We're working on a lot of really new stuff here on the research team. So we're trying to create, over the years, the last 14 years since we built Tasty the think tank, we've been trying to change the way the industry does research on options and the way that we talk about all the different ways to trade, derivatives. This is something that we're another introduction. So a high NVRP, which again, it's implied volatility to realized volatility, signals an opportunity to sell premium, leveraging the market's tendency to overestimate future volatility. By systematically using normalized volatility risk premium, we may be able to gain maybe a mathematical edge, or let's call it a mechanical edge, and optimize returns in the markets. So how can we do that? How do traders spot opportunity like that? Like if you wanted to get really technical or really go deep into the weeds. Let's go next slide. This is the mathematical expression of the normalized volatility risk premium. And we put the formulas up here. So IV is implied volatility and realized volatility is RV. And you can see for additional context, let's calculate the NVRP since the beginning of 2025. And just as an example here, we use two symbols, Nvidia and SPY, because they're the two most actively traded underlyings with very different implied volatilities. And when we look at the realized volatility or the historical volatility, you can see the difference is 12 and 74. And you can see that the ratio of the implied to historical is, in the case of SPY, 47%. In the case of Nvidia, less than 0. Let's go to the next slide. So we looked at 6 different underlyings: Apple, Tesla, Nvidia, SPY's, Qs, and IWM. We looked at 5 years of data. We looked at 16 delta strangles, same as we always do. And we looked at the implied volatility, the realized volatility, the premium, and worst loss, and the win rates, just to see, what can we take out of this? Can we take something out of this? Let's go next slide. So in this example, it illustrates the varying ratio levels across different stocks. Based on our study, a ratio above 15 is considered high, while a ratio below 15 is considered low. So what's interesting here is that Apple, Amazon, and Nvidia all had low ratios, when SPY, Qs, and IWM all had high ratios. So let's see what that means. Let's go to the next slide. So then we're looking at ideal trade selection and sizing based on these ratios. So for example, if the ratio is higher, allocate a larger portion of portfolio capital. If the ratio is lower, reduce the portion or avoid the trade. Now, this is based on 5 years of data. What's happened here is that the stocks that we selected have had some huge moves, like Nvidia. And the suggestion was actually pretty cool, which essentially says it was hard to make money on Nvidia strangles for 5 years.
Yes, it was. Yes, it was.
And that's pretty damn accurate.
Darn near impossible.
And it's pretty damn accurate. Can you go back one slide, Beth, for 1 second? I mean, what they're saying here is that Apple, Amazon, Nvidia, which had huge moves, and a low ratio, it was really tough making money in those stocks with short strangles. SPYs, Qs, and IWM, they actually had presented a better opportunity, even though you never would have realized that.
Right.
Except that this ratio is kind of brings things into some kind of context. Let's go next slide, Beth. So ideal strategies based on these different NVRP ratios. If the ratio is higher, short strangles. Okay. If the ratio is intermediate, iron condors. And if the ratio is really low, avoid selling. And yes, where was this study when I'm selling Nvidia at 200 on the way to 1,000? But it's really pretty interesting.
Where was it indeed?
It's really pretty interesting. Let's go next slide. So below is an example using strangles where we observe the following. A higher ratio results in higher premium collection due per unit of buying power and reduces the worst loss per trade. The win rate remains relatively unchanged. What's so interesting about this is that this kind of confirms, all the things that we've always said. When something has, when you think something has what looks to be the highest either volatility or ratio in this case, you actually have the least amount of risk. When you look at the worst loss, the worst losses were were in Amazon and Nvidia, and there's no surprise there. Those stocks were absolutely freaking brutal in the last 5 years.
Yep.
And even though the win rate was high, this is exactly what happened to me. I didn't lose any money in Amazon, but I did lose money in Nvidia. And
one of the biggest ones. And
my win rate was high. That's the problem. My win rate was high. It confused me. But my worst losses were bad. The SPY, Qs, and IWM, your worst loss was very manageable. Really interesting. I blame the research team for my losses now, and I'm going to have to dock their salary. Understanding option pricing presents an opportunity for premium sellers to capitalize on the market's tendency to overestimate future volatility, ultimately optimizing returns. By analyzing the normal volatility risk premium, the NVRP ratio, higher ratio allows traders to allocate a larger portion of the portfolio and collect higher premiums relative to buying power. Conversely, when the ratio is lower and implied volatility is not meaningfully overstated, that's exactly what happened in Nvidia and Amazon. The risk increases. In such cases, a well-defined strategy is essential to mitigate risk and to potentially avoid the trade altogether. It's a really solid piece of research. Good job, guys.
Very nice. Very nice. We're going to take a quick 90-second break. We're going to come back.
Load them up. Load them up.
Okay, 855-238-2789 or 855-BE-TASTY. We'll bump Mr. Scott Sheridan, who wants to listen to his stupid list anyway. We'll come back with your phone calls.
Who wants to
after
listen?
This.
Seriously, I could repeat every story Scott has, like literally every story. So
you took it way too far, Sadnoff. Way too far. I was not going there. You took it way too far. You got something to say? We'd love to hear from you. 855-238-2789 or 855-BE-TASTY. Phone lines are open right now. Give us a buzz. We'd love to hear from you. We'll be back in 90 seconds.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top yearly recap.
Breaking news on Instagram. The first segment of your line dancing has been posted. Left together, switch, turn. Right together, twirl, turn. Hip, hip, hip.
Right together, spin, clap. Left together, spin, clap. Hitch, 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 turn, shuffle, rock, shuffle, rock, shimmy, shimmy.
I took 5 lessons for cases wedding, and all I knew how to do was
Right together, spin it around. Yup. And you want to clap. And then like strut down, strut down, strut down, strut down. Right together, spin. Left together, spin. Hitch, 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 cross, turn, shuffle, lead, shuffle, rock, shimmy, lasso.
This is not good.
Hey! Oh, he's got the walk down. He's got it down.
It's perfect, and you got the bag. You got everything.
That is not even close.
Drop, bitch, stole my. Oh, it's flawless.
Oh, look, it's beautiful.
Flawless.
No.
You're walking way too fast.
And go stick your finger in all of our lunches.
Now complain about something.
Oh, God. You watched the debate. You knew who won, and you just didn't want to admit it.
I was in New York. I was flying home that night, and I'm so sorry that I didn't go back and tape the vice presidential debate.
First of all, I think it's hilarious that you run a technology company and you still think you think you had to tape it in order to watch it. You think you have to tape it?
He didn't have a blank VHS tape to spare for the debate. Stas, what comes up next? The opening bell. Don't look so surprised. Sadlov has been this way since 1980 when you first started trading. Wait a minute, was it always 8:30? Yes, the opening always was the same. The closing has changed.
Like, what has changed? I don't think so. Nothing's changed. The only thing they did, I think, was add the 15 minutes.
Excuse me?
The only thing I ever think that changed was the 15-minute curb session.
From 3 to 3:15, so they did change it. So it was the closing and not the opening that's changed.
For option traders, the 15 minutes.
Well, listen. We're not bean traders here.
Do not engage.
Wait a minute. So
when I got in this business,
we used to open it. We used to open at 9 o'clock. Since 1980 to now, we didn't always open at 8:30 in the morning.
Yes, we did. Is that a $20?
I am going to get this $20 off of you.
I don't think so.
No matter what. Chris, how are you, my friend? Chris, your job after you get off the show here is to find out when the New York Stock Exchange opened in the 1980s, what time they rang the bell. I have a $20 bet with Sosnoff. We're going to be eating good tonight. I already decided that Sosnoff will be having cereal for dinner tonight. I said the New York Stock Exchange did not open at 8:30 Central Standard Time. It opened at a different time. Saz said it always opened at 8:30.
I already have the answer. You guys need to choose a year, and that will determine which one of you is correct.
No. I've already won this. I said from 1980 to now, 2024, we didn't always open at 8:30.
I gave him 1980, but I technically didn't start probably till 81. But go ahead. What is it?
September 1985 is when it switched to 9:30 a.m. Eastern.
Thank you very much. Thank you very, very much.
Not 1980. Not 1980.
I remember. I was on the floor. I was working because I would have to get up earlier in the morning.
In 1980, the New York Stock Exchange opened up at 10 a.m. Eastern. It closed at 3:30 p.m. Eastern Time. The schedule was in place until September 1985, when the opening time was changed to 9:30 a.m. Eastern.
Pay me,
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Damn.
Wow. Long live the trader nerd.
Man, you're a turd.
Trade junkie.
Hey, it's fun, see? Tom and Tony in the morning.
Come on. Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right, with Talking with Tom and Tony, 855-238-2789 or 855-BE-TASTY. That's the phone number to call. Solid enough. Phone lines are open. I got 4 or 5 lines open. I do see you, Zach and Tyler. We will get to you momentarily. Solid enough. Give me a quick little synopsis on the market here. Even the S&P is down 84. We had our first little bounce here of about 30 handles off of the lows of around 57.50 or so.
Yeah,
NASDAQ down.
Can I say something crazy here?
Sure.
On the first little uptick, Apple's up on the day, Google's up on the day. Really weird. You know, the
Apple's been strong all day, Tom. Apple's been strong all day.
I know.
Google was green earlier also, but not as much. Up $1 now. Yeah.
I know.
Volatility 2216. It's come in from 23. Sadnop, was that the volatility capitulation? 100% it was. For my third call.
I'm gonna agree with you. We just have to get rid of Vecchio because he messes up our mojo. You know, he's too.
He does. He is definitely a stick in the mud. I think.
He's too like. I don't know what we're gonna do with him.
Yeah, just too light.
He's too light. He's too raw. Like I think we're gonna have to put him on. Well, he already is on in the afternoons. I was gonna say, you know, he's got to be one of those. Like we have to have certain people. Like Victor cannot be on during the day for sure. Vecchio, Ilya have to be on after the close.
They scare the children.
Yeah, I know they scare the children. Right.
Yeah.
Untrainable.
100%.
Untrainable. Yes. Where is the little untrainable one?
They just need more time with you.
Yeah, that's what it is.
Yeah, that's what it is. Yeah.
855-238-2789 or 855-BE-TASTY. That's the phone number. Call. Give us a buzz. We would love to hear from you. Sadov, you want to go to the phone lines?
If you liked Intel, by the way, at 22.5, you're going to love it at 21.
Where it is right now. You just bought it.
I know. I'm about to sell some here, putty in there. I think Intel got to
I don't know, of all the stocks that I was looking to nibble on here, and I get the risk versus
I understand. You don't want to buy Intel. It's a piece of crap.
Intel. I didn't wait all this time.
No. I understand. I'm just selling a few puts and buying a little stock in there. No, I completely get it. What big boy would you buy here? I mean, Microsoft, I already tried that. That worked okay.
Yeah, I think Microsoft. I think Microsoft is there. I mean, I think there are a few others too. I don't know if Tesla's the place to go to quite yet. Quite frankly, I have some long delta in there. I don't think that's the place to go, even though it's gotten annihilated these days.
It's got annihilated, but I'm getting very. I mean, well, whatever. I think Tesla is. You know what? You can't feel sorry for Tesla because I feel like it's self-inflicted. I mean, other companies I think that are not as self-inflicted, I think those are more interesting buys.
I agree with you. I don't think you need the news part of it there. I totally agree with you. I don't think Coin is another one that I don't think I would go there. But everything else after that, I think it's on the board. I think Amazon is a nice one here, down 5 and change. I'll go with your Nvidia too. Is a nice one. Yeah, I'm looking.
I kind of like Coin here. I like Nvidia.
See, I don't like the Coin noise in the background. I get the price of it, but I don't like the noise in the background. It's too much like Tesla to me.
Hey, are there any earnings tonight?
Crowd, CRWD.
Okay. All right. CRWD. Let's go to the calls and then we'll come back to this. Okay. CRWD.
Sure.
Oh, you're not going to trade this.
No.
I mean, $375 with.
No.
$375 with an expected move of $33 in the zeros in the 3 days.
Mm-hmm.
Go ahead. I'm sorry. Let's go to the calls.
That's okay. 855-238-2789 or 855-BE-TASTY. That's the phone number to call. Zach, South Carolina. How are you, my friend?
Hey, I'm good, guys. As always, I just want to thank you guys for taking my call.
and I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. And what everyone out there has to remember, where else can you call two real traders? They pick up the phone and answer your question. There's so many so-called traders out there on YouTube, for example, that give you vague strategies and want you to buy their course to learn more. But you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. So I'll just tell everybody I wasn't paid. Tom and Tony didn't tell me to call in and say this, but everybody just remember that when you hear all this other crap online, at least you guys have a resume to back up what you're talking about. But that's it. I'll let you get to more important calls, and thanks as always for what you guys do.
Love it, man. Thanks.
Thank you, man. Thank you. I really appreciate it. Very kind word from you. I do really.
You're using the professional trader term very loosely here, the way we're trading today. But
that's 100%. That's 100%. Yeah, I mean, listen,
we've definitely been around the block. That's for sure.
Thank you, man. Appreciate it. We're gonna go to Baltimore. I got Tyler. Tyler in Baltimore.
Hey guys, how's it going?
Hey Tyler, what's up, man?
I've been listening for a few hours today. Enjoy your pieces, but I'll get right into it. I've been doing trading on the side sort of part-time for several years, trying to grow my account, mostly just with individual stocks. I hear a lot of the importance of knowing futures, following futures for it all. I'm sure there's plenty of content on it out there, but I thought I'd just call in just to chat briefly about it. I particularly don't really know how, I guess, to follow the futures a specific way for the individual stocks. I guess wanted to just kind of hear you sort of spell it out again on what I should be following for it.
Hold it. What are you asking?
I don't understand the question 100%.
Yeah, say that one more time.
One more time.
So I guess the question is, I hear always the importance of just following futures for various reasons, especially even just following the individual stocks within the market. I don't really do commodities or Forex or anything like that.
Yeah.
Just take an individual stock. But so then how should a small trader like me who just trades with those kind of stocks be following futures, and what should I be looking for? Because I really just don't get into it, but I'd like to have that in my arsenal.
The first thing you should do is, before you even start trading them, is just add them to your watch list. Like, I'm not sure what your watch list looks like in the left-hand gutter, but if you looked at Tony and mine, and mine's actually in part of the drop-down menu there.
Yeah, so's mine. Mine's right here, Bat's watch list. You got Tom's watch list down at the bottom.
Yeah. You'll
they're
see
almost identical.
Our watch lists are all futures. Now, that does not mean that we only trade futures, because that's not even remotely the case. We're about 80% options. The reason we watch the futures is because that's the market that goes 24/5, and that's the market that kind of leads the stock market. So what you do basically is you're going to train your eyes to just see what the futures market's doing, and then that will kind of tell you what the stock market's doing. It'll tell you what individual stocks the stock market's doing. And that's the best way just to like introduce yourself to the futures world. You don't even have to trade it for a while. Just start watching in your watch list and see what you think. See if it starts to give you a little bit different perspective on certain things. And then you can take it from there.
And you can watch the correlation between them, like even the S&Ps or the S&P 500 / NQ is the NASDAQ. You can have all their meetings also on that watch list. And you can see, like earlier today, NASDAQ was fairly strong. And Tom and I both looked at it and saying, you know what, if the NASDAQ's going to be strong here, maybe this market's going to catch a bid. As soon as the NASDAQ started to sell off, the overall market started to sell off, and we both changed our tune. So it's just a way of kind of looking at what the market might bring in the future, because nobody knows the future, and you're just trying to get a little bit of a leg up on what's going to happen.
Okay, so while the market's open, am I putting more eyesight on the futures and more so after the market's closed?
No.
Well,
it's always when the market's open. we watched
after the market's closed, you could look at the futures for your overall position. Let's say you were at a little bit of bullish delta, and you see the even the S&P is down 0.5 percentage point. Well, you can know that coming in the morning, you're going to have some work to do with some of your bullish delta. Like, it's just a way of preparing.
But it also keeps you like engaged all the time. That's one of the cool things. And it also gets you more used to the way, like, there's a certain way that we can't do this with everybody, but there's a certain way we would love people's eyes to track the market, because it'll just give you, it makes it easier to watch the market. And I think once you get used to the futures, you stop scrolling for individual stocks, and you stop wasting a lot of time looking at stuff you don't really need to look at. So I think just introducing them on your platform is the most important thing you can do right now. I don't really care if you trade them at all, but just introducing them into so your eyes start to pick it up, and I think that'll really help you.
Okay, great. Yeah, that is what I'm asking. Just not even how to trade it, but just how to use it as information. So yeah, I'll do that. Just keep an eye on it, and then I guess put a lot of value on it. Definitely when the market's closed, and then during the day, seeing the correlation. So yeah, I'll go for it. Thank you.
Yep.
Sure, of course.
You got it, man. Good question. Good question. We're going to go to Arizona. I got CM in Arizona.
Hey, guys. Can you hear me?
Hey. Yep. Yeah, for sure.
First time caller, and like to brag about my dog tag number 213.
I love it.
Good job out of you, man.
I've learned so much from you guys over the years. I'm so much more comfortable with all kinds of options, I guess. I can't really find the dog tag because I lost it with the gold coin I bought at Costco.
Oh, that's great.
My joke.
Hey, just so you know, that's probably like 2012.
It was a long time.
Almost, it was forever ago. It was when I think, I got a deal from you guys to get a brokerage account or like a credit at a brokerage account that E-Trade eventually picked up or whatever. But I've met you guys. I was at the Phoenix show recently, but I saw you in LA. I was the crazy guy that came up and got a picture with Vanetta.
You have to be crazy to want a picture with Vanetta.
Oh, cool.
Yeah. I ignored all you guys. You all came out of that theater or whatever, and I ignored all you guys and went right for Vanetta.
You are crazy.
But,
You'll never learn. You'll never learn.
No, I did want to shout out to the chat and to Frankie. I've been offending Frankie a little bit just because, we're all friends, and I think it's good for all of us to share our views on each other.
Everybody needs to offend Frankie every once in a while. I try to do it every day.
Well, he's a bit sensitive, and I don't know, like he can kind of dish it out. It seems really easy, but he goes the other way. It's like, I don't know.
He is. But
the chat really has been nice to kind of connect with different people on both sides of the political spectrum too, because we should all be able to come together as traders and not,
Yep. That's what we try to do.
Politics, but
that's what we try to do. We like to rile up the crowds every once in a while.
And I like Vic. I like some of the new guys. I like some of the econ discussions. I mean, you got to grow a little bit, so. I get how it's not the hardcore trading, but it's pretty interesting.
Yeah. Thanks, man.
Thank you, man.
On a trading thing, just a quick thing that you guys don't seem to talk about that I have started doing sometimes is just buying a few shares at a time and then eventually selling calls against it. And then sometimes I end up selling puts after that. But the idea being kind of just getting in with shares as something goes down. Like right now, I'm grabbing a little bit of Tesla or Nvidia, like a large handful of shares. But from a delta perspective, I sell a call against it so that I end up being sort of kind of neutral. And then depending on where it goes, I'll sell puts eventually, usually. But just the whole, like, we forget shares. We forget that we can buy shares. And I know it's ideally
it's just capital intensive. That's all. If most people don't have
And I hear you on that because, like, I bought some shares this morning. I completely get it.
Yeah.
It's just kind of nice to buy like one share or two shares of like a Tesla, some of the bigger. And I just now started buying Tesla, but
good for you.
But other than that, I just wanted to get a call in and shout out to the chat. And wait, I wanted to see if there was something to put selling. No, that was it. I do. Oh, I was just going to say that there does seem to be a lot of bulls out there.
For sure.
We haven't really had downticks, you know what I mean?
Yeah, it's pretty, like you can tell partly from the chat and just out in the world that people are kind of in a little bit, I don't know, and a lot of them tend to be the people who are sort of in, the cult, I like to call them, but, I don't want to get political.
Buy the dip has worked every time, so,
Exactly,
when you haven't really had much of a movement lower. Except for
exactly. But I think people forget. If you haven't seen them, it can go down way fast.
Yep.
And so.
It's early today too. That's the scary part.
You guys do, and
you got it, man. Thank you. Appreciate your time.
Finally called. Take it easy. Peace.
Thanks, Sam.
Come back. We're going to Colorado, Parker, Colorado. Kevin, what's up, Kevin?
Hey guys. Hope you can hear me. Thank you for taking my call.
Sure.
Yep. I do have a question on this implied volatility salad. On the right-hand side of the platform, right next to the option chain, there is this like overview pane where you can see the IVR of a particular underlying. And I think I understand what the IVR is, but right next to it, there's an ID index. I'm not sure what that represents. And I don't seem to find the actual ID itself. And maybe that's not that important. I'm kind of lost in this ID soup of indicators and things.
There is... If you drop an email to me, Tom at tastylive, I'll send you one of the studies we did breaking down all of the volatility indicators on the platform, so it'll explain each one to you. In addition to that, if you go to if you click on the trade tab in the icons, just so you have the whole middle section, and just stay in the table mode. On the right-hand side, you will see what we call IVX. That's a VIX-style implied volatility. So we're careful.
Yeah, I see that.
Okay, so that the IVX, where Tony's going to put his cursor right on the IVX right now, that is the at-the-money implied volatility. The IVR on the platform is always next to the symbol. So right where it says SPY at the top, right next to that,
52.9. Yep.
It'll say the implied volatility rank. So the implied volatility rank is always right next to the symbol at the top of the page. The actual implied volatility is in the right-hand column, and where it says IVX, and that's the at the money. And then if for any reason you wanted the individual strike implied volatility, you can pull that up in any one of the drop-down menus, and you can see the individual strike volatility. The implied volatility rank gives you context around whether or not that implied volatility is high or low. That's all we do. So it's not implied volatility.
Right. I mean, that's like based on the historical range of the implied volatility of that particular underlying.
That's right. For the last 52 weeks. And then if you want to know what implied volatility the IVX actually means, next to that in parentheses is the expected move. So what implied volatility is, it's just a measure. It measures expected move, and expected move is in the column next to that. So like whatever you're looking at, there's the IVX, and that's a percentage, and then right next to that it says plus or minus some number. That is the expected move. So if the expected move is bigger than usual, the IVR will be high. If the expected move is lower than usual, then the IVR will be low. That's the easiest way to think about it.
I see. Cool. I I will send you. Hopefully, you can send me what.
Okay.
Yep.
And then I'll go from there.
Sure.
Thank you very much, guys.
All
Thanks
right.
a lot.
Take care.
Thank you. Appreciate your time. Next call is going to be Destin, Florida. Xavier, what's up?
Come on. How we doing, fellas?
Hello.
Doing good. How are you?
Pretty good. I love you guys. What you're doing. I've been watching for a while, and I just first time caller. I wanted to ask you guys some questions about like put credit spreads. When it's time to just accept the losses and just kind of move on, or can you just roll those out?
It's really up to you. I mean, it's put credit spread, so obviously it has defined risk, right? We would roll them out if your assumption is you're still bullish on the underlying. Okay, that's the most important thing. Your assumption is you have to still be bullish, but if you are, and you can roll them out for even money or a small debit, I doubt you can roll them out for a credit because otherwise you probably wouldn't ask. But if you can roll it for a credit, great. If you roll it out for even or a small debit, we're fine with it. If it's a large debit, we probably let it go. I mean, Tony, what do you say?
Okay.
Yeah, I'm in the same pool because if it's a large credit, it's probably too much of a loss. You might as well stay where you are.
You can always also just remember if you're short a put spread and the stock's going down, you can always sell a call spread above your put spread strikes, and it requires no additional capital. So you can so if you're short a put spread that's in the money, and there's any premium left in the call spread side above that, you can sell any call spread you want, same width of the strikes, and you can collect some additional money, which will reduce your risk a little bit.
Oh, wow. That's wonderful. I will definitely have to do that.
Yeah, because
I just don't have a lot of capital.
Yeah, because that's
usually the first thing that we do.
That's the first thing that we always do. Before we roll or anything, we sell the call spread above because that brings in additional credit and lowers your risk, requires no additional capital. After that, then if that doesn't work, then you can roll it out.
Yep.
Okay. Yeah, I'm pretty bullish. I mean, I'm 26, so I think the stock market will continue going up. But I know with all the tariffs and stuff going on, it's kind of an uncertainty going on.
Yeah, sure. I mean, listen, you should be. In your entire lifetime, since you were 9, you haven't seen a sell-off. So, I mean, you got to keep going with what's working. And I totally understand that. No, we have no question. No questions. Keep playing it. Play for positive drift. You're going to be around for the next 50 years. It's a good thing.
All right. I appreciate you guys. Thank you so much.
All right. Take care.
Appreciate you too. Atlanta, Steve in Atlanta. What's up?
Hey, guys. I got to tell you, listening to you two, I feel like I'm sitting in the booth with Peyton Manning and Bill Belichick as opposed to listening to the talking heads who Tom says really don't ever really trade. And you know who I'm talking about on CNBC. I think you guys have really helped me turn the corner in a number of ways, just from the standpoint that Tom says, okay, stock, prove to me that you can beat me. That helps me conceptualize and visualize just how you kind of bracket the market. The other thing I was going to ask Tom, you had a rising star on the other day. I think his name was Jonathan from the UK, an Oxford grad.
Yeah.
And he was doing these. Can you explain to me the advantage, just kind of quickly, of these calendar spreads that he was doing? So he'd do a short-dated call, and he'd do a longer-dated put. He'd short both the call and the put, but a shorter-dated call. What is the advantage in that? I'm having a hard time grasping that. He obviously is doing really well and knows what the heck he's doing.
I mean, he tweaked, he's been playing around with lots of different strategies for a long time. I mean, he's been following us for probably, I think it was like since 2019 or whatever it was. And there are a lot of people that like to tweak the durations on strangles. It gets a little complicated unless you're really committed to it, kind of like on a full-time type of thing, because you can get a little bit confused with, different buying powers. I believe his account's portfolio margin, so he doesn't have this. It's a little bit different than an individual margin account, so he can afford to be in different monthly cycles. But his philosophy is that on the call side, from what he's doing on the call side, he's been able to, since the call side seems to, when volatility contracts, the call side seems to contract faster for him, and he's just been successful with that approach. Like, I don't do that. Like, it doesn't make any sense to me to sell the shorter dated calls and the longer dated puts. It just never made much sense. But I think from a management side, he feels like, you know what, he's more comfortable that way because I think from a comfort level, it was more about not being short the puts that can with all the gamma risk on the put side. So I think what he was trying to avoid was like the puts blowing up in his face. And by pushing the puts further out in time, they move slower. And I think he thinks it's way easier to manage the calls.
That makes a lot of sense. Yeah, I appreciate you explaining that. So let me ask you one more question. When you guys were in the pits, and I regard that as being sort of like being in the trenches of, pro football. You talk about if you can do 15 to 30% a year, you're really killing it. You talk about the risk-free return of 5 to 6% sort of being a baseline. When you guys were in the pits, and I know, Tom, you've made your big home run, I guess, on the sale of both Thinkorswim and Tasty, which kudos to you. I think that was brilliant. But when you were in the pits, was that what you were shooting for, 15 to 30%?
No.
You see so many...
100, 150%, 200%.
Yeah, when I first... The first 10 years of my career on the floor was more like, I was shooting for like way, way bigger multiples of whatever I had. So, I don't want to... 300, 400%.
Yeah,
I don't want to say because at this point in life, it's a little embarrassing because back then it was just different world. You can't do... The opportunities aren't the same. They're not the same in the trading business, but back then, like if you had a $100,000 account, you wanted to make $1 million. That kind of thing. Right. Those changed over the years. And as we were hung around longer, the numbers went the other way, so as we acquired more wealth, our numbers went down significantly because you're making, you're making the same amount of money, but you're making it your balance is much bigger to start with. So the number might go from being 300 or 400% down to being 30% or 40%. Who knows?
Right.
I see. You need just more positions, more diversified, I guess, employing the same type of strategies.
We traded stupid big in a smaller account than we trade now in a larger account.
Yeah. That and you have to remember, back in the trading pit, you didn't have the luxury to scale up because you could only participate in whatever the order flow was. So whether you had $1 million or $100,000 or $10,000, you would still do the same trades no matter what. So you couldn't scale.
I got it. You guys ought to write a book. I think life in the pits is probably I visited the pits back in the day, back in the late 90s, and I remember seeing some guys just 2 inches from each other's faces, screaming at each other. You talk about free market economy and capitalism at its true core finest. I don't know how you survived unless you were the biggest, baddest ass in the pit. But
I protected Tom, but that's a story for another day.
Yeah. I had my wife. My wife protected Tony. All right, we got to go. Liz and Jenny are staring in the window. All right, goodbye.
Appreciate your time.
Thanks.
All right, Thomas, I'm sorry if we didn't get to your phone call. I do appreciate it. Thank you so much for calling in. We're going to take a quick 90-second break. Liz and Jenny next. Not only are the E-mini S&Ps, the NASDAQ lower, nat gas has cured cancer. It's up almost 10%. We'll be back in 90 seconds. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got.
If that's you, join us on Tasty Trade. Named best online broker for options trading. Genius loves company.
All traders are free market freaks. It's the lifeblood of risk takers. Nowadays, though, I still wonder how a productive free market economy will evolve to face the challenges of a more complex and divided world. So sure, I'm a bit concerned. In fact, as I think about the growth of digitization and AI, I know things are about to change at a pace we probably can't fathom. Regardless, one area we can all agree on is the power of decentralization to bring free markets into the future. The bullish case is that free markets will thrive when more people are empowered to participate through technological advances. Most of us also recognize the importance of sensible regulation to make sure that markets are equitable for everyone and will provide consumer confidence necessary to attract new capital. It sounds so reasonable on paper, but now come some of the challenges. Can we have a true free market when some of the megatech monopolies have a larger market cap than the GDP of most democracies? Can a free market thrive under the weight of income inequality and billionaires dominating the political machines? Can AI and quantum computing disrupt the tech backbone in a positive way to support consumer empowerment? And lastly, will the confusion around regulatory integrity be a meaningful hurdle or a showstopper? If corporate or individual fraudsters are allowed to run wild, then the importance of boundaries is meaningless. The bottom line is that free markets do not have default risk. They'll likely be around forever. But let's be careful not to mess too much with Mother Nature's ecosystem. Everybody has some level of fragility.
Get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Make your move, genius. Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade. Named best online broker for options trading. Genius loves company.
I got Joe. Joe in Houston, what's up?
Just want to call in and say I really appreciate everything. I started trading and learning from you guys about 6 years ago. You know, it was you guys' work and the platform that got someone like me that didn't really know anything about the market capable of really outperforming the market now for, 5 out of the last 6 years. And so just, I really appreciate you guys. I can't think of another company where I can pick up the phone and call the CEO, the trade desk, and reach somebody as quickly as I can there. So just really appreciate everything and what you're doing. For guys like me out here, what you're doing is really spectacular. So really appreciate it.
Thank you, my friend.
I really appreciate it.
You made my weekend, man.
Hi, my name is Liz Deerking. The beautiful brunette next to me is... What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on. No, you're wrong. I'm Hold on. She's wrong. I'm right.
High school party, high school condo.
Yeah, because it wasn't in school. I had friends at my high school who were mutual friends of Liz, and so we were all at the same party. And then parties for the rest of our lives. The same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together. Yep. Is Liz. Looking good today, Liz.
Feeling good today, Jenny Andrews. Feeling good. Not really, but it's okay. It's all right. It's okay.
It's all right.
We're in the studio. We're in this beautiful graffitied downtown studio. I have my best friend with me who's one day...
My first day of being 49.
Yes, you're one day into your 49th year. And...
Not going to...
Punish Pixel's wish for you did not come true.
Punish Pixels! For every day this year to be green, a green day, not a green day. Yesterday morning... Green. Went out for my birthday, opened my phone in the afternoon, and was like, what happened? What happened?
What the actual?
So I think I called Liz. And I said, what happened? And then I said, let me call you back. I'm running into the bakery to pick something up. Came out of the bakery 10 minutes later.
What happened again?
What just happened again?
And then I think you ran into the post office, and then it was like, what happened again? Yesterday was bonkers. I mean, today's a little bit of follow through. I think we're going to be getting that. What's crazy to me is the VIX isn't up that crazy much.
I mean, with the amount that the market's fallen, here, we could go to the platform and just take a look at what we've been dealing with. I know.
So into the platform.
I know Tom and Tony were like, whatever, we're just back to where we were in October.
It's like right before the election. We're back to election levels.
Yes.
That's if you move it a little bit, because it's closer to my birthday, right there's the election.
Yeah.
We're right back down to where we were right before the election. It's true.
It's true, but we got there very quickly. We got there in a matter of, instead of, I don't know. It just this has been a little bit painful. This has been a little painful. Took a little bit of a chunk out of my account.
A little bit of a chunk out of my account, too.
It's been a little painful, I think.
But it's not that. I mean, it's okay. We've been here before. But okay, so SPX is a 52 IVR. Can you please take a look at the VIX with me, for me, or anything like that? I'm gonna go that way.
VIX is 25 now, which 25, that's respectable. The move, I think, warrants 25.
Okay, but look at this. So back in, what is that other big green bar? Was that the election? No, that was December 18th. Okay, that was the December pop.
I don't know. I think 25.
Well, I think it's going to keep its wings up, too. And our president's talking tonight. We'll see some more about it. I think the volatility is going to keep its wings up for a little bit.
We're getting big swings. Lately, they've been in one direction. Could the pendulum turn? Could we start getting big swings in the other direction? Who knows?
Yeah, you never know.
Or are we going to keep falling? I started, and partly it's because
what is that?
I don't know. I just went to trade, and that's what it was on.
Oh.
I started moving things out. You know, I'm a weekly girl. I started moving.
Well, you
out.
have a different decision coming up too, because you're getting on a cruise and you don't want to worry about this on your cruise.
I don't want.
So,
no, I don't.
I know you like the weeklies, but anytime we go on vacation, a lot of times we'll do that. And you're going to see me do that in 3 weeks.
Well, and I think we're going to go through this account. There are a handful of positions we need to adjust or roll. I mean, maybe it's interesting. We were talking about this. Do I want to go to? There are a lot of people who are weeklies. Now, Tasty Trade Mechanics would say move out to April, and we started doing that with some positions.
And
And
that's what I did. I got myself the heck out of the way when things got super bad for me. Like, let's just look. Like, can you open up Intel for a second?
Yeah, because that's ugly.
Because in my infinite wisdom, I had
It wasn't down that much this morning.
No, it's not down that much this morning. $2, but $2 is a lot.
It was only down like 20 cents this morning.
I have the 25 puts. It's trading 20. So when I have something like this, I get it the heck out of the way. That's one thing that I will go pretty far out in time. Do we have the 20? Oh, we have the
23 puts.
Yeah.
Still 50 cents in extrinsic value there, but sure, we can move it out to April. And the 23 puts, this is when we struggle. We're like, oh, we're going to go all the way out to 44 days for 40-something cents.
But it smooths out your deltas.
Yeah,
So that's the one thing. I do that with some things where I'm like, okay, this is one I want to put it out there and not worry about it.
And not worry about it. Now, do you and are you adding on calls in some positions?
Yes. So here's the hard part is when you get Intel 76 IVR, I mean, we just saw SPX had a 56. You're going to see all these things have a high implied volatility. If this is the time when it's hard for people to do, but a lot of tasty traders do this, is when they start, well, you can add calls, you can add puts, you can add lots of different things when you've got this high IVR. But it's a very tricky thing for people to do.
Today, I started selling out my zebras and turning them to puts, closer to at the money puts, because my zebras were all out of the money. I started just selling out whatever was left in the zebras, if there was something left into them, and then selling like at the money puts.
Well, so it's a double-edged sword, because it's the right thing to do because there's so much implied volatility.
But if we get the huge move up, you're not going to make as much.
You're not going to make as much.
You're not going to make as much.
Yeah.
You're not going to make as much. So we can roll out our Intel. Do we want to add calls?
Honestly, add call spreads. If it bounces back up, then
that's true.
It's not. That's what I always tell people who are afraid of calls. Add call spreads, because it'll pick right back up. Well, I mean, not with the put, but yeah, it'll pick right back up if you.
All right, so let's see. I'm going to get $1. I'm going to get $1.03 to roll this out. We're going all the way out to April. Now we have the 23 put, 25 call. That's fine. We can leave it there.
It's so funny because we'll always be like, well, if it gets to 25. But I'm not going to lie to you. I don't know that I'd be happy.
Then we'll say, why did we sell that call for 57 cents?
Yeah.
But Intel hasn't really been above 25. As high as it's gotten and as much as it's moved, I mean, 27.
I mean, for one blip in time,
Yeah,
what did I
one
do?
moment
Roll up
in
my
time.
puts? I'm sure I rolled my puts up to the 25 thinking I was a genius.
Oh, I mean, in Archer, every time it would move up, I'd roll my puts up, roll my puts up, roll my puts up.
Oh, yeah.
So I don't like having that naked call that far out in time, 44 days out. It's 25.
Well, I mean, honestly, do the spread. Just buy something.
Yeah, and then it gives us a little bit. That 57.28 gives us a little bit of extra credit.
Yeah. I was even going to say, yeah, there you go. You're getting a little bit of extra credit. Hit that.
We'll buy this. It gives us a little bit.
Then if it shoots up, great.
Exactly.
Oh, let's get out of Target, because I think Target is down. Target was up originally after earnings yesterday.
I know.
Even with the big down move, Target was up after earnings, but now it's not.
So we are up $24.
What I'm going to look for?
So not terrible. Should we wait to get more? No, not in this market. Let's just take this off. Yeah, we're getting $2,000 back.
I wanted to see.
So we got $2,000 back by buying back our Target. Okay. News, Liz. News. I don't know if you heard it. Did you hear the Walgreens Boots news?
Oh, yeah. Being taken private.
Yeah, at around 11:30.
Not time. Price.
Price. Not at 11:30 a.m. At about a price of about 11:30 is what I heard.
Yeah, so we're filled in Target. We're filled in Intel.
So are you surprised that it didn't just go up to 11:30?
No, because you remember how those deals can fall through?
I know the deal can fall through, which is why the options might maintain value. But I thought the price would go closer to that 11:20, 11:30 price.
I mean, I see. I'm picking up what you're putting down, but I don't know when it is. And we've seen this so many times where deals fall through.
I know. But at least you probably have one green thing on your screen.
You know what
today.
else is green today? In an ironic turn of events, JD.
And Taiwan Semiconductor.
Which I was shocked. Like, are all the Chinese stocks up?
Let's see.
They love the tariffs? They love them.
No, because Baba's down. And Baidu is up. Baidu's up.
Hit JD, let me show you.
Up.
JD's up. It was up. Let's make sure it is. Yeah.
It's up.
Yeah.
Well,
I went to Frank. I actually jumped into Twitter. We don't have to go there yet. I just wanted to, because you were saying a number came out, and it was while Vanetta was talking, so I didn't hear this. Was it retail sales? Weekly retail sales?
Maybe that was it. I just thought something, the market kind of moved right around 7 or 7:30. What time? Let's pop it in Twitter.
7:45.
7:45. We're filled in buying that call. Like in hindsight, looking back at the Intel, we've got 57 cents for one call. We paid 33 for the other. I don't know that I would have sold a $2 wide call spread for 20-something cents.
Oh, you know what, though? It's fine. Honestly, it is what it is, because that's what you're going to do if you want to sell calls with it. You added 20 cents to it. It's almost Jade Lizard-esque. You added 20 cents to your put. That's the way that I look at it.
I guess so.
Okay, let's pop into Twitter if we can.
Yeah, let's pop into Twitter. And then I opened up what we need to adjust today or move or roll.
Okay.
Jack Tucker. Jack Tucker. Hope you've been surviving these days.
Oh, look at this. I just wanted to click on this. So today, I love this. I love Jack Tucker. He's back. I mean, he was never gone. But he's got a 20 by 20 here.
5,700, 56.75. So 25 by 25. 25 by 25 for 650. So yeah, this is what we've been seeing.
Yeah. No.
Oh, but you're saying his contract size, 20.
Yes. Now, a lot of times he's actually done up to 40, and we've seen it, but it'd be 10, 10, 10, 10. But here he's going in with a 20 lot. So
Jack Tucker, you're a legend. We'll be live from the SIBO tomorrow. You're a legend over there. A legend.
He is a legend. Okay, so I'm going to kind of scroll through some of these going this way. Here's our Polish warrior coming in. Happy Blood Red Tuesday, ladies. It's time for you to join the cool kids. Yay! Aneta and Lisa, and sell a VXM future on this spike.
So that's the mini. That is the mini VXM / VXM.
/VXM.
Let's
pop in the platform.
It's trading 22. The high here today was 22.97, so not far from the high. So selling this it's a micro mini SIBO. It doesn't use too much buying power, $726. And what you're looking for is maybe for the market to settle down, buy this back later for a cheaper price. If we get a little bit of, if the market starts just sitting here or coming back a little bit.
That will come back pretty quickly.
Yeah.
And I wish I had a certified badass card on me. I think all of them get it. They all get a certified badass card.
Even though it's a mini, they're all going to get it.
But it's very similar to what we were just talking about, meaning that a lot of tasty traders can look at this and be like, some people will look at this and be, kind of scared. A lot of tasty traders look at this as an opportunity. And that's what Mikey's doing.
Yeah. And again, this is a mini, so it's a way to short volatility, which we usually don't advise against. Like, we advise against naked short volatility. So this is naked short volatility, but it's in a mini product.
It's the same thing as if you're going into a mini and buying the mini. Like, it's if you're going into MES and buying MES.
Right.
It's the same concept. How much is it to go buy MES?
I'm
not advocating we do that.
It's not that much.
Well, I think it's going to be. I think these are 6 of one, half dozen of another, right? So that's $1,600.
So twice.
So it's as if you did 2 of these. But yes, so that's that same concept. The VIX should come down if MES goes up, and if you're looking for a quick scalp.
And we have seen plenty of people, but now the premium's high now because vol's high. We have seen people, buying these, and we used to see Mikey buying these, and you could see what a difference a week or two makes because he would buy some of these and be paying, half of these prices.
Because there's a 52 IVR.
Right. Yeah.
Yeah.
We talked about that the other day. We rarely see SPY and Qs and IWM get up to this rank.
That's what I'm saying. The VIX at 25, it is fine. Like, I understand that the VIX, that's a respectable level in your words. But the VIX at 25 and the IVR at 52.
Yeah.
I feel like the VIX should be a wee bit higher. Or I feel like UVXY should be higher. I'm a little irritated at UVXY. Because that's the one thing I did. I went in and I bought not bought UVXY, but
we had the Zebra. You had your Zebra.
UVXY is trading the exact same price as the VIX.
Why didn't it pop up more? Why isn't it more in the 30s?
Yes, you would think it would pop up more.
Isn't it percentage based? So when it's higher price and it's going down, it goes down more. When it's lower price,
it does have the drag.
I think it has moves on a percentage.
It does, and it does have the drag, but it's weird to see them the same price.
Let's see, it's up 9.88% UVXY, and the VIX is up 11.4%.
Yeah. You see what I'm saying?
Yeah, I don't know. Volatility is hard. It's hard to trade. I always say if you want to trade volatility, just pick your direction.
Pick the direction of the market. I kind of agree with you there.
But whoever bought whoever bought the 57,000 VIX 23 calls, nice work.
Go back to them. I want to see because
they were the
regular March 18-day. Well, which would be 17-day now.
23 calls, and they're 230 today. Nice work.
Because there was 190 some yesterday, and now there's only 185.
I mean, there are probably a lot of people trading the VIX options.
Yeah. Congratulations on your wealth.
Well, this is
57,000 of them. That's
AM.
No, yeah, don't go to the. Yeah, it was the March.
I guess
it was the regular March. It had 19 days left.
Yeah, that was it. So the open interest stayed about the same.
Yeah,
so if that big order went through, there were lots of VIX orders, but maybe a bunch of smaller ones.
Yeah, that's true.
Okay, we have some things to do today.
Can we pop into Twitter real quick?
Sure.
Just because I'd like to see whose feet these are. We're going to come back to your list because I like this. We got CrowdStrike, Box, Raw Stores, Abercrombie & Finch, and Foot Locker today. And Bob, we love you, and we will come back to you. I just want to see whose feet these are. Oh, there's two of them!
This is from Brad. Happy Poodle Tuesday. Let's make some money, ladies.
Look how cute they are.
Oh, I wish I had. For my birthday, I had.
You should have posted it.
I know. So I enlisted a friend of mine to do 3 paintings of my dogs, my 2 poodles, and then Jazz, who passed away. And so he finished them, and I got them yesterday for my birthday, but they're not framed yet. So he just did the paintings.
Oh, they're not the frames yet.
I have to take them to have them framed before I could add them.
Okay, I get it.
They're and I wanted them to be, they're like pop art, colorful.
Oh, are they super cute?
Yeah, they're super cute.
That's fun. That's super fun.
But I wish I had them to post on Poodle Tuesday.
Coming soon. Okay. Oh, wow. And he's out.
Out at $3 for a profit of $6,795.
Yeah,
after
Jack.
fees and commissions.
That is, I'm going to go into.
Good.
Yeah, that's amazing. Okay.
Good, Jack. Nice work.
Yeah, congrats, Jack. But see, that's just it, is he stayed the course.
Well, we're down 106.
I know but a lot of people wouldn't be able to put it on a day like today. Do you know what I mean?
We're down 106, and we didn't open down 106.
Yeah, but I don't think, let's see what time he put it on.
Oh, yeah, right. He didn't put it on at the open.
No, he doesn't put them on at the open. Let's see what time he put it on. 8:47.
Yeah.
Yeah. Okay, let's pop back into the platform, and Jenny is going to walk through what we're going to do.
I think, like, when you have down day, and you're thinking, what do I need to do? It's a good idea to open up each position and look. Does anything need to be rolled out? Can anything be rolled out?
It's a good idea to go through all of them.
I opened up, and I just started bottom up, and I just opened up what we could roll. So XLB, here we have 89.81 put spread, and we're trading 85.85. Probably a good time to roll. It's like a Jade Lizard, and it's a $2 wide call spread and an $8 wide put spread. And it's only an $80 loser, which isn't bad, but it is a Jade Lizard.
But it is
like a big lizard.
Jade Lizard-esque because you got $2 on the top side and $8 on the bottom. Yeah, let's roll it out in time. And 17 days left. And Jenny, yesterday we only got halfway through the alphabet.
So I just went bottoms up.
Yeah, perfect.
So we'll pay $310 for this. Rank is 79. Materials. This is material.
Open up the 44-day.
And see what we want to do here. Now, I don't.
You're not getting $3 any which way you slice this. Doesn't matter. This is a new set of eyes.
No, new set of eyes.
Let's do a big lizard.
We could do another big lizard.
Well, let's do a real big lizard. That had $2. That was a Jade Lizard. That had $2 and $9.
Okay, where are we?
I mean, you could separate it to the 86.
There's
there you
$3 wide, but if it goes up, well, we are only down $80 in this, so that's not bad. Here, if it goes, here's $3.
Make it $2.
So if it goes up, we are making some money back. Sometimes I have to delete it.
Oh, I have to delete the like all the time.
257. That's not bad.
No.
And then we're only using 443. Let me see. I'm still not out of this one. Is XLB liquid? And this is another time where you want to ask yourself, like, is this my best play? Especially if you're running low.
When you said, what is this, materials? And we're tariffing everything, I was like, Jeez.
I know. Like, is this the best place to put my money? Or is it the best place to use my money? Like today, I was closing some positions and moving money around, like into different positions that I thought.
This is when I'd rather be in every general market instead of anything else. Now, granted, this is an ETF, but I would rather be in your top 5 that have a 50 IVR, like your SPYs, your IWMs, your diamonds. I know diamonds is the forgotten one, but I'd like it.
I don't know. That one, show me what you would do, because I went a different route. I found products that have a lot of premium, like a lot of juice in the puts.
So, I don't know. I want my universe to be smaller when you have those, because you have a basket of things instead of an individual. Like, what product did you get in? I'm just saying in theory. I haven't touched my account today.
I sold coin puts. Like the first thing I did, I took, because I thought, this is going to sound silly because it's like completely different things. But where is this money really working for me? Is it working? Where is it working for me? So I took all my Ford stock, sold my Ford stock, and put that money into coin puts. Totally unrelated, but I'm just looking for like, what, is this money really working for me? What's it going to do for me? I don't expect Ford to have some major move, and there was so much juice in those coin puts.
I'm telling you, I think all I heard yesterday was automakers because of the tariffs.
And
so yeah, that was smart to get out of it.
So, and I talked about it the other day, and we got out of ours. So I'm like, okay, I didn't get out of that the other day. I got out of it today. But I'm just looking for where is there juice in the puts? And here there is. I mean, look at these puts. $18, $16, $12. They're expensive. You can go to $175, $10. There's a lot.
But these have always been expensive. So I will tell you, this isn't because of the move. Coin has always been expensive.
And then what is
and did the margin just skyrocket on coin?
It was only 7,000. It's not bad. It's only
it's what it always has been.
Yeah, and Tesla puts. There's a lot of juice in these Tesla puts. You can find some like hefty puts right now.
You can find hefty puts right now.
Mm-hmm. Where it's $10, $10, $10, $10.
So let me ask you this: but coin and Tesla are two different sides of the coin. But I'm bummed.
Well, Tesla's amazing. If I got out of my Ford, I could have just sold Tesla puts.
No, but look at Tesla. Look at Tesla's IVR. It's 110 versus coins of 50.
Yeah.
That's what I'm saying. They're two different sides of the coin. And a lot of times when Tesla does this, you and I will go out super far, like in time.
I know.
So can we price those out?
Yeah, I didn't even look at those.
That's hard for our show account because it's going to hold up a lot of capital for a very long time.
But if we pop up,
you can get out of it.
Get out of it.
But
so you can go all the way down to the 150. You can go 155
You can even go
for
farther.
$1,000.
Like scroll down, see where you can get $5.
I mean, look at this. You're only using $3,000 to make $1,000.
See where you can get $5. I just want to see, just for the small fries. You're big by big, but I want $5. $2,400.
Honestly, it's these aren't bad because
if Tesla comes in at 120, I guess I'll be glad to own it there.
If we get a huge move up,
you're out of it.
These come off. If vol comes in and you get a huge move up, these come off. But if not, you're so far down. But then these are just, you're in it. But when you look at return on capital, they're not bad.
No, it's not. And I like the farther out ones because I know Coinbase uses $7,000. Can you go out in coin and will it use less?
Let me look. Then it's really, you talk about me wanting to put things on, get on my cruise and not look at the market.
I'm looking at it in November.
It's the end of the year. In coin, let's see, $5, the 95, $100 down. And you're only using $1,800.
That's what I'm saying. So you watch what Tesla did because it's sometimes hefty. If you go pretty far out in time, you're December 19th, you're in November, and Tesla, it doesn't matter. It's the same thing.
Vol comes in, these products go back up, you're making half of this. You'll get out. You'll get out for half.
And in the words of TP, if coin gets to 95, things have gone horribly wrong. Right?
Horribly wrong. Horribly. I don't know. Okay, let's move on. So XLB, we took it off. I don't know that XLB is something we have to get back into. And that's just kind of how I'm assessing my account. What is this product going to do for me? Is this going to give me a lot of bang for my buck? If it's not, I'm finding it somewhere else.
No, I agree with you. I don't think you need to make it back in these products. Especially, I don't know. I mean, maybe we should get out of that. It's an $80 loss. It could be a lot bigger of a loss.
It could be a lot bigger. So anyway, XLB gone, and I don't know that we need to get into that. We could probably find something else. SoFi, we had a zebra here, 1516 zebra, and it's worthless, pretty much.
And we sold the strangle
around the zebra. The only thing, which...
I would take that put and roll it out in time.
That's what I was going to say. We could leave all of this and just roll the put.
So it is marking nothing. Okay, yeah. Roll the put.
Well, I mean, is it... Yeah.
So we can just roll this put out to April. 13 put to the 13 put. Doesn't this kill you?
Close your call.
When you look at this and you see, $1, and does the 13 put in the 17-day have that much?
Yeah, because it's the at the monies. Check it. Yep.
Yeah, it does. It does.
I would leave it.
I'm not rolling that.
I know you're going on your cruise, but I promise there will be eyes on
I'll
the
be
account.
back. I'll be back. Because the cruise is only so long. Next Friday, I'm at a dance convention. Next Friday, even though I'm not here and you have TP on, I am in a hotel at a dance convention.
What the heck?
I told you. We're going straight from the cruise to the dance convention. The dance convention is Thursday, Friday, Saturday, Sunday.
Will you be in the city of Chicago?
I'll be in, I don't remember where this one is, but I told you if I can get, if I can, because I'm just checking in on Friday.
I've got TP. If you want to pop in and say hi, you're more than welcome.
I'm just checking in. We have to check in. We have to check in, and Lily's dancing at like 10. I don't have a schedule yet.
Yeah.
I'll get the schedule Thursday night.
No, that's what I'm saying. I've got TP on. I'm keeping him on. If you decide to pop in and grace us with your presence,
I'll keep you updated.
I think life's too short to try to check in on us, but that's cool if you want to.
Snap, same thing. Let's take a look at this. It's trading only 950 though. So this is something where if we closed this put in the 17-day, there's nothing left in it.
How far did Snap fall from? Can I see the chart?
Well, we have the 11 put, so 13.
Oh, I think I sold the 11 put in my son's account.
Oh, I think that one day on the show, we were like, this is a great return on capital for little accounts. I've sold them in Logan's account too.
Yeah.
Logan's account, I better look at because it probably does have a margin call.
Don't answer the phone.
Margin call, who dis? Can we get back Los Kinky Boys? Can we get the song?
Oh, God. I'm sure we could.
I want to get the song with margin call.
Who dis?
I always wanted 5,000 shares of Zynga.
Is that even still a stock?
I don't know. I don't know.
Okay, so this is an inside joke for those of you just joining us. In the beginning of the show, we used to have a viewer named Richie Lay. He lived in New York.
Richie Lay.
Richie Lay. And he lived in New York, and he wrote...
And he's still around. He's not dead. He's still around. Yeah, I think
he just doesn't watch. But he used to make songs and send them to us. Call us if you...
Richie, if you're watching, post on X, put the hashtag LAZJNY, and please repost your song.
Los Kinky Boys.
The Los Kinky Boys. Please repost your song where you say, margin call. I always wanted 5,000 shares of Zynga. Okay.
It's pretty funny.
So this 11 put in Snap, what I would do here when these are so cheap, I would just convert this into one long call. Because you're getting 100 shares stock, you're not really giving anything up, and then you've got 100. You only have $1.15 in the Snap position in case the wheels continue to fall off.
Yeah, you're going to need to do that. You're getting back $263. You have a defined risk position instead of a non-defined risk position.
And it's not like we're that worried about Snap, but that's probably what JD and Logan can learn a lesson. They need to learn a lesson in turning deep in the money puts into in the money calls.
I swear to God, this kid's gonna be the death of me because he's like, why? He's like, can you get these puts out of my account? He's like, he thinks that's what's taking him down.
Can you get these puts out of my account? That's good. That's a good one. We always had a quote board.
I'm going to call there and be like, can you just remove these puts from my account?
Okay, so we had a quote board. Growing up, we had a quote board. College, after college.
I mean, not in our homes not when we were like little kids, like when we were.
No, like college and after, we had a quote board. When someone said something
asinine,
memorable, we put it on the quote board. Can we get a show quote board? I would like that. Can you please get these puts out of my account?
Yes. We should.
I like that.
Yeah.
That was clever.
Yeah.
So he looked at his account. He's like, can you just get these puts out of here?
Yes, he's like, can you please get these puts out of my account? He's got 2 puts, 1 put in Snap and 1 put in Archer.
And the Archer one, and doesn't he have, my OKLO isn't doing too good for him either. All right, so Snap I adjusted. I turned that in the money short put into a long call and gave up 15 cents extrinsic value, but we can only lose $115.
Hey, in this market, I'd rather the unlimited upside with defined risk setup.
Okay, I wanted to see Zynga. I wanted 5,000 shares of Zynga.
Doesn't exist.
No. What was it? What was Zynga?
I don't remember.
Can you go to Twitter and see if anybody posted the Los Kinky Boys song?
Oh, he popped in. I don't think it's gonna. I don't think we need. to be in here. All I do is the Jejun yesterday. Oh, Punish Pixels did Jejun yesterday. Congratulations.
Oh, that's good.
And then Cupcake says, in good morning, ladies. Afternoon for me in the UK. Oh, Cupcakes.
Oh.
Cupcake's British. The sun is finally out here, although the central heating is fired up. 45 degrees, but the washing is out on the line. Adult goals. I love it.
Wait. So 45 degrees, it's different. That's not really 40. Is it 45? Or yeah. Are they on, they're not on the Fahrenheit.
So you thought it was going to be. No, I think she's saying 45 degrees Fahrenheit.
Do they use Fahrenheit in these?
Because it looks chilly. Because
it does look chilly.
If it's 45 degrees Celsius,
It'd
it's
be
like
really hot.
100. Yes.
All right. Sun is finally out. I'm glad the sun is out because here it has been pouring rain.
Yeah, well, today it was. Yesterday it was nice out, and the sun was beautiful yesterday.
Yeah, yesterday was nice. It was a nice day.
That was the highlight of your birthday, minus the market.
Oh, it wasn't that good of a birthday.
No, that's what I'm saying. The sun out was the highlight of your birthday.
I mean, I was supposed to go to dinner with my husband, and when I was
after you saw your account, you said, "We can't go to dinner. I can't afford it."
I didn't go. I said, all I want to do is go home, have a glass of wine, and sit on the couch with my dogs. So I didn't go to dinner.
That solves everything.
I polished off Mayor of Eastwood.
Oh, yeah. There you go.
Yeah, sat home, wallowed in my sorrows.
I'm just blissfully ignoring this one. This is going back in the recesses. I have a very good ability to block things out, and this is a blocker outer.
I mean, you know why it's painful? It's because we were up so much, and then we gave it all back.
Yeah, yeah. Honestly, I think this is going to be a very volatile time for a while.
Yeah, I do think so. So if it's going to be a volatile time, what do?
Well, you pare back. You have a little bit more defined risk, but you have to be able to lean in. So, there's a lot of opportunity when this happens.
Which is why I was taking
a lot of opportunity and a lot of risk.
Short puts because I felt like there's a lot of money in those short puts. But yes. I like your idea of going out further.
Yeah.
You might switch them.
Yeah, I do kind of like getting things the heck out of the way.
Yeah, because how is that going to hurt me? I mean, yes, they can blow up in price and margin.
If they do, we've got bigger problems, right?
In the words of TP.
No, he was looking at go into like a general market.
This is what he would do. Yeah. This is what he would do. Like TP was notorious for this. He's notorious for going the 43-day and just literally getting $50. And I'm not kidding.
Yeah.
He would say like, oh, here's $50. And we would say, is it really worth $50?
And he said, if the SPX in 43 days is 2,200, I'm worried about shelter and water.
Yeah, I'm not worried about my puts in SPX. Yes. Then all he has to do is make a phone call and say, can you please get these puts out of my account?
Can you please remove these puts? Oh my God. Yeah, but that's not a bad.
I want to see how low you can get and how far you can get in December.
I mean, don't you think, Jenny? Like yeah. I mean, try something that we can afford, not in this account, but that I can afford. I don't want to put $22,000 in SPX.
All right, but look at this, $2,000, and I'll even take $3,000. Where will I take the SPX? I'll take it at $3,000, please, Chuck.
Yeah,
$1,700. Using $29,000. That's not enough.
No, I do. SPX is too much. Go to something else.
But I mean, 3,000. How long ago was I selling the 305 calls in SPY?
I think that's a real word. How long was I selling?
How long ago? How long ago was I selling? How long ago do you remember when I sold those 305 calls in SPY and then it blew through them? That was COVID.
It was COVID.
What if we get back to COVID levels? I'm pretty sure that was COVID.
Okay. And the other thing you got to do too for me, because it happened today.
Yeah, it was. Okay, so we talk about COVID levels. We're at SPY at 2. Here we are, right? 223, right to TP's 2,200 puts. So it was, around here. At some point, I was selling the 305 calls.
Yeah, but we were much lower. We fell from a much lower spot than we are now for the 2,200 calls. You know what I'm saying?
337.
Yeah. And now we're 575, but it did happen.
But honestly, this wasn't that long ago.
No, but now but you see what I'm saying? With 337 to 220, we are now at 574.
Which maybe it does seem crazy.
And he was looking at we were looking at the 220s. It's 2 pages down.
Yeah.
But if you want to can you go to the trade page for me?
Sure.
And then I want to give you something very exciting. Trade page, and then hit crypto.
Okay.
and then hit the drop-down box.
Oh, all the new items.
Dun, 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 dun.
That is nice.
Yeah,
and you're going to have Ryan Grace on next week. What day?
I am. Thursday next week.
Okay.
Don't you think he knows to wear red? I'm going to buy him a red shirt. Shh, don't tell him.
Thursday, you're having Ryan Grace on talking about all the new crypto products.
Yep.
Awesome.
So we do have quite a few in here, which is amazing. It's scrolling, right? Because there's no XRP on there that I can see.
Did ETH drop below 2,000 today?
Probably. I'm sure it did. I'm going to be 100% sure it did.
2001. Just barely. 2001.
Yeah, that sounds about right.
And how's XRP doing?
That's what I'm saying. Scroll down.
235.
Oh, I'm looking at I'm trying to make you scroll on mine.
Here, what do you want me to look
at? What was
at?
XRP?
XRP is 235.
Where was that? That was almost $3 at one point.
Oh, yeah. Here, if I can move that box. It was over $3.
Yeah.
Over $3. I don't have that much XRP, though.
No, I don't either. We just know people that have a lot.
And they wear a foil hat.
They wear foil hats. And they wear foil hats.
Bitcoin down to 82,000. How low did that get today? 81.
I mean, but that was a lot lower before.
Yeah.
The last couple of days.
Yeah, I mean, the crypto move, I don't know.
So you want to talk about risk reward. Where is it?
Right. Like, I'm not adding any more crypto into my account.
But I mean, what commercial was it that took everybody out? Something about risk and, you know what I'm saying? It's like Matt Damon where he's like, the greatest reward comes from taking the greatest risk or something to that effect. There was a crypto commercial.
Oh, yes. Yes. I don't remember who it was for.
And why can't I remember the quote? But I think it was for something like that, but yeah.
So where is their premium? Now, would you go to...
I'm not asking where there's premium. I'm asking where there's the greatest risk or the greatest reward.
Okay, so the last time...
Now, the foil hat people tell you it's XRP.
Here, the last time, and this was Logan's account. This is a smaller account because it's harder to scale up in big accounts like this. But in a smaller account, it's easier. So in Logan's account, the last time he took a big hit where I was like, geez, this account went from $10,000 to $6,000. How is he going to make his $4,000 back? I sold everything in his account and loaded up on Ethereum because it was like 2,300 or something. And then it did rally back to 4,000. I was like, there you go. You got your money back, kid. So is that going to happen again?
I don't know, but I did owe JD $50, so I put a Jajun trade in his account, and it hit, and I was like, there's your $50 again. Because I have control. He's like, how'd you do that? You're a wizard. I was like, I am a wizard.
But, like, we wouldn't do that. Like, you could do that.
You have any idea how much I was like, oh, God, this better work. This better work. This better work. Because his account's so small.
But, like... that's something that you can do in a small account where you're like, I'm going to go all in on this in your little account, but you can't do that in a big account. You're not going to scale up like that. That's just crazy.
No, you're not going to scale up like that. And don't take this the wrong way. It might not have worked.
It might not have worked.
Like it could have gone the exact opposite.
It might not have worked.
But you'd rather lose $5,000 than $50,000. So you'd rather learn that.
You're not going to like take everything and go all in.
Yeah.
I'm going to go to, let's finish up what I have open here.
Okay.
So Snap.
Who is it? Master Pillows. Mr. Pillows, fortune favors the brave. Thank you. Oh. I couldn't remember it. Thank you.
It's always hard to catch a falling knife, but, jumping in when the sky is falling. And I don't know if the sky is falling, but it's felt like down day, down day, down day, down day, down day without a break.
It does feel like that.
Without a break. Okay, Snap, we have... just in the money. That's what we adjusted. We're fine. We leave it. That's done. Rum, we have the 11 put is trading $8. This might be a similar situation where we buy this put back and turn it into an in the money call because we can.
Oh, yeah, just buy the 7.5.
So here's where I have to almost do the math. 7.5 and is trading 802. So fair price. There's wide markets. 7.5, 50, 60, 65 cents for that. So
just put it into two separate trades, and you don't have to worry about it.
I know. I'll pay 65 cents.
Okay.
Oh, but if there's a 75-cent bid, that seems aggressive. Then you're paying 25 cents over. I'm not going to pay that much over.
And you think they are because there's no bid at 40 cents on the puts. They think there's some extrinsic value in there.
Yeah, right. That's too much extrinsic value. I'm not going to pay that.
Do me a favor. Can you get out of that put and see how much it is to buy Rumble stock? I bet you're going to get back some capital.
It's probably going to be $800, $600. Yeah, it's a lot.
Oh, yeah, that is a lot.
We're getting back $600 for buying back that put. Okay, then maybe here's what I'm going to do. I'm going to buy back this put, 310. That seems fair. Buy back that put. And then we are going to, these markets stink.
Just maybe we walk away from Rumble.
Yeah, we walk away from Rumble. We put that $600 somewhere.
There was another foil hat person that gave us that one, wasn't it?
Yes. Someone who I talked to yesterday who had 35,000 shares of XRP.
Yeah.
Which I said, and he's been short the market for as long as I've known him. He's been short the market for as long as I've known him. Yesterday he was like crying in his soup because he's
flip the cards over.
Flip the cards over. Flip the cards over. Oklo. We have 40-35 put spread.
When did the name turn to Oklo instead of OKLO?
I think I hear it too often.
I like OKLO. I like the proper. Okay, thank you.
There's going to be another. I got, since this one worked out so well.
I got another hot tip for you.
Yes, there's another one that's IPOing soon.
Can't wait.
I'm keeping my eye out for it. I think it was like, let me see when. I think it is called Liz Technologies.
Liz Technologies? We're in.
Oh, yeah. No, but it's LIS.
Oh.
LIS. Liz.
It's not out yet, I don't think.
No, but it's coming soon. And I'm going to be watching for it. I'm going to be the first one in. I'm mad I didn't get in. I'm mad. Did I send it to you?
No.
They just they had their round of investors and it closed. And I thought we should have been in on that. How do we get in on that?
I have no idea, but you would have been the number one in there.
Okay. OKLO 40-35 put spread. It is, I guess this is one where it's trading 422. It's almost trading full loss. So do we just leave it?
Yeah. What do you have in there? Where is it?
It's way up here. Here it is, Liz.
Oh, you just leave that. You're not going to close that. It's full loss.
Look, it's $1.66.
You mean the markets are too wide.
The markets are wide.
The markets are too wide to close that. You're not going to get anything for it.
Yeah, I guess so.
That's kind of what happens with the options when things drop. And you've said this before about your son's account. You don't have anything. Like if you have the stock, Jay's got 8 shares of OKLO. So I mean, he's writing it down, but he's just going to have it.
He just has it,
If it goes to zero, sorry, but you just have it.
If you have the stock, you just have it. If you're putting on zebras, and this is always my word of warning with zebras, and then rolling and reestablishing and reestablishing and reestablishing. If you have long calls or zebras and the market falls out of bed, you don't have anything when they're gone.
Yeah.
The stock, you just have it.
Yeah, this one, I mean, the hard part is because then you have to make the mental decision whether you want to reestablish it or not. And that's the hard part.
Essentially here we have nothing. Like we have nothing left to lose in there. Essentially we have nothing.
Oh, we hold on to that for dear life because you have nothing left to lose.
I know, but I just wonder, do you get back in? Do you get back in with like a new position? Could you do kind of a Jade Lizard here? Like here is, okay, look at this. 22.19, so that's not that wide. $3 wide, you're getting 83 cents. I was going to say you could kind of do a Jade Lizard where then the 39.40 call spread and you're getting $1.07. At least it's something.
Sure, ship it.
And we have something on.
Fortune favors the brave, Jenny Andrews.
I'm so brave.
It's spread off and defined risk. And
all right, so we're working that and we're leaving the old. Newmont Mining, this is another problem. Let me lower this by a couple pennies.
And all the gold was up.
I know.
But miners are down?
Oh, well, Newmont Mining, no, it's up 29 cents. But this is another one, 17 days. We have the 45.37.5 put spread.
That's smack dab in the middle. Take that thing out in time. You should be able to get something for that.
Move it out to April. 45.37.5. 35-cent credit.
Yeah, that'll extend your duration.
Yeah. So I guess those are easy decisions. Move it out in time, take in a credit.
Yeah, those are easy decisions. I mean, honestly, with some of these, I don't even mind. I mean, I know we'd be rolling through earnings because it's not a real gold. I mean, it's a real gold product, but it's not actual physical gold. Sometimes I'm taking them, Jenny, if I want it out, and I always have Karen in the back of my head, get it, go 3 months, who cares?
Yeah.
Like, then you don't worry about it. Like,
I want to look at the VXM, see how much money Mikey made. Where was it? Do you remember where it was?
No, but you can look on the chart.
No, I mean 20 minutes ago when Mikey said sell VXM.
No, but he's
because
probably
SPUs are only down 77 now.
He's probably
But
already
honestly, this doesn't seem to be coming down much, is it? 22?
Yeah, it came down. Check. I mean, just look at the chart because you can see it has come down. Is my guess. Oh yeah. Oh yeah.
SPUs are only down 76.
Only 76.
I
mean, to be honest with you, though, we've been, down and then bounced to up 80.
I know.
On Friday.
On Friday.
Yeah.
Okay, this, no matter how much I lower it, we're not getting filled. I'm curious. Newmont Mining, 40 put.
There's a dividend today.
Do you see that 40 put only holds up $6 or $600? That's
You could just sell the put.
We could just sell that 40 put. Although Newmont,
it's been lower. It's not a true gold follower because if you look at GLD, those things are up like crazy today, aren't they?
I know.
I mean, I kind of heard all-time highs. I guess only up 1%.
Yeah. Now this, I'm surprised we can't get out of it. It's not rolling. Well, I'm not going to keep giving up money to roll it. If we can't roll it, we'll try again tomorrow.
Okay.
Love, 32.5 puts, 17-day in the money. Out in time.
It's my...
That's your... Out in time. Okay. If we go out in time to 32.5.
Go farther.
Or we change it like we did Snap, where we close this because there's no extrinsic value.
But I don't want to buy something in there. Look at the extrinsic value there.
50 cents.
Yeah.
You would have to do, if you did something, like let's say you got out of that put. Let's say you got out of that put and that's giving you, $600 back.
I'd rather do the zebra.
I thought that was a good idea 2 days ago, Friday.
Yeah.
I thought Friday was a good idea. It was a good idea to load up on zebras. And
that didn't work out so well for you, did it?
They didn't work. No, it didn't work. Or you just do this where...
But when you have the put, the in the money put, I know JD wants them out of his account, you still have something. You can roll it out in time. You can always roll.
Yeah.
Like my AWM puts that I've been rolling weekly, they don't look so good. But if it ever bounces back up...
You're still rolling.
I'm still rolling. I'm getting I don't know, whatever. 5 cents a day, 10 cents a day.
What are we down in love? I'm curious.
I can tell you right now.
In love...
Give me 30.
We're down $144 on this trade.
And we have a little bit more than that in year-to-date P&L down.
But there's nothing left in these. There's no reason to leave it. There's nothing left.
Change it.
So let's do this. Let's do the old trick of get out of this trade, and then what would we put on?
You'd go, and I don't mind being in love. You'd go to March. No, sorry, April.
Okay, that's gone. April. Yeah, we probably put on like this 30 put.
Yeah.
I mean, we wouldn't put on the 32.5 put. Mm-hmm.
Yeah, you're just going to roll it down.
Yeah.
It's easier to do in 2 transactions.
It's better. It's the right thing to do. I think it's the right thing to do.
You're getting the most extrinsic value instead of just rolling.
Right, instead of rolling for 20 cents.
Yeah, do it.
I know we're paying to roll, but at least we're getting extrinsic value.
Yeah, but then instead of getting it the heck out of Dodge, either you can roll and then roll and then roll. It's fine.
Right. It's just okay. And that might have been as far as I got. Probably. Any big problems today? Like anything that's really moving against us? Ooh, look at this. In a sea of red, Marvell is up.
It is? It's got earnings on Thursday.
They have earnings coming up.
They have earnings Thursday.
I can't even read that.
Thursday. I knew that because we have the... And I'm pretty sure Bob said it Thursday too. But I know that because I have a... I'm sorry. I stand corrected. It's Wednesday. Is it after the close or before the close?
It's after.
Okay, good.
March 5th after. So that's surprisingly up today.
Wow.
We have our earnings trade. We just leave it.
Yeah, we do.
Anything else? And did we adjust Intel? We did. No, we didn't.
Yeah, we did it today.
The term 23, 25, 27. We have a Jade Lizard. Jade Lizard and Intel.
Anything else that we can close to scratch? Get out of Fubo just to get out of it. Oh, no, we're long it, I think. We're long the
I
option.
think we're
never
just
mind.
long it.
Okay, I was going to say, anything that's not defined risk that is scratchable, scratch. And then we can put it into other things.
Oh, and IBIT. This is short term. It's a 10-day. But, crypto can turn on a dime.
Yeah, leave that.
CL, so we put this on.
Oh my God, it's 11.
That was a fun hour. Sometimes we say fastest hour of the day. Fastest hour of the day. It was fast. But it was.
No, we should address CL. So this one is.
This is tomorrow's. Oil was down today, but it's still higher than our put. We've got this 67.66.
It's not bad.
It's not bad. Oil's not down as much as it was.
Mm-hmm.
So we've got that on. That's our only silver lining. That, and if Marvel earnings take us to the promised land.
All right, Jenny. I was going to say,
have you been pushing everything?
Everything's
out?
done and dusted.
Oh, nice. Good.
Yeah, do it all
Time
the
to our
time.
photo shoot.
Yeah,
time to go model clothes for the store.
First, we're going to eat tacos. I'm hoping to get paid in backpacks.
I'm not going to eat.
I want a Tasty Live backpack. And they're Thomas Westford is ready to come in. All right, everybody have a wonderful afternoon, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mikey Butler, and of course, Mr. Westwater, Thomas Westwater, on our Thomas Tuesdays. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day, my favorite hour of the day. Get to spend it with my buddies, Mike and Thomas. Thomas, how are you, sir?
I'm doing good. Summer's right around the corner.
I know.
But we got to get the rain first. So.
It seems like every year this is like, you get that like kind of cold, rainy 1 or 2 weeks, and then you get into the summer. But you have to be prepared. And not summer, but spring. You have to be prepared for the random day in April where we get like 4 inches of snow.
Yeah.
That just like one cold front that comes and just like whacks you with snow for the next month.
A little wacky poo.
Yeah.
I'm ready for some warmth, but the good news is, at the very least, we've got daylight savings time this weekend. Yes. We're springing aggressively forward 1 hour, which means the sun will set around 7 o'clock now.
Golf season
exactly
on the horizon. I was talking to James about his club fitting.
Oh, I got to talk to him about that.
Yeah, he did the PGA Tour store. Mm-hmm. You can go in there and get all the club fittings, and they measure all the swing mechanics and change the lofts on everything. You did that? Are you a golf guy?
I got an extra ½ inch on my clubs just because I'm tall. But when other people try to use my clubs, they're always whacking the ground
and just digging up.
Yeah.
Naturally.
James did the same thing. He told them that he needed longer clubs because he's like 6'3", 6'4".
Well, I actually learned. So our friend Mike, he's getting club fit, and he's removing 1.25 inches from his clubs.
Wow.
Because he's like 5'8". And I guess the stock out of the box clubs are made for people that are 6 foot. Yeah. Which is wild. Because obviously if you don't know that, then you're already at a disadvantage.
He's got those bougie Kith.
Not anymore.
Not anymore.
No.
He's a real golfer now.
Yeah.
So you're a golfer. What's your like? Are you like?
I'm not good.
80s, 90s, 100s.
Yeah,
okay.
90s.
So you'll fit right in with us.
Yeah.
That's perfect.
Whack a few. Have a few good drives during a game. A few good mid-range shots.
Okay.
Yeah.
That's
what keeps you coming back, as they say.
Yeah. That's us, except for Mike says he's completely fixed. He's
completely fixed. You'll see.
I've been. You might be Corn Man. I've been calling him Corn Fairy because he's ready. He's ready for the Corn Fairy
I'm
tour.
Ready. Put me on tour.
Yeah.
The question is, I have a few questions for you, actually.
Okay. Yes.
When moon? Question number 1.
You and Stonk Messiah in my DMs.
Yeah, I see him in the chat here. What did he say? He said, "Why is the stock market crashing? I want my mommy bailouts now." Yeah,
I've been just sending around the Saving Private Ryan meme where Matt Damon is like at the end of the movie where like everything's blowing up and he's like just like convulsing.
Yeah,
that's what it feels like right now.
Well, we also have we've got the State of the Union tonight.
Fed on Friday.
Yeah, big week. Beige book tomorrow.
So another question is, are we getting the Trump pump or the Trump dump today? 75-point expected move through tomorrow in SPX.
You got the VIX
which is huge, obviously.
You got the VIX at 25. I mean, it's a big number. We don't see that number all the time. We actually, for the cherry picks today, which will be coming out hopefully in the next hour or so, we took a look at because VIX at 25 is a relatively high point. That's like 20 is high, but when you get into the 25s, that's usually like the capitulation time. There's not a long, there's not a sustained 25 VIX usually. That's usually kind of the spot. And from what we've looked back on, I think we had about 200 occurrences. I forget the duration, maybe 10 years, the forward returns, even in the short term, are very, very positive. It goes to, the blood in the streets adage of like, yes, it seems crazy to start, getting long here. The kind of sentiment is as bad as it gets. But, that's when that's the opportunity.
Especially longer term positions where you have 2 years from now.
Yes.
This will just be a blip on the radar.
Well,
in theory,
of course, and things can happen. And Tom mentioned that on the call-in segment this morning with a gentleman that, was a younger guy. And it's like, 10 years from now, 20 years from now, this isn't the stuff that you remember.
Yeah.
Even in the moment when it's getting a little crazy. But to answer your question of is this a Trump pump night? I would think so. I would think that that's probably going to be part of it. Maybe it's like a subtle nod to buying the dip. But we'll see. I don't know. It's been a tough week. I give you a quick little market update. E-minis down 78. They've bounced from the little bit of a bounce from the lows today. Got as low as 57.44, so we're about 40 points off the lows. It has felt sort of like a capitulation, at least into this morning. I know Tom talked about kind of over the last week or two of looking for a gap down type open, kind of that flush out as being a near-term bottom. It has kind of felt like that has happened today. You've had kind of this washout. You have the pop in volatility, a little bit of a bounce here in the middle of the day, volatility contracting a little bit. That's kind of how it's felt a little bit here. You have the NASDAQ, actually the strongest of the group right now. It's only down 150. It's obviously gotten hammered over the last couple weeks here. We were also looking for the cherry picks at a comparison of these short periods of time, specifically in down markets where you have, these big name tech stocks, your Nvidias, your Teslas, Microsoft, Apple, Meta, all the big names. Those being kind of the leaders of this huge downside move, and then your equal weight or non-tech focused indices kind of being a little bit stronger. You're kind of seeing that reverse a little bit today, especially when you look, not the Dow specifically, but the Russell, mostly the Dow down 620, the Russell down 35. The Russell's down 15% on the year, really getting whacked here. Even with, some of the headwinds that you would kind of expect to be headwinds, with rates coming down because of bonds, which have actually reversed now. They were up about a full point today. Earlier in the session, they're actually down 3 ticks now. But financials have been very, very weak as well. So it's been an all-out assault on markets here. Oil down 64 cents. As we were talking about, volatility futures 21.45. The VIX itself is actually below 25 now. We just got our move lower in the last 30 minutes or so. 26.35 was the high in the VIX, 22.58 the low. Definitely seeing some volatility across the board in the markets. Gold and silver have both continued their little bounce. They had a little bit of a sell-off. Gold is back at 29.26. You got silver up 5 cents here. Gold has certainly been the stronger of the two. And then in typical fashion, I guess, with the crypto pumps, a little bit of a crypto dump here. Crypto future or Bitcoin futures down 2,000 and change. You got spot down 473, but we were sitting at a 95 handle yesterday. That's completely been taken off. We had a great discussion. If you missed the segment with Ryan yesterday, it was one of the best, if not the best we've had with him. We talked through all of the news events that we had over the weekend, the moves in some of these stocks or in some of these cryptos, which we have more coming, I believe, after the close today, ADA and Shiba and a couple others as well. But it's certainly been a risk-off event over the last week.
Yeah, it's been a pure liquidation. The last couple of days, we've also seen, outside of today, we've seen the market selling off with gold, with silver. So that's an indication. Like when gold and silver are moving to the downside with the NASDAQ and the E-minis, that's a liquidation event, at least to a small degree. But yeah, we saw volatility pop up. Most notably, we saw volatility pop up and stay up and continue higher. And yesterday we went into backwardation, which is when the near-term contracts are priced higher than the later-term contracts. And that's really when you start to get the CNBC headlines of markets in turmoil, blah, blah, blah.
Yes.
But it also indicates that this is the new normal in terms of 70-point, 80-point, 100-point moves. When you're in backwardation, you should expect that every single day.
Yeah.
And if you stop getting that, or if you get narrow ranges or continued grinds higher, that will, of course, alleviate the volatility pressure you're seeing and bring you back into contango. So like we've said many times on this show, when we're in backwardation, that's when we're sizing down. We're taking advantage of new opportunities. We're, getting in and out quickly and, making sure that we're managing our core positions well.
Yeah. Some big numbers. I mean, when you look at some of these stocks like Nvidia, 114, we've broken below that move that it had after the DeepSeek kerfuffle. So that one's gotten killed. I mean, Tesla hasn't had an up day in what seems like forever. It's down 268 here. Apple's really been the strongest of the group. Apple's sitting at it was actually green at one point. Yeah, it's up 62 cents, 238 here. Some of the pigs like Google is up $3 and change. It hasn't had an update in quite some time. I mean, a lot of these stocks are down 25, 30% in the span of, a month or so. Amazon here at 200. It actually got below. It was at 197. I mean, that erases almost a year of price action, and you're seeing that in a lot of names today and this week.
Yeah. Yep. But like Nick mentioned, you're seeing the NASDAQ kind of stay afloat relative to the E-minis. I don't remember the last time we saw the E-minis down 70 and the NASDAQ only down twice as much.
Yeah.
Normally you would expect to see the NASDAQ down 300, 400, 500. But some single names that are heavily weighted in the NASDAQ, like Google, Nvidia, those are staying afloat right now, which is interesting.
And here's the stat, the VIX stat. I had to dig it up a little bit. So we looked at when the VIX gets to 25, historically, what has happened with the S&P 500, into the future. And so on a 1 month return average, it's about 0.5%, which, doesn't seem like a ton, but that's, when you have a VIX at 25, that is a high VIX. That is a rare occurrence. It's positive 60% of the time, with 40% of the time obviously being not positive. And then the range outcomes, the highest, the biggest move on a 1 month return basis, 10% to the upside, 10.7%, to the downside, 24%, which was COVID, pretty special occurrence there. So it certainly skews positive, even on such a short time frame. I know we were talking about long time frames, but even when you're looking at like a 1 month, time frame, it's definitely skewed positively, positive drift skewed.
Yeah. Yep. Beautiful. Well, we are streaming live as always on YouTube. If you want to join us there, just pop over to the Tasty Live channel. 900 people in here. Welcome. Nick and Dr. Data work very hard on the Cherry Picks newsletter, quantitative newsletter. It is free and it comes out today. So if you want to sign up for that, click the link at the top of the YouTube chat, tastylive.com/newsletters. I've also dumped a bunch of links in. So I dumped in the link with Ryan's segment yesterday.
Yes.
I dumped in some earnings previews for Broadcom and Costco later this week. But yeah, pop in your trade ideas, questions along the right-hand side chat. We'll get to them shortly. And yeah, we can pop over to the slides now and discuss something that people are asking in the chat. Do we smash the grains here?
Yeah. Not smashing them yet, but
Okay.
we'll talk through it. I think there's a couple different trades you could do. I don't hate getting long here.
Wow. These are some
walk
huge
through it.
moves.
Yeah. So if we go to the first slide, we'll see the headlines that's driving this. This is from Reuters. They suspended the import license for 3 U.S. firms for soybeans, and then they imposed an additional 10% tariff on soybeans and then a 15% tariff on wheat and corn. So soybeans is the biggest product that China gets. We had the trade war 1.0 back in 2018. China slapped, I believe it got up to 35% at one point. It then came down to 25%. That stayed on all the way up until now. So this additional 10% has kind of been opening salvo with China's response. It's not as big as some people thought. But it's enough to move the markets, obviously, which is what we're seeing here. So the question now is, I think, how deep and long does this trade war get? The fact that they only did a 10% tariff to start, we're adding that, is kind of encouraging because it's not like a huge shot. It's just like a little shot across the bow, for lack of a better term.
Yeah.
So we'll have to see how negotiations go over the next few months. This could all play out really quickly. News flows day to day could impact these prices. But yeah, let's just go to the next chart. We'll look at how much AG products we export to China. This blue line is soybeans. We saw back in 2018 the tariffs, the retaliatory tariffs from China on the U.S. targeted soybeans heavily. That's why we see that big drop right there in soybean, the value going to China. It came back over the next few years, not as much as it was before, because China shifted a lot of their sourcing to Brazil, which is pretty much the only other market that can give you enough soybeans for a country like China, which exports a lot of soybeans. They do import corn and wheat too from the U.S., but they also get a lot of wheat from Australia, and they'll probably increase that now. But since 2018, they've diversified their supply chains a lot. So they kind of anticipated, hey, if this happens again, we need a more diverse supply chain. And that's why Brazil overtook us in exports to China. We never really recovered from there. Even though we did recover, Brazil took that spot from us. Corn, it had a big bump a couple of years ago, came back down. So you could say these tariffs on corn and wheat are a little less hard hitting since the total volume going to China is a little bit less than soybeans. And soybeans, by the way, for this chart, it's on the right axis, and then corn and wheat is on the left axis here. So you can see the value is a lot lower. But let's go to the next chart. We'll look at some positioning. I think this is important right now, given the moves. The orange line here is net positioning. So that's non-commercial traders, otherwise known as speculators, people that are speculating in the market, playing for profits. That has come positive in the last couple months, but it's come off now. So this data is up until Tuesday. It's from the Commitments of Traders reports from the Commodity Futures Trading Commission. It's released every Tuesday. It goes back to last Friday. So the positioning you see here is as of about 5 days ago, 4 or 5 days ago. So this Friday, it'll get data up until today. So that'll be interesting to see. This Friday's COT report is going to be, probably showing that these longs are coming off pretty heavily. But, I would like shorting soybeans a lot more right here if we had an elevated long position. And this blue line in the chart back in 2018 we saw, there was an elevated positioning. And we saw soybeans, they started selling off even before the actual tariff was implemented, because we started getting those news flows from China saying, hey, China's going to target soybeans. This is likely happening. So prices started falling off already we were at an elevated long position back there. Prices came down all the way to about 800. We stayed there for a couple of years, all the way until 2020, started to come back a bit. And that's, of course, when Biden got in office. Trade tensions cooled. China started importing more soybeans, so of course prices went up. Right here, we're at a pretty neutral trading level for positioning on a net basis. So that's why I don't like to short as much as the next chart we're going to look at, which is corn. And even though corn, it's a smaller volume going to China, the positioning has gotten a lot more advanced over the past couple months. You see that green line there. We flipped all the way from net negative to net positive, about 500,000 contracts net long. And open interest has also risen, the orange line up there. You see there's just this really big long position in corn. So today I sold a call spread in corn, expecting those prices to stay down. Excuse me. So yeah, just a lot more longs to come out of the market here on corn. All these agricultural levies and tariffs, I think could bring the prices down a lot. And it's spilling over into the whole AG market. Wheat, corn, soybeans, they're all tariffed. Lower volume going to China, but still this really long net position, I really like to short right here. And we've already came off a good bit on price. Corn down 440. I think where's it trading at right now? We're right at 449. I think going down to 400, even like 370-ish, where we were back in September, I think that might be a good place to start taking it off. But I expect this weakness to come in. It's just it's kind of a liquidation trade. You're trading on the expectation that all these longs are going to get out of the market now, getting spooked by these tariffs. Because China can still raise them, only at 10%. That's the opening salvo. They could go higher. In fact, there's some analysts that were talking about 60% tariffs, which would effectively eliminate all U.S. exports to China. And they would go to Brazil, they'd go to Australia, they'd go to Ukraine and Russia right there on that border that has a lot of corn and wheat. So yeah, even though we've sold off pretty heavily, I think we could see some reactionary buying, get these bounces. I think that's when you sell. So I think right now you're in the sell the rip, and not buy the dip yet. But if you get down around 370 on corn, I think that's when you buy the dip there.
This sort of surprises me because I feel like a lot of the time when you bring these charts to us, the positioning isn't contrarian. Like this is a contrarian positioning to be long into tariffs and this big down move. I feel like a lot of the times you come with this stuff that shows us, shorts are at the highest and the price is at the lowest. Right. Does that surprise you that there's a little bit of a divergence there, or like what? You think it's just because of the magnitude of the move, or?
Yeah, so we're coming out of really low corn prices last year. Farmers didn't sell all their stocks. There wasn't that much demand. Demand is actually looking better this year, which is why prices were rising into this. And now the trade war is just flipping that on its head. So all these longs that were anticipating the strong demand year for the crop, now you're having to rethink that position. So, open interest was at the highest it's been since, I think, 2014. This chart doesn't show it. But just a lot of longs to get out here. And even the net positioning, the open interest is the highest in, 10 years or something, but we're at the highest since 2022 back there when corn prices were really, really high. And you see that we got a big sell-off from that. We never recovered. We did a little bit, but the trend has been down all the way since 2022. All the way since early 2022. So, you got a trend working in your favor. The next point of support, possibly like 370-ish. But if you go back in the chart further than that, it's all the way down at 350 that you really have more of this consolidation level. That's multi-year, 2016, 2017, 2018. That's where a lot of buying support can come in just because that consolidation was so extended there. Yeah, so I thought about taking a long stab on the soybeans, just trying to drive this news out, a day or two move, forget about it. But the tariff threat is still looming. So
Yeah.
I'm not sure if that's going to come back strongly. Like I said, we might get some relief rallies here and there. But the picture is not looking good for crops again this year. AG products, wheat, soybeans, corn, could give us another bad year, kind of like 2024. So. Of course, we also have to watch the weather, things like especially U.S., Brazil. The weather's actually looking like a really good planting season for corn and soybeans here. So that could even put more pressure on prices. You get those crop yields coming up.
What if, because anything is on the table.
Anything. Yeah.
But what if the tariffs situation kind of dulls down? Like if Trump kind of backs off tariffs, China, backs off, what's that look like for positioning? Like, does that validate? Because that kind of seems like almost why this chart would be leaning long is that like people are starting to say, okay, we've had this big move, lower prices are at lows. There's this non-zero probability that tariffs come off the table on the U.S. side or get lesser and less stringent or don't happen at all, and then China kind of backs off theirs, and then it's kind of that would be a big move to the upside, I would imagine.
Yeah, I think we'd see a resumption of the trend. All these longs getting back in their positions.
Yeah.
But yeah, the thing is, the trade talks aren't really too specific yet. We really don't know what the administration wants exactly in return. Lower flow of drugs, of course, is one thing. But there isn't targets. Like you saying you have to meet X, Y, and Z for us to take these tariffs off isn't there yet.
Yeah.
So this week we have National People's Congress in China. At the end of the week or next week, they come out, they put their economic targets out. 5% GDP, that's going to stay the same. Inflation target's probably going to raise from 2 to 3%. Deficit as a percent of GDP is going to go up. And if it goes up more than expected, that shows that China is willing to stimulate more. And that's going to come in the back half of this year after some of the tariff stuff is more known, so they could take more targeted measures. But even if China stimulates, that's going to put more of their supply needs to Brazil. And even though Brazil's near maxed out, if they have a good crop year, they're just going to continue to get their crops from Brazil, right? They'll get them from the U.S. if they have to. But again, that's why you have to watch the weather, crop conditions in Brazil and the U.S. both.
Volatility is relatively high in all these products. I would think it is going to remain that way, just given what you've been mentioning. It seems like there's a lot of ways this can go. What's of the group of like the wheat, soybeans, corn? What's the most interesting of the batch for you?
I think corn and soybeans definitely the most interesting, just because the U.S. produces a lot of those products and exports them. Like I said, soybeans, given the positioning, I wasn't as incentivized to take a long stab. There's some buying on the lows here right now at 990 around soybeans. That kind of comports with the level of support we saw back through December and again in early January. So, I don't hate a long stab at soybeans right now. And being short corn, I might even do that since I have some, diversification within these products. That way, taking a short position on them both might not make sense because then you get a double whammy if they both keep going down.
Almost a pseudo pairs.
So if I was going to go long something, it'd probably be soybeans right here. Let these news headlines generate out of the market. Especially given the drop we've already had to the support level. It doesn't really surprise me that we're bouncing at 990. And like you said, decent volatility in here. I don't hate selling a put spread the 52 days out. I think that's plenty of time to let, some tariff talk go on for a few weeks. Stay relatively safe in your position. If we get dropped through support and you start seeing more liquidation in the product, you can take the position off, probably reassess. But yeah, I think soybeans at 990, 1,000. I don't hate getting long there.
And you said 57 or 97 being kind of like the lower end of where it's traded. kind of maybe that's my spot.
Yeah, I think it's interesting between these three.
I don't like being on the same side as
No, I know.
as the charts, though.
Yeah, but
That's what makes me hesitant.
I do like your call out of the increased longs in corn. That kind of implies that maybe something changes that we're not seeing, that we haven't heard yet.
Well, I think you have to price in that. I mean,
well,
anything. There's no certainty with anything now.
Yeah.
So that seems to be.
Well, I think another interesting thing is the soybeans curve between the contracts. Soybeans curve is flat. Everything's around 1,000, 1,015. The wheat curve is still in contango. The K contract's at 537, the N's at 550, the U's at 570, but the corn contract is 20 points backwardated. If you're looking at the N contract, 460 relative to 440 in the back months and 450 in the 17-day. Do you make anything of that in terms of the lack of backwardation into these sell-offs in the other ones where corn is clearly in backwardation into this massive sell-off we've seen?
Yeah, so I mean, some of the futures curve in these products has to do with when supply usually hits the market. So, corn, August, September, October, coming out of the market, you usually see the price futures curve reflect a lower price because all that supply is going to be coming on. Contango and wheat, you said, I think has some contango.
Yes, slightly.
Yeah, I'm not sure if I'm trading that specifically, but it's interesting to see. What I look at more is the trend. Are we flipping into contango backwardation? How is that moving in relation to where it was? But yeah, I'm not specifically playing any backwardation or contango plays here.
I like it.
I bought the dip in some soybean. I feel dirty.
The wheat dip, the buying is right. We get this tail right here on the chart. It's right at like 538, 540. That's where a level of support was through December all the way through kind of January. And that buying is coming in right here. It's kind of encouraging for a long position right there, I think.
I like that. I'm in already. So I need a big move, but
I'm going to get in with a little
something.
Little action here.
There you go.
I'm already violently long corn, so it's unfortunate.
Top tick that one.
Yeah. But let's see. I'm going to do the 550, 565 diagonal spread in wheat.
Okay.
Long April, short March. Both in the K contract. $700 in buying power. Just got to buy the dip here across the board, I think.
I'm a little surprised we didn't get a natty gas update.
Yeah, natty gas is
a wild one.
Going.
Why is natty gas going higher every day?
It's into the sky right now. There's been this. There was this big freeze off. Production came down. I'm surprised we're going up this high, to be honest. I think that probably reflects some of the energy demand we're going to see in the economy. Production right now is at 106.2 billion cubic feet. That's not bad. That's about down 1 billion cubic feet from 5 days ago. Energy demand is up a bit, 674, about a little bit over 500 million cubic feet. So energy demand is going up. Productions came down a little bit.
That's bullish.
Yeah.
I mean, that's price up.
Also, we're seeing a drop in imports from Canada already. So it's pretty small, 1.5 million cubic feet. It's pretty small, but
Did the governor put that out?
That's about a quarter of, maybe.
Yeah, Governor Trudeau.
Yeah.
Did he squeeze us a little bit?
Yeah, I mean, but that's a quarter of the imports from Canada because we usually import about 5 billion cubic feet per day.
That's a big number.
Yeah.
I mean,
So that's a big number. So the energy trade war between the U.S. and Canada could be impacting some of that. And a lot of Canada's exports for nat gas go into the Northeast corridor, where there's a lot of energy demand concentrated. So, I don't know. I don't want to get long right here, especially with the selling we've seen off 4.6.
Mm-hmm.
But this rally it's got a lot more strength than previous ones we've seen.
Yeah, this is your 5% or more.
Yeah.
This is an interesting spot. I remember that.
Oh no, there's good volatility in here. I was thinking about selling a call spread. I haven't pulled the trigger, but it's enticing. But these moves lately are just pretty wild. I mean, they could shake you out in one day.
It's not only natty gas; it's everything. But I think that speaks to just the political world situation that things are moving now.
Yeah.
And
this is when you got to put your chips down.
Yeah. Yes.
I'm all in.
Yeah.
I'm all in. No, I mean, kind of though.
Is it weird to see oil not in that same realm? I mean, you would think as kind of a fear recession sort of situation, you get some buyers in commodities. You're seeing it in gold and silver. Oil's just been kind of left for dead. Does that surprise you a little bit?
OPEC said they're going to move on with their April production rollback, so they're going to be bringing more supply onto the market in April.
Okay.
Even though, some were doubting that because demand has come out of the economy. Prices now we're at 67.8.
Mm-hmm.
So a lot of people were thinking OPEC would hold here, and we are getting, sort of this relationship between Trump and the Saudis influencing that decision, I think. So it looks like there's going to be some cooperation between the U.S. and OPEC going forward. That's one of Trump's goals is bring energy prices down, of course, gasoline prices, bring some relief to consumers. It looks like we're going to see that. We're already seeing prices come down at the pump. Of course, that makes sense with the sell-off we've seen in crude since, the start of the year, January, that January high around 78.
Mm-hmm.
I said, I think last week I was looking for 66 to get long. We pretty much almost got that this morning.
Yeah.
So I think that would have been a great place to pull the trigger on the trade.
66.77, the low of the session today.
Yeah.
Yeah. You think some of this is war related? Because, if you have some sort of kind of conclusion, maybe not an end, but some sort of, resolution, you would think oil would have some headwinds.
All the banned tankers, these shadow tankers, could operate freely.
Yes.
More seaborne crude exports from China. That could definitely bring back more on the market. I want to say it's around 300,000 barrels per day that it could increase if, all the tariffs were off.
Mm-hmm.
Don't quote me on that number, but that's substantial. I mean, it's a pretty good amount. I think it's more economic weakness. The Atlanta Fed GDP is cratering. Consumer spending's not looking good. So I think all these confluence of factors is playing right now.
Mm-hmm.
Oh, no. 66, I still like getting long. I wouldn't fault anyone for getting long right here. Kind of a relief rally for a bit.
Yeah.
We got a lot of consolidation in price between like 65 and 70.
Yeah.
So even an iron condor here, I think could make sense. We definitely have more volatility to play with in oil than we did 2 weeks ago.
Yeah.
There was nothing there. So you got some juice to play with.
Mm-hmm. Yeah, I have some. I have some long Delta V and iron condor that I've been in for a little bit, but I'm wrapped around the 67, 68 range in oil futures side. I would definitely like to see an upside move. Might be a Mikey play for a little MCL contract or something like that.
Yeah, I'm actually already in.
Did you have it in before today or just now?
No, I've had it since 71.
Ooh.
So taking a little heat there, but I'm just long the static micro, so I'm not worried about it.
You'll get back. Go pump that gas.
Yeah.
And as we've been talking, we've had E-minis looked like they were going to go green. You had the NASDAQ only down 50. It's not on 120, but E-minis went from, they just got to basically the high, not the high of the session, but the recent high. They got just above 5,800, seeing a little bit of a bid there. Volatility coming in pretty significantly. I mean, we're about 2 points off the high of today in the VIX. So high was 26.35. We're now sitting at 23.94. Vol futures, only up 1 point now. It's been a wild little ride today. You got any play on gold or silver, Tom?
I'm long gold. Actually, I should have mentioned this. I'm short natty gas. I sold a call spread 4.3, 4.35. In the money, I got 52 days left. I'm going to keep it on.
See where it goes.
Yeah. But I'm long gold. I like the play on currencies right now, getting long non-US dollar currencies, especially the euro.
Oh, look at the euro.
I was trying to get a little long the yen this morning. There wasn't really much volume at the prices I wanted to trade, but I'll probably get long yen too.
Oh, we're not getting any movement.
I like that play.
I am long the Canadian dollar. I'm about to take that trade off. But yeah, I'm probably going to get into the euro pretty soon here.
Yeah, Katie got us in the Canadian dollar. Got a little bit of that. Been scalping the euro. What's the euro strength related to? Has the pound been strong too?
Europe has had pretty much lagging economic growth behind the U.S. for the past 2 years.
Mm-hmm.
And where the rate cuts are being driven in the U.S. right now is this weakness coming in. So rate cut bets are going up.
Mm-hmm.
Europe's already had that kind of stagnation, and now they're saying they're going to cut rates to stimulate economic growth. So it's kind of a bottoming story.
Mm-hmm.
And with these rate cuts coming in, they're hoping that European economy could get stimulated. There's also a lot of talks about a lot of fiscal boost to spending for defense spending in Europe. That could definitely boost GDP because it's supposed to be substantial. And Germany, I believe, is leading those that kind of move right there to boost fiscal spending. So I like Europe right now where it's at. I'll probably play it through the euro. I won't do any euro ETFs. But yeah, I think the dollar continue to come down. I think bonds are going to continue to increase. I think yields are going to continue to come down. And that's the key driver of currency prices, right, is that interest rate differential.
Is it EFA, right? Is this it? For the euro or for the European ETF? It was EFA. I know EWG, I think, is Germany. Yeah. Yeah, they've certainly had a nice little bounce here. Some of these. All right.
Yeah, I like the play for all of it. I like it all. Natty gas short, oil long, currencies long, and now I'm long everything. I'm long soybeans. I'm long corn. I'm long.
Oh no.
wheat.
This could be your moment.
This could be it.
Yeah. Could be the moment.
But yeah, CM is hitting it what we were just talking about earlier. If somehow he hints that tariffs will be short term, might get a recovery or some huge corporate tax cut. Otherwise, seems unlikely to bounce. Yeah, I mean, we're seeing big moves today. We're seeing a little bit of a recovery right now paired with the vol crush, which I think is interesting. But don't get it twisted. There's still a massive expected move through tomorrow, and a lot of that is likely to be baked around the presser tonight. So,
and
State of the Union, you guys think it is good for the market, or?
I think there's just a lot of unknown. Like,
so you gonna have Elon Musk standing behind him?
I think this move has set up very nice for him, for Trump. I think you can still blame it on the past. And, the market being really weak allows you to start, ruffling the feathers of rate cuts. And you mentioned that they're moving. Do we have multiple this year? I
think there's two priced in.
Because we had, like a month ago, it was zero, basically.
Yeah.
When we were at highs. And then we had the little bit of a pullback. We had one come kind of on the table middle of the year. Now we got two. I mean, this plays into that, you get a little bit of a down move. You start cutting rates. That's liquidity. You got, tax cuts and tariffs and Doge stuff coming in. That's liquidity. Kind of feels like
Yes. So March, we got an 8% chance of a 25 basis point cut.
Okay.
That's up from a week ago from 4%, but likely no cut at this March meeting. I think the May meeting is when we start to price in more of a cut. 44% chance of a cut on the May meeting. June, I think we get higher over there. June is 50% chance for a 25 basis, 32% chance for a 50 basis. So I think if the NFP Friday is strong, that gives the Fed more room to move, right? The economy's still doing good. They could take down rates more without worrying about,
Yeah. When do all the government layoffs come into the picture?
We're kind of already seeing that in the jobless claims data, right? I think initial jobless claims last week was like the highest it's been in quite a while. But the government employment is still a small part of the overall labor market. So I think, it's more concern is going to be coming when you see more private sector layoffs start. And, if the Atlanta Fed GDP tracker is on target, and we're still quite away from that next print, so it's not like that doesn't have room to move. But if that stays on track, there's going to be layoffs in the economy. Margins are going to come in for companies. The first thing you do, one of the first things you do if you're a CEO is cut costs when that happens. And one of the ways you do that, of course, is trim one of your biggest line items, headcount. So
be careful, Mikey.
I am counting my blessings. But yeah, the December probability is that we end up, the highest probability, I should say, which is only 30%, is that we end up at 350, 375, which is a 75 basis point cut through the end of the year.
That's a lot.
So
I mean,
two or three rate cuts.
Yeah.
Pretty much.
Those were nothing.
Yeah.
There was nothing, just a couple weeks ago.
Yeah.
Things change.
Yeah, a month ago it was only 18% for being at 350 to 375.
And that's at the end of the year.
Yeah.
I mean, that's
end of the year.
That's a nothing.
Yeah.
Vecchio's stat of the 55%. If it's over 55% in either direction, they've done that direction. Whether it's
surprise.
It's a cut. Yeah, there's no surprise if it's over 55.
That's fair. Ben asking about rough rice futures. Went from 1,500 to 13. What's up with that? I don't know anything about futures, but did that really happen?
I think that's a nice product, so I don't really look at it.
Okay.
I know. Didn't Orange Juice have like the similar thing? Like I saw the posting of when everybody was like when we had the egg thing, and then like my other meme accounts were like, screw eggs, look at orange juice.
Yeah. Orange juice has just plummeted recently. Back in January, we were at 500. We're trading at 297 right now on OJ futures. So that's pretty low. There's support right here from the January 2024 low. So if you want to get long OJ, I would do it, but we don't trade that. So
was that margin call or trading? That was Trading Place.
Yeah, Trading Place.
It was the orange juice futures. Yeah,
we got to get that.
It cornered the orange juice futures market.
Yeah. We got to get that on Tasty. We need to trade some more orange juice futures.
Yeah, that'd be fun. There's a lot of volatility in there.
All right, good stuff. Thank you for that.
Yeah, it was awesome.
I got some new trades on, a couple diagonal spreads. I'm either gonna look like a genius or an idiot. That's basically
That's fair. That's
it's
okay.
fine. I'm fine with that. They're all defined risk. They're all out in April, so plenty of time.
Yeah.
Okay.
E-mini's down 74. This market is moving.
Yeah.
This is
flippity flopping around.
Yeah.
The Nasdaq is trying to rally pretty hard here.
They're having a nice little bounce. You got Nvidia actually up on the day now. It's had a 5-point range today. It's gone from 110 up to 115 and change. A little bit of a buy the dip there. We talked about Google. Google having a nice move here. Apple as well. I think Meta was off the lows as well too. Meta was down like $30 or something. It's down only 25 here. So definitely seen a little bit of a bounce here. Some of the big names.
Yeah. 100%. Gonna pop over to the YouTube chat now. If you've got any trade ideas, questions, let us know. Do we believe in put walls and call walls? For example, keeping Nvidia in the 110 to 120 range because of the volume of options there.
I mean, I don't know about that, but it's certainly like, when you have, we've seen pin action all the time.
Mm-hmm.
So it certainly can influence, but I don't know if I put so much weight. I don't, you look at Nvidia, the option chain, let's look at open interest and volume here. So you can see volume, open interest. You got 40,000 contracts at multiple strikes all over the chain. It's hard to pick one.
Yeah.
I don't know, sure, there's 71,000 contracts at 110 in the April cycle, and this is just looking at one expiration. But you got, another 100,000 below that. So, and that's just one expiration. You look in March, it's the same thing. You got 55,000 at 105 and 84 at 110. And there's still a lot down here. Same thing on the upside. So I think it's hard to pin your hat on that. I think it's more of just a theory. And I generally speaking, those contracts are much more liquid because they're open for a longer period of time. And, generally speaking, round numbers is where, people gravitate towards.
Mm-hmm. Mm-hmm. Bitcoin catching a big bid here.
Yeah.
Only down 500.
Yep. Risk on.
Risk on. Risk on.
Let's see what our IBIT position is doing here.
IBIT's doing good.
Mm-hmm.
Yeah.
We
need a little rally here.
Yeah.
But we'll be okay. Oh,
everybody wants all these butane futures.
Is a March cut bullish for gold if they were to do it?
You would think so.
Yeah, that would bring yields down, lower yields. Gold is not interest bearing, so.
Mm-hmm.
Yeah, it depends what the Fed is cutting for. If they start cutting really quick because the economy starts to take more of a dive, I'm not sure that's good for gold because then you get the liquidation to cash.
Yes.
But if the economy, expectations are already low. So if they come back a little bit, the U.S. is still cutting, right, to get because the inflation target is down. So I think gold, you're looking at a pretty good setup here. I'm staying long gold. I think we go back above 3,000, but
it's a big round number right there.
Yeah.
So it's gotta be there. Did we spend any time above there? Did we actually close above there? I don't think we did. We got pretty close.
No, yeah, we got right there.
Right there. Yeah, so you gotta play with that range for a little bit. Like that.
What do you think of a beginner move? Sell a naked SPY put at whatever strikes bring in $1 for March, April, and May expirations. So just laddered puts in SPY. Yeah,
a little capital intensive.
It is capital intensive for sure.
500.
Yeah, 515, 460, and 400 is what I'm looking at for $1. But yeah, if your trade size is 3 contracts in SPY, this is an extremely high probability trade. Picking up $300, but like Nick said, you're putting up 14 grand to put this trade on to make $1.50 if you close it at 50%. So
yeah,
but it could come in quickly if you get a reversal and a vol crush because these options are so far out of the money that they'll just go to zero, even well before expiration. So
yeah, I'd rather do one April contract at a 1 standard deviation, 530 for $4. It'll move, you'll be closing it quicker on a vol crush / bounce.
Using a third of the capital.
You don't have as much risk if something crazy happens. It's one contract. It's obviously closer half the money, but I generally tend to lean towards lesser contracts at a higher delta versus, the tail options. I just don't. Selling the super tails is, a little much in my opinion.
Fair. Big Deal Donuts. Can someone explain what a gamma flip in futures is and why it's an important level?
I don't know what we're referring to, but the changes in the gamma refers to just the change in delta. So I imagine what this is in reference to is like how market makers have to hedge positions. Like if everybody buys puts, market makers have to buy stock. And then when the market goes down and people close out of the puts, they have to sell out of that stock, and then it's a natural bid to the upside. So you have this sort of dynamic, and it's the same thing to the call side too. So, I don't know what sort of time frame or level we're looking at, but that's just kind of market dynamics of, the market making.
Mm-hmm.
That's it. Taco time.
Oh my God, it's 11:59.
Yeah, you're going right.
I was about to just keep
and
going.
we keep stealing Vecchio's time. I try to get you out at 58. You gotta get.
Holy Toledo! Wow. Well, thanks for tuning in. If you got any further questions, you can find us on the Twitters. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Thomas is at FX Westwater. He's now on the follow page as well. So if you want to check out his trades, you can do that on the Tasty Trade follow page. But yeah, stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll see what happens tonight. We should expect to see some craziness tomorrow in the markets and tonight while it's happening. But we'll be back same time, same place, 11 a.m. Central tomorrow. Peace.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And Tasty Live in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
What does it mean when you hear can't buy an uptick?
When a stock can't buy an uptick, it means that the stock just continues to go down every single day, every single minute, every single hour. It's a phrase to use when a stock just continues to go lower. What's it mean when you eat like a bird and shit like an elephant?
Eating like a bird, shitting like an elephant, that means you're probably picking up a couple pennies here and there on a trade. And then you might have one trade where you get a little too big for your britches. You have that big loss and it kind of wipes it all away. So you're pecking at profits and then you piss it all away.
What does it mean when you get whipsawed?
Ooh, when you get whipsawed, you are basically selling into the hole or buying into a big rally, and then the opposite happens. So let's say you have a strangle on and the stock rallies towards your short call. If you roll up the short put to add more premium to the position and then the stock drops, you have effectively been whipsawed.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
We are back. It is Tuesday, March 4th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, I wasn't here yesterday. I was sprung with a surprise home remodel over the weekend, thanks to some pipes bursting.
Oh, man, that's rough. Yeah, that's real rough. I know we're actually a little concerned, too, because our house flooded for the first time ever about a month ago. And so now I'm worried about recurring things. It's almost like volatility. Once volatility comes, it happens, and then it's kind of can cluster. So you got to take care of it for sure.
Got to take care of it. Water spreads everywhere. It can make things much worse. We talk about a burst pipe in my house. There's a burst pipe in these markets, Jamal.
Oh, yeah.
The markets are flooding out. It's a stream of red across the screen today. And by and large, it's because of a trade war that many people said would never transpire or come. Trump actually did the thing that he said he was going to do. Forget the boy who cried wolf. The market now is repricing in a new world where perhaps these aren't one-off effects and this is the new normal. So, Jamal, I think the remedy, or rather the moral of the story is today, as we turn to the charts, stocks don't like higher taxes, because that's exactly what a tariff is. It's a regressive tax on people's spending habits. It disproportionately impacts lower middle income consumers and the wealthiest. And, we just had double-digit earnings growth for the S&P 500 in the fourth quarter. So I suppose if you're thinking about a world where earnings are going to be hampered, GDP may be coming down, but this is a golden goose of the market that it doesn't want to give away, and it's being snatched violently out of our hands. Stocks just don't like the tariff news, plain and simple.
No, they don't. And we know markets don't like uncertainty in general. And honestly, I think that's everything that you're seeing here is the uncertainty. How is it going to affect this industry? Who's going to have to, sort of pay more? How much you're going to pass on to consumers? I mean, everything under the sun is being asked right now as far as questions because there's a lot of them. And markets never like uncertainty. And so as you see, volatility, of course, is poking up in a way that we're seeing backwardation in the markets. Front 3 months, each one of them trading above the next behind it. So it's a very interesting time in markets.
It's a very interesting time. The question is it time to buy the dip? There's a great cherry pick that's going out today. Nick was showing me a preview earlier, but what do you do when the VIX is at 25 or more? It's going to go over the 1-month returns of the S&P, the median returns, a bunch of other important market stats as well. But Jamal, if you're fading vol down here, it favors you doing just so. We'll get there in a moment, but let's talk about something that we've been watching here over the past 2 weeks, the evolution of Fed rate cut odds as bond yields have come back in without stocks responding positively to the upside. We're seeing those cut odds come in a little bit more aggressive here, Jamal. Dare I say that a cut is now favored in May? We're nearing the place where we're going to start to have a conversation about whether or not we should even consider the March 19th meeting, which is just over 2 weeks away, to be one that's considered live. That's obviously a very different prospect from where we were when stocks were sitting at near all-time highs a few weeks ago, just 2 weeks ago, when the market was considering that we may only get 1 or 2 cuts this year. More cuts are not seen as a good thing right now. We have another one coming in July, another one in October. That's 1, 2, 3 cuts now priced for this year with an outside shot for 4. Jamal, this is the worst possible scenario if you're an equity market bull. These are not the rate cuts that you're looking for.
This is definitely one of the more surprising developments in trading as we sit here. The fact that we've seen rates come down so much, and we're seeing all this talk of rate cut odds and the idea of possibly 3 in 2025. I just did not expect, there's no way you would have been able to convince me that markets are down as much as they are, or they're moving down as much as they have on a day like today, and the 2-year yield would be trading down where it's at. I mean, it's just surprising. On top of, you can add on to that, the dollar. The dollar is not even booming, that much higher. So, sorry, I'm getting a little distracted here as markets are running, but I think it's just jitters. But we have the dollar. I would have expected the dollar to be higher with the markets doing the way that they're doing, especially with all the stuff that's going on right now. So things are a little crazy right now, Chris, when you really analyze it. And the fact that 2-year yields have fallen as much as they have, you start to wonder, is this pricing in an emergency cut? I mean, that's kind of what we're starting to wonder about, right? I mean, when you see this much change in the landscape of rates over a short amount of time, that's the only thing that I can think of.
Are tariffs inflationary? Probably. Will that bump in inflation be subsumed by the fears of what will happen to growth? That's what the market's doing right now. The Atlanta Fed GDP Now growth tracker in yesterday's report came in at minus 2.8%. We'll talk about that in a little bit. Jamal, can you tell what the theme is here today on Futures Power Hour? We'll talk about tariffs a little bit because it's the largest, what will be the largest cost increase for American consumers and businesses in nearly 100 years. Yeah. The overall impact is north of $360 billion. As someone who buys things like, and I have an exhaustive list here. The Fox News had a very helpful cryon that they were running earlier today about what's going to be tariffed. I'll find that in a little bit. But it's things like, avocados, bananas, coffee, corn, oil, baby products, baby formula. Basically, if you're a human being and you're trying to live, it's probably going to go up in price. Yeah. So we turn our attention to the stock markets here, which are rallying off their lows. They fell out of bed this morning. They didn't like what they saw, but we're now back up to 58.14. Timing is everything here, as Tony knows, because I know he was trying to sell the market in the hole near 57.91 this morning, and we dropped another 40 points. But it's that kind of day. I was chiding him because I'm talking about how bearish I'm getting right now looking at the sector rotation, and I'm more of a sell the rip than buy the dip kind of mindset at this point in time, as you and I talked about a week ago here, quite frankly. But to that end, I see all the big vol traders today in my Twitter feed are saying that there's not a lot of dealer gamma sitting around to help keep the market pinned and moreover give traders a reason to think that they should be buying the dip intraday for a 0 DTE rush into the close. This is usually not my place where I play in the swing pool, Jamal. So perhaps we could take a step back and you could take the baton here. When we see people saying that there's not a lot of dealer gamma sitting on books right now, why does that matter to you as a short-term trader, if it does whatsoever?
Well, I understand. I mean, what they're trying to get at is that there's probably not a lot of those who are short calls here having to buy I mean, stock, I guess, if you will, depends on what you're talking about. Obviously, an index is totally different. You're not buying the index, but I guess that's what they're saying. But, that's appealing for those who trade short term and who want to trade zero DTE, which I'm sure zero DTE volume is probably off the charts today when you consider like zero DTE volume is probably like 50% of index volume more recently, what I've seen. But I would caution against that. Look, things are going to move around a lot here, as we're seeing right now. Like we're only down 42. We were down over 110 a little while ago. If you want to play that game, go right ahead. But obviously, and I assume, from this standpoint, obviously those are a lot of people who are buying right now, right? Like as opposed to like trying to sell that zero DTE. I'm sure there's a lot of people buying. I mean, that's straight up gambling, which I have no problem with. I mean, right? But it is. Just know that it is. That's not necessarily that's not trading vol. That's just straight up gambling. If you're trying to buy some calls as the market's running up, or you expect the market to run up, and then try and flip it around, be my guest. That's a hard trade. I would say it's easier, in my opinion, to sort of look at this market right now and see us continuing falling day after day, especially you got to, President Trump is supposed to talk tonight. Who knows how that's going to play out. It's easier to just probably, dip your toe here and there at 30 days out, 45 days out, or even, if you want to go out to May and, sell put spreads in that way. I think that's just an easier trade and you probably sleep better, be honest with you. But hey, those who want to trade zero DTE, go right ahead.
What really makes this market interesting is because we bumped up into the 25 area. I think we're sitting around, a 23.39 VIX right now. In 2022, we stayed above those levels for long stretches of time. And basically 20 or 19 was the floor. I'm not saying we're going back into that environment, but I would also point out that in recent years, we have not really seen advances into the 23 region all that often. And when we've spiked up here in terms of vol, we have faded away fairly quickly. Mm-hmm. We see this back in October 23. We have this brief move up there in August of last year, which again, if you were in the whole selling vol on August 5th, 6th, 7th, you walked away feeling pretty good later that month. We see the spikes in September, October, even here in December. These moves up towards 23, they don't typically last for a long time. So this then becomes a question of, do we think that the tariffs are a one-off price adjustment? Or is this the start of a more protracted trade war moving forward? Because if it's a one-off price adjustment, then the Federal Reserve is just going to do what it needs to do regardless of what's happening at the top line fiscal level. But if it's a protracted trade war, then that fundamentally unmoors a whole bunch of other things, including volatility expectations moving forward, and perhaps pushes us back into a 2022 type of environment more than a 23 or 24 where you only get short-term spikes. Jamal, but we're outside of that gray zone, though. Last week when we were talking, when the VIX was bouncing around 18 or so, when you look at the history, the odds of the VIX going from 18 to 20 are just as likely from it going to 18 to 16. So choosing that as a vol selling point becomes difficult. I guess my question for you is, now that you see this rebound, the NASDAQ briefly here dipped back into positive territory in the day, up by 0.02%. Mm-hmm. It's now down by 0.16. Do you feel like this is a compelling place, technically, quantitatively, news flow sentiment wise, that you want to be looking to take some long deltas on yet?
Absolutely. I do. A couple of things. I always mention this. I look at SMA. It just so happened today that we've stopped somewhere around the 200-day moving average, which is really interesting to me. Again, even in a time where, people talk about what's going on with technicals, it's kind of, and don't always believe in technicals. How else do you explain that? Even at a time like this. And the other thing is, for me, again, look at that. I mean, boom, right there. We stopped right around the 200-day moving average. I mean, that's just wild to me, even considering how much the fear there is in the equity markets right now, right? Then you talk about fear. Today, I just happened to notice at one point in time, like you mentioned, VIX was upwards of 25. VVIX was upwards of 120. That's like about only the fourth time in the last 3 years that we've seen that. It was during the last December, during the Fed meeting. It was last August that we saw it. There might have been one other time. And then there was another time in early 2023. And I totally could not remember. I looked at this and I'm like, March of 2023, like what happened? I mean, why was vol up? What happened in the market? Do you know off the top of your head? I couldn't remember it.
Yeah, the Silicon Valley Bank meltdown.
Exactly. I totally could not remember it at all. There's just been so many things that has happened over the last 2 years. I completely forgot about the banking crisis and how scared we were at that time, right? I mean, there was a lot of fear in the air, right? So I just think that these are good dip opportunities, right? And you can look at it however you want. You can say, I want to do 20% right now only, and I'll keep 80% of my buying power, which there's probably a lot of people out there who have 100% of their capital on the sidelines. Totally understand that. You could look at it as, I want to do 30% or choose your percentage, but I think these are good dip buying levels. I really do, because again, if we do bounce, you're not going to get a chance. I mean, it's going to happen kind of like we just saw on Friday afternoon, where the markets just really run. Now, the question, of course, is where is the bottom? Look, nobody knows where the bottom is, man. I mean, again, like I said, we touched that 200-day moving average, but that doesn't necessarily mean it's a bottom. We could get some more news tonight after this President Trump talks, and things could be lower. I don't know, but I also don't know when we turn around, and so that's why I just try to buy, get long deltas here and there, because you just don't know when it happens.
You mentioned the 200-day. I think that's actually we see the bounce today. I'm reminded of what happened in Tesla just 2 sessions ago, where we hit the 200, bounced, gapped open higher yesterday, and now we're actually trading below it. So it does provoke the initial reaction. There's enough people paying attention to the 200-day that it becomes a self-fulfilling prophecy of sorts. I can't, what's the mathematical justification besides the fact that it's a round number? It's not like a quarter or half the year. But no matter what, if enough people believe in, the magic spaghetti monster in the sky, then he's going to play something here on the chart. And I think that's the true thing about technical analysis. There's so many people that do believe in it that it does provoke an initial reaction. Whether or not it's a true reaction that you can trust in, I think, is a different question. But with ES here, you see the swing lows from late October, early November, right before the election, more or less coincide with that 200-day moving average today, and we get a bounce right off that low, almost reflexively. Is that a reflexive bounce that I personally believe in? No. Obviously, we could get some more headlines tonight that the tariffs are being removed. Trump and Trudeau sit down and, they come to some sort of agreement that takes them off the table, and all of a sudden this is a non-issue. But then again, I think about the sector rotation here, Jamal, and it's been so bad. Today, XRT has recovered off of its session lows, but it's still down by 1.3%. XRT, the retail ETF, being one of those names that tends to suffer the most during recession episodes in the market. XLY, likewise, still off by 1.48%. That's not good. We can go over to technology, and sure, that's rebounded back here, but it's been a big loser here over the past 2 weeks. And then on the other end, staples. These are down, but they did hit a fresh high here today, momentarily. XLU utilities, this is again defensive sector holding up better than large chunks of the market over the course of the day, certainly not the trading range. There's a certain defensive whiff to all of this, even as we see a market broadly go lower. I don't know. I don't like the positioning or the asset class churn with higher bonds and a stronger yen and stronger gold, and then all of the growth names getting slammed still.
Yeah, I mean, this is one of those days where you do have to look at in totality, right? Like looking at all those different sectors, what's going on. What's also weird to me is seeing Nvidia and Google. Like they've been, Apple was actually up a little earlier too. I know, Nvidia and Google. It's really crazy to me that those are some of the things, the only two of the very few things that are trying to help prop up this market to no avail, though, as we see NASDAQ just go back into the red. So, but yeah, I don't want to take the thunder away from when we get to some of these other things that we're going to discuss, but it's an interesting day. I mean, we were down 110 and the few things that were up were bonds and gold, which you would imagine on a day like that. But seeing a few other stocks, at the time when I was looking, Google and Apple were the only Mag 7 stocks, and they were just slightly positive. Down 110. I mean, usually something like down 110, pretty much everything is down. But that was just kind of weird to me. So I say when you see that, every single thing isn't down. And that also kind of gives you an idea that you should probably be looking around for a few opportunities to buy some dips, get some long deltas here and there. Because, again, I just keep reiterating this. When we turn around, it happens fast. We've seen this happen so many times, especially once volatility gets to a high level, especially once we get into backwardation. I don't know when the bottom is, but I'm not trying to wait for a bottom to try and get a few long deltas. I decided to do it here and there.
What really fascinates me is that over the past 24 to 48 hours, when administration officials have been asked about what's happening with the market reaction, they've talked about how they want 10-year yields to go lower. I don't think, and I'm not the only person who said this, I'm certainly not the originator of this thought, but I'm increasingly convinced that the Trump put isn't on SPY. The Trump put is on TLT. And so if engineering recession gets them a lower interest rate, then mission accomplished, because they got the lower interest rate. If they need a clear, if they want to shrink the size of government, then they'll do so and cut government spending and shrink the federal workforce. And if there's any short-term pain there, so be it. But it's in service of bringing down interest rates for everyone. And so proceed, go ahead. Obviously not good news for the Russell, which you and I were joking last week. There's some semblance of normative determinism happening here, Jamal, where because it has Russell 2000 in the name, it's not really allowed to advance past 2000. And that level draws ever closer, because when we made that joke, that was about 4% ago from here. So now at 2082, the Russell is undercutting the lows that we had last September in the RTY H5 contract, which we can't go back further than that on this chart. So we're going to have to turn our attention to the continuous, which again, we talk about changes in market behavior throughout 2024, dips into that 200-day in the Russell, bounce areas every single time, even at the start of this year, not once, but twice. And then we fail here in February. And yesterday, when we try to rally, we fail. We move above Friday's high and close below Friday's low. That's a bearish engulfing bar. That's not something that happens in bull markets. That's a reassertion of bearish momentum to the downside. I, on the other hand, would say the exact opposite when we were going on the way up. Oh, look, we moved below yesterday's low, then closed above yesterday's high. That's bullish engulfing. Choo-choo train rolls on, Jamal. Let's go to the upside more. So, yeah, we have a move off the lows here today. This is a pretty crappy looking chart. That looks like some sort of distorted left shoulder head, right shoulder here. I don't know, Jamal. This still looks pretty. Just the way that I trade as a momentum guy, and again, I'm always going to miss the turn. It is just, I've accepted it as a form of life. It's like being a Mets fan or a Jets fan. I'm always going to be unhappy. All right, James, that's for you. You don't need to make any more comments, by the way. The producers love talking about the Jets just to get under. That's a lot coming from a Bears fan, but we'll leave that aside. Okay, like I'm willing to miss the turn here off the lows and wait this out a little bit longer. I've only placed 2 trades in ES or NQ or RTY in totality this year. I'm comfortable watching this all kind of melt down, even if the legacy position I have is obviously not going to recover. I'd rather be wrong and small than try to catch this falling knife, as I've been avoiding doing for the past week, thankfully.
Yeah, I mean, this index is the one that you would get long last, honestly. I mean, it is. If everything has been falling over the last several days, as it has, you probably already gotten some ES, you probably already gotten some NQ, or however you're doing it, whether you're using the ETFs or the futures. Dow for sure, right? But Russell is the last one, because it's just, like you said, it shows no signs of slowing down as of now. And so if we continue to go lower, obviously it's just going to get uglier for all of them, but at this one in particular. So I would wait last on that one. That's your last bullet. That's your last shot, is the Russell 2000.
Jamal, the Nasdaq's now off by 0.35%. There was a moment like 10 minutes ago where it had turned back positive.
That's what I'm saying, dude. These people who want to trade zero DTE, it's going to be great, but it's also going to be just, too wild too.
Just not my cup of tea, right? But this is the environment that we're in right now. And we just have to embrace what we're in. And so that means trading smaller. I personally think this means very, very high vol. If we can get high enough vol on a long enough period of time, if it's beyond 45 days, sell it. Like, use duration right now as your friend to establish these positions, but you don't want to get whipped around. And what was a day where we were down, 1.5% in the S&P? We were trying to claw back. Now we're 20 points lower from when we were talking earlier. So these markets are moving fast. They're very headline driven. So if you're going to be a zero DTE person, you got to be very nimble. No marrying positions.
Let's pull up VIX 1D.
Speed dating only.
Pull up VIX 1D, because I'm looking at it right now. It's pretty interesting. As far as wondering, dip buys. I mean, look at these days. Look at the days. Look at where we are, right? 2276. And look at the days where we had a close of 2276 or higher.
Bombsy Day.
Yep.
Election.
Yep.
Monday, August 5th.
I mean, these are big days. You know what I mean? Like, would you have dipped your toe into some stocks there? That's what I keep asking myself.
Isn't the way, and this is actually a really important conversation, is it the journey or the destination that matters? If it's the destination that matters, then we only care about 23. But I think the journey here, right, like the August move, this basically all comes together. August 1st, we open up at 1295. You know, it's a few days later, all of a sudden we're at a high of 4884. It's a very rapid buildup. Same thing here in December, kind of just materializes over 2 days. This one feels like it's been a steady build for like a past week and a half or 2 weeks now, which makes me a little bit more uncomfortable, right? I'd much rather see the vol spike up out of the blue and say, let's just fade this. This is a new issue. We didn't know how to quantify this. People are panicking, as opposed to like a frog boiling in water kind of volatility rise where things are heating up slowly, right? Like this feels like it's warming up.
You say that like
just
you've done that before, like you've watched a frog boiling in water.
Have you ever cooked lobster?
I mean, not while they were alive. You enjoy it. You enjoy watching them squeal, don't you? You enjoy the little.
I don't like fish. Oh God, I'm not a seafood person, but yeah, like if you like.
Watch
and now
their
they're doing
eyes
very.
boil.
No, I'm not if it swims, keep it in the water for me.
You can kill it. No, but you're right. I mean, the journey here is really interesting. Like it is kind of a slow build. I don't proclaim to know when the bottom is coming, but I just know when it turns around, it happens quick, man. And right now, a lot of it is uncertainty. Do we think clarity is going to be given today during the speech tonight? Probably not.
Yeah.
But, at some point clarity will arrive, I guess, and then markets, resume they resume their sanity. But I don't know. I just to me, when I see this, and again, this could end up higher. There's no doubt about it. I mean, we could end up seeing a VIX one day at 35, 40. I don't know. But when I see this and I look at those days, I think to myself, would I have liked, and I did. I mean, I did get long deltas on most of those days. And, eventually it worked out. It might take longer this time around. This is, again, why I think going further out is a lot better idea than trading, near term right now. I think you really got to be careful. And those are, things are a lot more bid in the near term. Now, do you want to sell those in the near term too? Well, it just depends. If we end up getting the kind of move that I think we get and you're short some upside calls, that could get hairy too. But I just think the best way to trade this right now is trying to find ways to get a few long deltas here and there, meaning short put spreads further out, 45 days, or even May, whatever that is, 50-something days. That's my strategy. We'll see how it plays out.
Well, one place where long deltas haven't been hurting are in bonds, which, it was terrible September, October, November, December, January. But, hey, blind squirrel finds a nut, right? So long bonds in February and March, they're working. This is... we're a little bit off the highs, 111 side marginally here today. We're contending with both risks on both ends. But even though it's a little bit of a pullback to 47.2 IVR, we're starting to see this volatility rise at the long end of the curve. Do you still maintain, like I do, that this is a buy the dip type of mentality right now? Insofar as if we do get a pullback here in ZN or ZB, we should sell puts?
Yeah, I do think so. I think it is better if we get that pullback that we end up selling puts, because look, this is clearly another aspect of this whole trade that we're seeing here. Markets are terrified. Obviously, equity markets are terrified, and now is the time for bond bulls. A lot of us have been long bonds for quite some time now. Like you said, going back to October, where a lot of there was just a lot of jitters, and we just didn't really know. Obviously, you could say that the top in bonds was essentially around the election. Things completely changed after that, and it's been tough sledding since that time period. And now we're finally in a position to hold on to long bonds and profit off of them right now. Because again, I mean, this is the area that the market runs to when there's serious fear, right? We're seeing ZN, we're seeing ZB at levels that we haven't seen going back to October. And that was on the downslide. Honestly, on the upslide, it only happened again when we go back to August, right? That time period in August where we were talking about there was serious fear at the beginning of August, where did they run to? I think they ran to gold, but they definitely ran to bonds, as you can see. And so this is, I think this is the one shot that we're getting here with bonds. We're finally getting it, and we're going to be fairly lucky for the most part. Wow, it's just me, huh? Did he leave me? Oh, that's cool.
No, I didn't leave you. Apparently, I'm frozen. Right? Am I frozen?
Okay.
Apparently, they say I'm frozen. I think that's fake news because I can see myself moving and talking.
You were frozen.
You
actually.
look great.
You were frozen.
So it's not just fake news.
No.
Jamal, I think the question is, I'm going to turn the chart here for us. Even if people can't see me, it seems like they can certainly
I can
hear
see the Z
what I'm saying. Okay, well, let's disengage that because clearly that's not working and ZN is not working at all and nothing on my screen is popping up. So we're going to try this one more time for posterity. How are we doing now, production?
Guys, we should go to break, okay?
You're still muted.
Okay.
All right, we'll take a quick 30-second break.
Going to break.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And Tasty Live in particular because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on tastylive.
What does it mean when you hear can't buy an uptick?
When a stock can't buy an uptick, it means that the stock just continues to go down every single day, every single minute, every single hour. It's a phrase to use when a stock just continues to go lower. What's it mean when you eat like a bird and shit like an elephant?
Eating like a bird, shitting like an elephant, that means you're probably picking up a couple pennies here and there on a trade. And then you might have one trade where you get a little too big for your britches. You have that big loss and it kind of wipes it all away. So you're pecking at profits and then you piss it all away.
What does it mean when you get whipsawed?
Ooh, when you get whipsawed, you are basically selling into the hole or buying into a big rally, and then the opposite happens. So let's say you have a strangle on and the stock rallies towards your short call. If you roll up the short put to add more premium to the position and then the stock drops, you have effectively been whipsawed.
If you missed the live show, here's our cherry on top weekly recap.
You know what my first concert was when I was very young. It's quite embarrassing.
Anson.
How'd you know that?
I mean, I feel like everybody.
How did you know that?
Because who else was popular then in like the late 90s?
Oh my God, that's
amazing.
That was cringe. There it is, the song. Yes.
Yes. All right. Good luck. Good trading. Let's go eat some roost.
Peace.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9. Yeah. It's same thing. It was right there. Right when we started.
He was my friend first, clearly. Met at work.
Yeah, at Tasty. We met here. Mike interviewed me for a support role right when I was starting off. So Mikey was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer...
Say it.
So why are we all doing all the things that we do inside of the active trading space? Simple, to make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're gonna break down all the details of each one of those keys. So I'll see you inside.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found Tasty Live from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information,
Apparently, we hit our tariff quota there, Jamal, and we had to restart the Microsoft Teams stream, but we're back. Sorry for the delay, folks. Thanks for your patience. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. Jamal Chandler still in the co-pilot seat today. Guys, we're going to go right back to the charts. We're going to hit the metals market here as we wind into the last quarter of today's session. Ultimately, metals are proving mixed on tariffs, today's theme du jour, and I have a feeling we're going to be sticking with that theme for quite a while, Jamal.
Yeah.
Gold prices have liked what they've seen. 2 days ago, on Friday, we fell into the highs that we had at the end of October, and we staged a really nice bounce. Thus far today, up to 29.20. It's a 0.6% rally. You, sir, have played this much better than I have recently. So what are you doing now in gold? Obviously, I'm still riding it out because I don't know when to sell.
Well, look, I told you this is probably the end result of gold. I wasn't really sure how it was going to play out, but right now I would say, gold's getting bought because of fear, right? This is what we do when markets really tank. We buy bonds and we buy gold and we sit in our houses and under the covers. I mean, that's what happens, right? And so that's what's I think that's currently going on. But I've been going on and on about the opportunity in equities right now, and that's where I'm putting a lot of the chips, and that's where I'm saving chips to put more into in case we do fall lower. Because again, I don't know when the bottom is, but that's really what I'm doing. But I do like gold here. Like I said, I just figured that was going to be a couple of days of dip. Again, that's not why I sold. I initially started selling because of the equities opportunity that's presented itself, and I wanted capital for that.
In hindsight, obviously the decline in volatility as we were coming into that top was a tell. Gold likes the higher vol. We've maintained that for a while here. And so when gold vol starts to fall, it becomes a little bit more difficult for gold to retain its uptrend. But that, I suppose, is the good news in this move off the lows the past 2 days. Vol is starting to bounce back. It's not a bounce back in price without the corresponding increase in gold vol. Mm-hmm. Jamal, also, I had quite the funny visual in my head of you being home, you're sitting there with a beer after work, you flip on the news, you see the headlines, tariffs are coming, and so you're like, oh, and you run off to bed and immediately open up the Tasty Trade app and start buying TLT.
All accurate. All accurate. Yes.
Yeah. So anyway, I'm staying long, right? This is increasingly now looking like an even bigger bull flag above the former swing highs in terms of being patient and riding this out. It would mean that the range that we have is 28.50, we'll call it, up to about 29.75. It's 125 points. On top of the 29.75 would give us a longer-term target of 3,100 an ounce, extending our targeted up move. On the flip side, if we were to lose 28.50, that means 27.25 comes into focus. And you know what, Jamal? 27.25 is right along that uptrend from the late June, we'll call them December swing lows. That area is marked off on the box here on our chart. So there's really two paths forward. We're still in a churn. It could be a top. It could be a flag. If it is a flag, we're looking at 3,100. If it's a top, we're looking closer to 27.25. I personally would get out of my gold long deltas below Friday's swing low and just throw in the towel on this altogether, and then ultimately look to re-engage on the long delta side closer to 27.25, provided the opportunity, assuming the market would then continue to decline thereafter. Mm-hmm. But until then, you told me last week, you're like, I didn't bother telling you I was getting out of gold because I knew you weren't going to. And so I suppose the same remains in silver, where we're still in a triangle now, obviously well off the highs, but the market moving up on a day when tariffs are in play. The metals still seem like a good fit. So I will continue to roll the calls in both gold and silver, so long as the technical structures remain ever present.
Yeah, I mean, I think you can feel comfortable given this environment. This is where you really want to be long these, because clearly these are being bought as equity bulls are getting pretty scared right now. And I mean, obviously, look, their uptrend is resuming its levels because of what we've seen anyway. Overall from the market, in the gold and silver, they were already on this uptrend. They stumbled a little bit, but I would assume that if the market gets a little bit more scared, you're going to see gold and silver push a little bit higher, just for no other reason than equity bulls are scared.
One can hope, particularly those of us that are long the calls. I'm also short a put spread here in copper. We are operating right underneath the recent lows. It looks like this is an important swing area where highs were carved out in November, again here in January, and we've been holding this band as support. Similarly, we see that the 1 month moving average, once we broke above it at the start of the year, it held as a support region throughout late January into early February before we finally lifted off. This time around, we've declined back into that 1 month moving average, and we're kind of sticking on it once more above this swing zone. So contextually, on a technical basis, I still think that long deltas are appropriate here. We've seen the bump in vol, and so short put spreads against this 450, 445 area make a good deal of sense to me. Jamal, we need to turn our attention to a different type of growth commodity here, which is oil. And I suppose oil is a confounding factor for a copper outlook that leans bullish, because oil is not looking good by any stretch of the imagination. Now, we are off the lows today. Let's be clear about that. But this is a market that had a bounce last week, fell hard against that swing area, former support turn resistance. Yesterday, we have the big bearish outside engulfing bar that sees us break the uptrend from the September and December swing lows. I mean, it's a little bit of vol now, 33.8 IVR. What do you say about oil at these levels?
Two things. On the one hand, you see 66 and change that traded today, and like, man, that was a buy. But and that's just one little guy on my shoulder. On the other shoulder, Chris, I tell you, this one could get really scary. Like, if for whatever reason we do have serious fears about global growth, we could see oil in the 50s, right? Like, that's a possibility, I would say. And so this one is a little bit more scary to me. I'm watching this price action. Is probably, if I see oil breach 60s, I'd say that's probably scarier than anything we could see in the market more recently. And the market's probably pulls back, but it could end up being 3 to 5% overall, maybe eventually with a drawdown of 10% at some point. But I don't know. Oil tanking is really, I think, a real fear that you should have if all of this continues to happen globally.
Yesterday, we had the announcement that KSA, Saudi Arabia, would be bringing forward oil production sooner to the market than what we had previously heard in recent weeks, months, years. The expectation was that OPEC Plus would delay the production bump, and when they ultimately did bring back the production, it would come about on a slower timeline, 18 months as opposed to 12, if only as a sign that, from my eyes, they were concerned that demand wouldn't be there. And if you looked at Chinese demand incrementally, Chinese demand for petroleum products, oil itself, is negative year over year. That is something very important to consider that I feel like we're not discussing nearly enough these days. But in any event, we now have a change of pace where oil production is going to be coming back at the insistence and the prodding of the Trump administration. Drill, baby, drill, Jamal, evidently did not mean more drilling here in the U.S. It just means more drilling globally. The U.S. is already the largest exporter of gas, of oil. We are producing more of it now than we ever have in our history, of course. And when we look at companies, and we actually talked about this on Overtime a few weeks back, when the Department of Energy put out their 9-point plan for how to achieve American energy independence under Trump 2.0, anything along the lines of drill, baby, drill for domestic producers was not included as part of that plan. And so if you're going to get an increase in oil supply, it really does need to be done elsewhere. It needs to be done in places like Canada or Mexico, for example. If you're based in North America, hopefully that those tariffs don't stay up for too long. But it needs to be then, involving the OPEC plus countries. And like a little idea I've always had for a long time, particularly going back, I think it's 2017 or 2018, I wrote this for the first time publicly, was if you see a realignment in oil producers between KSA, Russia, and U.S. Under Trump, that destroys OPEC and it creates a new cartel that can control policy. And what gets you there? A U.S. security guarantee for Saudi Arabia, which has long been discussed. And so maybe this is a first step in that direction. Saudi Arabia promises to pump much more oil out of the ground in exchange for access to the U.S. security umbrella, which apparently there's a lot of room under it now that we're getting rid of our Western European allies. I wouldn't discount this oil environment staying increasingly headline-driven and more chaotic moving forward, because it seems a new regime is coming into play. We need to throw away all of our preconceived notions about what OPEC Plus is going to do with their supply after yesterday's announcement.
Yeah, when you see oil doing these type of moves, there's definitely really fear in the air, and there's definitely fear of global growth. So something to keep an eye on, I think, here. This is definitely one of those metrics we got to watch.
NASDAQ's back green, Jamal. It's going to be one of those days.
Yeah, it is.
Up 1%, down 0.5%, back to even, back down 0.5%, back to even. Natural gas here enjoys the tariffs, of course, up 7.3%. What a I mean, we talk about a technical zone. We drop into that 1 month moving average yesterday. Granted, I missed this. And I know I missed this because I was waiting for this. I was hoping for a pullback to the 1 month. I had the box here on the screen. Pipe burst. Couldn't place any trades yesterday. So this was hopefully something that people, having us outlined it last week, were able to take advantage of. I feel like I personally now missed the boat because where I wanted to get in, couldn't get in. But that is the area with which to operate. I know that you've been selling calls, so you and I have had different views on natural gas. Are you still in? How are you handling this?
I'm short a call spread from February 6th, so while you've missed it, I've taken the punch right in the face, that's for sure. I'm short the 394.10 call spread, and I just rolled it to next month out. I mean, we'll see how this ends up playing out. I don't know if we'll get a pullback at some point or whatever, but I mean, I'm in the trade. It is what it is, and hoping I can eventually make some money back.
Natural gas, big day, crude oil turnaround, and we're seeing that crude oil, as it goes back, bonds are weighing a little bit more heavily on the session, which I think is an interesting relationship to keep an eye on, Jamal. There is a trade within a trade here. So if you're trading oil, keep an eye on bonds. If you're trading bonds, keep an eye on oil. This is perhaps the most noteworthy development today. The tariff talk, the higher rates, all that was good for the dollar previously, up until about the last week and a half, where if we're getting these tariffs in conjunction with expectations of a slower economy, are we really thinking that we're going to get a runaway dollar, or is stagflation possible? The Fed, of course, is seeing rate cut odds dragged forward. The euro here showing signs of a veritable bottom at this point in time, making a significant pivot. It being the largest component of the dollar index. You'd think on Tariff Tuesday, Jamal, the dollar would be doing well. It just hit a fresh yearly low. The yen is your best performer on the day. Japanese yen obviously finding a place as a safe haven in this market, up against its 200-day moving average right now in the 6JH5. But vol is here. Vol is sticking around. Vol is back. And the US dollar seems to be falling out of favor. So make of that what you will, Jamal. But FX, of course, is ground zero for tariffs. We knew they were priced in to a certain degree. I think we should look to the Canadian dollar as something instructive. It's a 79.9 IVR. Even though the tariffs are in play now, we have not touched the lows that we did from February 3rd when they were initially announced. So how much of this is already discounted? If this is temporary, then this is a low that we should be working around. And I feel much more comfortable looking to sell the vol in 6C than I would in the S&P 500, given where we're operating from.
Yeah, I mean, remember we were talking about this when it was around this level a couple of weeks back, and I was wondering about the idea of selling strangles in here, right? And then, of course, it really took off. But that's my question, too. Like, is this the worst of it for the Canadian dollar? Because now they're starting to fight back with their own, retaliatory tariffs. Is this the worst of it? It almost, I mean, just based on price action, you wonder. I mean, we didn't even go back towards that low that we saw on, what day was that? The beginning of February, right? The 3rd. So I don't know. What do you feel? Like, is this the worst of it? Is this a good vol selling opportunity? It almost kind of seems like it is.
I think there's going to be, there's a J curve, right, in economics when it comes to trade. Things initially dip before they get to their new equilibrium. It's almost like the opposite here, where it's like things are going to get worse before they get better. So I think that, if we can ride out the next few days, there is a Trudeau-Trump conversation apparently happening tomorrow, as I've seen some things on Twitter. That is probably going to be the thing that moves this market the most. But in terms of the calendar for this week, Jamal, nothing for the Canadian dollar outside of these various tariff announcements. And then you mentioned this tonight. It's not a State of the Union because State of the Union is really a year in review. Trump's been president for 6 weeks. So it's more of just like a keynote address. Mm-hmm. But he's still doing an address to the joint session of Congress, which for all other names, intents and purposes, it's like a State of the Union. It's more forward looking. And so he's going to continue to try to push his image, push his vision of what he thinks America should do in its role in the world. I don't know if this is the platform when he's trying to sell that vision to the American people where he's going to back off. So I want to watch tonight's speech. You said, are you going to watch it tonight? Should we? Why not? Mets aren't playing yet. Actually on right now against the Cardinals. I would think that this is the trade to watch if we can get a little bit of a washout in the Canadian dollar around some, State of the Union, joint session of Congress talks. That is the place to watch for a trigger going into any Trudeau-Trump talks to see if we can get a washout there.
Yeah, I mean, I think things are going to move tonight. Futures are obviously going to move. They're moving a whole lot right now.
Right
Volume
now,
is very
did
healthy
something
today.
Yeah, I mean, like I'm talking and I'm looking through Twitter like, did they just make an announcement? Are the tariffs off now? Because now we're only, now we're up 0.25% in stock.
This is the kind of market we're in right now. Buckle up.
Yeah, well, guess what? We're going to have to wait for Dr. Jim to cover that. And I'm sure Tom and Tony will hit it on last call. And you and I will cover it later because you're back for engineering the trade.
Yes, sir.
I'm going to be on overtime. What's next on the calendar for tomorrow, though? ISM Services PMI. Yeah, that's the one we want to watch for. The S&P Global PMI has told us we're in recession, driven by the services sector. ISM Services PMI could be problematic. Factory orders could be problematic. We've seen how the market's been so sensitive to growth, how it's been overreacting to Atlanta Fed GDP Now growth tracker changes. Those will have an impact. As we do at the end of every one of these shows, a brief bit of education. I'll save you the joke about bad movies and margin call. Go to tastylive.com, top banner, learn beginner futures, or click the link here on the bottom of the slide. It will take you there directly, and it's under the section here, margin and buying power, Jamal. But we have Dr. Jim coming up next, so we're going to make room. You go to tastylive.com, read the education. Don't get margin called in an environment like this. Know how volatility and changing margin levels impact your ability to hold a position during these times of rising vol. Product specifications change by whatever you're trading. So gold, crude, different than ES. Anyway, we're out. We're done and dusted. That's been Futures Power Hour. Thanks everyone's patience during the technical glitch today. We'll be back after a brief break. Dr. Jim Schultz with From Theory to Practice coming up next here on Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Putting on strategies? That's easy. Taking off strategies? That's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
If you missed the live show, here's our cherry on top weekly recap.
Yeah, that's gonna. There's a spider on my desk. No, kill it! Oh my god!
Where is it?
It's on my microphone.
I don't see it. Not from there, you won't.
Oh no! Oh god!
Spiders don't bother me at all. Just the big ones. No, it didn't bother you at all. From where you were sitting, you had no problem with it. Man, let me tell you something.
Thank you,
I don't want you to throw me a life preserver. That's never going to happen.
Thank you, Bat, for coming to my aid.
You're welcome. You're welcome.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Tuesday 450-point intraday NASDAQ reversal edition of the program. I'm really glad that you are here. If you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube. If it does happen to be real time, it's about 2 o'clock Eastern Time, March 4th, 2025. You can hop into the chat. You can communicate with your brethren that are also watching the show. You control all of my comments and stories and jokes and even trades, and it is indeed a good time had by most. But let's take a look. John, bring us into the market here, because, man, we've got some things going on, guys. I mean, EME S&P is down 27 when they were down about 100 points more just a couple hours ago. You got the old risk-free instrument doing what risk-free instruments are supposed to do. NASDAQ futures up 70 points, extremely high-risk product, just to be very clear about that. You got the boomers down 333 on the day, so a little bit on the struggle bus for the boomer generation, but that's kind of where they like to live, just kind of moseying on through life. You got Russell down 6 points on the day. You got bonds actually down 21 ticks. You've got got gold up another 22 points. Peter Schiff, man, absolutely nailing it. He's called 14 of the last 2 huge gold rallies, and it's pretty impressive stuff. We got the volatility index, the old VIX futures, up 28 cents. And then you've got the VIX is cash volatility. That guy's actually up. Ooh, now it's only up 6 cents. Wow. That's crazy. This thing was up like $3 earlier, $4 earlier. That's wild stuff. Man, it's almost like markets move and things change. Like, it's almost like, man, you just don't know what to expect, right? I mean, man, today is what? Today is Mexico and Canada, right? Today we're slapping the tariffs on Mexico and Canada, and then what comes next? Well, I don't know. You don't know. We got to wait and watch President Trump tonight. What's most likely going to happen, though? We already know how this plays out. We got Mexico and Canada today. Tomorrow, I'm pretty sure it's Ohio. Then Thursday is Tennessee. Then Friday, Alabama. Roll Tide. That's the only way to do it. That's the way we got to do the whole tariff deal here across the board. And then next week, who knows what we'll do. So, all right, let's go ahead and, let's look at this, actually. You got VIX. VIX 2295. You look at the index here. Wow, look at that. Look at that. This thing was up to 2635. So it was almost $4 higher than where it is right now. That is a pretty significant volatility sell-off if I've ever seen one. Intraday like this, some pretty crazy stuff indeed. Let's take a look at, if we look at the NASDAQ index. Yeah, look at that, man. Man, look at that. Man, it's almost like we called this yesterday. Like, it's almost like your boy said this exact thing on the show yesterday. What did I say? You can go back, you can check the tapes. Right, just like I've been an Eagles fan since day one, just like I've been telling you all about Anora for months and months, years at this point. Yesterday on the show, right, I said, I think the NASDAQ is going to rip in March. I still think that's true. But I said they're probably going to take out the previous low first. Right, and by they, of course, I'm referring to your Salznoffs, your Batistas, your Sheridans, right, kind of the elitists of the society that we live in, of course. Well, what did they do just yesterday, actually? And then they pounded on it a little bit more here today. They took out the low. Now, I also said I don't think it's going to go below 20,000 because that would really scare the children. Now you're scaring like adolescents at that point, and I don't know that they're necessarily going to want to do that this go around. And so look at what has happened. They took them down to 20,075. 20,075. And not below 20,000, right? That's what we said yesterday. So now we're right there with Tom Lee. I'm right there in the same boat as Tom Lee. Has he ever gotten it wrong? No, of course not, right? And the thing I love about Tom Lee is he's not a permeable. The thing I love about Tom Lee is he plays both sides of the fence. The thing I love about Tom Lee is he's not always shouting for new highs. He's not always saying bull, 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 buy, buy, buy. Like, my man's very balanced. He's very fair on both sides of the market. And so we'll see what happens next. But I'm just saying, y'all heard it here first. Y'all heard it here first on the show yesterday. It is indeed the first time I've ever been correct with a market prediction on the show. So it was a very, very important day for us here from Theory to Practice. All right, but let's go in here. Let's take a look. So I want to get to you guys, man. I see you guys in the chat. Man, look at you guys. I appreciate you guys. Man, I see Nick S. I see CM, Daniel Perkins in the house. Noah's in the house. Man, Strategy and Opportunities in the house. Kimberly's in the house. Man, look at you guys. Brad Glazier's in the house. Finn West. Sam L. David Gallimore. YouTube Jim. Man, I appreciate you guys. I'm going to get to you guys here in just a few minutes. Let's talk about a couple things. So number one, guys, the Best Buy trade. Who took me down to the Best Buy trade? Was that Emmett? I think that was Emmett. You better show yourself today, Emmett. I think you took me down on this Best Buy trade. And so you have now given us many, many teachable moments that we're going to get to explore together as a team over the course of the next couple of weeks or couple of months. But Best Buy down $10 today. And so I guess a lot of people realize, like, why am I here again? I think a lot of people kind of realize, like, why am I not doing this on Amazon? Yeah, I probably should just do all this on Amazon. So Best Buy down $10 today. So what are we going to do? Well, we have a put ratio spread on. We have the 87.5, 85 put ratio spread. NASDAQ now up 100. Man, look at this. Did Trump call off the Ohio tariffs? I don't think so. Nah, there's no way. So NASDAQ up 112. This is, okay. All right, got some things cooking there on the old back burner. Not even with seed oils, like we're using coconut oil. And so that's some good stuff. But you've got 87.5, 85 on the ratio spread here. When you have a put ratio spread and the stock falls significantly, like what has happened here with Best Buy, usually the first step in the adjustment protocol is let's take off the long put spread because that's going to be pretty close to maximum value. There's not much reason to hold that any longer because you will have already extracted, most of the juice from that orange. So let's examine, we have a 2.5 point wide put spread. Where is the current mark? Where is the current value of just the put spread? Then we'll talk about the standalone put here in just a minute. But remember, a put ratio spread is two components. You have a vertical spread, a long vertical spread, and then you have an extra short put. And so we want to examine what is the value of the long put spread right now. Can I take this off for near maximum value? So again, because it's a 2.5 point wide vertical spread, maximum value would be $2.50. So is it marking for, 220, 225, 230? I mean, that would be very close to maximum value. So there'd be no reason to keep that on any longer. And then we could just deal with the short put kind of independently. So if I go in here and I highlight both of those and I go to close a balanced position, look at that, man. It's marking for 220. So it is only 30 cents off of its maximum value. Now, that's the mid price. We might not get filled exactly at 220. It may have to be 217 or 218, whatever. We'll take a look at that in here just a minute. But this is very close to maximum value. There's no good reason to hold this any longer. Right? Because what we want is we obviously want Best Buy to come back. We want Best Buy to recover. Right? And so if we keep this long put spread on, we're keeping on a long put spread that's already achieved 90% or 88% of its maximum value. And if the market, or if the stock, I should say, does recover and rebound, then the long put spread is actually going to serve as a stick in the mud for our recovery efforts on the extra short put. So there's not really a good reason to stay in the long put spread for the additional, 30 cents, right? You're only staying in this trade for the, the incremental difference between where the mark price is and its maximum potential value. Again, the maximum potential value on any spread, any vertical spread, is the width of the spread. Right now it's marking at 220, 218. It looks like the maximum value is going to be $2.50. There's not much of a good reason to stay in that trade any longer. And so let's go ahead. Now apparently it's 215, but that's fine. Let's try to close this guy for about 215. All right, so we got filled at 215. All right, beautiful. So there was only 35 cents left on the vertical spread to get us to maximum value on that component of the ratio spread. All right, so that is the put spread portion of the ratio spread. Now, what are we going to do with this 85 short put? Well, when you get to this stage in a ratio spread where you put the trade on, it didn't work, you take off the vertical spread for near maximum value, now you're just left with a short put, which in my opinion really simplifies things because now we can just treat this like we would treat any other short put. And so when you have a short put, like what do you typically do? Well, when it gets tested, you roll it out. Like when it gets tested, you consider adding a short call, like things like that. Now we still have the short put. It's a very similar protocol. The only difference being it's pretty far in the money now. So this guy's pretty deep in the money. So we're probably not going to consider adding a short call because there just isn't very much that we're going to be able to get for that. We'll take a look at that here in just a minute. But when you have a short put that's deep in the money because you forgot about it or maybe it blew through your strikes overnight or whatever the case may be, remember what is one of, in my opinion, the biggest advantages that you have in your back pocket. The simple fact that you can hold the short put just like you would hold long stock. So just like you would hold long stock for some indefinite period because you like the company, because you're playing the positive drift, because you just want to be bullish on the overall economy, whatever the reason might be, you hold a long stock position because you want to benefit from one or several of those things. Well, here we have an in-the-money short put with Best Buy. It's basically like long stock at this point. Like if I go into the trade page here and you take a look at this 85 put, I mean, here it is right here. I've got my 85 put, my 85 short put. This is my position. All right, you can see it's got 75 delta. Now remember, long stock would have 100 delta, of course. 100 shares of long stock would be a 100 delta position for that stock. So 75 delta, I'm basically 75% the degree of bullishness that I would be if I had 100 shares. That's pretty close to 100. I mean, it's not exactly 100, of course. It's not going to be a one-for-one mapping, but it's close enough to where it's like, all right, this is basically going to feel like a long stock position. And so if I feel good about the company, which I do, we talked about this yesterday, like if I actually like what Best Buy's doing, which I personally do, apparently no one else does, but hey, sometimes you just got to stand alone. Like sometimes you got to be a contrarian, and you can't call yourself a contrarian unless you're willing to stand alone from time to time. And so here, we're just going to hold the short put. Like I'm just going to hold the short put, play this like I would play a long stock, and just sit tight. We'll just sit tight. We'll stuff it in the stock drawer, and we'll come back to it every couple of weeks or every couple of months, and we'll kind of see, what Best Buy's got going on. Make sure they're still solvent first and foremost. But then, assuming that's the case, which is only about a 65 to 70 delta at this point, then we'll re-examine the different things that we can do. So right now, we're just going to hold the short put. So lastly, why wouldn't I add a short call? Well, if you look at any of the short calls that are above the short put to create kind of a traditional strangle, you can see, that there's no premium there. So it doesn't really make a lot of sense for us to add a short call and create a traditional strangle. Could we straddle it off? Yeah, we could. We could sell the 85 call for, it looks like about 80 to 85 cents. That's possible. Could we also go inverted on the strategy where, we're selling the 77.5 call, the 80 call, the 82.5 call? We could do all those things. But with a short put specifically in a stock that I personally like, or in an index that I personally like, I really like tapping into the simple fact that you can sit tight, you can do nothing, and you can just hold the position like you would long stock. So that's exactly what we're going to do here. And this also gives us another kind of, just another avenue to extend an olive branch to our stock investing brethren that might be watching the program, and you're like, hey, don't forget about me. Like, hey, I'm kind of interested in this stuff too. Well, this is one of the things that a lot of people like to do. They sell puts to get into long stock positions. Now, that's not exactly what we're doing here. Like, that wasn't the spirit of what I wanted to do yesterday. Like, I really wanted to be out of the position today, on a rally from Best Buy, from earnings, whatever, but that hasn't happened. And so now we're just going to hold the short put. I don't know that we'll necessarily take it down to assignment, but we could. It's a possibility. And so right now we sit tight and we do nothing. So that is Best Buy. Although we did close the vertical spread, so it wasn't totally do nothing from the very beginning. Okay, the other thing I want to talk about is, let's talk about Delta Airlines really quick. And we got to take a little bit of a victory lap. Right, like this might be a little premature on the victory lap, very similar to my NASDAQ call yesterday. But we are not one to look against or look away from a premature victory lap. We do them often and we do them regularly. So Delta Airlines, you've got the stock down 246 today. Pretty glad that we adjusted this yesterday, because yesterday when we went to adjust this position, the stock was around a 60 stock price, and the strike price on our put is also at 60. And so we were in a pretty good spot where we were able to get a decent price on the roll. We were able to get a decent price on not only rolling out, but rolling the call strike down. Had we waited until today, it would have been far worse. Now, of course, I didn't know this was going to happen again today. Nobody knew, and I didn't know, and neither did anyone else. But, this is why kind of having these reference points, along the journey of trading and managing positions, it's like, hey, once you get tested, that's where you kind of want to start thinking about making adjustments. And I would say more oftentimes than not, you probably do want to go ahead and make that adjustment. At least I'm officially obligated to say that. I don't always do that necessarily, but that's why we have the show. Like, I'm going to give you the theoretical, official Tom Sosnoff approved answer, and then I'm going to show you guys how we do it on the streets here on the show. So with Delta Airlines, we did the streets of St. Petersburg, of course. And so the Delta Airlines position, I'm glad that we adjusted it. So Delta Airlines, I want to talk about that. Let's also talk about our diamonds position, because I know that there was a question that came in. I think it was at the very end of yesterday's show where somebody was like, hey, you should roll your diamond spread out because, the stock has fallen and this is a good opportunity to roll it out and that kind of stuff. Well, as luck would have it, again, it doesn't really make sense to roll this out now. Now, with the diamonds down another $3 on the day, we're just going to go ahead and close the position completely. Like you can see, it's marking at 392. And I've collected a total of 432 on the position. So I'm not really I'm not going to be able to make a ton of money on the position, but I will be able to get out with a little something like 30, 40 cents, which of course 30, 40 cents in the options world is $30, $40 in the actual world. And so it's not completely void of economic significance. And so I'm like, hey, let's just be done with this. This was a trade that we've held for a while. We've even had to roll it, once or maybe even twice. And so we're done with this trade, and we can obviously find more opportunities elsewhere, especially with the IV rank being so high pretty much across the board, in all the major indexes. I mean, if you look at DIA, you can see is at 43. You go to SPY, 43. You go to QQQ, maybe even higher, 45. You go to IWM, maybe even the highest. Yeah, 45. So not quite the highest, but now you've got, I mean, this is what we trade for, guys. This is why you do all those extra sets of walking lunges. This is why you do all those extra sets of walking lunges. And oh, by the way, here's some great walking lunge strategy. Always set up your last set of walking lunges. Always set it up to where your final step is right by the door of the gym. So you can just drop the dumbbells and boom, you're gone. You're done. You're not going back in. You're not stretching out. You're not getting a sip of water. You're done. You've done all that needs to be done that day. And so that's just basic walking lunge strategy. But here, this is what you train for, man. Volatility being up, VIX at 26, 400-point intraday NASDAQ reversals. I mean, this is 100% what we've been waiting for as premium sellers. So IWM, all the indexes, lots of opportunities. So let's go into DIA. And let's close this guy down really quick. If we go in here and, we'll do 398. That's fine. So if I go, all right, so there you go. So we got filled at 398 and, excuse me. So that's going to make for, we made about 35 cents on the trade or so. So that's really not too bad. All things considered. All right. I want to talk about diamonds, Delta Airlines, Best Buy. What else does Amelia want us to mention today? Starbucks. Yeah, look at this, man. So Starbucks is actually down today too, which is surprising because Starbucks has been quite a flight to quality pretty much across the board, where every day when the market's just been getting rocked and everything else has just been going into the toilet, Starbucks has just been going higher and higher and higher. Well, we have a covered call on we have 100 shares and we have the 110 short call strike against those shares, and you have Starbucks at 113. Starbucks is down $1.66 today, so it was over 115 yesterday, which we talked about this just yesterday. Yesterday, I focused on the extrinsic value that is left in the short call, kind of, basically, I don't want to say eliminating because that would not be correct, but it is significantly mitigating our assignment risk. And you see here today, you've got even more extrinsic value because now the stock is closer to the short call strike. So the extrinsic value is obviously going to go up. So now we're being even more shielded from assignment risk. Okay, but that's not what I want to talk about here today. What's important to remember, when you have an in-the-money short call, an in-the-money covered call, it's not the same thing with an in-the-money short call. When you have an in-the-money covered call, you've heard me say the last couple of days, couple of weeks, you're not in a hurry. You don't need to rush the process. You should never feel a ton of urgency to make a move today. Man, I've got to make a decision today. I've got to make this adjustment right now. Things are happening so quickly. Everything is crazy. You should never feel that way with a covered call. You'll feel that way with other strategies, like strangles and short puts and even ratio spreads, whatever. But a covered call, you should never really feel that way with a covered call. I mean, maybe if the stock is getting clobbered on the downside, but that's a pretty easy decision. The short call is not worth anything. You just close it and then you just hold the long shares. I mean, that's essentially a fairly straightforward decision when you have a covered call that's kind of an investment, which is exactly what this is. Okay, what I want to focus on right now is another reason why you should never feel a ton of urgency to make a move right away. Because remember, wherever the stock price is, so right now it's at 113, it's at 113 and some change. Right? My short call strike is 110. What you need to remember or understand if you're learning this for the first time is this distance, which we'll use Diet Strawberry just because we can. This distance, right? So, 112, 111, 110, 110.25, etc. You have to understand that you are completely insulated from those losses if you carry this position all the way to expiration. This is an incredibly advantageous thing about a covered call that is an investment, right? If Starbucks goes down to 111, that's ultimately no different for me than if it's at 114. So essentially, I am immunized, right? I am insulated. I'm inoculated against any losses all the way down to my short call strike. That's really important to remember, right? So when I look at a situation like today, like, yes, when you have a covered call, ceteris paribus, especially when the position begins, it's a bullish position. You want the stock to go up. But if you find yourself in a situation where the short call is actually in the money, the game has changed now. The dynamics have changed now in some significant ways. One of them is this: doesn't matter to you if it finishes at the short call strike or above the short call strike. They're all essentially going to be the same for you at expiration. Now, when it comes to rolling, and it comes to credits, and it comes to extrinsic values, they're not the same thing, of course. I mean, we just saw the extrinsic value in Starbucks yesterday was $100. Today it's 150, and so it's going up, which is helping us. That's beneficial for us because it's shielding us against assignment risk, even more fully. But just understanding kind of where this game is headed, which again is extremely applicable if you have a covered call as an investment, because these types of things you might carry close to expiration. Like these types of things, it's not a 21-day rule kind of application situation here at all, because it's a very different deal. You're not looking to get in at 45 and out at 21. You're looking to hold this thing indefinitely. I'm looking to hold this thing like for a really long time, months, years, decades, whatever. And so for right now, again, no pressure whatsoever. I can just sit tight and I can do absolutely nothing. So I wanted to bring this up with Starbucks because I felt like that was a pretty relevant thing. And again, this is why I really look at the NASDAQ up 150. Did he call off the Tennessee tariffs on Thursday? Man, that's some crazy stuff. I thought that was a slam dunk. Absolutely slam dunk. Well, maybe tariff just the east side of the state. Because obviously, Knoxville is not the same thing as Memphis. I mean, having gone to grad school at the University of Memphis, I know that very, very well. And I know that my fellow Memphis brethren, y'all know you do not want to be associated with the east side of the state. So maybe just tariff the east side and leave the west side alone for my Tupac fans. But NASDAQ up 130 on the day. That's pretty impressive stuff. So, all right, what I want to do, though, is, let's get to you guys. Where are you guys at in the chat? Man, I see you guys in the chat. I appreciate you guys so much. Griffin's in the house. Robert is in the house. Emmett's in the house. Emmett. Yes, Emmett. You brought me the Best Buy trade, my friend. So I'm going to send you that invoice that we talked about. But yes, you can just pay it off in Trump coin, man. Don't even worry about it. Doesn't even have to be real money. Like, it's all good. And so, all right, so let's go ahead. Let's see where we're at. CM's in the house. Says it was 60-40 for the low. Oh, there's a previous conversation. So I'll start with down 721. What's going on there? Down 721. Hey, Dr. J, I had a great back workout today. That's how you do it. You know that Tuesday's back day. I knocked out some back myself this morning. And so it's funny. I looked around the gym too. So everybody training back. Dudes doing rows, dudes on the angle T-bar machine, had some women doing, one-arm dumbbell rows. I was like, this is it. It's Tuesday. It must be a Tuesday. It's not a Monday. It's not a Thursday. Like, it's obviously a Tuesday, maybe a Wednesday, but obviously back day Tuesday. It just makes a lot of sense. But John says, now I'm pumped up and ready for ES to be up on the day. Man, you are almost there, my friend. You are almost there. That's crazy stuff. Wow, look at this reversal in the NASDAQ. Guys, that's some serious business, man. That's like a 600-point reversal now. I mean, look at this. It was down to 075, right? Yeah, it was 075 on the low, and now it's up to 617. So we've got, we're at about 550 points now on the old NASDAQ. ES is still red by a couple of ticks, still down 11, 12 points. And on the lows, it was 57.44. It is now a clean 100 points higher at 58.46. And so that is some crazy stuff. But thank you, Down 721. Thank you for being here, my friend. Let's see. Orgdenu says, greetings from Italy, Dr. Jim. Last Friday, you made an SPX trade that you closed for a loss. That's correct. If you had waited, you could have made it a profitable. Yes, I suppose I could have. Why didn't you wait? Thank you. Great question. And if I'm not mistaken, it expired on Friday. So there was no option to wait unless I wanted to pay to roll it for more time, which I definitely don't want to do that. And so obviously it looks great now. It looks great in hindsight, like I should have held it, whatever. And that's one of the tricky things about these kind of overnight plays or these binary event moves. It's like you've got these butterflies that only have 1, 2, or 3 days to go. It's like that's all you've got. Like those are all the crystals in the hourglass, and once they're gone, right? And so that's the reason why I closed it last Friday, because it expired on Friday. And so let's see. CJ says I bought the wrong dip. I snagged ES. No, you should be good, man. Especially if you wrote that like 20 minutes ago. because ES in the last 20 minutes, I think, has rallied pretty significantly. And so let's see. Sam L says, I need a prescription for when my portfolio is still red. Y'all know the prescription, man. And y'all must be doing it out there. It's all about restarting the computer. If enough of you guys give me a Control-Alt-Delete, like this thing will be unched on the day. And I'm not talking about the NASDAQ. NASDAQ's already green. It's risk-free today, obviously. I'm talking about ES. I'm talking about, YM. I'm talking about RTY. Like, we can bring all those guys up to snuff as well. Just give me enough computer restarts. And so David Galmore is in the house. Dr. Jim, yesterday morning was at about 20% buying power used. Earlier today, let's see here. Earlier today, let me look at something. Okay. Earlier today, that spiked up to over 30% used. Yep. I was also down over 6K from yesterday to this morning. 23% buying power used now. Yes. So thank you for sharing that with us, David, because that's a great reminder that, when it comes to buying power, that's a big reason why we like to – give me 1 second, guys. That's a big reason why we like to not use all of our capital in one fell swoop. Like, it's very helpful to leave some capital on the sidelines because you want to leave room for more opportunity. Like, when the VIX was 17, 18, 19, it's not quite as opportunistic as right now with the VIX at, 21, 22, 23, 24. Like, that's a lot more advantageous for us as premium sellers. But also, number two, you have to leave room for buying power expansion. You have to leave room for the buying power on your undefined risk positions to expand to accommodate the additional risk that's in the marketplace. And so this is very, very common. This happens across all brokerages. So this is not just a Tasty Trade phenomenon. This is going to be in any brokerage phenomenon. And so you have the buying power expansion that's like, hey, if you go in and you had 80, 90%, buying power used, and then, something happens that's crazy in the markets that, leads to some buying power expansion, you may find yourself into a bit of a forced liquidation. Like, you may find yourself into a position where you've got to close positions you didn't otherwise want to close just to make room for the buying power expansion, which is never a fun position to be in. I've been in it many times, many more times than I care to admit. You've probably been in it many times yourself. If you're brand new to the show or brand new to trading, welcome aboard. You're going to be in it sooner or later. Like, you're going to be in a situation where your buying power expands and all of a sudden you're out of capital. You have to do something. You either have to send in more capital, or the more common response to that is to just close out some positions to free up, some dollars. And so yes, David, that's good though. It looks like you're absolutely on the lower end of things in terms of capital allocation. Being in that 20 to 30% allocated range is kind of on the lower end of the spectrum. The higher end of the spectrum would be more like 40 to 50, I guess. Some traders are over 50 for sure, but I'd say most traders that we see are 25 to 50. So 25 is kind of lower end, 50 is kind of on the higher end. But that's good stuff there, David. Thank you for sharing that with us. Sergio says, greetings, Dr. Jim. What's going on there, Sergio? I appreciate you, my friend. Thank you for being here so much. You're part of the core position. And so even on days like today, we don't get rid of you, man. Even on days when everything's getting hammered, you're still part of what we're doing. And so thank you so much. YouTube Jim says, greetings, Dr. Jim. One of those days, I don't know, maybe so. The NASDAQ's starting to fade a little bit now. It just gave up about 70 points in the last, 4 or 5 minutes. I mean, this thing is pretty wild, man. I mean, it's moving 15 to 20 points every 3 to 5 seconds, it seems like, which is that's a pretty whippy market if I've ever seen one. And so, that's some pretty wild stuff. Pretty wild stuff indeed. But thank you so much there, YouTube Jim. Thank you for being here. Sam L says, take a dry scoop of creatine. Man, even I don't do that. Actually, wait, I do that. And squat your way out of despair. That's 100% right. Yes, so my creatine dosing strategy, by the way, because creatine, it doesn't taste good. It tastes like metal. Right. So it's like, this is probably not that great. Now, maybe it's the creatine that I'm getting off of, Temu that tastes like metal. Maybe I should be getting some better stuff. But that's a separate discussion, I think, entirely. But when I go with my creatine, I don't mix it in water because that just prolongs the nastiness. I just go dry scoop and then wash it down with some water, and then it's over. It's done. Or wash it down with a protein shake or whatever I might be drinking at that moment. Natty Light Ice, for example. And so, I'm a dry scooper when it comes to creatine. But yes, that is a clear path forward through despair. Squat your way out of it and then dry scoop some creatine 100%. So Strategy and Opportunity says ES is going for unched from being down a hundo. I know, it's crazy, man. Now it's down 30, I guess, right? Let me delete that. Yeah, so now we're back to being down 30. Man, are they going to send them back down there? Man. Have the Sosnoffs and the Batistas and the Sheridans not had enough? Have they not punished the little guy enough? They got to go back for more? It's going to be pretty wild. I'll tell you, it's going to be pretty wild if, ES closes. I mean, the lows of the day have to be in. They have to be in. But if ES closes down like 70 or 80, that's pretty significant. If the NASDAQ flips back to red and it's down like 300 or something like that, which is totally not out of the question. That's very much within reach here. In fact, let's look at the actual probabilities. Don't even take my word for it. If we go to ES, and I go to a 0 DTE, for ES to drop another, let's say drop another 50 points. So down to, like 57, let's say 57.90. I mean, look at that. That's pretty crazy. For it to drop that's another 45 points. It would finish down 70. There's a 26% chance that we hit it before the day is over. And a 13% chance, that's 1 out of every 7.5, that we actually get down there and finish down there. That's pretty wild. Let's go to NQ really quick. Let's do a similar type of thing. What if NQ is up? Let's call it up 100. It's up 85. Let's call it up 100 right now. What if it dropped 350 or what if it dropped 450 from here and finished down about 300 or so, 350? That would be the 20,100 strike. 20,100 strike. Oh wow, really? Oh, they're giving that like a 2 delta? Man, that does not feel like a 2 delta to me. Does that feel like a 2 delta to you guys? I don't know, man. These must be the Tony Batista pits again, where he's gonna stick it to you as many times as he can. But here you go. You've got a 2 delta on that. That doesn't feel right to me at all. It feels like it should be at least like maybe a 9 or 10 delta. But again, what do I know? I mean, they're Tony's pits for a reason. And so, but yeah, it's gonna be pretty wild. Kimberly's in the house. Says ES 5900 is in sight. Wow, now that would be something, Kimberly. If ES comes all, and she says she loves squats, that's very good to hear. And so, yes, so Kimberly, if 5,900, now you didn't necessarily say it would be today, but I mean, since we're talking about today, I'm going to assume you kind of meant today. But I'm not trying to, you don't have to take ownership of that. If that's not your call, then don't take ownership of that. But man, that would be a 65-point rally from here. So let's go to ES again. Don't take my word for it. Let's look at the actual probabilities of that happening. Wow, that's a 4 delta. Yeah, so I mean that's like an 8% chance that we touch that by the end of the day. Man, that would be crazy. That would be pretty wild if it's ES up 40 on the day instead of down 25. That would be some pretty crazy stuff. Brad Glazer's in the house. Greetings, Professor. What's going on there, Brad? I appreciate you, my friend. Thank you for being here. Finwest, aloha, Dr. Jim, and greetings from the islands. Man, thank you for being here, Finwest. I appreciate you fitting us into all of your sightseeing and your gallivanting and all the exciting things that you're doing. Although, I don't know, we got some exciting things happening on our end here in our neck of the woods with, 600-point NASDAQ reversals and, the VIX going up to 26 and now it's, 20 or 21 or whatever. And so it's pretty fun here. Maybe not Hawaii type of fun, but it's pretty fun. CJ says NQ was the dip to buy. Yes, apparently so. If only we knew that in the moment. Like if only someone could tell us, like in the moment, like what's actually happening. That would be really, really, really helpful. Scott S says, "What's up, Dr. Jim? To clarify yesterday's comments, I don't trade Rivian or Lucid, especially Lucid is trash." Oh, I'm glad you came in to clarify, my friend, because the way you wrote it, it sounded like you've been trading some Lucid. It sounded like your whole financial future was pinned to LCID, and that was not good. And so I kind of hung you out to dry there, but I know you're a good sport because we met in person, and so now we have a bond that can never be broken. And so that's good though. I'm glad you came in here to set the record straight, so everybody can be very clear that Scott S. He's not messing with Lucid. He's not messing with Rivian. Like he'll get in there and mix it up with a little Pinterest now and then, of course, but he's not messing with that complete garbage. So that's good. Junior Mac says, "Good morning from Australia." What's going on there, Junior Mac? Thank you for being here, my friend. Kimberly says, "Caroline Gervan is my trainer." I don't know who that is, but that's good stuff. Strategy and Opportunity says that daily candle. I know. Look at this daily candle, man. Look at that. I mean, you got to be a buyer on that candle. Come on. This is basic stuff. This is basic pin bar strategy. This is very simple stuff. And so for all my baby pips fans out there, like that's a pin bar. It's easy stuff. You just buy that and then you just close it out up here. It's easy. This is basic stuff, right? And so this is TA 101. This isn't even TA. This is like, what you have to pass to get into a TA class. This is a TA prereq, right? This is really, really, really simple stuff. So we don't even need to go over it. But so that is strategy and opportunity. Bill Buchanan's in the house. Says just like the charts predicted. Yes, of course, 100%. And so that is true. Let's see. VVasic says, I have a short put in MES in the money expiring Friday and one MES short contract as a hedge. How is it going to settle? Are they going to take out that contract? I can't have one long and one short contract. Yeah. So if you have a short put, okay. So if you have a short put and you have one, let's think, and you have one MES short contract as a hedge, so you're short. Yes, they will cancel out, assuming that they're the same expiration. As long as the expirations line up, and it looks like based on, so you have, well, I can't tell from the second one. You have one MES that expires on Friday, but like the MES short, like is it also expiring on Friday, or is it? Well, let me think. So you have one MES. It must be March. So that I'm assuming, I guess it could be June, but I think if they have different expirations, you do run the risk. So VVasic, if they have different expirations, right? You have one that expires this Friday, and then you have one that's the monthly March. So technically, those are different expirations. It's been a minute since I've looked at this or thought about this. I think that they're not going to cancel each other out. I would email support@tastytrade.com, explain to them the situation, and they can set you straight. Some of that stuff is super confusing in the futures world with futures options and those kinds of things in terms of, I have, a short call, but I have, a long contract to cover the short call. Like, do they offset? They do offset from a P&L standpoint, but from an assignment settlement standpoint, you could actually wake up with some surprising results. And so, I guess the worst case scenario is you're long one and you're short the other, and then, you're going to be in a situation where they're going to cancel out. Although now that I think about this, yeah, hold on a second. They have to cancel out because I'm thinking about that MES contract. And so because the MES contract expires Friday, it's going to settle to MES. And so I'm going back to again, as evidenced by my bumbling and stumbling. I haven't thought about this or looked at this in a while. I think they will cancel out because it's going to settle to MES and you already have the MES. And so that's just going to go away. But I would double check. Do not take my word for that. I would double check with support@tastytrade.com. And so they should be able to help you out. And so Noah's in the house. Hopefully that helps a little bit there, VVasic. Noah's in the house. I'm using the 200-day EMA as my gauge for when to take my longs off. We keep flirting with it and then bouncing back up. Well, there you go. So we're going down to it and then coming back up. And so if you're looking, so you're using it as a gauge for when to take your longs off. So I'm assuming you're looking for, that's kind of like your stop area, I'm guessing. So that's kind of like your stop area. And go for it, man. Like if it's working for you and if it appears to be providing some support, I say go for it 100%. ES is now down 16. And so it is going to turn green. It does appear. And so let's see. Strategy and Opportunity says it's the tech casino market. Yes, I believe it is. Finua says the U.S. boomers don't care for the extremes, high or low. Just keep it somewhere in between. That is true. That is very classic run-of-the-mill boomer strategy. Just steady as she goes, man. Steady as she goes. And just to kind of keep it churning forward. Strategy and Opportunity. Grumpy Mike says, watch Trump. I'd rather sit here with some pliers and pull out my teeth. Ooh, man. Yikes. Kimberly says, Dr. Jim, what say you? Bitcoin 101,000 or 10,000? I'm assuming you meant 101,000. Yeah, I'm not, Bitcoin catching a real nice rally today. You got to give it up for the Bitcoin bros. They can celebrate today. I am not necessarily bullish Bitcoin in the short term or even the medium term or possibly even the long term. And so I would say that there's going to be more pain in the future. I do feel like cryptocurrency is going to become a way of life, though. I do feel like, that's where we're headed. I feel like in the digital age that we live in, when I think about my children, like Penelope, who's 10, Eli, who is 7, and then Amelia May, who's our assistant for the show. She turns 5 on Sunday. On Sunday, she's going to be 5. It's absolutely amazing. And so when I think about them and I think about what their adult lives are going to be like, I think they're going to use cryptocurrency and digital currency and digital assets like every day of their lives. And they're not even going to understand a world like before that. They're not even going to understand, maybe not Penelope, but Amelia for sure. I think she's not even going to understand a world where you actually handed people pieces of paper. Like there was actually something physical to represent like your money or your wealth or, some transaction. She's going to be blown away by that. Like we're going to have to look it up on the History Channel. And so I absolutely think that's where we're headed. But I do think that we are we're in for some pain in the near term. And so let's see. Oh, yeah, there we go. Got some political discussions. I'm going to bypass all of that, but I appreciate you guys. Maybe not as much as I normally do, but still to some degree here. Nick S. says, Dr. Jim, I just got a chunk of capital. I'm trying to figure out how to start deploying it. Should I slowly roll it into positions until I get my portfolio usage up? Yes. So that's the way to do it. Now, you're in an interesting spot right now, Nick S., because volatility is so high. So it's not normal that the VIX is at 22, 23, 24. This is on the higher end of the range, historically for sure. And so you could argue moving a bit more quickly now to allocate the capital, not necessarily all in one day or one fell swoop. I don't think it's like, we're going to get the vol crush of all vol crushes and then it's over. Like, that's not going to happen at all, especially once, Ohio and Tennessee and Bama get tariffed. Like, this thing has just got started, right? And so it's not a hurry per se, but because, volatility is higher, I do think that you can move a bit more quickly than you might otherwise. But generally speaking, I do like that strategy. I would kind of slowly start rolling things into positions. And so, yes, that's what I would do. And so let's see. Daniel Perkins says, I'm up 30 bips today. That's a good job. That's a nice job out of you, for sure. And so let's see. CM, let's see. The Boomers equals, the Dow Jones. That's correct. That's 100%. Finwest says, I'm watching and waiting to put on a DIA position. Go for it, man. Go for it 100%. Evan's in the house. He says, I'm here. Stewing in my own bathtub built. That's right. That's right. Apparently we're together, my friends. So I hope it's a two-manner because we're in this best position together. If you did, I don't know what you did for your strategy. You didn't even say yesterday, I don't think. And I just kind of took the idea and kind of ran with it with the ratio spread. So if you did something similar, hopefully I gave you kind of a playbook for, how to adjust or manage ratio spreads. But, if you have a strangle line or something else, then obviously, kind of lean on the different mechanics that we might have for that strategy. If you have something like an expected move butterfly, the nice thing about those strategies is if you miss the mark, then it's very simple. You don't do anything. Like, it's just gone. It's over. You lose the debit that you pay, and then you don't have to worry about it. And so let's see. Finra says, I bought a cable from Best Buy yesterday. I guess it didn't help enough. No, I needed a couple cables out of you for sure. And then lastly, Ruben C says, Dr. Jim, is it true heavy declining losers have high IV? Yes, that normally does happen. Will you sell both sides in that case or just the put side? Many of the high IV on the platform have earnings, and I hate earnings trades. Okay, so a couple of quick thoughts because I got to go. The show's over. I can't believe it. I got to get you guys to Jamal. I wouldn't trade anything with earnings coming up in 2, 3, 4 weeks because that is going to be a stick in the mud. So you have to kind of just eliminate those right now. But yes, when it comes to volatility expanding significantly, I like to just sell the puts more than the strangles in that situation because, you're positioning yourself to benefit more from the rebound. But you could also make the case, hey, if we just chop around or if there isn't a strong rebound, I'm going to get paid even more on both sides of the market. Both strategies are good options, honestly. It really just depends on your own personal bias in the market. If you are more bullish or more perma bullish, then maybe a short put. If you want to be more neutral, then maybe a short strangle. But I got to go. I got to run. Guys, I appreciate you guys. If I can ever help, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultz_F3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal come up next with engineering the trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
What's going on, everybody? It's a global growth meltdown. That's right. That's what we've been seeing in markets. However, markets have already bounced nearly 100 handles here since early in the morning, but we'll still talk about, and I'll give you my take on every angle of what's been going on more recently. One thing I did not anticipate was yields falling the way that they have. And matter of fact, now traders are starting to price in a lot more rate cuts than they were just a couple of days ago. So we'll talk about that. And then finally, I'll tell you what started the rally. It was Apple and it was Google, and they've only gone higher since. So we'll talk about those three things and more. We'll take a look around at basically a lot of the trades that I've done more recently and give you sort of my synopsis on the way that I'm trading a market like this. Welcome to the most dangerous show on the Tasty Live Network, folks. It's Engineering the Trade. I'm your host, Jamal Chandler. Crazy markets we got going on here. Let's just get straight into it. I could talk to you about other stuff, but I want to see, let's pull up the slides and we will just immediately go into it because markets are moving around so much. Look, when you have markets that are maybe some of you have traded in this type of market environment before, more recently, and I got a chart that'll sort of point it out. You've seen sort of December of this past year when we had the Fed meeting. That was kind of a one-off day, right? It wasn't several days in a row. I mean, this is going on about 2 weeks just about now of action that we've seen that markets have been weak and volatility has been steadily climbing. The beginning of September, that was about 3 days in a row. The beginning of August, about 3 days in a row, we had markets drop and volatility climb. But this has been a much longer ongoing process. And so with that being the case, you have to approach that type of market a little bit differently. It can't just be pushing all of your chips in when you feel like, there's a huge drop, right, in climbing volatility. You sort of got to layer into it. And that's kind of what I've done. Because, look, there's just so many different headlines here. I mean, you got, Ukraine headlines right about now, Ukraine and Russia hopefully ending the war, which honestly has not been a large part of what we've seen that has not been a large part of the equation that has led to the drop that we've seen in equity markets. It really hasn't. It's been more about tariffs, right? And so obviously that's still the thing. Theoretically, they went into place today. We still don't know all of the wide-ranging effects, and that's what you're seeing from the market. The market doesn't like uncertainty. That's the number one thing that causes volatility to climb. And so that's why we've had VIX, in the 25 actual VIX in the 25 handle range. VIX futures all above 20. We got backwardation going on because there's this huge uncertainty. How much is this going to cost, Americans? How much is it going to cost, globally? You're seeing equity markets globally fall too. So it's not just the U.S., folks. Like a lot of markets have been really rattled by this. And so I think the uncertainty is what's really kind of causing the big down days that we've seen. Now, again, we've rallied because once again, like the uncertainty swings it back and forth. And so right now, obviously, for those who are trading 0 DTE, I'm sure you're having a ball. Great. Understand that there's a lot of volatility to 0 DTE. I typically don't call those volatility. I typically call that sort of gambling because in a way, I mean, it's near term and it's just based off of price movement, right? Like it's not vol as per se, but there is a lot more when vol gets to these levels, when you get 20 plus VIX, obviously there's going to be a little bit more vol component to an extrinsic component to the out of the money options and things like SPX and everything, right? Equity related. And so you're seeing a lot of vol and you're seeing markets move around quite a bit. We have a huge range today in equity markets. What is the range today, actually? About 142 points in range today. Yesterday was 178 points, right? Huge days in the S&P 500. Huge, big volume too. I mean, over 2 million contracts yesterday, another 2.5 million contracts in ES today. So big volume. I think these are big opportunity days, really. And you just don't know when, the sentiment is we get down to where we were, which again, and I'll show them when we get to the platform. We were down around the 200-day moving average in ES and I think NASDAQ too, for sure. Once you get to those levels, you start to wonder if there's going to be a coordinated bounce at some point. And I didn't expect it today. Honestly, if you're asking me, I thought maybe we'd end on the lows heading into this address tonight that President Trump has given, because again, that is more uncertainty. We don't know what's going to be said. We don't know how it's going to affect equity markets, but lo and behold, markets have bounced. And this is one of the reasons why I try to find ways to layer into long delta plays like I'm doing over the last couple of trading sessions, because you just don't know when the bounce is happening, right? And you still want to have a little bit of capital available for when that's the one thing I really learned about myself last year. And I mentioned this quite a bit during September and August last year, when the market dropped. To be able to trade on days like today is the most important thing you can do. And so trying to be able to do that, it might even mean that, maybe a put spread that you sold, I don't think I have one yet, but maybe a put spread that you sold a few hours ago, all of a sudden is making pretty good money. You close it out and that's your way of sort of scalping, right? And so you got to try to find ways to do that. Just had to get off that soapbox. Now, the one interesting thing that I haven't been able to reconcile is, as much as we dropped in the market, you saw yields fall, right? 2-year yield was below 3.9% earlier. 10-year yields were below 4.2%. And it would seem as though rate cuts are getting priced in by bond traders more and more. As a matter of fact, I would say that one of the reasons I think that was happening is because of fears that there was going to have to be an emergency cut, because all of these tariffs theoretically are inflationary. And I say theoretically because, I know they are, but it's so weird to me that you would see a situation where these tariffs come and it's inflationary for equity markets, but yet we need to cut rates. That's straight up fear. And that's exactly what is being shown here. Matter of fact, a day ago, you could see on the CME FedWatch tool that there was probably a for the May meeting. People still don't think anything's going to happen at March, which is in 15 days, by the way. But you could just saw like a week ago there was a 24% chance of a 25 basis point cut, and now it was about 48% earlier today, right? And so that's telling you is that we expect the market, the Fed is going to have to cut because this is just too much for equity markets and they can't take it. And I just don't think that's the way you want rate cuts to come. Typically when we get to that situation, that's crisis mode, right? And so that's something to be aware of. One of the things that I thought that one of the things that almost doesn't surprise me though about the fact that we did bounce back in markets today, Apple and Google were green. Out of all the names that were down, everything that was down across the board and across industries, Apple and Google were standing out as the stalwarts in the Mag 7. And eventually they got Nvidia to follow along, and now Nvidia's up 3%. Apple never really climbed. It's kind of still flat, but it is positive. But Google and Nvidia are up 3%. And it seemed as though the market immediately started lifting as those stocks remained elevated. And so I like to look at those things sometimes and see like, oh, okay, this is as bad as things are. There's still some buyers out there, and that gives me a little bit more confidence getting long deltas. So when we get to the platform, I'll show you guys long deltas. In the meantime, leftovers. Hawaiian is the least delayed airline. Did you know this? Let's move to the next slide. Yeah, I didn't expect this, but percent of on-time airline arrivals by carrier. Frontier, and you can see why they're going out of business. 68% of the time they're on time. That's right. Jet, I mean, the bottom of the list shouldn't surprise you at all. The Frontier, 68% of the time. JetBlue, 73% of the time. They should have really let that deal go through. Spirit Airlines, 73% of the time. They're on time. 73% doesn't sound like a lot, but look, we all know it's a huge inconvenience to have late flights, especially if you have a connector going on. American Airlines, 75% of the time. So of the big ones, American is the least reliable. Who knew? Allegiant Air, 77% of the time, they're on time. Alaska Airlines, 77% of the time, so they're equivalent. Southwest Airlines, 78% of the time. You know, whoever is in charge of their marketing is really good. I mean, that little boom, like that's every airline has it, but they're the ones who decided to make money off of it. United Airlines, 79%. Come on, United, get that up. We fly you too much for that to be a problem. Delta Airlines, 82%, but Hawaiian Airlines, 83% of the time, they are on time, which is really interesting because well, no, I was going to say arguably they're flying probably the farthest, but that's not necessarily true. But yeah, 83% of the time. So next time you're booking a flight, just keep this in mind. Hawaiian Airlines, Delta Airlines, United's number 3 as far as the most on-time arrivals. There you go. Let's move to the next slide. Lots of charts for you guys today. VIX and VVIX. Earlier today, now again, this was a snapshot from earlier today. I get these snapshots, and I'm glad I put a lot of these vol things in here that we're going to see, because if I take these snapshots again, it's not even there right now, right? VIX is, where's actual VIX? Let's see. VIX is now at 22. But earlier this morning, VIX was above 25 and VVIX was above 20. This is only the 4th time in the last 3 years where we've seen that. You can see the other times. The Fed meeting day, which again was kind of a one-off day, August 5th, that was, that was a Thursday, Friday, and then Monday was the big down day. There's that one. And then March 13th, which I said 2023. I meant, not 2024. That's supposed to be 2023. Let me change that real quick because it's going to bug me otherwise. 2023, March 2023, I really couldn't remember what that was, and then it dawned on me. Oh my God, that's the banking crisis, right? The regional banking crisis that happened at the time, and that's what obviously led to VIX spiking really heavy and VVIX being up as well. So, look, I just keep reiterating: if you had told yourself that these things were coming on those days, would you have, and you had told yourself to get long Delta, you would have probably listened to yourself and you would have made yourself some money. And again, getting long Delta into any crisis is not easy. I'm not saying this as we sit here now, markets are up. I'm not saying this as I told you so. I'm just saying we could totally be back down tomorrow after this address tonight. But you still got some pretty good levels where you decided to get long Deltas, especially 44 plus days out, or even go to May if you want to. It doesn't have to be April. It could be May as well. But I just think you don't get these opportunities that often, right? 4 times in the last 3 years. That's not very often. Think about how many trading days we have in a year, 252. Just saying. Let's move to the next slide. Again, another snapshot that looks probably a little bit different right now. It's still in backwardation, but front month futures are trading 20.20. Earlier, they were trading 22. March futures were trading 22. The April futures were trading 21.80 or thereabouts, and then the May futures were trading 21.20, right? And strong backwardation. There's a lot of different ways to look at backwardation, right? Sometimes you see backwardation, and there's a lot of vol traders who look at backwardation as a sign to get longer. But we always look at it from the standpoint of vol does not remain elevated for that long. And even if it does spike to 30 or something like that, the chances of it mean reverting, are higher than the chances of it going higher. So that's why we always try to lean into selling some vol at these levels, because it's fairly elevated. And these are great opportunities, folks. You gotta know. These are great opportunities. Let's move to the next slide. Again, I decided to put all of the vol things I look at up today because you just didn't know when it was going to change. And sure enough, I'm glad I did, because these do not look like they did this morning. Any of these charts that I'm showing you, these last 3 charts all look different right now. So this is the vol risk premium that I love to look at all the time, right? And again, this metric, this is showing you how much expected vol, forward-looking vol is trading above backward-looking vol, historical vol, right? And anytime you see 5 to 10 points over, it's great selling opportunities, which right now, most of the IVRs that we look at, they're well above 30 IVR, in the 40s, et cetera. And so that creates good selling opportunities. However you want to do it, whether you want to do it directionally, by selling near the money put spreads, or if you want to do it the regular tasty way, selling 15 delta strangles or 15 delta put spreads, things like that, of that nature. These are good vol selling opportunities. Why? Because even though the market is moving fairly big, big swings we're seeing, right? We're getting volatility that exceeds those swings as of right now. And so I think that's pretty good. Again, the what you're seeing on this chart, the most recent elevated when it was up to 15, that was December of last year. And then before that, you see August/September of last year. Those are the big times where forward vol was trading that much over historical vol here. So not too many times, folks, where you're going to get elevated vol here, and that's why we try to look to sell into these opportunities. Let's move to the next slide. I can't believe, I can in a way, but it's funny. All of those are trading over. You know what else is weird to me to do as well today? Just looking at year-to-date performance on a few other things. And some of this is related, a lot of this actually is related to what's going on in equity markets right now and all the talk of tariffs, et cetera. Bitcoin has really been struggling more recently, and this leads into what I've kind of been talking about for the last couple of weeks of how Bitcoin and equity markets have become a little bit correlated. Now, that didn't used to be the case. Now, I'm not saying they're correlated as you want to trade one of them off of the other. I'm just saying more recently, when markets have gone up, Bitcoin goes up. When markets go down, Bitcoin goes down. We've seen this happen more recently, and you're seeing it here. Bitcoin, of course, exceeding the equity markets move to the downside. It's down 15% this year so far. 10-year yields, again, have pulled back quite a bit. We've seen that. Crude oil has been, when you see crude oil going down the way that it has been more recently, that tells you something about global growth and the fears that we have right now. When you see them buying bonds, treasuries, that is, not yields. When you see them buying treasuries, when you see them buying gold, when you see oil down, there's some global fears going on right there. And people are running to the bonds, treasuries, and the gold out of fear. But again, you're seeing gold up 10% almost on the year, and then natural gas. Oh my God. Oh, Yves, that one is just like really hurting me. That one, I have a short call spread in there that I've had since the beginning of February. I just rolled it today. It's a position, it's a thing, and we're not going to panic. We're going to stay calm and still trade natural gas for now. Let's move to the next slide. Oh no, back to the slides. We're almost done. I forgot I had those. I forgot I had these. Yeah, this is something interesting that I just wanted to show you guys and share with you real quick. This is something I saw that I found pretty interesting looking at the trade deficit, right? This is where all this is emanating from, right? The Trump administration is trying to sort of balance trade deficit. I didn't realize how much, trade deficit we have with some of these companies, but $63 billion with Canada, $172 billion with Mexico. Of course, a lot of those products that you've heard about that, we get from these various countries. This is where it emanates from. This is how it all conglomerates. You can see the surplus on some of these other countries on the right side. This is the Americas. Let's move to the next slide. So obviously this is where the reason why we're tariffing. Is that a thing yet? I don't know. East Asia and Pacific. Obviously China is one of our biggest trade partners, and we have probably the biggest deficit with anybody with China. Obviously China's in the crosshairs of tariffs, right? $295 billion. Vietnam, I didn't expect that to be so high, but I think we get a lot of clothes and stuff from there, right? A lot of cheap made products, I think. Not so cheap, $123 billion deficit. Taiwan, you see $74 billion. Japan, $68 billion. On the surplus side, you see Hong Kong is $22 billion. Australia, $18 billion. So this is just an interesting thing as far as trade goes. And then let's move ahead another slide. The last slide is with regard to all of this is Europe and Central Asia. $87 billion deficit with Ireland, Germany. So when you start hearing him talking about putting tariffs on countries, something in the UK, whether it's Ireland or Germany, those will probably eventually, they would probably go after them too. Italy, maybe, and then Switzerland, because these are high on the list. Big surplus with Netherlands. Interesting. I don't know why. What does Netherlands get from us? Who knows? Let's go to the next slide. Last slide. That is earnings. Well, who wants to trade earnings right now? Besides, they're not really interesting anyway. CrowdStrike, Box, Roost. I imagine Box is going to have issues on earnings, I would guess, right? I mean, everything that we've seen so far, anybody who had cloud did not go so well. So just keep that in mind when you're trading it. We're in the middle of a lot of retail earnings, I think. Ross Stores, A&F, Foot Locker are among the few, and then what is it? Oh yeah, Thor Industries, Stratus, whatever SS is. I forgot SSYS. What is that? Something Stratus, whatever. Campbell's got earnings today. ADP employment is on Wednesday. You know what's funny? ADP typically comes and then JOLTS or some order. They do that in the same week. JOLTS is actually not until next week, which is interesting where you look at the amount of job openings available. So, but ADP is tomorrow. You got Fed's Beige Book as well tomorrow. And then you got, of course, the biggest event of the week, by the way, which don't forget about that. The jobs report is on Friday. Number of S&P 500 stocks above the 50-day moving average early this morning was only at 40%. It's probably climbed some since we've moved higher in markets. Okay, now let's go to the platform. All right. There you go. There's my heat map, if you will. Kimberly, what are my specifics? An NG. So my NG was a short call spread. I was actually short the 390 410 and this March expiration with 22 days to go. Sold it on 2.6. You can see here. So that's how much that sucks. It was trading 330, 340, if you will, when I first got in the trade. Obviously, it's taken off. I think it's caught up in this. I don't know, whatever. It doesn't even matter. It's absolutely taken off. I decided to give it more time. It was just 390 the other day, and then it completely took off again. I was hoping it would have stayed under, but I rolled it out to April, which is actually the May future. And we're just going to sit on this thing, 390, 410, and that's what it is. We'll be fine. We'll figure it out. It is what it is. What else? Some of the things that I've done more recently. Let's see. I mean, you've seen some of my follow trades, but I did choose a couple of more names today. My trade engine, honestly, has been looking at the watch list, looking at S&P 500 and sorting by market cap. You're inherently going to find the most liquid names, right? I do this all the time, especially when markets get scary. These are the things you want to be in. You want to be in the apples. You want to be, actually, it's funny. Apple is one of the few names that I have a short call spread in. I did that a while ago and been suffering on that one. But, it's fine to have at least one call spread, I guess. It's probably better than not having any. I always end up sorting by market cap. I go down the list and I look at IVR, higher IVR, and things that don't necessarily have earnings coming up. So Microsoft, that's after expiration, though. We're fine on that, the April earnings, right? I think so. Yeah. And of course, most everything just had earnings, right? So this is actually the great time about markets. Unfortunately, nobody wants markets down. But the great thing about markets being down right around now is that none of these names have earnings. So you're able to just sell purely vol and not any earnings vol, which is nice. Amazon, of course, you see all the different names. Google. I mean, all the big ones. I'm already in it. Meta, Berk B is kind of illiquid, so I just feel like I don't know. I've never really liked trading it that much. So this is not one that I have touched, but you would imagine like at some point when the markets bounce, these are going to bounce, right? Like there's a high correlation to the S&P 500 starting to get back to positive on the year and these names being up or positive on the year as well. So that's why I like to trade this way. I like to sort by the biggest names in the S&P 500 and then, trade those. I also do the same thing with Dow. For those who are longtime listeners of the show, you already know this. I've done this plenty of times. Let's see, market indices, Dow Jones. How many of those names I have? Inherently, because I sold some of the biggest names in the S&P, of course, I have the Dow Jones name. So I have Apple, Nvidia, Microsoft. Except for Apple, these are all short put spreads. Because I'm banking on the market on bouncing back. Why not? I mean, why not? I've yet gotten to, so then I start making lists sometimes, like Visa's one that I'm interested in doing. If we fall lower, that will be my next tranche of names that I'll do. Again, today, I just put on HD today, did a short put spread in there. Target was another that just had earnings. Actually, I was looking at Target. I don't think I ever pulled the trigger. Oh, dang, I forgot. Yeah, well, it had bounced. It was trading as low as 112. It was 114 at the time I was looking at it, and I said, maybe I'll wait and see if markets fall lower. Well, it never fell back down again. So I didn't end up doing it. But I did do JP Morgan. That was one that I did today. I really didn't have any exposure. And again, I typically don't sell earnings vol. This does have earnings on April 11th. But my hope is that, the stock being down here and touching the 100-day moving average, at the very least, if markets bounce between now and April 11th, which is obviously a solid month away, I'd be able to get out of this trade easily anyway, and I wouldn't have to worry about earnings being a factor. So that's the situation there. But I was on Futures Power Hour today, talked with Chris. I did have a gold position until about a week ago, closed out of that. Just so happened I closed on the 24th. It's fallen since, but you see gold sort of bouncing and staying bid here, even though the markets have risen. Now, I was of the mindset that people were buying gold today because of fear, right? Markets going down, buy gold seems to be a thing to do. But the truth is that even though it's a little bit off of its high, but it's still remaining bid here. So this is something to keep an eye on. Is gold really just running right now because of the fear in the market, and they're worried about, again, this is where you end up correlation. The markets go to one, markets sell off, people buy gold, people buy bonds, right? Is that the situation, or is gold sort of beginning to resume its uptrend that we've seen it since the beginning of the year, one of the best performing assets of the year? That's something to keep in mind if you're trading gold. So for me, markets bounce here. I'm not one of the ones, part of me wants to fade this move right here and by selling a future, but I don't feel the need. I'm just going to, most of my stuff is 40 plus days out, and I'm just going to hold on to those positions and, let it ride. But keep in mind, we do have some events. Obviously, tonight, Trump is giving an address. I'm sure a lot of this stuff and talk of tariffs is going to be included within it. Futures are going to be trading around heavy, I'm sure. And then, of course, on Friday, we have the jobs report. So still a lot left in this week, and a lot has happened in just 2 trading days so far. Boy, keep your head on the swivel, folks. That's the show. Thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. I'll see you.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Hey, everybody. Well, the fun continues. This continues to be an amazing market in both directions, very chart friendly. I don't want to upset the trading gods by saying predictable, but kinda. And I'm excited about what's ahead. This morning, I did a couple of things to get a bit away from the bearish side. One, I took some profits, took some money off the table. And those of you who follow me on Twitter might have seen me say, buy semiconductors. If you don't follow me on Twitter and you want to, it's at Slope of Hope. It's all one word. And anyway, that may seem out of character for someone like me to say buy anything, especially something like semiconductors. But so be it. Excuse me. Hey, my assistant. Anyway, so what do I think is going on? I think we're in for a bounce. I think the bounce began a few hours ago. I've been trying to partake in that by way of being long SMH calls and also lightening up into cash to some degree. How long will the bounce last? I don't know. It could end tomorrow. The key for me, I think, is the Russell 2000 chart. That to me is kind of, because there's so many ways to cut it, but even though I'm not trading the IWM specifically, I think it's a very helpful and clear view into the market as a whole. But I'm really pleased with how everything's been going. And I haven't had this much fun in at least 3 years in the markets. So I've got the charts ready for you. Let's kind of catch up and see what's cooking out there. Here's the spider. And some big things have happened across the board. We've sealed the gap. We've done this a second time, really. We pretty much sealed the gap back on the 13th of January. We've done so again today. The gap I'm referring to is what I call the election day gap. Now, we're rallying right now. We were down really hard. We're up a couple of hundred on the NQ right now. We're almost flat on the ES. Look for this line as a level of resistance, this dashed line, which is the midline, a very long-term channel. So we might be done tomorrow with this bounce. Here's the diamond. We zoom in on this, and this is a tougher read. But I will say that as we look here, because these are very peculiar. These candles they get sort of wider and wider each day. But there's this cluster of overhead supply that I think will act as a barrier to too much price ascension. It's just hard for me to judge where along that it should go. Let's call it the middle. That smells about right to me. Somewhere kind of like in the middle of yesterday's big red bar. IWM, talked about this. We've got, I've seen better patterns, but this one isn't bad. Something like this, the low being around 214. That is to say, the target for resistance also being around 214. So what would make sense to me today, tomorrow would be a nice continuation rally and a sort of general feeling of, phew, we're glad we got that out of the way, and this trade war thing, it'll all blow over and it'll be fine. There needs to be some buying. There needs to be some relief. The VIX did get up to around 24 or so, which for many months has tended to be where it proves out. So we've gone from snoring to playing with toys. So this is the new background noise for you. So get used to it. And as far as the cubes go, for the first time ever today, we sealed the election gap. And a couple of weeks back, it would have seemed ridiculous to think we would ever seal that gap. It's happened. It's happened across the board. There have been a lot of just exquisite moves. And the cool part is that now that we're done with this lifetime high nonsense, it's much easier, much more clear to see what's next. EFA itself, wow, look at that bounce. Didn't realize. I'd shorted this in size 2 days ago, covered it yesterday. It fell more today, but that seems gone. So yeah, there's a lot of different elements going on that sort of lined up early today for me to say, okay, enough selling for now. It's time to if not go long, which I did by way of SMH, but at least get less short, which I did. Now, Ethereum, you know the whole crypto craziness that's going on. They got the summit on Friday. They did the big announcement last weekend, a couple of days ago, about the reserve fund. And from a charting perspective, and one thing I really like about crypto is that it's exceptionally chart friendly because it tends to be an organic market. unlike equities. And so classic Edwards and McGee style charting tend to work crazy well. And Ethereum's a good example of that. Here's the trend line, which was support for the longest time. We cracked that hard and then began rallying with the news of this reserve fund, even though I don't think Ethereum's part of it. Look what it did. We blasted right up higher, right up close to that trend line, and the whole thing reversed. So that's just another example of charting in action. So that was very nice, and it seems to have found some stability at this green line. We'll probably bang around here for a while. And don't forget the jobs report is Friday before the open, so that might be a market mover as well. Presently, I have 10 bearish positions and 1 bullish one. The bearish ones are lighter than they used to be. I'm at 40 to 50% cash now. A couple of interesting ones. Corning, this is one GLW. This is a channel play. We've been weakening away on this, so that's cool. Chipotle, mentioned this one yesterday because it tended to be kryptonite, as I said. Hang on, I will show you something. I ran away one day. Chipotle broke the trend line here, and that's I think that's going to work out nicely. CMG on the short side, and one I was really excited about is MDLZ. It's been really strong lately, and it just kept getting stronger. It was up today. I added more puts to that because I really like this chart. And so we have here a failed trend line. And you can see this tumbled from around 75 all the way down to like almost 50. And it had this explosive move higher. But look what happened. Look at this trend line. Look how close it got to the bottom of that trend line. So as I got closer and closer, just shorter and shorter and shorter. And so I think this move is done. I think it's done. Mondelez, I guess it's called. You and I have been following this XOP pattern for weeks now. It finally completed today. Now it's bouncing, so it's not, plunging beneath it, but the fact that we've completed the pattern, I think is good news and big news. I have 2 specific energy bearish plays on there, each of which I lightened up on today with every intent of getting heavy on them later. ConocoPhillips is one, which has been just a sensation. You can see here, especially yesterday, big drop. But when it was down here, I lightened up on this one, but that's a beauty. And then DBN, this one, not quite as pretty, but it's done good things too. And poor old Tesla, this continues to sink within the confines of this new lower Fibonacci level. So this is range bound with the fibs. This was range bound with the fibs, and now even lower. Not only that, we're into this huge green pattern here. So all that juicy post-election goodness, rancid at this point, just spoiled. And so firm support on this, it's like, how low will it go? Easily get to 240, 250 before getting some longer term strength. So yeah, that's just, approaching 50% losses on this from the December 18th peak. Yuck. XLF amazingly finally started to fall, and this was my trade. This is the trade of the day, although I didn't expect it to be. Yesterday, for the first time in eons, gobbled up a whole ton of Bank of America puts, BAC, and it went plunging today, and gaps. You know how much I love these things. We got close to this gap right here, which was yet another election day gap, and I got out 100%. So I just took advantage of the drop on that one. I don't know what caused it, but I'm delighted that it took place. So BAC out, but even XLF, which has been so strong, is finally giving up the ghost. Let's talk about semiconductors for a sec, because as I say, longer term Twitter followers probably wondering, have I lost my mind about going long semiconductors? Not really. Let's look at a couple. I went through a bunch, and they all just seem to be just screaming buys to me, short term, like for a day or two. Hang on a second. This is what all the commotion's about right here. Let me Okay. So, don't know how the camera handles that. I'd probably look like a two-headed monster, but in any case, that's what's going on. So AMD, I got out of this one. This was my last semiconductor short. I got out this morning. Lickety split what was down here. And Avgo, ABGO, that is to say Broadcom, beautiful gap close on this one. Look at this. Is this sensational? There's the gap right there. Back on the 12th of December, lasted higher, completely sealed. And there are others, but just semi after semi after semi, they all just screamed, done for now. And so what I did to try to take advantage of that is that I went long June. And this is silly because honestly, this is probably going to be a 1 or 2 day trade. I don't know why I'm buying June. I just don't know. It's crazy. It's dumb. But I bought June 220 calls on SMH, and those are going nicely. But it won't be long at all until it seems that maybe that's pooped out as well. That's the first resistance I'm looking for, roughly yesterday's high. So yeah, so far so good on that, and that's kind of my hedge against market strength. Bonds, TLT, these have been strong, but they're finally starting to reverse. There's another gap that's been sealed, so I would have to say it's a good limit right here toward further price ascent, 92.84. We reversed away from that. And of course, jobs report again, they'll probably have a lot to do with TLT's emotional then, but I did take on a big short position in XLU, fresh. And yeah, between XLU and dollar UTIL, the utility index itself, it just seemed to me that this would be an appropriate, I guess that could be really short something, this would be an appropriate alternate to the wild and woolly tech stocks, which have done so well on the short side. So that's a new big position. Our old friend, the cycle, keeps working great with NG. Is that terrific? Up another 5%. That long-term cycle, see the sine wave right like so, continuing to pull that fella higher, no matter how much he struggles. But just to kind of refocus on what I think is key is the RTY futures. These Fibonacci's have been in place for half a decade. We've completed a new topping pattern. We're into a new lower fib range, kind of like Tesla. And so this is our new range I think we're going to be working with. A recovery back toward this area here, around the bottom of that pink zone, around that Fibonacci level, I think would represent the cessation of this bounce. And just to put a bow on it all, remember this old fella? We last saw this about a week or so ago. When it was here, pushed up against that, I emphasized that this, which is a representation of the percentage of stocks above their 200-day moving average, would probably act like a stock itself, even though it is a derived representation of what a whole bunch of other stocks are doing. That has done exactly that. It is behaving just like a financial instrument itself as it continues to weaken away, showing the diminishment of strength in the market as a whole. And it's a big pattern. The fact it's breaking down, meaning this move has months left to go, months. And finally, here's the ES. Here's the ES channel, which has been broken. And as I say, it would not surprise me at all if we moved up a little higher tomorrow. And then that was it again. So, okay, well, I think I better get attending to other things. So thanks for joining me. And I hope you're doing all right. I'll see you tomorrow. Both of us will.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
All traders are free market freaks. It's the lifeblood of risk takers. Nowadays, though, I still wonder how a productive free market economy will evolve to face the challenges of a more complex and divided world. So sure, I'm a bit concerned. In fact, as I think about the growth of digitization and AI, I know things are about to change at a pace we probably can't fathom. Regardless, one area we can all agree on is the power of decentralization to bring free markets into the future. The bullish case is that free markets will thrive when more people are empowered to participate through technological advances. Most of us also recognize the importance of sensible regulation to make sure that markets are equitable for everyone and will provide consumer confidence necessary to attract new capital. It sounds so reasonable on paper, but now come some of the challenges. Can we have a true free market when some of the megatech monopolies have a larger market cap than the GDP of most democracies? Can a free market thrive under the weight of income inequality and billionaires dominating the political machines? Can AI and quantum computing disrupt the tech backbone in a positive way to support consumer empowerment? And lastly, will the confusion around regulatory integrity be a meaningful hurdle or a showstopper? If corporate or individual fraudsters are allowed to run wild, then the importance of boundaries is meaningless. The bottom line is that free markets do not have default risk. They'll likely be around forever. But let's be careful not to mess too much with Mother Nature's ecosystem. Everybody has some level of fragility.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Thomas, we're back, my friend. E-mini S&P 500 futures down 28. You got the NASDAQ up 100, the Dow down 390, the Russell down 8. Oil catching a tiny bit of a bid after the sell-off today, 68.47. Volatility futures at 2060. The VIX itself just under 23. We've had a 4 or 5 point intraday range of volatility futures. You got bonds down 19 ticks, gold up $25, silver up 19 cents, and Bitcoin rising from the dead to 88,000. We were just green for a second with the NASDAQ up 200, the E-minis up 10. 250, all right, rounding error. They just whacked them 50 points into the close, 40 points.
Yeah, it's amazing how fast they're moving around. S&Ps are trading literally like water, and they're all over the place. Need 10 points? Sign up right here. Today was one of the craziest days we've seen in a long time. I mean, we've had some, last couple of days, actually, to be fair, last couple of days.
2 weeks.
But the last couple of days were 100 points each day. And then today yesterday I said there's no chance of us going 100 points. It went down 100 points. Today I said there's absolutely no chance of us going up 100 points, but I didn't say, again, down 100 because I didn't think that was possible either, and down 100. And then rallying all the way back. That's actually 500-point moves in 4 days. You'd have to go back pretty far, like 2020-ish, I think. Maybe banking crisis, I'm not really sure.
COVID.
Yeah, COVID 2020, banking crisis 23.
You're talking the Japanese yen one or the SBNY?
Yeah.
That
the
crisis.
whole
Yeah.
The whole crypto banking, the whole debacle. Silver Leaf, Silver Note, Silver Bank, Silver Lake,
Silvergate. Was it
whatever
Silvergate?
it was.
Yeah.
Yeah, the crypto banks.
Yeah.
Back in 2000, end of 2008, 2009, we had a lot of 100-point intraday swings like this, stuff like that. But this is pretty wild. What I will say is that I felt like all day the Nasdaq was strong relative.
Yes.
And
it's been the weakest though for the last 2 weeks.
And at one point today it was down 250 and it looked like dog do. And then it rallied up to 250. So Nasdaq had about a 500-point range.
Yeah.
At least.
Mm-hmm.
But there were a lot of stocks today that kind of tipped their hand. Like early on, some of the just MSTR and Microsoft looked like it made a bottom early. Nvidia made the earliest bottom. Yeah. Google was up pretty much all day.
But it hasn't had a down or an uptick in 3 months. Google 100%. Has been straight down.
100%.
Yeah.
Apple was strong all day.
Yep.
Tesla at one point was down 20, came back to basically being unchanged. Like everybody else, I kind of feel like we sold a lot of puts today. and I feel like it worked.
Yes. You took pain for some parts of the day because we opened down 30 or 40 and we got down to 100. So if you sold anything in the first couple hours, there was some fear.
Yeah. 100%.
You took some heat.
And I just thought it was one of those kind of really I thought it was one of those just kind of crazy trading days. And
did it feel like capitulation a little bit?
Yeah, 100%. 100%.
I felt like that.
Tony and I talked about it this morning, and we talked about there's two things that we talked about. One, that it felt, because it was early in the day, it felt like capitulation. And the other thing was, we said, if there's ever going to be a day when they turn around, it has to be on the day that they open down.
Yeah.
They weren't going to
You've been saying that for a while.
And they finally gap opened down, and they went lower, and it looked so ugly, and they scared the children.
Vol gets to 25. You get the VIX at 25. Yep.
And later on, they make up all these narratives like, oh, well, they're signing this peace agreement, and they're doing this, and Trump's talking. Forget about all that stuff. Price got ridiculously cheap, and it came back. Now it's, like you said, we were just up 10. Now we're down almost 40 or 35. So we had a 45, 50 handle turnaround in 9.5 minutes.
It's beautiful. I think it's going to be like this for the next 4 years. In terms of big movements in both directions, we're going to have two-sided action. It's going to be a trader's market. I think this goes back to, I think we're going to have more two-sided action than the COVID period, but I think it's going to be that sort of kind of wild west trading.
It'll be very interesting to see, because we thought the same thing in 2017, and it was the most dead year we ever had. We didn't have a 1% move the entire year. And 2017 was the worst trading year. And it was Trump's first full term. And we thought that was going to be, one of these crazy years. And it did not work out that way. Now, it's not going to be the case for 2025, because we've already had about a 1.5 or 2% move every single day.
Market has a memory. You can't go to 13, 14 vol. After all this, it's never going back there. Not in the next 3-4 years. I don't think so.
This is I just rolled up 10 different puts 15 minutes ago, and pretty aggressively.
That's
me mad.
Why can't you just gotta hold the little intestinal fortitude?
I thought they rallied right into the close. They closed them up 50.
See, I was texting my dad. I said, if they keep vol, if they crush vol into the close today, if vol goes in the red today, tomorrow's a 100-point day to the upside. Because that had it. I mean, some of the move I think you can call short covering. But it felt very capitulation.
I think definitely some short covering capitulation. Definitely.
And there's all the headline, if we had volatility contract and markets stay bid, all the headlines would be talking about Nvidia's, 15-point reversal, and all the narrative writes itself.
Yeah.
That's what it felt like.
I agree with you. I think this is a Very, very strange. I did not think there was a chance in hell they'd be down 50 again.
No.
Like, I just didn't see it. After rallying all the way back, I thought there's a better chance they're up 50. I missed it. I called it bad. Oof, mad at myself. Anyway, but it's typical to get whipped around a little bit on days like today. Very typical.
How many E-minis do you think have traded?
I'm going to say I haven't looked. I'm going to say, oh boy, it's been crazy all day. I'm going to go huge. I'm going to say 3 million.
You're right. They'll do over 3 million by the time we finish 20. They're 2.82 million.
2.82?
They'll do another 100, 200 contracts.
Yeah, they'll do 3 million.
By the time we close. It's good. You must have been a market maker once upon a time.
No,
you must have been a real trader.
Noise, I can tell by the noise. I can almost tell you, like, almost to the penny, how much stuff trades just based on noise.
At the office, like the things going on at the office, like that noise, or what noise are you talking about?
No, the noise in the market. Not things going on in the office. Not you talking or somebody. I'm just saying, I can tell by the speed at which the prices change on the screen, which I consider to be noise without a open outcry environment. That noise is pretty indicative of what the volume's going to be. Just the speed at which prices are changing.
I agree with that. I wanted to do just one thing real quick while my dad he's probably taking a little nap. He's a little under the weather, but I wanted to congratulate him on the bat low from this morning.
Oh, that was my call.
Dad, great job on the bat low. Couple earnings today, if you have any interest. I know the market has been insane.
Honestly, if you're going to say CrowdStrike,
I
don't have any interest.
There's also, what were the other ones I was looking at? Ross Stores, ROST.
Yeah.
Tomorrow morning you have A&F, which is Abercrombie and Fitch. I know you like some of the jeans there, your little ripped jeans.
I
like
do.
Those ones?
All I'll tell you is that be careful, Mr. Batista, on any of those that you just mentioned.
CrowdStrike's a tough one, wide markets. Not
CrowdStrike is like a $375 stock, $400 stock
was $450 2 weeks ago.
Yeah, it was also $250,
Yeah.
2 cycles ago.
Yes.
But be careful because that stock has a history of moving outside the expected move.
Mm-hmm.
And to me, the premium in there is too cheap.
That's fair.
I looked at them this morning. I did not like it. So I did not trade CrowdStrike. I did trade Target yesterday, and it worked out nicely. And I sold puts in Target today. It got down to 112. It's 117 right now.
Yeah, only down 3.
Yeah. It actually was just almost up. But it got all the way down to down 7 or 8 or 9 or something crazy like that. So also, just a quick little reminder, tomorrow is What's Your Assumption? tastylive.com/assumption. It's tastylive.com/assumption. Please send us your assumptions. We're going to have a little fun. You got the Trump talking tonight, which is going to be anything but predictable.
Mm-hmm.
Okay, that's for sure. The futures will be trading all night, so you'll have plenty to watch and some fun to see how the market interprets it. You had a huge reversal today in the NASDAQ stocks. You had a monster reversal today in Bitcoin. You had a huge reversal to the downside in bonds. They were up 25 this morning. They were down 25 this afternoon. That's almost a 2-handle reversal in bonds. You had gold pretty strong all day. Natural gas exploding today.
Yes.
You had all the softs got
corn, soybeans.
They got crushed earlier. Let me see where they are.
Thomas was on the show with us today talking about some of the tariff stuff and the supply dynamic.
They've all been down all day.
They got killed over the last week. I haven't even looked at them. They're all getting murdered.
But if you want some euro, I don't know if you looked at this today.
It's up like 60, 70 ticks when I was looking at it.
This is the biggest one-day move that I've seen in the euro.
That's a huge move.
Yes, it is. So you've got a monster move in the euro.
But some of the others haven't really participated. I know the Canadian dollar, people have been looking at. If you can pull up the dollar index, if you put the $ DXY into the platform, you just see the dollar, is certainly on the lower end of where it's been trading. But yeah, some of the other currencies not really it's mostly euro is what I'm seeing.
Yeah, that's fair. And crazy move today in currencies. Mostly Europe is the big one.
Mm-hmm.
I did What's Your Assumption for tomorrow, and just want to see if there's anything else that just jumps off my screen.
Oil went red to green. I mean,
I think the story today was just the sort of bottoming of a lot of these tech stocks. You had Amazon get below 200. You had Google, obviously, has been just killed. You had Nvidia, the low of the day at 110. Meta is 100 points off the highs or something like that. Apple has been kind of the strongest of the group, but Tesla, was making new lows today. It seems like that was the big story of the day, was like, okay, we tagged the bottom, the support, so to speak, for those stocks.
Quick little interesting thing, the VIX 1 day. VIX 1 day.
Okay.
This is the highest that I've seen it. Obviously, the nerves are out for the for tonight's event.
Yes.
And so the VIX 1 day is a little bit goosed, as they would say.
Yes, and the VIX 1 day, it incorporates 0 day and the next day. So I think that's why it is also a little bit extra juice in it, is because it goes into tomorrow options as well.
Yes.
So
It's
0 and 1 day.
Yeah. Like if you look at 0 day options, they're expiring today. They don't care about tonight.
Yes.
But the VIX 1 day does take into consideration tomorrow. So that's the huge 1 day jump today. And it's also the biggest number I've seen.
Yeah. There's only a handful.
And so if you kind of want to know what the market's doing for tomorrow morning, which is always interesting to me.
SPX, $71 expect to move on SPX if you want that.
That's what they consider a big move.
E-mini's down 50 now.
I know. I'm actually in a little bit of a state of shock.
Me too.
That they were up 10 and down 50. I can't believe it.
I was hoping for a cancel crash.
Yeah, I'm kind of bummed, to tell you the truth, because I had a really good position on, and I butchered it. Tom, you butchered it.
It's all right. It happens. Hey, did you catch the cherry picks today?
I did.
Dr. Data puts this together. It's one of the best things.
In fact, not only did I catch the cherry picks, I have it on my desk in front of me, stapled together in beautiful form.
That
so
makes
anybody
me
can
so
see
happy.
it. But the 10 weighted stocks in the S&P 500 that are leading the decline. And by the way, the top 10 weighted stocks in the S&P that are leading the decline, when you look at this list, I don't think there's going to be any shockers in there.
Of course, now we put the weighting, but we showed that a lot of the weakness has come out of the big names that have brought us to the promised land.
And that should not surprise anybody.
Of course, but this is just kind of a recap. But we have some really cool stuff in here. So we gave you the weightings.
Yeah, but let me just say one thing about this weightings before you switch the thing.
Yeah. Who's in or who's out in the next 3 years, 5 years?
Oh,
who's out?
I don't know.
Who's out?
I don't care, because to me that stuff's a waste of time to talk about. What I like to do is take this list here,
throw it in garbage.
No, exactly the opposite. What I like is to take this list and say, this list up here, except for Berkshire Hathaway, it's the only stock on there that we don't really trade a lot of options on.
I actually put a trade on in there. It's not, the liquidity is not good.
No,
somebody was kind of throwing.
I actually don't like the liquidity in Berkshire Hathaway. Yeah. But if you take this list, top 10 stocks minus Berkshire Hathaway, that should be on the top of your watch list after futures. Sure. So like somebody asked me, they said, like this morning we talked about having the futures as part of the watch list and everything all the way down. And then I said, when you get to the very bottom of your watch list, then you start listing stocks. One of the stocks you should list, these are the top 9 out of 10. You could list these top 10, but we don't really trade Berkshire Hathaway. But we have positions on in Google, Tesla, ABGO, what else is on here? Google, Tesla.
Meta,
actually have Alphabet twice. We don't.
Well, because it's the Class A, C.
So take away one of those. So the top 8 of these are.
We usually do the L.
Yeah. Meta, Amazon, Nvidia, Microsoft, and Apple. These are the stocks that make up our list. Now, here's the crazy thing. We just sold off.
Down 75 now. NASDAQ's still strong, though. NASDAQ's only down 90.
It's unfreaking believable. They got me.
We sold off 70 handles in 25 minutes.
They got me on that little rally.
Oh,
they hooked me.
Because they gave you too much today. You got back too much in the rally.
They hooked me because They hooked me because I really thought when they're down 110 and they go up 10, at that point,
You think it's over?
you have to,
Gotta be
you
over.
have to think it's
Yeah,
over.
you gotta think it's over.
You have to think
I
it's over.
agree.
This is the rally.
Oh no.
This is a
Down
stomper.
80.
This is a stomper.
This is a stomper?
This is a stomper.
So you think tomorrow's more pain?
No. That's what I'm
Oh.
saying. This is the rally that crushes the hopes and dreams because
This is the death of buy the dip. This is buy the dip dead.
this is the death of buy the dip.
Of the V bottom. The V bottom's dead. Oh, Mikey, my work wife, he's convulsing right now.
Yeah,
He doesn't want to hear that.
because this was the move that can't happen. There was somebody that just came in here before you and I started the show, and they said, "I'm short some puts in the zeros. At least I'm safe there."
That's true.
And that's the way everybody was thinking.
That is, I will give you that.
I don't have any of those, but I mean that's what he was thinking, and that's what everybody was thinking.
Yeah.
You're not thinking that you're at risk $9 lower when they're up 10. That you're going to drop 10 handles in the SPY, or 100 handles in the S&Ps.
Yes.
You're not. It's not possible. You're not thinking it.
But that's why you manage those positions. You got to take that risk off.
No, you don't. I mean,
You don't take out if you sold puts this morning in SPX. You don't take them off.
That's different.
Middle of the day.
But I sold puts all day and I didn't take them off.
Oh,
I
well,
bought.
if you're out for.
Yeah, I'm out for it.
Yeah.
Because I thought there was a lot of upside today. I thought right through the close. I would have covered maybe on the close or tomorrow morning.
Down 88 now.
And they were just down 90.
Couple more things on the cherry picks, real quick.
Do it quick.
Gave you all your monthly, weekly returns on all those big names. We can keep scrolling down a little bit. So we give you those. You can see, just how bad some of the bleeding has been on those. What I wanted to get to is our VIX little discussion here. So scroll down. Yeah. There we go. So you get all the returns, you get all that good stuff. Nice little fun chart. Going on to the next section here. May we? Maybe. Talk about the Russell, down 15% on the year, just gotten killed. A lot of banking stocks are in there, so that's taken up some of that, move. That's kind of the move. If you've seen any JP Morgan, Goldman Sachs, all those stocks getting killed today, a lot of those smaller banks moving the Russell. Then go to the last part here, just our little spot about the VIX. We took a look at the VIX when it hits a 25 mark. Forward returns, they're relatively strong. It kind of goes to the whole adage of you gotta, blood in the streets, you gotta buy some dips at 25 VIX. Keep going, guys. Keep going. Yeah. Screw this one. This is an IWM chart. No big deal.
All right, you're taking too much time with
I know. Go to the well, if you didn't get it, you can sign up tastylive.com/newsletter.
we don't spend a lot
Yeah.
on this stuff.
Historical VIX. Blah, blah.
All right, we don't need to
All right, it's done. Take it down. Be gone with you.
Take it down. I'm not a big fan of we put it up there, we give a few little tidbits, then we move on. The show's exciting, okay? We're not this is not the Mike and Nick hour of going to church and stuff. This is the heavy stuff.
You should read my peeps in the YouTube chat. They're saying this is great.
It's the heavy stuff, dude.
They're saying this is great. This
All
is
right,
amazing.
so this is what we do here. What do you like going into tonight? How do you position yourself? Because I think that's the more interesting piece. How do you position yourself into, it's going to be a wild card Tuesday in that there's nothing off the table from what Trump can say tonight. And he likes to be outrageous because that's how he gets his name in the headlines.
Yeah.
So how much do you put stock do you put in that 71 handle number? Because what that means is from where we're trading right now, we're going to make new lows or we're going to go all the way back to unchanged.
Yeah.
Kind of by tomorrow morning.
I think today was it. I know that it looks bad.
You think
right
they blew
now.
their brains out today?
I think they blew their brains out today. At least in the short term. Maybe we go down some
You
other
don't have to
time.
qualify.
but
You think they blew their brains out in the short term?
I think they blew their brains out in the short term, and
So-
we're due for a bounce. I think there's a vol crush coming. I think
they blew their brains out too, but let me tell you something that's really weird.
Yes.
300 point up, down, up is incredibly rare.
Hey, we got the overtime boys. They're bored by you. Do we got the boys? Are they on? There we go. Get your coffee. Chris, Ilya, gentlemen.
I've been enduring your dad's nasty tweets all day about how he was so right and I should, quote, suck it, unquote, for the stock market bouncing. So,
well, we had
all
him,
these mean
Chris.
tweets.
We had him. We've been chatting. We had him. You got 100 points out of it.
What's 100 points in the last 30 minutes between friends and yes, right?
So today is one of the few days that I can remember that we had 300-point moves intraday. Down 100, up 100, down 100. Hasn't happened.
Doesn't feel good.
Feels okay.
Not blown their
It
brains
feels
out.
okay. I think this officially takes every other market out of play, though.
Well, you think this is people flattening out before the Trump event?
Oh, no, not at all. For the Trump event, no, nobody cares.
No, he's saying that there's nothing else worth
There's
trading.
nothing
right
else
now.
to
You should be
talk about.
trading.
Oh,
Like,
the,
this
the
is the
dollar
market
is
now.
sinking. Euro
Like, everybody
is ripping
else-
out.
every
Don't
other
do that,
market-
Ilya.
There's all kinds of stuff going on.
I
Don't
know,
talk
but it
about the
doesn't.
dollar, Ilya.
It doesn't matter. Like, nobody wants to hear about. I know the euro's up. Nobody gives up flying F. It's like this is all about the S&Ps. That's all that matters right now. It's just an S&P market. It doesn't matter. If the S&Ps move, the bonds will move. If the S&Ps move, every other market will fly with it. It's all about the S&Ps wherever they're going to go. They're just going to take the whole market with them. They're going to move every other index, everything else. The S&Ps, NASDAQ will dominate everything. They'll move the whole globe. That's all that's going to matter tonight when you're watching.
To the extent that the S&P is the sentiment barometer for markets in general, I think that's probably true always, not just now.
Sometimes there will be other markets that people find to be focused on because the S&Ps are quiet. When the S&Ps are quiet, you look for anything that creates noise or a story. When the S&Ps are the story, nothing else matters. That's where I'm going.
I mean, I agree. I certainly agree there. I mean, when the overall broad-based, diversified barometer of market-wide risk appetite is wildly gyrating, everything else falls in line, and of course it does. I think that's exactly the kind of environment where you should be worried that they are not even remotely done beating up on sentiment, and that this is the start of a thing, not the end of a thing.
I think I've already got the text from all my friends.
Well,
I feel like the sentiment's as low as it can get, or at least getting there.
What I will say,
I'll wait to gloat until tomorrow.
I'm not so sure that you're wrong, Ilya, except that I'm not trading with that approach only because that 100 and something point rally today kind of messed me up a little bit. And so did this sell-off, by the way, at the end of the day, because this I did not see. I made some adjustments. I felt like, hey, when they rally back 110 points or 120 points, you have to think they're going up 50 points from there.
Yeah.
There's no way you think they're dropping 100.
Yeah.
It
so
just doesn't.
I did nothing. When I saw the sell-off this morning, I didn't change anything. I've been short. I held them. I didn't add. I didn't do anything at all. When I saw them bounce, I didn't do anything at all. Now that I'm seeing them sell off again, I'm doing nothing at all.
Yeah.
All right, we got
Nothing.
we got 1 sec. We got a couple seconds here.
All right, Chris, what's happening tomorrow? What do you think?
Tomorrow morning opening. I don't care about the end of the day tomorrow, Chris. Just the opening tomorrow, higher or lower after all the craziness that's going to happen tonight.
Lower.
Ilya, after everything that happens
Lower.
tonight. What?
Lower.
Event volatility comes out, market go up.
You say higher.
Higher.
I say higher too.
No.
Yeah, on the
This
opening.
is 2 versus 2.
Come on.
It's 2-2.
You couldn't do. You wanted
come on.
lower. You wanted lower.
No.
If I would have said lower, that was why you went higher. But I said higher.
Tom thinks it's going to open higher, and then we're going to sell off during the day.
Thank you. I say we open higher, go lower. I actually, if you're bullish,
I pay attention.
If you're bullish, you kind of want them to open down and then rally.
Yes.
If you're bearish,
Yeah.
you want them to open a little bit higher and then sell off. Where are they closing down? About 65?
65. NASDAQ down 50.
Oh, boy.
That's it. That was a fun day. Thanks for letting me come on for the last call. It was nice.
It was a fun day, boys. You can have a little fun after hours, in overtime today. Got a lot to talk about.
We're going to take a quick little 90-second break, come back with the boys for overtime.
It's been a long time since we saw 3 million futures trade. Long time.
Stay tuned. More coming at you at Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Success is a combination of lots of non-correlated or lightly correlated underlyings to reduce risk.
It's better for your investments to trade volatility than it is to own S&P index funds at Vanguard. That's what you're saying.
I can't sleep at night as a passive investor.
Why not?
Because I think the risk is too great. Here I am, I'm a derivatives trader. I have hundreds, if not thousands of positions on, and I sleep fine because I know what I've done. What we do, it's a mathematical equation. What asset other than fear is mean reverting? And it requires no additional capital to play both sides of the market, then why would you even be directional in the first place?
The problem with what you're saying is it makes a little too much sense.
Yeah, it's logical.
And so it raises a lot of
scares the crap
skepticism because it makes a little too much sense.
Forbes called us best online for options trading. With stockbrokers.com, we're number 1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
If you missed the live show, here's our cherry on top weekly recap.
You have to take a vision test.
Yeah, I test. I will pass. Don't worry.
Well, maybe we can test it out. Is there any way that we can test this out, Vanetta?
I think that there is.
Okay, Thomas.
Can you
why don't you read line 6?
Line 6.
Why don't you start with number 8?
8? Easy. D, E, F, T, G, T, East.
And you're getting a bus pass. Okay, so whose readers do you have over there? Put them on for the people. Let's do it. Let's do a fashion show.
Oh, these are. Okay. With all due respect,
ma'am. Excuse me, ma'am.
How did I smell walking in? Because I was stuck in traffic next to the 35th Street.
Okay, now.
Okay, 35th Street L stop. Subway stop.
Hey, Sadnoff, that's all you have to do.
Huh?
Make it real easy.
No, just get real close.
I was going to say, better yet, zoom in on. There you go.
Oh, I like this. Tasty After Dark. Yes.
Get the full scoop by checking out the archives at tastylive.com.
How about that ride in? It's Tuesday, March 4th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Thomas Westwater in Chicago, filling in for Dylan Radigan today. We're here for the next hour to talk about whatever that was today. What a market. 100 down, 100 up, 100 back down. in the S&P 500. If you're joining us on the platform, if you're on the website, come over to YouTube. Tell us what you're trading today. I'm in the market for a new car, midsize SUV. Tell me what I should buy. If you already have done that, go over to the platform and go to tastylive.com, see what we're all about. Gentlemen, what a day. Tariff talk, obviously, is the prime focus as the tariffs against Canada, Mexico, and China go into effect at midnight. We hear immediately thereafter that the retaliatory tariffs will go into play from those countries. Mexico may wait a few days longer to decide what exactly will be tariffed, but the trade war is on again. Is this a temporary trade war, a one-time shift in prices, or is this the start of something bigger and much worse? The Fed may not know what to do, but it certainly seems the market thinks that the odds of a cut for the wrong reasons are going up. May favored at one point today as the next 25 basis point rate cut. We see that bond yields, they did make a move lower across the curve before ultimately turning around mid-session, although they get a bounce late in the day with stock prices falling. Gold, silver are able to pick themselves up after a few days of struggles. We see oil prices continue to come down, and the dollar is not really benefiting at all from this tariff talk. Is that a warning sign? We have a lot to cover here over these next 53 minutes. Ilya, we'll start with you. This is a market where we came into the week on better footing. Yesterday, we are slammed lower. Today, it looked like it was getting worse. There's recovery. And then the final 30 minutes arrived. What's up with this price action?
So here goes a theory. The sell-off we've seen in markets really started a week from last Friday. It started with those very scary S&P Global PMI numbers that showed that the service sector shrank for the first time in 25 months. I will quote directly from that report. New order growth weakened sharply and business expectations for the year ahead slumped amid growing concerns and uncertainty related to federal government policies. So, what we have here is business looking at a volatile regulatory, tax, and trade policy landscape and saying, maybe these things are going to happen, maybe they're not going to happen. All I know is I don't know. And I am going to pull back on capital outlays until the dust settles and the fog in front of me is more clear. And that's led to a retrenchment in the engine of U.S. and thereby global economic growth because the U.S. has been the only place growing for the past 6 to 9 months. And in the U.S., it's been the service sector. This helps to explain what we saw today. You get the tariffs. They're obviously a growth threat. But then you get a rebound, and that rebound is driven primarily by tech. It's the NASDAQ that led the rebound. When you look at the breakdown sector-wise, other than tech, almost everything through the peak of the rebound was flat or down, except tech. This makes sense. If you think that the tariffs are going to be damaging, what are they going to be damaging to? The U.S. imports primarily from the goods side of the ledger, which has been anemic. Everything has been driven by services. Services is mainly served by domestic firms. The tariffs largely skate those by, especially the tech firms. And so when you look at the markets and their preoccupation really with U.S. growth for the past several weeks, they see these tariffs and go, wait a minute, but is this a hit to U.S. growth? Not necessarily. Is it a hit to the growth of these other countries? Well, of course, they depend on exporting goods to the U.S. to some extent, in the extent of Canada and Mexico, obviously, to a huge extent. And that's going to be what's impacted. These tariffs are going to be short-lived. This is going to be a motivating sort of influence ahead of the USMCA renegotiations. It expires next year. The U.S. is not going to feel the growth pain because U.S. growth is not on the good side. It's not really impacted that much by external exposure. It's mainly about U.S. demand and services, and there it's about tech. So the rebound starts to make sense. But then read those PMIs again. It's about uncertainty. So the tariffs don't so much represent the economic impact as such. They represent the kind of volatility in policy that business leaders are moving away from, that has them pull back spending, pull back investment intent. So as we look at all of this, let's remember we have the ISM service sector numbers tomorrow. If they look anything like the S&P global numbers, even remotely, then we are going to be very quickly reminded that we've heard not just from the S&P numbers, but from U.S. consumer confidence data in two different versions, that this is about uncertainty and that economic activity is retrenching not because it is being physically restrained, but because sentiment is unraveling. And if sentiment is unraveling in the U.S. service sector, the global economy has no leg to stand on.
Can we talk about quickly how ridiculous this market still is here after hours? The S&P 500 is back up to 58.14. We dumped into the close at 320, the 320 candle. We were trading up at 58.75. By 3:45, we were down at 57.68. So we have bounced, 40 points between friends here in the past 20 minutes.
This is precisely the kind of uncertainty and volatility that the S&P Global PMI writers are talking about.
Thomas, this is obviously a wacky day where if you were bearish going into the close, you felt pretty good, but now you're 40 points on the other side of that. What does this kind of market volatility intraday do to you when you're trying to ride these waves? Is this an appealing environment for you? Do you scale back your position sizing? Are you extending duration? Are you staying away? How do you make head from tails in this? Because I think Ilya and I, being more macro guys, we look at the ups and downs and go, let's wait to the daily close to make a decision.
Yeah, I didn't get too long. I did get long Nvidia towards the second half of the day. That's just like Ilya mentioned, tech kind of overperforming versus the broader market. One reason I like chip makers still is if there's this increasing competition on the global scale, not only with trade, countries are starting to see, AI as a strategic resource.
Hold on a second. Howard Lutnick's out here saying he thinks Trump will meet Mexico, Canada in the middle on tariffs. He says that we're probably going to be announcing that tomorrow.
Yeah, there we go.
So the trade war.
That's why we're bouncing, maybe. We're going to continue to get whipsawed.
Are you not
like
entertained?
This.
Are you not entertained?
Lutnick also says Canadians like to cheat. So clearly negotiating in good faith. Thomas, go ahead.
Yeah. I mean, the State of the Union is going to be interesting tonight. It's going to be more of a scripted than off-the-cuff thing by Trump. So I think that could help bring some certainty back into the market, perhaps. But a lot of expectations, they've been priced in since last Friday over the past 2 weeks. Seeing some of the big names like the Mag 7 kind of overperform versus the market, it's a little encouraging. The problem is if you sit on your hands during volatile periods, you miss a lot of the trading opportunity. So it's just about getting more strategic, picking your trades a little more carefully. Like I said, I bought some Nvidia to get some exposure into tomorrow. We got the beige book coming out. We got some more economic data. We got the NFPs on Friday. So still an action-packed week. Volatility could go either way. I think we stay a little expanded on vol for a little bit. I'm not sure how long, but I think you can trade within the confines of higher volatility. And of course, you could do that by taking advantage of volatility to work in your favor. On the other hand, I got a little bit long oil today. Got a little bit long soybeans or corn that is. So I'm making some moves, but I'm keeping my overall exposure a little dialed back just to hedge some of the uncertainty there. I think this isn't a time where you go all out and you expense a lot of capital. But you definitely got to take your shots here or you're going to miss a lot of these big moves.
Lutnick's full comment here today is, quote, both the Mexicans and the Canadians were on the phone with me all day trying to show that they'll do better, and the president is listening because, he's very, very fair and very reasonable. So I think he's going to work something out with them. It's not going to be a pause, none of that pause stuff, but I think he's going to figure it out. You do more and I'll meet you in the middle, end quote. Ilya, this kind of all dovetails with your longstanding theory from day one that all of the tariff talk with our two closest neighbors is effectively a way to renegotiate the USMCA, which you and I can go back and forth, be like, well, why does he hate the USMCA? He's the guy who signed it into law. It's his own trade negotiation. All that aside, which we all know by now, right? Is this the clearest evidence to date that we have that this is a renegotiating tactic for the USMCA, however ham-fisted and disruptive to markets it may be? And ultimately then, if that is the case, how much longer does this sell-off have to go if a big grand trade deal is just around the corner?
I think if you believe that the trade deal is what gave you the sell-off, then you might find optimism in the idea that it's probably not a long-lasting spat. What did we see in the first Trump administration? He said, I'm going to tear up NAFTA. It's the worst agreement ever. And then he does. And everybody clutches their pearls immediately. After some negotiation, we end up with the USMCA, which is nearly identical to NAFTA, but for a little extra section on digital markets. Other than that, there's really very negligible differences. Okay, what's the rhetoric now? USMCA is the worst agreement ever. Is that a familiar sounding script? It doesn't matter that the first Trump administration was the one that signed it, did it, but it expires next year. And there's no time to worry about that next year, because next year you have to run for midterms to try to secure the rest of your agenda if you're the Republican Party and the administration. So you have to do a lot of things up front. Chris, you and I have talked about how this sort of starts to explain why the administration is moving so quickly on so much stuff all at the same time.
The political calendar is a lot shorter than people think it is.
That's right. Next year sets up the beginnings of running for the midterms. That means you need to do the bulk of the stuff that you need to use your political capital on, that you need to flex your mandate on right now. And so that's why the aggressive move on Doge, that's why the aggressive moves on trade. Second half of this year probably gets spent extending the tax cuts to the extent that that's possible with some adjustments. And then next year you run on that. So at this point, we're already into the USMCA renegotiation. You have to do it. It's going to expire next year. So it needs doing. And if you're not going to worry about that next year, then you have to do it now. So the script is nearly identical. All of it looks very familiar. So maybe it isn't the same, but at this point, I'm not sure that you can conclude otherwise with a high probability. It looks awful similar. So ultimately, I think this ends up being something that comes and goes, but it isn't why there is a sell-off. Nothing happened on February the 21st that had to do with this per se that began to motivate this sell-off and the parallel moves in bonds. It was a growth concern. The growth concerns don't go away if we renegotiate USMCA successfully.
Well, I don't know about that. Thomas, it feels like a lot of the growth concerns are stemming from the uncertainty related to tariffs moving forward. If we get a big trade bargain, doesn't that mean that the tariffs aren't going to be bandied around as a threat anymore?
I think a lot of it has to do with how consumers are. We saw consumer sentiment drop off a cliff this last survey. So I think that's concerning.
Both of them, actually.
And
both surveys.
Yeah, both surveys. And you don't see consumer sentiment necessarily rebound right away, or at least I don't think we did if this happened back in 2018. So that's a little concerning for me. Everyday Americans, pinching more dollars now. Is the everyday average American going to just flip their fiscal behavior on household spending just because there's a trade deal done? Or is there already more structural damage, like the COVID relief money finally running out, things like that? Lower rates going to bring a little bit of relief in that way. But again, that takes 12 to 18 to 24 months to trickle down through the economy. So that's really forward looking, and you have to take that and trade off of that now. How are rate cuts going to affect the economy a year and a half out? And is the market going to reflect that in the front end? I think a lot of it's going to have to also do with how China is going to come out, how much stimulus they're going to push, et cetera. But trading this volatility now, I expect to see a relief rally, but my confidence isn't too high on that. A lot of the trade, I think we'd have more clarity if we knew exactly what XYZ Trump wanted to do to get these tariffs to be reeled in from trading partners. One of the things is less fentanyl across the border from Canada and Mexico. Canada already, very little comes through. So what is the real policy objective there? We get these headlines like from Lutnick. It can obviously move the market right away. So I think the important thing to do is watch the news flows and, not necessarily trade off that, but if the price action is telling you to trade off that, you do that.
Yeah.
Obviously the price action is the only thing that matters here, of course, at the end of the day. This is just such a, Ilya, I think one of the reasons why I don't trade on a day like today is because I'm a trend follower, right? And if we're in the middle of a falling knife market and there's a rebound coming up, I'm never going to catch the exact low. I may try to catch the low after I see a low being carved out of the top after it's been carved out. But I'm never going to be the person to be like, well, the market's down 3% today, I might as well buy, or it's up 3% today, so I might as well sell. I guess we could talk about the Lutnick comments or what's happening here after hours. This is just one of the myriad headlines that are appearing today that are significant. I know that Tom doesn't think that the conversation around what's happening with the currencies matters, but I would argue the fact that on Tariff Tuesday, the dollar not responding significantly stronger across the board is, again, one of those noteworthy changes in behavior that kind of raises your eyebrow. Yeah. Because for so long it was tariffs up, dollar up, and now it feels like it's tariffs up, dollar down. Let's pay attention to the fact that Germany just put forward a $500 billion defense bill, and they're going to remove the budget caps on defense spending per this agreement between the CDU, CSU, and SPD. German equities, European equities, the ex-US equities can be seen in a different light throughout all this. So before Tom hops on and says, don't talk about the euro, you have a minute and a half before the police show up. Why should we be paying attention to what's happened in the currency world?
Well, it's really very simple. It speaks directly to what Thomas just said, and this is why a renegotiated USMCA does not change anything about the threat to growth, because it's not about the USMCA. It's about uncertainty. It's about generalized uncertainty and what that uncertainty means. If that uncertainty means businesses are retrenching on growth, what that means is that the Fed has to cut more. It means yield differentials shift against the dollar because its economic outperformance has meant that they significantly moved in the dollar's favor, as we can clearly see on this euro chart in the back half of last year when the Fed came out so dovish in September and the market said, no, that's way too dovish. What did we see? From September through to the start of this year, a parallel adjustment in yields in the dollar, all of them to say the Fed's not going to do nearly as many cuts as they said back in September. We're reversing that move now. Why? Because there has been a meaningful threat to growth. The markets are pricing in more cuts, and the dollar's yield advantage is being lost. Why is that not being countervailed by tariff news? because nobody is reasonably looking at this as being a tariff thing necessarily. Tariffs would imply redirecting capital flows from imports to domestic markets, hence the dollar's strength. If you were finding substitutes for imports domestically as motivated by the tariffs, that would be a response that makes sense. What substitutes? First of all, if the tariffs don't happen because there is a renegotiation and they're very short-lived, then the point is moot. Meanwhile, the growth scare remains because it's not about the tariffs, it's about the uncertainty. Second, there's not ready substitutes. And of course, third, to the extent that this is a situation having to do with goods, because that's what we import, that demand is already anemic. The issue is about confidence, and it's not about confidence on the goods side. It's about confidence on the service side, which is why this is much more about business sentiment. And business sentiment is not going to get fixed in the service sector if there is a goods-oriented USMCA deal.
Can we talk about the private sector for a second? I shared this with Thomas today. He was asking me about the various quips that we've heard from the brilliant minds over at the All In Pod about how we really need an alternative measure to GDP, because the one that we currently have is obviously overstating the value of government spending, and it's overall inflating a fake economy here. We have alternative measures of GDP. There's one that you can look up right now on the Federal Reserve's economic data website called the value added by industry, private services producing industries as a percent of GDP. So basically everything that's not government. Anyway, the private services producing industry percent of GDP is at 72.1% as of Q3 24. That's up from where it was in 2020 when it was 70.7%. It's higher than where it was at the start of 2016 at 72.2%. It's higher than where it was before the global financial crisis when it was 66%. The private services producing industries have never been a larger part of the U.S. economy. So to suggest that government spending or government activity has been crowding them out, if that were the case, the chart would go from top left to bottom right, not bottom left to top right. So, Ilya, maybe the fact that the private sector is getting a lot more support from knock-on effects. Just because we're cutting spending to Ukraine, what does that really mean? We're not going to be buying stuff from defense contractors here in the U.S., which means defense contractors don't need as many people in their factories. So knock-on effect, all these people who are private citizens who don't work directly for the federal government end up losing work. It's a knock-on effect. 25% of people who work in America right now are subcontractors or directly work for the federal government. 1 in 4. It's a huge impact for spending moving forward if this were to play out. You mentioned the rate differentials. I think a chart that we need to focus on here is what happened with the 10-year. That's a big reversal today in ZN, and it occurs at a point where we have been talking about the market potentially falling since early February. That swing level that you had near 4.15% in early December. Ilya, is this a natural stopping point for the market? I mean, if yields stop falling here, is this a place where stocks can bounce then moving forward?
Certainly a point to consider, and lines up very neatly with what the S&P did today, which is kind of scrape the bottom of an analog range. So when you look at this, it really starts to look like decision time. So it's only right, I think, that the markets pause here. Before you go and say that pausing here means that the next step is a rebound, though, I think you have to remember that markets trend. If they always respected support and always respected resistance, they would be in a perpetual range. At some point, these levels of support are going to give. And just because we've paused here, which is a logical spot to pause, to consider what happens next, does not mean that we're not tomorrow going to slice through this, or the day after, or the day after that. It also, of course, doesn't mean that we're not going to bounce again, but you want to let the price action speak. You don't want to assume that just because there is support, that it's going to hold. It may not. You don't want to assume on the bonds that just because there is resistance on the 10-year, that that's going to hold and it's not going to rip. And I think there's every reason to think, I think you see it very clearly if you zoom in, let's say, to an 8-hour chart on any stock index, S&P or NASDAQ, that the bearish dynamics we've been watching have not been overturned. It has not by today's rally or anything like it. It has been a clear stair step down. What did we do today? We retested former support as resistance. What did we do on the previous bounce? The one that people were trying to buy the dip on before. We retested previous support as resistance. This is a trending market. It's just trending down. And you're watching it stair step and respect levels, both on the way down, when it cracks, there's follow through, and then on the bounces. When it bounces, it does not overcome the prior barrier. Instead, it comes back, tests it, and shows you, no, I meant to break that. I am not going back over.
It seems like there's a lot of that here recently. When we fell into this level that we just fell into, actually, the lows that you have going back to early October in the ES continuous contract, it's an area on the daily time frame when we put this 200-day moving average on it. That's in vogue again all of a sudden. The NASDAQ briefly dipped below it today for the first time in 333 trading days. We see that ES is able to catch that area where the closing lows are in early October, early November, and that's where that 200-day comes into play. And sure enough, we do get a little lift there. The lift continues. We close at 57.89.5. We're in at 58.26.25 right now. Clear little bounce after hours. But that is one of the notable things in this market, Ellie. I mean, we think about the NASDAQ price action yesterday. Granted, today is a turnaround. But yesterday we open higher. We move above the Friday high. We nearly close below the Friday low. That's not something that happens in bull markets. That's a bearish engulfing bar on the wrong side of this moving average envelope. How many times have you heard me say when the market was trending higher, bullish outside engulfing bar, momentum's positive, why wouldn't I get off this trade? Like, why wouldn't I hold on still? If I'm a bear and I look at this market rebound today, there's almost nothing that convinces me that we have wiped out or washed out yet. But for one thing, and I suppose this is the single thing that I'm paying attention to that has me scratching my head today, it's the volume figures in ES. Yeah. That's enormous. I think, let me just contextualize this here, guys. Today we traded 3.23 million contracts in ES. The last time that we saw 3 million contracts traded in ES, you have to go back to Monday, August 5th. Monday, August 5th, if you thought that was capitulation, you nailed it because that was the low. Before then, the last time that we got close to 3 million traded, we're talking about moves in October 23. You're talking about moves in March 2023. March 2023, obviously an interesting time. Why? Because the market is bottoming out with the Silicon Valley crisis. So that's kind of that's grinding my gears here a little bit today. We have this keynote address tonight, Mr. Westwater. That seems like it's a bottle of chaos waiting to be uncorked. Maybe I'm thinking about my evening plans. Either way, I'll be drinking during the announcement, during the press conference, during whatever this is. But if this is a washout, right at the 200-day, right at the September and October lows, 3 million plus contracts traded, and now Lutnick's out here bandying the possibility that Canada and Mexico are going to come to the table tomorrow. Maybe Nick Batista's right. Should we take an old 1 or 2 DTE swing off the lows here and say YOLO?
Yeah, I mean, with the VIX, you obviously see some really sharp contractions when you get to 25 around these levels. So historically, I mean, it makes sense that there's some easement in volatility here. The State of the Union, whether it offers certainty or more uncertainty, I'm not sure. I'll be watching too. I just don't know if we see trading on it until tomorrow morning. The high volume is notable, but you don't know if that's it could be people getting in bottom fishing, it could be people capitulating from the long side, or it's likely both. So the volume alone, I don't think it tells you whether to get long or short. If anything, I think it tells you maybe to be a little more cautious. But there's definitely a lot of uncertainty here. We're below the election levels now. So going back to what Ilya said, I think this is more about growth than it is about tariffs, because we knew tariffs were coming. They were signaling that far before, these were put on. It's just we didn't know exactly what was going to happen, what the retaliation was going to be. Mexico and Canada obviously incentivized to make a deal sooner rather than later. China as well, but that probably won't happen until we get the neighbors figured out. But if what Lutnick says is true, and we do see, a notable move towards a deal being made, I think that's at least going to give the market some relief. I think the VIX is going to come in. I think you're going to see a relief rally in equities. I think technology stocks, chip makers are going to lead that rally. It comes down to how do you protect yourself if you're trying to trade on the long side. Whether you're trying to diversify through bonds, currencies. Right now, I like being long non-dollar U.S. non-U.S. currencies. Bonds topping in the short term is definitely conducive to a relief rally coming on if we're pinging these levels. We get some yields coming in. It's going to be interesting to see what happens between the State of the Union tonight and what happens shortly after the open tomorrow, the first 30 minutes. I think a fade would be brought up pretty quick just looking at the candle on today's ES and NQ. We see that long tail down there. That was buyers coming in at those levels. We didn't see that yesterday. Yesterday we had more of a follow through to the downside. So I'm going to be looking at getting more long, but cautiously. But however, I think ultimately this rally or this sell-off has potentially more room to go, because we've seen comments from the administration, put out and then walked back, and they could put out comments, but if the other side isn't really in agreement, and miscommunication can happen so easily on these things that, does it fluff the market up a little bit, these comments? But then you have to, if they're walked back, that's even more of like a double whammy, where you could see that sentiment deteriorate even further, because that's showing that the two sides are not in agreement, and that just tells the markets more uncertainty is on the way.
Mm-hmm. I see, a lot of commentary in here, like, we're just reorienting, or the U.S. is just reorienting its place in the middle of the world. I don't know about anyone else. I'm a big avid reader of history. I would suggest people look into how the Portuguese Empire has failed after it reoriented its position in the world, or the Spanish Empire, or the British Empire. We could go to the Roman Empire or the Ming Dynasty in China. If you catch my drift, all these countries that tried to manage their way out of being the empire have never rebounded. Right? The collapse of the Ming Dynasty is particularly, interesting. Peasant uprisings, expensive wars, abuses of power by the ruling class, severe financial downturn, agriculture disaster. Thomas, speaking of agriculture disasters, the Trump tariffs against China seemingly are going to bring about another round of farm bailouts. Is there a way to play that wedge between the commodities and different individual stock tickers that are operating in the farm space? Because it feels like there needs to be a little bit more pressure in those farmer equity names if these tariffs are going to be sticking around.
Yeah, I don't play the equity names for them too much. China did slap restrictions on 3 firms that export soybeans today, as well as the additional 10% tariff on soybeans. I think that's up from 25, so 35% now, 15% on wheat, corn. So we're definitely seeing those moves, in the prices today for soybeans, corn, wheat. it's how you play it. 2018, the trade war 1.0, it kind of decimated that soybean industry in the U.S. Brazil stepped in to be the main exporter to China, and that has not flipped around since 2018. So Brazil still has the top spot for exporting to soybeans to China, and they're the largest consumer of a lot of AG products. So that's a market you want to be in. Bailouts are going to have to come just like they did last time. It's still relatively small as, a percent of the entire deficit spending, but I don't know on the individual names. I know for these AG products, soybeans net positioning is pretty much flat. Corn traders were really long going into this. So you see a lot of capitulation in these long positions because they were already long. It was expected to be a good year for corn. Now we got tariffs, which is a big question mark over that industry. So how is that going to play out? It's going to be unpopular among Trump's base, but how much the pushback is on that and how quick the subsidies come. I know the farm bill is in works right now. That's kind of been behind the scenes with all this stuff on tariffs happening and other stuff. But there does have to be bailouts if these tariffs go on for more than a couple months, because that's when the supply chain really gets hit. So China's saying that they found some fungus on soybeans. That's pretty much just an excuse to.
That's a bunch of bullshit.
Yeah,
that's what you call a non-tariff trade barrier.
Right. There's always something you can pin it on, and that's probably just so they're trying to signal that they're not directly responding to tariffs, but it's measured, right? 10%, 15% isn't anywhere as much as they could go. Some analysts saying they could go all the way up to 60%. If that happened, that would effectively stop all exports to China for AG products. I think corn has perhaps more downside. I think at this point you need to see a little relief rally here. But again, these long positions, if these tariffs go on for more than a couple weeks, a few weeks, those long positions are going to start getting washed out. And it's an elevated position. So you could see this sell-off pushes back further, maybe another $50 on corn, $40-50.
If it follows the path of what it did last time around, you probably see a domestic oversupply of some of the soft ags in the market, which is why corn and the various soft ags have been getting hit the past 2 days. But what did we learn longer term? Prices probably go back up, right? Yeah. Because this is, as prices come in, it's going to take out, it's going to bring the production point below break evens for some producers. And so then you're going to take producers out of the market longer term, which makes our domestic supply more volatile and can lead to more price volatility. We still haven't recovered. Brazil, as you said, filled the gap here. But, I question, this is what really throws me for a loop. Maybe people in the chat have a different interpretation here. I don't know if anyone caught the conversation between Howard Lutnick and Joe Kernan earlier today on CNBC. Joe Kernan, for those that are unaware, he's not exactly a left-leaning guy. Seems to be one of the more vocal Trump supporters on CNBC, just given where everyone stands right now. Fair enough. Everyone's entitled to their opinion, their own disposition. But Kernan was talking with Lutnick today. They were talking about the tariffs, and they were talking about inflation. Lutnick says inflation comes from government printing more money. And Kernan says, you don't think it comes from the tariffs? To which Lutnick replies, no, tariffs do not create inflation. This concept is just people whining and complaining. I was under the impression that if the cost of goods go up at the border when I import them, and if I want to keep my margins in place, I need to pass on that cost to consumers. If I don't pass on the cost to consumers, then my margins go down. I, as the producer, make less money. This is still America. This is still a capitalist economy. The goal as a shareholder, as a management team, is to extract every single possible dollar to boost shareholder value. So if I am a company whose edict is to maximize shareholder value, and I have an increased cost in my bottom line that I can pass on to a willing consumer who will give me more money for said product or service, why wouldn't I raise prices out of some purely patriotic duty? That's a really asinine thing to suggest. Just
you would, unless you thought that they couldn't absorb it because they wouldn't buy the stuff, which would then saddle you with the other problem of how is this not recessionary? And so really the question is it inflationary? Yeah, as long as the economy is okay. And if the economy is not okay, the only reason it's not inflationary is because the economy is in a much more dire state. So the only way that something like this isn't an inflation motivator is if companies are so scared of killing demand that they don't pass it through. And the question then is, why are they so scared? And is that a good thing? So no easy answers here for this kind of rose-tinted view of tariffs don't raise inflation, but also they're fine for growth. La-di-da. It's not how that works.
I guess the good news for the metal monkeys among us, like myself, more uncertainty, rebound for gold and silver. I've been riding this out, guys. That pullback that we had last week, I just grinned and bore it because I have my very stubborn views on how the world works. And the way the world works means that if gold was going to continue going up, it should have held at the October 30th high. And it did on Friday. Ilya, now that we're back to the midpoint of the recent trading range, which is roughly $125 wide, and gold vol is starting to perk back up, something we like to see when markets are getting ready to go up. What do you take about gold in all this, given how it's responded last week, how it's responded this week to the tariff on, tariff off, and maybe they're off tomorrow, trade war, news flow?
I think you have to be really cautious about thinking that this is a bounce that lasts, and that maybe you have a little bit of a bigger wash until you are convinced that you don't. Because if you believe that the backfill in, let's say, NASDAQ, S&P, if you believe that the price action there is telling you you're stair-stepping lower, and all you've done today with that rebound intraday is retest former support as resistance, you have to believe the price action is in gold is telling you something similar. Look at what happens today. You run up, fade, and come back in to where you fail to overcome the previous level of support. If you just look 3 candles back, you have that initial leg down with the big bearish engulfing pattern, big bearish engulfing candle, however you want to call it, at the top there in gold. You then have a day of pause and then the break. Well, we retested the bounds of the pause here, that initial support, and we failed to overcome. Now, I'm a gold bull in this kind of an environment where yields are tanking. So I generally expect gold to be some sort of a buying opportunity, but I'm still holding out for perhaps lower levels than this.
Thomas, do you have any strong feelings on gold, silver here at these levels as we make our turn through the midpoint of the week?
I'm still long gold. 29.20 I sold the put at. I like it here with the view that the dollar is going to continue to go down, being long non-U.S. currencies. The liquidation last week that we saw, the flight to cash, in my opinion, that's probably over. Just the behavior we saw the past few days. So I still like it here. I would have liked to see, Ilya mentioned that we paused at the indecision level from, I believe it was the 27th. That's a little concerning, seeing that long tail on the candle today. I'm going to be watching it closely, managing it. The thing is, if we go back and retest like 28.65 and we fail under there, I would let my gold go for a while and probably look to re-enter at a better price. Once we do get over 3,000, I think we make a run again. But I think right here is a indecisive between 29, 80, 2,900 to where we are right now. I think there's a lot of indecision. So I think we need to find a direction. But I'm inclined to go on the long side right here because I think the dollar is going to come back in more. I think yields are going to go down a little more. So I do like gold, and I like it as a longer term trade for this year. But it's all about managing the short term. I have a lot of 51 days out on my position, so I think I got time to hold.
That makes perfect sense to me. I mean, I sort of got myself into trouble trying to be too cute with this. I initially got long mid-December and rode it all the way into the highs that retested November's tops around 28.50. When we got some vertigo there, got out just ahead of those highs, and then missed basically 50% of the overall rally from mid-December through that February top. I caught the first half, not the second half. So getting shaken out didn't work. I mean, it made money, but it didn't work to capture the sort of full spectrum, if you will, of the move. So I'm mindful of that. I do want to be on the long side, and I don't want to over-engineer this and get too cute. But I think you do have to look at the price action. And to Thomas's point, I think this is kind of a weird area. And there's not really the kind of conviction that gets you sold unless you get through some of these levels. And really, if you take out that big top near 3,000, and then you really run. So I'm looking for where to get back long. It does seem like still a bit of a shaky thing. I agree with Thomas that ultimately a weaker dollar and falling yields will be very good for gold. The tricky bit is that gold has been going up and ignoring the dollar and ignoring yields, and then not, and then ignoring them, and then not, on and off, depending on what yields and the dollar were doing the past several months. Gold, for its part, just was going higher from mid-December. And it seems like the motivator there was mainly buying from China, where the market said, you know what, we can ignore the macro fluctuations. They're all kind of rangy anyway. There's the giant gorilla of a buyer out there skewing this market. The most recent numbers out of China in January, though, are a little bit sobering. The Gold Council makes this very clear. On one hand, official sources bought a bunch of gold again. On the other hand, the outflow from Chinese gold ETFs was about equivalent to what officials bought. And so on net, China was basically a scratch on gold inflow and outflow in January. And that's a layer in this conversation that might explain why all of a sudden in February gold stops, even as yields accelerate lower, even as the dollar accelerates lower. Because the conversation is about what is this giant thumb on the scale doing? Should we be taking a more holistic view of why the situation in China is what it is, why officials are buying, and whether that's the only thing that matters as far as China's influence? So I think ultimately Thomas is right. Gold is going to be about yields, and it's going to be about the dollar. And that means it's going higher most likely. but the fuzz here near term might still give you a little bit of back and forth regardless of what the dollar and yields do. And it might be China related. So I'm inclined to just follow the price action in a more rigid way here without overwriting the narrative and say, you know what? If this was a stair step down, we didn't get back on the higher step here. Let's get back up on it. Then I'll feel better and I'll buy.
Commodities do turn around over the course of the day. They're off the lows. Copper prices are of interest to me. I'm leaning long deltas in gold, silver, and copper here. Like we saw in late January, early February, after a pullback, we noticed that we're cusping or gripping that 1 month moving average, the yellow line here, as support. So we have our breakout. We pull back in. We're treating the former highs in November. And again, here in January, former resistance turn support and hugging that 1 month moving average still. So I'm short a put spread here in HG. I have call spreads in GCSI. I suppose as we wrap this up, we have to talk about the remaining bit of a rent risk for today. Guys, we have not a State of the Union, but an address to a joint session of Congress. Not a State of the Union because it's the first one of the term, and he can't really give you a year in review, considering he's only been in office for 5.5 weeks, 6 weeks. Is this another vol event, Ilya? Thomas, let's start with you. Given the fact that Trump seems to be wanting to pitch his vision of America to the American people, and this is his biggest audience yet, why should we expect anything other than MAGA turned up to 1,000%?
No, because, Trump's scripted speeches have usually been more reined in versus his off-the-cuff remarks, which, that's a lot of what we see from him is him just freely talking. Versus a speech like this is going to be more already written, and the delivery is probably going to be a little more eloquent versus what we see, just day to day from him. So I don't necessarily think it's going to be a vol event.
Ilya?
I am of two minds here. I think that what Thomas says makes a lot of sense. When the president is scripted and when you get these kinds of occasions, he typically tries to strike a conciliatory tone. That's what we learned from the first administration. On the other hand, this version, the Trump 2.0 version, has been a lot more combative. We saw this in the inauguration speech. The inauguration speech was not a unifying speech. It was all fire and brimstone. So it could be a risk event in that sense. The tone has changed. On the other hand, I think at the end of the day, this is not about the tone of a speech so much as it is about economic growth and uncertainty in the business community and amongst consumers as the building threat to that growth. So I think if the audience walks away from the speech still uncertain about what comes next, whether the speech is combative or it isn't, that's what matters. And in that, I think it absolutely marks a threat. I do think the markets are going to wait until the ISM data tomorrow to make that perspective known. I think that's the next tangible inflection point. If that looks anything like the S&P Global version, markets are going to very quickly conclude that the problem here, tone, not tone, tariffs, not tariffs. The problem here is that businesses are uncertain and they don't want to lay money out there. Consumers are uncertain and they don't want to lay money out there. And this is a tangible hit to growth. That's the issue.
That's the issue. And I think that's the most important point here, right? If we know which way things are going, people then can price in that future. We don't know if the tariffs are temporary, they're not temporary, if they're going to be here tomorrow, next week. If Trump came out tonight and said tariffs are going to be on guaranteed for a year minimum, I'm not going to take them off. I'm going to seek a congressional act to make sure the tariffs stay in place for at least a year, right? So they're not market's going to rally.
because it's not about the veracity of the policy. I couldn't possibly agree anymore, Chris. It's not about whether you think the policy is good or bad. Markets don't care if the policy is bad. They can price that in too.
Yeah, we'll just sort the winners from the losers. We'll just send down Canadian lumber producers with mills in the U.S. will stay down. Home builders will stay down. But if you're a U.S. Lumber producer, any paper product supplier like IFP, then you're going to do fine. So it just becomes a sorting mechanism for who the winners and losers will be on a longer term scale. But with that, we'll remind everyone that trade wars are good and easy to win. So overtime is out of time for this Tuesday, March 4th, 2025. We'll be back tomorrow, same time, same place, as always, right after last call, 4 p.m. Eastern, 3 Central. So for Ilya Spivak in San Francisco, Thomas Westwater in Chicago, I've been Chris Vecchio in New York. Good luck trading the rest of tonight. See you in a little bit here. Macro Money up next with Ilya Spivak.
See you there, everybody.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
And then I vociferously stood up for you.
Of course you did. You stood up because that was the smart move.
I appreciate you. You're
yeah.
Saturday morning, I look at my phone and it says Venmo $20.
I almost had to pay him $40 because there was a little stipulation. If I didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
We're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was beautiful.
Girl
it was
on
beautiful.
Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's like this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain. And I realized at that moment that my wife was not a camping gal.
That's a surprise.
So at 6 o'clock in the morning, I pulled everything out, filled everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. Let's say we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch.
He's hurt on this one.
Muskies. Some bass.
Very quiet. I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. You know, when we got there, it was...
Now the RV on rvtrader.com.
No. Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
No, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours. Okay, I need help understanding. This is the largest monitor that I've ever seen. Like, I have to move back in order to see everything. And somehow when you're on air, you're like...
Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job...
Oh, here we go.
Really, all you have to do...
Get the full scoop by checking out the archives at tastylive.com.
It's Tariff Armageddon, and then it isn't, and then maybe it is again. Very sharp swings in the markets today as we get tariffs triggered by the United States against Canada, Mexico, and an additional 10% tariff on China on top of the ones announced last month. The markets seesaw violently around the news. And of course, the question now with all of us that are participating is this a bottom on the recent selling? Or is this just a waypoint on the way lower? That's what we're going to tackle here. This is Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live. And we're going to unpick this whole story. We're going to unpick what happened with the price action. We're going to see why this price action probably occurred and what it might mean going forward as some new event risk comes along, and how contact with this event risk might put us back on the defensive, not just in stock markets, but elsewhere too. So let's break this down. I look at the NASDAQ here as the stand-in for what equities did today, because the rebound that we subsequently saw from what you see was at one point a dramatic sell-off was really focused on the NASDAQ, and that's part of this story. So as we open today, as we mentioned at the top of the show, we got a bit of news that got markets clearly concerned. There was a month pause in the levying of 25% tariffs on Canada and Mexico after conversations that President Trump had with leaders of those countries. That sort of a delay expired today. Those tariffs went into effect. A month ago, China was hit with 10% tariffs on top of those that were already there through the first Trump administration and the Biden one. A further 10% announced today. So the markets looked at this and said, well, this is bad news. And at one point, the NASDAQ was down over 2.5%. The S&P was down over 2%. The Russell was down close to 3%. And then we got a dramatic intraday reversal. As we can see here, we were looking at the wicks on this candle, much lower than we ended up. Ultimately, the NASDAQ finished the day with a much more manageable decline, off only about 0.3%. And not surprisingly, the question then becomes, well, what gives? If the tariffs were such a concern, why? And if they then weren't a concern, why that? And it does, strange though it may seem, make quite a bit of sense. Why were the tariffs a concern to begin with? Well, remember that the sell-off in stock markets did not begin with the tariffs. Not directly in any case. It began with this economic data you see on your screen. This right here, this start of the sell-off that you see, really starts to reflect economic growth concerns. And that's not just for NASDAQ, that's across the major indices. And the really big inflection point in this story comes a week from last Friday, a week back from last Friday. That would be, if you want to check it, February the 21st. And that is with the release of this PMI data showing that the service sector in the U.S. shrank for the first time in 25 months. This is, of course, as all PMI data centered around 50. That's neutral, neither growth nor contraction. Above 50 is expansion. Below 50, economic activity is shrinking for the given sector. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. So two things to note here. Number one, as we can see, services is overwhelmingly the driver of U.S. economic activity growth because the composite index that includes both services and manufacturing looks almost identical to the services line, while manufacturing kind of meanders on its own. This is not unusual. In fact, this largely is echoed in the performance of most major economies, and not just developed ones. China, for example, looks pretty much like this also. So services clearly is the main story here, and they weakened significantly in January. See that here. And the overall weakened with them, despite manufacturing starting to cautiously improve, or at least appear to. But it was really that slide in February, continuing for a second month, the cool-off in services that got everybody spooked and thinking about recession risk. Why did this activity drop-off occur? Well, let's go to S&P Global, who wrote the report. What do they cite? Growing concerns and uncertainty related to federal government policies. Meanwhile, the uptick in manufacturing linked to front-running of tariffs. Why? Well, consider what this means. When we look at the mix, goods to services, we find that the U.S. economy overwhelmingly imports goods, whereas service demand is primarily serviced domestically. So it is very much concerning that the service sector is worried about policy uncertainty, because tariffs don't inherently strike, at least not directly, at the service sector. They're much more focused on goods. And so when you consider what is happening here in total, you see that manufacturing gets a little bit of a pickup because manufacturers that use imported goods inputs into what they're doing, certainly for automakers, let's say, this is a very big deal when you consider how supply chains stretch across the Canadian and Mexican borders, for example. It makes perfect sense that on the expectation of tariffs, there would be a push to buy more stuff and to ramp up production and to build inventories. Because after whatever tariffs were threatened on the campaign trail and have been promised all along, finally arrive. And on the off chance that they don't arrive, well, good, positive surprise. But on the off chance that they do, you've managed to secure inventory at a pre-tariff cost level. So business leaders looking at the tariffs as a whole were already reacting where they were directly exposed. But the impact on sentiment in the service sector, which isn't directly exposed, that's the trouble here. And that sentiment was clearly deteriorating. That was reinforced by signs we saw in other data, certainly very similar echoes for very similar reasons in all of the consumer confidence data we've seen for February, be it from the University of Michigan or from the Conference Board. But most importantly, what we learn here is the problem isn't the substance of the economic hit from the trade war. In fact, anticipation of the trade war has been, if anything, supportive on the manufacturing side, as people try to front run that. Rather, the issue has been sentiment on the service side. And this is really the threat. Consider what we just saw from the latest CPI data, and we can see that all of sticky inflation is centered on the service sector. If we look at the actual contributions, we can see for the latest 3% rise in headline CPI, 2.6 percentage points was the service sector. Goods were a little bit less of a rounding error, but nevertheless, that. And so when you look at what is actually driving U.S. growth and U.S. outperformance relative to other economies, it's very clear that it's the service sector that's doing it. Moreover, when you look at the contributions to CPI for January's report, what you find is that the service sector's contribution actually weakened, and that the uptick in headline CPI mainly had to do with the contribution from goods improving and the contribution from energy improving, and that mainly comes from those things going, in the case of energy, from negative to mildly positive, and the goods side from going to a lower negative quotient versus a slightly larger one. So this seems to confirm what the PMIs are warning us about, that the issue here really is the unraveling of the service sector. That's the threat to growth, and that the reason it's unraveling is sentiment, because it is a concern about policy uncertainty that has businesses retrenching on spending, retrenching on investment, just waiting to save their money until the dust settles. Now, of course, we've likewise pointed out here that the markets are doubly concerned because of the outsized share that the U.S. service sector, in that it powers the U.S., the outsized share that it's had to play for global growth. So we can see here 58% of global GDP is just three economies, and that's before we consider that the other 42% are mainly vendors to the former three. That is to say, countries like Mexico and Canada, in that rest of world 42% there, rely on demand from the U.S. in order to have a global GDP contribution, much like Central Europe or Nordic Europe relies on the Eurozone, Australia, New Zealand, Southeast Asia, and a lot of the commodity producers in Latin America or Africa, they're reliant on China. So if we consider then that the global economy is mainly driven by three engines of demand, we see how those engines have performed in recent months, we find that since the middle of last year, Eurozone and Chinese economic activity has trended lower and hasn't rebounded. It was the U.S. powering global growth, and in the past 2 months, that seems to be coming undone. Now, we have already seen over the course of January what this means. Of course, February was more dramatic, but we don't have full global data on that yet. As we can see here, Chinese numbers are still incoming. But as of January, we can already see that the unraveling of the U.S. is unraveling overall global PMI. There it is right here, the composite index in the dark line there in the middle. Moreover, we can see that global growth hasn't really moved ahead and has been begrudgingly drifting down since the middle of last year, despite U.S. outperformance. So despite this, and that is because, as we just mentioned, growth in the U.S. is primarily the service sector, and the service sector is primarily serviced by domestic firms. This is why U.S. outperformance has not spilled over globally for the most part. Now, on one hand, this means that the tariffs don't necessarily threaten U.S. growth so much it is driven by domestic demand and services, and perhaps that helps to explain why we got this seesaw. Yes, the markets initially didn't like the tariffs because they're a hit to growth at face value, but perhaps not such a hit if that growth is driven by services, as is evidenced by the CPI and the absence of the spillover from U.S. outperformance to other major economies. China is a ready spillover target, as is Europe. Both are meaningful goods exporters to the U.S., but because the breakdown has favored services and not goods, maybe this is not a big threat. So you get the seesaw. But then, of course, you are reminded that it's not about the threat to growth, as we've just discussed. It is about the threat to sentiment in the service sector from policy volatility. And so if you get this continuing, if this suggests, on the one hand, that the U.S. might be relatively impervious, at least U.S. growth might be relatively impervious in aggregate to more tariffs because it strikes at a part that isn't the dominant engine of expansion now, you nevertheless get a sense that if all of this back and forth creates more uncertainty and more retrenchment in a preemptive way from service sector leaders, as we've seen already, then this pullback in the PMIs very unfavorably threatens global GDP. You can see here the PMIs are a great forward-looking view on that. They track GDP numbers closely. They're just much more timely than the GDP numbers are. So it is with this in mind that we cast a worried eye on the ISM version of PMIs. That's incoming over the next less than 24 hours. We've already gotten the manufacturing side of the equation, and it was actually a bit weaker than expected, which already is a bit soggier than what happened with the S&P global version of this data. Again, let's look over here, and we can see In the S&P Global version, manufacturing got a bit stronger in February, even though the service sector was a bloodbath. These numbers, on a survey conducted later than the S&P one, sentiment is already a bit weaker even in manufacturing. So you get near standstill, but the little sliver of growth that you do get is a narrower one than economists expected. Now we get the service sector number, and the real question is, do you get the same thing here as you do from the S&P Global version? And if that carries over into this, then the question about growth returns. The motivation behind this sell-off to begin with is very much back in focus. Because it isn't about tariffs on or tariffs off. It's about, does the U.S. service sector continue to power the economy? Looking at the U.S. Economic Surprise Index from Citigroup, we see that since about the middle of November, U.S. economic data started to deteriorate relative to expectations, and most recently has actually dropped below this zero center line to suggest that now U.S. economic data tends toward undershooting relative to consensus forecasts, which seems to bolster the idea that this is going to be a disappointing outcome, or at least the chance that it is. It skews risk of a surprise in that direction. So what happens if, in fact, this is a disappointing number? Well, as we just said, we again learn that the problem here isn't about what is happening with the tariffs as such. It is with the unraveling of service sector business confidence and consumer confidence alongside. So if we get a disappointing number, then perhaps the broader sell-off in equities resumes after today's back and forth. Moreover, we can see that the implications of these growth concerns have been to price in a more dramatic rate cut cycle from the Fed. You can see that in this dovish adjustment in policy expectations, both for this year and for next year. 68 basis points in cuts on the menu now for this year. That's 2 with a chance of 3, and 1 on the menu for next year for 93 basis points in total, almost in line, by the way, with the Fed's own forecasting of 100 basis points done in December. You get a weak ISM number, and this is going to get endorsed and perhaps see a further dovish shift, which might suggest beyond stocks falling that bonds, after getting stalled here at the early December highs, might continue to power higher as yields fall. And of course, the other way that you suspect that this is not about the tariffs, but more about sentiment is what happens with the dollar. The dollar gets crushed today, despite having rallied on tariff news before. You can see the euro here surging out of its congestive range and seemingly setting the stage for further upside. And that's because this is about the U.S. having a growth scare and maybe more rate cuts, which then means yield differentials shift against the dollar. Reiterating that this is probably a growth concern, not a tariff story in isolation. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Chris Vecchio and Dylan Radigan, looking at the Wall Street close and where things may go therefrom. I am likewise on with Chris Mondays and Fridays for Futures Power Hour, on with Victor Jones in a mere 30 minutes from now, as I am every Tuesday, for The Price of Truth. Back with Victor and Tom for First Call Sundays, writing for the News and Insights portion of tastylive.com, and opining at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money's back tomorrow. Price of Truth in 30 minutes. See you then.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Decision to build Thinkorswim was a byproduct or a derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
What is going on, everybody, and welcome back to today's segment. We are back with Gus, talk about this market volatility we've been having, talk about some positions, do a little tour to market, and just get into it. But what's going on, Gus? How are we doing today?
I'm doing well. Having a bit of a bad hair day here. We did some shooting for the new merch line earlier today. And part of that required me to wear a hoodie backwards with the hood over my face. And as such, my hair got a bit unrecoverably messed up in that exchange. But outside of that, feeling good. Quite the day on the market. This volatility that we're getting is so much fun. And I do say that seriously. Yeah. I realize that might have sounded sarcastic. I am serious. It's fun having this kind of vol and constant opportunities arising every single day. So yeah, it's been a good one for me. Lots of repositioning, and I am down, but yeah, you're only down. You're not down unless you exit. So that's where I'm at on that one.
No, I hear you. No, honestly, not a bad hair day, Gus. Mine's been a little nappy lately, but outside of that, the markets have been well. I mean, the volatility is fun. It did come off a little sarcastic, but I mean, I guess it just depends on who you're asking. But we do have a vol
trading above 25 momentarily today, and then we pulled back a little bit, but we'll get into all of that. I know we have a lot of excuse me. I know we have a lot of tariff news that's getting finalized, and just an overall shift in market sentiment. I feel like that's kind of what we touched on last time, but it seemed like we continued onto that in the beginning of this week on Monday. We're getting a little bit of a relief pop in the market now, but you got any thoughts on this? Anything you're looking forward to heading into the week, and then we'll get into some of our positions.
Yeah, we just keep doing this thing where it's panic for the first half of the day, and then around lunchtime we start to recover, and we're pretty much completely back out of it, and it's been weird.
Yeah.
But yeah, I spent my day today loading lots of shares, and then also some leaps. I think the shortest position I have open right now is like 60 DTE. But I am.
What is that in?
That is in. I actually tailed that from Cherry Picks, which you guys should subscribe to if you're not already. That would be. Let's see. I have this IWM Nvidia. I have some Nvidia April 17th. Nvidia. So that's 44 days to expiration.
I got you. I know we had earnings in that. What it was last week? I think it was. We didn't really go anywhere.
Yeah, it came down a bit off those earnings, but it's all in the rearview mirror now. Every day just presents its own whole slew of headlines here. But I sold a April 17th 100 put, and then I bought the 90 on that one. Shout out Nick for that trade idea.
Yeah.
But yeah, obviously expecting a bounce in the longer term. And I'm not really trying to time this one up. That's why all of my positions are so long to expiration, and why I've been high on buying shares today is because I'm not exactly sure how long this little, breathing period is going to last, and how much more we might come down before things turn over. So I'm just giving everything 100 days. I think it would be incredibly surprising if we continue downward for any longer than that. We'd be getting into recession territory at that point. So that's where I'm at. But this week, looking to buy is my thing. I'm loading shares and waiting for the recovery. I will be a rich man.
I know. No, I hear you. And I know you kind of tagging along with Nvidia. I'm looking at SMCI. This one's one that's kind of been on the radar even from last week, I think, when Nvidia was having its earnings, and just kind of waiting post earnings to see how the market is going to digest all of the news. But this one's looking a little attractive here, Gus. I have to say, you bringing up Nvidia just always reminds me of SMCI. So I'm curious to see what these premiums.
Yeah, they had 166. A real good day. It was funny. Two of the top 3 earners today have micro in the name. MicroStrategy also up there. But yeah, SMCI, it is an interesting prospect. I just still don't know if I'm all the way there with this company. I know that they have gotten over these regulatory hurdles, and they got a pop because they managed to keep from being delisted, which is the funniest thing to say. But yeah, I don't know if I'm a legit believer yet. I feel similarly about SMCI as I do Palantir, though Palantir has not been subject to the same scrutiny.
Palantir, another good one. Palantir, first underlying that I traded options with, but I don't know. I know SMCI, something like that would be kind of more so just following suit depending on whatever Nvidia is doing. But SMCI, this was one that caught a little bit of steam over the last few weeks into the end of the year this year that I did not see coming. It would be classified as a sleeper build, if you will, if you spoke with Julia about those. But PLTR caught me off guard. And what's going on, Lone? Just getting back to the chat here.
Yeah, you said your first trade ever was Palantir?
First trade ever was Palantir, and what is it? I know. No, it wasn't Taiwan Semiconductors. It was Palantir. It was 2 underlyings. Palantir was one of them. I don't even remember what the outcome of that was, but that was on the Where Do I Start series when I knew completely nothing about the market. But Palantir was one of those sleepers. Like, even just in 2021, it was one of those underlyings everybody was kind of talking about, like maybe has some potential, whatever the case is. So it's kind of funny seeing it a few years later, really catching steam like this and hitting some type of parabolic type moves.
Yeah, I'll throw around another Julia term. She likes to call that a Peloton curve.
A Peloton curve.
A Peloton curve.
That was around Piton.
Yeah, Piton.
That was around the same time. Yeah, when Peloton, when Peloton was going crazy, I think it was excuse me, in the COVID days, right? Because it was whenever the exercise machines were really popping off. That was around the same time of Palantir. When I was getting into Palantir was super hyped up. But
I also started
yeah.
trading during COVID, but my first trade was Apple. I'm a normie. It was naked Apple calls, and I made like 120%, and I was hooked from there. But yeah, Palantir, that's a wild one to start with.
I was looking at Apple earlier today. I really like the IV rank in Apple. There's no earnings or dividends to worry about right now, but I ended up going with Meta. But it's funny you bring up Apple. Was checking that out. Premiums are decent on it, nothing too crazy, but I ended up going with Meta. So I sold an out of the money put spread on Meta, kind of break even on that right now. Just put that one on today, so we got to see how that one plays out. But it is a longer dated one, 44 days till expiration. Decent IV rank, 37.2 IV rank. We do have earnings April 23rd, but I am in the 44-day cycle. So, excuse me, I should be able to manage this one before we even get to April 17th, because we'll be managing around 21 days. I was able to collect about $1.78, so just a little bit above a third of the width of the strikes. And then just because we've sold off so much in just the overall market as well, the NASDAQ, I wanted to get long on some of these names and take advantage of that short-term volatility that we're getting, especially with VIX popping above 25. I'm really going to try and take advantage of that, because I didn't recognize how spoiled we were when the market was always, or when VIX was always trading above 25. So first time today, it broke above 25 since I think it was the first time this year. I don't think we've had VIX above there since, but that really is what nudged me to get into some of these underlyings. Looking at Apple, but again, just ended up going with Meta.
I was able to close my VIX. I mentioned I opened a long VIX position last Thursday, and I did get out of that for max profit today. So I was certainly pleased with that.
That was that vertical. You bought that vertical, right?
Mm-hmm. Yes.
Nice.
So that panned out very nicely. I just needed above 16, so flying colors on that one.
Yeah.
But yeah, I agree with you. It's good to try to take advantage of that short-term volatility. All of these leaps that I have set up here are structured in such a way that I can harvest some of this data, because all these premiums were juiced to high hell today. And yeah, on days like that, lots of great opportunities do present themselves. I was sitting here about to say, I think I only have 2 options positions open, and I have 6. So I was slightly off. I did all kinds of tomfoolery today, just lots and lots of repositioning. Between me and you, we are in like a lot of the Mag 7, because I loaded some Amazon and some Google today as well. Did get out of my Amazon vertical position that I had mentioned. That was finally dead. So picked up some shares. I've gotten $20, $30 back on that one today on my 5 shares. So can't complain. Really. Another day where I accidentally timed the bottom pretty well, at least the intraday bottom. I don't think we've necessarily found the bottom yet. But yeah, I mean, it's just, I don't know. This is just a really pretty basic portfolio. I feel like I'm long IWM, I'm long Qs. I got that Nvidia trade, as I mentioned. And then I went long some Berk B. I picked up 4 shares, then also picked up a vertical there. Because
long IWM, this one's Berk's B's, or what was it?
Yeah, on Berkshire. Yeah, just on Berk B.
Right. Berk.
But I think I have a theory that Berkshire is going to be able to recover faster than the rest of the market. They've been holding that cash pile forever. They still have, I think, $325 billion in cash or something like that, just laying around. So with all of that uninvested capital, I feel like now is the time when they're going to start attacking and getting a bit more aggressive whenever they think that we've found the bottom. And I do expect them to be able to recover a bit quicker than the rest of the market. So I'm slightly shorter term.
I got you. You were looking at IWM and QQQ as well. Got long those. Was that after the aggressive sell-off we've seen over the last week?
Yes, today. Pretty much everything I just said. In fact, yes, everything I just said was open today. Qs, IWM, Nvidia, and Berk B.
No, I hear you. Nvidia, in terms of Nvidia, I got in a position as well. So this is one of the last ones. I bought an out of the money call. I think it was, last Friday? That did not pan out. I ended up cutting that one. But that leg down that we got on Monday caught me off guard. I didn't expect that, especially after the day that we saw on Friday. But today, right before the bell, I ended up getting long some more Qs. So these ones are for the weeklies. I sold the 490s I sold the 490 puts on QQQ, and then I also have the 50. I have the 505s. The 505 put sold on QQQ as well. And then for the 44 days till expiration, I have the 490s sold. So we have a little bit of credit in there, a total of 478 of credit wrapped into all of those trades. So gonna see how these ones pan out. I know last week, Gus, I was in a little bit of a pickle when we were talking about my weekly QQQ. I think it was a put spread that I put on. Excuse me. And at the last minute, let me just go back to last Friday. I wanted to show you this because I was able to come out a little bit, not near break even, but I was down about $60, $70 on that trade, coming back from a max loss on it. But I just want to show you real quick how we closed last Friday. But QQQ has really been the play for myself the last couple of weeks with all the volatility we've been getting. We'll see if I can even find this. We'll see if I can even find this.
The time
but it
frames are
was
hard
just
to
one of
juggle.
those. No, I know. Last Friday, I think we had a rally into the close last Friday, and we got so close to my break even on the trade. So I know we were going to come back around to see what the outcome of that was, but we'll save it for another time. But I do have that QQQ put spread on. I have two put spreads that expire this week, and then I have another put spread that expires in about 44 days. So that's what we did today. Was looking at Apple too, was looking at Tesla. That was another one I was keeping an eye on, but I don't know. Tesla's just too volatile for me right now, which is all the uncertainty with Elon Musk being so involved in a lot of areas that wasn't previously involved in. It's just like even more volatility to deal with. So I was like, you know what? I'm going to focus on these volatile indices that I have right here, maybe some Meta, maybe some Apple, but Tesla is a little too sporadic for me at the moment. But
yeah,
check it out.
You know my thoughts on Tesla. Tesla.
Oh, that's on the no trade list for you, isn't it?
Yes, the no trade list, which is getting ever shorter. But we'll see if I'm ever willing to overcome my trauma and trade Tesla again. I don't know that I will be able to. But yeah, it's just. I agree. I mean, it's just got so much volatility. It had so much volatility before. Tesla has been turning boys to men for some time. And now, yeah, with the additional government involvement with Elon, the way that all these different government headlines can have a direct impact on this share price, it's just scary. And I do feel like it's oversold, but I'm not there. I can't bring myself to do it.
No, I mean, I'm probably not going to touch this one, but after everything just going on with the tariff news, I think we even doubled the tariffs on Canada. So it's just like those random kind of new pieces of information that kind of makes me want to stay away from Tesla just for the time being, at least. But other than that, that's what we got in the portfolio. We'll see what we're going to be looking at for the rest of this week. Been keeping an eye on energy. Oil's one that I kind of stay away from. I think we got your thoughts on oil last time, but I've been looking at /CL, /MCO for the micro futures on oil, and then been looking at USO as another product to trade oil through as well.
Yeah, it's interesting. Yeah, I'm not an oil trader myself. I as I've said before, I respect it. USO, interesting spot for it.
Yeah, I mean, oil's just one of those very sporadic ones, very affected by those headlines, the supply and demand headlines. So, I mean, I've just been taking a look at that, looking at USO, and then lastly, been looking at things like Bitcoin with the news that came out over the weekend about it becoming one of the world's reserves. It was another like hype piece about Bitcoin, and we got that massive sell-off. You got any thoughts on that? Do you have any thoughts on the whole recent situation with Bitcoin before we move on here from oil?
Yeah, I think it's interesting. I'm surprised. I don't know. I'm not surprised by the crypto reserve announcement, and frankly, I was surprised to see Bitcoin take as much of a bounce as it did on that news. It felt like that should have been a little bit more priced in. You know, the Solanas and Cardanos and XRPs of the world. I can understand the rocket ship that they went on. But I was surprised that the market wasn't more efficient with having the eventuality of this crypto reserve being formed. I mean, Trump has been shouting this from the rooftops for some time. This isn't, some crazy shock. So in turn, I was not super surprised to see a little bit of a correctionary move. But it has just been so wild watching Bitcoin race back and forth. I had bad timing a week or two ago. I got long some IBIT, and it was right before the big drop. I did, after on Monday morning, yesterday morning, I did manage to close my IBIT longs just for not max loss, which was a win to me because they were sitting at max loss, unable to be liquidated for like 5 days. And it managed to recover to where I was able to liquidate. So it's
what was the
it's
expiration
little
on
wins.
those ones?
I think it was next Friday, a week from, or this coming Friday, I should say. Yeah, a week from this past Friday. Wasn't seeing a lot of hope. I needed a ridiculous move out of IBIT. I can't remember exactly what my strikes were. Let me have a look. I needed it over 54.5. Where are we at? 49.39. Yeah. So I think I made the right call on that
49.39.
But I don't know. It's been really interesting to follow. I don't know if you saw. Did you see the guy who did the 50x leverage on a $4 million Bitcoin trade on Sunday?
50x leverage on a $4 million Bitcoin trade. No, I didn't. What was that about? Where was he on? Was he on Reddit again? What was that?
Yeah, it was a big story. I saw it from a few different mainstream news outlets. He was trading on, I don't remember the platform, Hyper Liquidity or something like that. It's a newer one. But yeah, this guy took 50x leverage on $4 million of long Bitcoin, and he could only tolerate a 1.3% move to the downside before he was going to get liquidated. And it got within $50 of liquidation, and then Trump said the reserve stuff, and it rocketed, and he made
$50 of liquidation. Wow.
Yeah, it was like Bitcoin itself was $50 away from him getting liquidated, and then it shot up 11%. He made $7 million.
Well, I'm curious, was there speculation about him saying something about or speaking on crypto? Was there speculation of that beforehand? Or
oh no, I'm not going to make any accusations, but it seems a little bit suspect. It's all I'll throw around on that one. But yeah, $7 million. Leverage crypto, oh my gosh, it scares me so bad. I don't know how anybody does it. It's so wild to me. I had a friend who was playing around with it for a little while.
What do you mean crypto?
In leverage crypto is what I'm talking about specifically. I mean, leverage products in general, but specifically leverage crypto because you can get 20, 40, 50x leverage on these things. And that's just insane to me. There's enough risk the way I trade now. I don't need to 50x my risk. I'm good with the amount of risk I got.
Not only that, 50x the risk, and then also, your timing has to be, down pretty well.
Yeah,
immaculate. Yeah, absolutely immaculate. I think it just makes it it gives you an even smaller window that you're working with.
Oh yeah, exactly.
But anyways,
if you can only tolerate a 1.3% move down on Bitcoin, a notoriously volatile product, it's like that's crazy to me.
Yeah, no, I mean, just like Sub-Zero saying over here, he'll probably do it. He'll probably do it again. I mean, you're getting rewarded. That's the thing about the market. That's what's crazy is you can get rewarded for doing, having bad habits. And the way we're driven, we're going to be more likely to do it again. So, maybe Bitcoin, maybe he hits next again on Bitcoin, right?
It's true.
So don't listen to me, man. Don't listen to me.
Yeah, it's still anonymous. Nobody knows who it is. It's all just people spotted on the blockchain. But yeah. Crypto.
No, I hear you. I'm just taking a look at IBIT here. I haven't traded IBIT before, but because the overall crypto market has gotten a lot more volatile, it makes it a little bit more interesting. No earnings or anything like that to worry about, so that's nice. Iron Condor, decent amount of credit. Excuse me. That the pop on Iron Condors are never too attractive, but it's an Iron Condor. $260 worth of credit. $5 wide worth of risk, not bad. Looking to get long, if anything. But then again, that's where I have to watch myself too, because when vol expands, I think, okay, I want to get on some more positions. Let me, sell some out of the money call spreads here, or I'm sorry, some out of the money put spreads. And then I'm sitting with a bunch of this long delta because everything is selling off so much that I'm overexposing myself to the downside just a little bit too much. So something for me to at least keep an eye on. But I'll look at IBIT as well. Put that on the watch list. We'll build that out.
Yeah, for sure. Yeah, I've been long delta against this entire move, and it has been brutal. And today I got out of everything except shares in the morning, and here I am again. I'm just back super long delta. So yeah, I mean. And it's not just like some brain dead, the market's got to go up sometime sort of take, even though it kind of is. And that's especially where I'm at with the shares is that I know that recovery is unavoidable. I mean, in the macro context.
Yeah. I mean,
I have fewer plays where I'm trying to time things up. But I mean, like what did SPY close at today? 576.
SPY closed. Yeah, we had a little bit of a bounce into the close. I mean, we sold off about 36 minutes before the close. We had a pretty aggressive sell-off, and then we bounced like into the after hours briefly.
Yeah, and we were at 600 like a week ago. if that, it's so crazy how parabolic this move has been. So I certainly think that there could be more downside left. But this has been a pretty hardy correction to this point. And I think that the end, at least in the micro, is somewhat in sight. I think we're due for at least a great week. Oh shoot, at least a great week.
I hope so. I was really tempted to just buy a futures contract with just one micro, let it sit there until we recover. But I'm just like, if we somehow gap down 200, I'm just not going to be okay with that. So I was like, you know what? I'm going to sell an out of the money call spread on QQQ, and that's why we went that. But I was so tempted to just buy a future and let it hold and let us recover a little bit. But I don't know, the sell off over the last few days. I mean, we've been down almost 1,000 points on NASDAQ.
Yeah, we have there's a Trump speech tonight as well, which is kind of a State
What
of the
time
Union.
is that at?
I'm not sure. 7 Central, I think. 6 Central.
Yeah.
But it's not a State of the Union, but he is addressing Congress, and like the, event markets of the world are calling it a State of the Union, even though it's not. I don't really understand what's going on, but big things coming from Trump tonight. So that did make me even a little hesitant to get into these positions today. But I decided that these are all long enough term that the upside reward is too good to ignore for the downside risk, because it's equally likely that he says something that sends SPY down another $10 or up another $10, and we really have no way of knowing. So I didn't want to miss the bus should we get the latter.
No, I hear you. That's another reason why I've just been trying to take advantage of those, selling those put spreads, not trying to have to time it as much. But I mean, we're absolutely beaten down on NASDAQ. So tomorrow, if we make more lows, best believe I'm selling more out of the money QQQ put spreads. I wish I had more on. I wish I had even a longer duration one on too. But I mean, if we keep heading lower from here in this short amount of time, it's only going to make me want to sell more out of the money puts, as long as I have a decent time window that I'm working with. But we'll keep an eye on it.
Yeah, no, I mean, I agree. I just agree. It's getting increasingly more tempting. I've left myself with plenty of buying power should I need to average down or do any management moving forward. But I'm comfortable. I'm comfortable being as long delta as I am. I mean, even against this market, good things. It's not just good things have got to come sometime, but the market recovers. The market by nature wants to recover. And so if you position yourself for that recovery in the longer term, I see it as highly improbable that I don't win on at least a majority of these trades, especially the shares, which have already done some printing for me as it is.
You reminded me of Luis. Luis is always just coming with some like random shares and all these underlyings. I was like, Luis is a share guy. But that reminds me, I just want to check out Netflix. Whenever I think of shares in Netflix, I think of Luis.
If you have
LX,
the capital,
let's just check that out before we wrap.
Yeah, if you have the capital, shares are just a good way to do it. Why try to time it if you don't have to? Plus, you don't have to calculate any break evens. my break even is my entry.
When I was first getting into options, the one thing that was so difficult to do was managing my risk getting into it, because I was like, well, if I have a stock and it's just a share, I buy at $5, I sell at $4, I lose $1. The math was like so simple, but that was just a lack of knowledge. But Netflix is doing well though. I just had to check it out real quick. I don't watch too much streaming services, but Netflix raising their prices, so we'll see what we get there.
Yeah, I'm a YouTube guy. I haven't watched a show in a little while.
You know what I just started paying for?
What?
I just started paying for, is it the YouTube Premium or YouTube Red? What's the difference? I know there's two different services that you can get.
I'm not sure. I have Premium as well, and I love it. I highly endorse YouTube Premium if you're a daily YouTube user. It's awesome. Yeah, you get rid of all the ads. And also being able to watch stuff with your lock screen on, oh, that's so nice. Yeah, you can lock your phone.
So nice. Sometimes I'll listen to a podcast when I'm in the gym or I'm listening to something like that. And I used to have to always flip the screen to where it's not touching my thigh when I put it in my pocket, because then it will like change whatever is on my phone. And now I can just lock the screen.
Yeah.
Listen to whatever is on there. So that was a W by Google and YouTube. So I'll give them that. such a small detail just to make it a little bit more convenient and so much worth it.
Yeah, it's just great job of listening to feedback from users and implementing it. And I'm happy to pay for it. I'm happy to pay for just the no ads, and that feature are worth the price.
Bro, the ads is an understatement. Those are commercials.
Oh, yeah.
I mean, these are full-on commercials now.
They're getting longer and longer, and you're getting the back-to-back unskippables and all that. I've had premium so long, I've never had the double ads before in my life. I just see everybody bitching about it on Twitter.
The back-to-back unskippable is absolutely devious work. Back-to-back unskippable.
Yeah, and you'll get them
crazy.
like mid-roll too. It's crazy.
Yeah. But no, Gus, anything to add before we hop on out of here today?
No, I got nothing. Just getting long. I'm not afraid to be long delta against this market. We got to recover.
Yeah. We'll see what we get. Put on some more long delta today as well, so we'll manage that for the rest of the week. But that's going to do it for today. Thanks for joining us, and we'll catch you guys next time. Peace.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
tastytrade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Your outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you see me, then you see a star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
exploring zero DTE. We promised you we would take a look, and here we go.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade. Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Oh yeah. Tasty Nation, good morning.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Oh, yeah, it is Tuesday, March 4th, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little podcast. A little podcast called The Price of Truth, a show where we like to explore the incentives that govern our world. And good God, are they throwing incentives at us like Tic Tacs? But no worries. Before we get started, we should say what's up to the people. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile application. If you don't have both, go get them. But if you want to be part of the conversation that you will see on your screen, bing, right here. Did it work? Did we time it up? All right. If you want to be part of the conversation, there we go. That will be part of on your screen. You got to do that. You got to head on over to evil Google YouTubes and type in whatever you want, really. Just type in nonsense, random ass characters related to the conversation or unrelated. Just as long as you're being active, we can spoof the Google algorithm and putting us in front of as many people as possible and deprogramming the world one view at a time. It is Tuesday, my friends, which means I brought the big brain in. I'm talking, of course, the global head of macro here at Tasty Live, none other than Ilya Spivak. Ilya, how you doing, my friend?
I love days like today. I love it because there's so much for people that care about the stuff I care about to think about and consider. There's so much market action around those things, and that market action is happening around a macro narrative, around macro forces, that macro forces are in charge here of these markets. That, of course, is exactly the kind of pool that I like to swim in.
Hey, listen, man, around here we do a little something called cold open, okay? In your show, you might get straight to the wham, bam, thank you, man. But around here, we do a little bit of foreplay, okay? And the foreplay is nonsensical talk to open up the show that has nothing to do with markets. And the nonsensical talk I want to talk about today is aches and pains. They don't tell you when you're a young man, Ilya Spivak, that they tell you when you get older, you might slow down. You might not be as strong. You might not be as fast. But they don't tell you everything hurts. They don't tell you, it's just like nothing works and everything hurts. They don't tell you that part, Ilya Spivak. And I think if they would have told me that in like PE class or gym class when I was in 5th grade, I think I wouldn't have taken it for granted as much as I did. You know what I mean? Because now just give me 10 years ago. Give me my body, my ligaments and my tendons from 10 years ago, and I'll be doing okay. But right now, everything hurts, Ilya.
I will say this. I definitely did not anticipate the degree to which every single day after a certain age is a little achy, a lot underslept, and slightly undercaffeinated, no matter how much coffee has been had.
Well, I don't do the caffeine, but I do. You know what this is? This is a little something called Tiger Balm. There's white and there's red. Okay, so white is not the extra strength. Red is the extra strength. They don't tell you you're just going to be lathering yourself in Tiger Balm every time you wake up in the morning. They don't tell you that. They don't tell you you're going to walk around smelling like medicated ointment. They didn't tell me that, man. But I do.
They don't tell you Tiger Balm exists unless, like some of us here, familiar with the far East Coast. In Russia, Tiger Balm is very well known, and in my earlier years covering Asia markets, I've come to know and love it dearly.
Yeah, good God, man. You know, when you're a young kid, you think, maybe what kind of cologne should I buy? You know, you're putting on fragrance for the first time. Maybe you're going to a homecoming or a prom dance. No. When you get older, that's not. You smell like medicated ointment. That's what you smell like as an older gentleman.
Responsibility and experience is what you smell like. Your demographic has changed.
Smell like responsibility. That was a bar. All right. See, that's what I'm good. That's what you do to open a show, bro. Then you go into all the ridiculousness. All right, S&P 500, 5833.50. We put them to a test, man. We had said on this show, 5800. We're gonna press them. Yeah. We got there, and the question was, would they hold? And for a day, anyway. They held them, traded up off the lows, and in extended hours, they've pushed up even further. But Ilya Spivak, tell me what you think about price action, the little rubber band action we saw around 5,800. Do you think this is basically sort of a feeble last stand to hold the market up here at this area of resistance? Do you ultimately think that we rotate and find a new range that is with 5,800 being new resistance? What do you think happens here? How are you playing this?
Yeah, I mean, I think if you thought that the holding of this range, narrowly though we did in some places more than others, I would say S&P more than NASDAQ, let's say, the narrowing holding of this range is a trap. If you think that this is a buy the dip kind of opportunity, I think that's a trap. I think we end up lower from here. I think this is not the end of the sell-off. I think this is the beginning of it. And this is the sort of cumulative coming together of all of those things we've been talking about. I also think that the intraday seesaw, given what we've been talking about, really makes a lot of sense. At the risk of being a little bit long-winded, I'm going to break this down. and at the
Ilya? No.
No. and extrapolate. So why did the markets fall out of bed? Ostensibly because the tariffs that were on ice since February were no longer on ice and got actually implemented. Canada got hit. Mexico got hit. China got hit with another 10% on top of the ones that we got a month ago. Everybody immediately announced some form of retaliation, or in Mexico's case, an intent to retaliate.
Mm-hmm.
Markets looked and said, well, a trade war where everybody is competitively attacking each other isn't good for global commerce. That's bad for growth. We've been worried about growth for weeks now, ever since U.S. data started to turn. Okay, that's bad. Clearly, stocks down, risk off. Then midday, you got a little bit of a seesaw. And in my mind, that seesaw makes sense if you look and say, well, if the threat to growth is tariffs, how afraid am I? U.S. growth has been powered by services. In fact, the reason that U.S. resilience hasn't spilled over to other parts of the global economy is mainly what the U.S. imports are goods. And they've been anemic. That demand has been basically stalled since COVID. Demand is being driven by services. That demand is serviced mainly by domestic firms. Okay, yeah, fine, we'll get some tariffs. Are they going to really hurt the U.S. service sector growth directly? Maybe not. Are they going to hurt the growth of the other countries that we're targeting? Yeah, because they depend on exporting goods to the U.S. So maybe this whole thing will be short-lived. It'll leave the engine of U.S. growth mainly intact, and we'll get a renegotiation of the USMCA, which expires next year, as an end result. Because, of course, that's exactly what happened when in the first Trump administration they ripped up NAFTA, only to come up with USMCA, which is almost exactly the same, but for a little extra chapter on digital markets. Other than that, it's almost exactly NAFTA. So maybe that's what this is. And there is a seesaw. But then, and this is the part that I think is the lasting bit, you are reminded that the reason we're freaked out about growth in the first order is that PMI data on February the 21st that tells us we got the first contraction in the service sector in 25 months. So if you think that the tariffs aren't a big deal because it's a goods side story and not a service sector story, okay, fine, the tariffs don't hurt, but they don't help. And the situation on the service side isn't even about the tariffs. That's not why we're concerned. The tariffs are just another thing. The trade war headlines are really just a distraction. The issue that faces growth is in the service sector already. And it is reading the, let's call it, the cumulative assessment of the situation now from S&P Global, from the Conference Board, from the University of Michigan, from a whole host of these survey-type entities that poll consumers and businesses. It's not that they're calling a referendum on current policies being bad. It's that they're getting shaken by the volatility of the policy. And there's uncertainty. And they just don't want to lay out more money until the uncertainty settles. That's the essence of the growth concern. So I don't think that this seesaw today changes anything. I don't think anything is fixed or necessarily worse or better. I think we get the ISM service sector numbers tomorrow. They show us something very similar to what the S&P Global numbers did that spooked us, and we're right back into a sell-off.
A couple of things. Let's just set the table here. S&P 500 obviously was lower on the day by 1.25%. The Nasdaq was down 1/3%, which I find interesting. Sort of slowed momentum on sell-off in tech here today. The Dow Jones down 1.5%. I find that interesting as well. It's sort of the low beta blue chip dividend paying stocks down 1.5%.
What I'm talking about here, the Nasdaq was the best held up, and it's because that service sector demand, that's where it lives.
I also think that's the Nasdaq. A lot of those stocks, like Nvidia, just got punched in the mouth, man. At some point, you're like, I'm taking a stab at Nvidia at 114. The Russell down 1%. I also found it interesting today, and I wonder if you could speak to this a little bit. The long end of the curve, so everything in terms of interest rates, the long end of the curve moved higher today. We moved higher across the curve, but the long end of the curve really had a decent move to the upside. I mean, we were at 119 almost and a half, end of the day at 117 and 25, 30 seconds. If I show you a picture here, we can see we start to move a little bit higher. The long end of the curve steepened up just a little bit. I'm curious it wasn't massive. It wasn't a massive move, but I am curious. We've been seeing buying in the long end of the curve. We've been sort of seeing in the last 5 or 6 sessions, we've been seeing a more traditional risk off as markets have been lightening up. But they had a very different complexion as we got near 5,800. You saw VIX term structure that went in full backwardation today. You saw them starting to sell the longer end of the curve. It didn't feel, today's market action didn't look like the last 5 or 6 days. And I'm curious to get your read on why you think that was the case.
I think if you consider that the tariff headlines made such a big splash in markets today, it's not difficult to see that markets basically said, okay, well, if there are these tariffs, then they're going to get passed through from businesses to consumers. There's going to be some inflationary uplift from them for some amount of time. And then things will normalize and the data will roll over and rebase. But for some amount of time, this will be an influence on inflation expectations. And to that end, we might have a Fed that isn't quite as dovish as we thought yesterday, when the only part of the story was concerns about growth and the Fed is going to have to cut more, both at the front end and the long end. In fact, that's been the story for a while. There was a slight rejiggering of Fed funds futures around that. So, for example, yesterday we were baking in, let's call it 65 basis points for this year. So 2 cuts with a slight chance of a third. Today, it's a little bit better. So not quite as many cuts. So if yesterday, so today, as I'm looking at the numbers, we settle at 66. Yesterday, we settled at 70. So about a 4 basis point wiggle toward less dovish. But that's Fed funds futures. That's overnight rates. Now extrapolate that with all of the term uplift that you get for 10 years and 30 years, and you get a little bit of a wiggle in the curve. Notice, by the way, that the 2-year, which is the most sensitive to immediate Fed policy expectations, it didn't get very far. It really was at the long end. And I think also those moves didn't really stick. So if you look at, for example, the daily candle on ZB, you look at the daily candle on ZN, it's a bit wacky. We get bonds going a lot higher. and then not, and then seesawing back in.
Dude, you're
Not
the most.
unlike what
You
we
are
see
the
in
most hilarious, like markets commentator I've ever heard. Your depth of knowledge is unparalleled, and then you couple it with just the word choice. So it tickles me, bro. The Daily Candle. Is wacky.
I am a reader of The Economist, and so I have a lot of appreciation for not overcomplicating.
I know what you're
even as we talk about complicated things. That's my favorite thing about The Economist is you can read it and smile as you read some very kind of woolly stuff.
I don't know, bro. To me, you might be right. I'm not saying anything you're saying is wrong in any way, shape, or form. But to me, I look at the implied cuts a little bit more simply than you do, just because it's easier math for me. I just go over here to the Fed Watch tool, and really, you're talking like a move in 4 or 5 basis points. That's just shifting in probabilities a little bit. But really, the picture hasn't changed. Still starting the cutting cycle in June, then September, then December. That third cut sort of snuck in there over the last couple of days. And then, again, this is a 5-year. I could pull up any inflation expectation chart, and they all say the same thing, that, for all the tariffs or inflationary discussion and like that's not what the market is worried about. The market is not worried about inflation right now. And in fact, inflation expectations for the most part across, multiple time frames, they're on the floor. And this is the problem. And
so of course this is the problem, but inflation expectations I wouldn't say are on the floor. If you look at break-even rates, because inflation expectations relative to September, if you look at break-even rates, be it the 5-year or the 10-year, are meaningfully higher. So it really depends what you look at. But what we definitely saw, right, just what certainly occurred between the Fed being really dovish in September and them becoming less dovish by December, is there was some level of, and here you go, you can see it on the chart here from the second half of last year, inflation expectations go up. So you definitely see the markets go, the Fed was too dovish, it's going to have to get less dovish because all of this is inflationary. And then in December, the Fed confirms. It dilutes rate cut expectations. Over that period, the dollar goes up, yields go up, bonds come down. So inflation expectations were very much a motivating factor, let's call it the fourth quarter of last year, and it was to the upside of inflation. Now, that's been within, as you can see here from the 10-year, a range that's persistent. But it was on the way higher, and they've weakened a bit since. But when you look at the 5-year, it's more extrapolated. 10-year is more anchored, of course, because it's longer term.
So let's use this number then versus the 5-year 5-year. Let's use your 10-year break-even inflation rate.
Sure.
If you're telling me that inflation expectations are near 2.5%, let's use 2.4 to 2.5%.
Mm-hmm.
And growth expectations, and if we use Atlanta GDP now, are on the floor. I mean, I know an economist is going to say, oh, no, that's not stagflation because you got to have an unemployment component of this. But my simple bird brain says growth on the floor, inflation up, that's a stagflationary conditions. Why shouldn't I be pulling out the stagflation playbook and executing that right now, Ilya? Or maybe you agree
I don't
that's
think you
the
necessarily
environment we're headed.
I don't think you necessarily shouldn't. I think the difference that I would make in that assessment is not so much that what we're looking at is stagflation, quote unquote, because I think obviously it's too early to make the call. But if we wait to make the call, to make the trade, if we follow kind of the economist's textbook confirmation of stagflation, we will have missed the move by a mile because the markets are forward looking. So I think what you appreciate here isn't stagflation has arrived, because you can't make that call. It's that there is stagflation risk, and that stagflation risk is becoming elevated. And that the reason it's elevated, I couldn't possibly agree with you anymore. The issue here isn't inflation for inflation's sake. It isn't the Fed for the Fed's sake. The risk is growth. And the reason that the markets were able to be very cavalier with what the Fed would do, wouldn't do, let's say for the most part of last year, and that it isn't cavalier with it now, is that there is a growth scare. You can paper over almost anything as long as there's growth, because you have relative confidence that even if you wipe out and lose money today, there's positive growth, there's expanding earnings, you'll make money tomorrow. But if that's not the case, and this is really the essence of why I think this sell-off isn't over and why the PMIs, I think, were so ominous. If you're afraid that there may not be money tomorrow, so if you lose it today, you're not going to easily come back and roll again because you're in a generally positive environment. If the essence of the thinking, both for investors, for businesses, for consumers, starts being, I'm less confident that there's money tomorrow, so I'm going to not risk as much of the money today because I don't want to lose it and not get it back quickly, then you get a growth scare like what we're seeing. And that kind of negative sentiment can feed on itself and become a vicious circle.
I agree. And I think the question becomes, it's clearly we're headed into the part of the growth scare. We're there, right? Like
Yes.
we're there already. So then the question becomes, all right, well, how do I think about certain assets within this sort of dynamic? Clearly, equities are repricing. They're in the process of repricing. Bonds, the entirety of the curve has shifted. But the tough part here is on one end, when growth slows, you want to make a shift towards collateral, a shift towards credit. On the other end, it sort of depends on what you think the government response will be to a growth slowdown and how much money needs to be sent out to the people in order to keep them, I don't know, keep them happy or quiet. And that sort of determines how you think about bonds, how you think about the dollar. So I'm curious, Ilya. We are clearly in the middle or in the midst of a growth slowdown. Let's go asset by asset. How do you think about equities? Obviously, I know your opinion. Tell me how you think about bonds in this growth slowdown. Tell me how you think about oil. Tell me how you think about gold, and tell me how you think about the dollar, knowing that clearly people are no longer just head in the sand, growth is above trend, I don't need to worry about anything at all. That's clearly no longer the scenario.
Yes.
Walk me through it, asset by asset.
I agree with all of that. I am long the bonds. I'm doing that via a TLT call vertical. I've been long them for a little bit here. Again, I'll tell you exactly. I've been holding them now for about a week. So they're up a little. Once they took out that high on ZB is when I put that on. And the swing high there from early in the month. And so I have that on. I think there's a lot more repricing toward a more dovish Fed amidst this growth scare. And so I expect yields to continue to come in.
How much more dovish? I mean, they've already got 3 cuts priced in. Where do you think the market can go?
I think if you look at the makeup of the situation, the Fed told us in December 50 basis points this year, 50 basis points next year, from the perspective that there isn't a growth scare. Now, we are basically more dovish than that at this point by about half a cut for this year. But for next year, we still only have 1 cut baked in. We're not even at the Fed's line in the sand. So the markets basically think, so cumulatively 93 basis points through the end of next year.
Mm-hmm.
That's almost where the Fed was. We can round that off. But the sequencing is we're going to get a big splash up front here, and the next year we won't have to do as much because everything's okay. I think there's more room, and I think when you hear the Fed, for example, Powell is speaking this week on Friday after NFP. I think the Fed doesn't change its mind very quickly. It's not going to you're not going to get Powell jumping out the window and going, we've talked to you for months about being measured and not over-interpreting and over-extrapolating data points, but this is the time we're going to do it. No, I think he's going to come out and say, look, there's no need to panic. We're watching the data. If we need to act in an emergency, of course we will. If the data continues to go this way, well, we told you we're going to be easing, so you know that we already are minded in this direction. But I don't think it's going to be the kind of thing where the markets go, oh, they're convinced they're going to go big in March already. No. I think the markets are going to get the sense that the easing is coming later, and that will mean more of it has to come because there will be a degree of behind the curve action. But that's always the case. The Fed is reactive by its nature. All central banks are. And so we're going to get to a place, I think, where the long end has more to adjust, up on bonds, lower on rates. I think the dollar has started a much larger weakening phase.
Mm-hmm.
I think the euro was a really clean example of that today, but also you see it in the pound, you see it elsewhere. I've been short the dollar for a while now, and I'm going to keep holding it because I think this is just the beginning. And the essence of why I think that is, again, with the bond market. I think there's been a lot of yield advantage to the dollar because from September to December, the markets rethought Fed policy and the Fed endorsed them into a less dovish direction. So we had a dollar run. By the way, you can see it there on the screen from mid-September through the beginning of the year. The exact same run that you see in ZN, in ZB. Identical move. I think both of those things have turned. And so you get higher bonds and a weaker dollar pretty much across the board. And I'm prepared to kind of hold that, barring weirdness, strong convictions, loosely held and all, basically until the March FOMC when the Fed is going to give us new forecasts, and then we'll see.
I'm starting to turn a bit neutral on bond. I hear you, and I'm down with the dollar weakness. I think, I was, you and I were holding hands on long bonds and taking it in the, getting punched in the face as they made their move down to 110. Ended up paying off. We've had a nice 10-point rally here, but as we start to approach 120, I don't want to say I'm fully neutral, and I'm definitely not bearish, but I am approaching a more neutral position here after this 10-point rally in bonds, for whatever that's worth. So then, what do you think about crude oil? If we're in a growth slowdown, why isn't crude oil like $60 or in the 50s?
I mean, it's certainly tried to make a run lower today. It seesawed much as we saw other assets seesaw. I think ultimately the growth scare is the reason why crude oil is down off those highs back in, let's call it start of the year. It was testing just north of 80. I was short it then and wrote it down to maybe like 70. So I've missed the last $3-4 of this move. Once it kind of started to grind into a range, I've missed the very last kind of leg through the bottom of that range there, just above the 70 mark. So at this point, I just don't want to chase it while it's in this clearly very congestive area. It's gotten stuck here for extended periods before. I'm looking for a little bit more clarity, but I do think that ultimately crude oil resolves lower. I think there's very little reason to think that it won't, because the U.S. is awash in oil. We're already hitting record output. The only reason that we're not 100% energy independent, because we're already producing more than enough crude to be fully energy independent and import nothing. Is because our refining capacity is oriented toward a different grade of crude than we make ourselves. So we export rather than being fully self-sufficient. But at this point, the U.S. is an aggregate bigger producer of petroleum things of various stages of refining altogether than Saudi and Russia combined. So
do you also think there's a floor?
You
also think there's a floor? Like at some point, if the crude oil price gets a little bit too low, then it starts to hurt U.S. oil production. You start to see some producers shut down, and I think the drill babies drill, that whole thing, it starts to be counterproductive the lower the crude oil gets at a certain point. So don't I sort of think, I don't know where that floor is, but there's probably a floor. And when we get to that floor, we're probably going to see an announcement out of the administration that, hey, we just did some big purchase to refill the SPR. And I think once we get there, the market's going to know, oh, this is sort of the floor here. Do you think that's probably in the cards here, the lower crude oil gets?
Yeah, I just don't know where the floor is, and I know that there are more things to factor out of the price than there is to factor in. And so in the meantime, I'm happy to be short. I want to find a little bit of a spot here where the risk reward looks attractive or more attractive than it is here. I want to reload short while it finds the floor, because I figure any kind of geopolitical risk uplift on the price is leaving rather than growing, more likely as time goes on. I think the disruption that we might have from the wars in the Russia-Ukraine theater or the Israel-Hamas theater never really materialized and was more hypothetical. If you looked at the spreads between the WTI benchmark and the European benchmark, the Brent crude benchmark, that spread never really ballooned out. All of those disruptions were aimed at European crude. So if there was a disruption, that spread would blow out. It didn't. So it was more like there was a degree of geopolitical risk rather than realized geopolitical disruption in the price. I think those conflicts are probably winding down at this point, both of them. And so geopolitical kind of a sort of floor from geopolitics being jumpy, I think, goes away. If growth then slows, that is another little notch that goes away until we realize that pulling out all the stops on production isn't something that's universally good. That's a notch that isn't a good source of support. So the only thing that I can really think of here as a near-term upside shock risk, obviously countries like China and India have been buying Russian oil off market for a few years and at steep discount. If there is a Russia-Ukraine deal that everybody gets cajoled into by the Trump administration, the sanctions come down and Russia has to now come back into the open market, and China and India have to buy, and in a way that's reflected and visible and transparent into the price globally, maybe there is a bit of an uplift once that demand is visible. But the markets are very good at estimating it. So I don't think that, if anything, I don't think it's a lasting catalyst on the upside.
Right. And it's probably mostly discounted. All right, gold.
Exactly.
29.62. We had sort of our, we had been looking for a single 150-point day. We didn't get it. We kind of got a series of 75-point down moves in gold. Yeah. So I don't know. You take 6 of, what do they say? 6 of one, half dozen of another. So we ended up getting a pretty decent sell-off in gold, and for the last 2 sessions, that sell-off has been met with demand at 28.50 and higher. How are you thinking about gold? Typically, gold is a superstar in stagflationary conditions, my friend. Is there any reason for me to think about gold any differently? Obviously, it's in the price. That's why we're sitting here, arguably at 3,000 already. But how do you think about gold into the next 9 months as opposed to where we've already been?
I think you have to be really careful with assessing why gold is up here, because what you find from and by the way, I'm bullish. Let's just start off top saying my view on gold is broadly bullish. I caught the up move from the lows in mid-December all the way through about the end of January. And when in the end of January, there was that sort of weird spill, I got out. And so I missed what is maybe the second 50% of the rally from late January into the tops now into late February, where we kind of anchored. But through that whole rally from mid-December to late February, the dollar was up some, now more down some. Yields were up a lot now, but before were lower. So the typical influences for gold: yields, because it yields nothing, and so relative sort of attraction of gold oftentimes harkens back to, can you get better yields elsewhere? So does the opportunity cost make sense? So it's a foil for yields, and it's a foil for the dollar because it is a kind of physical value alternative to fiat paper currency. So if people don't like dollars, they tend to go this way. It has ignored those catalysts for any kind of a consistent lead and just started marching higher, whether the dollar was up or down in this period of time, whether the dollar, whether yields were up or down in this period of time. And I think that really comes down to the influence of China, which we saw in November started to buy for their PBOC reserve account again. So I think what the markets basically reasoned why gold had the run and why it was uninterrupted was largely because they thought that the elephant has climbed back onto the scales.
I don't disagree with you, and I don't think
tip them.
And I don't think a price is ever single factor, but I do think during that period of time where China's buying gold, U.S. Treasury yields are near 5%. So there is some reason why the Chinese think that everything has opportunity cost, everything's a trade-off. So if I'm shifting my reserves from treasuries, which at the time I could get the most appealing price on those treasuries for I don't know how many years, and I'm in the face of that, I'm buying gold. There's sort of a reason for that, right? There's an assessment for why I would want gold over treasuries, and I think so. You're saying
I think you're absolutely right. By the way.
And you're saying be careful about saying, we're here because the market thinks of stagflationary conditions. And I'm like, but
this is what it is.
There's a reason China's buying to begin with, which then brings us back to I think it's because that they don't see the treasuries as that good of a deal, and they want actual hard collateral, and that's because we're headed into a period of slowing growth
and I'm going to give you
weaker dollar.
I'm going to give you a little tidbit that I think really puts this in context.
By the way, to your point, I don't really think it matters what that reason is, and I don't think we can prove ourselves to be right. So to your point, I think you are right. You should be cautious and looking at an asset and saying this is why. One, because it doesn't really matter. So that's my olive branch.
Well, there's that. But also, if you thought that gold, by the way, as is normal, as is historically the case, moves inversely of yields and inversely of the dollar, and those are its main catalysts because it is a foil for both, that didn't happen on this run. So it also didn't happen in reverse. the relationship wasn't consistent. And so you sort of start to go, okay, well, what is the X factor here? And the X factor seems to have been China. But, and this is where it gets really...
Lobo in the chat says the X factor was all the Costco preppers, which is such a hilarious joke because Costco couldn't keep gold bar. Every time they hit gold bars, they'd be instantly sold out.
Like hotcakes, baby. But this is really where things get interesting. The Gold Council just put out their latest gold market report on the 19th of last month. And they point out something absolutely fascinating, which helps to explain why gold hit a wall last month. Chinese buying is not Chinese buying. Yes, the PBOC is buying gold for their reserve account. I would argue that they're buying it because they want to build a rival to SWIFT, and they want to build a credibility mechanism for that by saying the trade flows are backed in gold. You don't have to worry about the poor convertibility of the yuan in using this settlement system. So I think that's what the PBOC is doing. But at the very same time, what you got was a outflow from Chinese gold ETFs that was almost exactly equivalent to how much the PBOC bought. And so net, was China a buyer of gold in January? Maybe not. It looks like it was kind of a scratch. Official sources bought, the ETFs shed. And so in China. And so you got this strange thing where China was an inconsistent gorilla in the room, as it were. And so, to your point,
who are the holder of those ETFs?
It's a good question.
It's like, isn't most of the stocks in China's like 80% retail holding?
It's not official sources. That is to say, it is unofficial market participants, i.e., not the PBOC. So, what you then look at is you say, okay, China is the X factor. You have to be careful, but ultimately, the story is yields are going down probably this year if the Fed is going to have to get more dovish around a growth scare. The dollar is going down probably. Those are the critical factors. China is various smoke and mirrors, so you do want to look at the price action and be real careful and not assume you know things. But ultimately, the bias on gold is higher. The question is just where do you, if you don't have exposure already, where do you initiate new exposure? And for me, it isn't here.
I agree with that. That's why I keep saying that little break that we had last week, it was a good start, but
yeah.
And I don't know if I don't think I did any like day trades or any short-term trades on it. It was a good start, but it's not enough of a discount to initiate new longs.
I agree.
I just keep saying the gold miners, in my personal opinion, offer the most interesting price if you want to put an incremental dollar towards the idea of gold, but you don't love the price of gold at 3,000. To me, I think whether it's Newmont or Barrick or any, point your finger at a miner here, they're significantly off their highs while gold is at all-time highs. And so I just think if that is something you want to do, I keep talking about this. I think the miners are the most interesting way to play that. And I wouldn't do it by GDX or GDXJ because I don't think they have an interesting discount. They're actually near their highs to the same extent that gold is. I would find a miner that is actually trading on discount and play it that way. So we talked about equities, we talked about bonds, we talked about crude oil, you've talked about dollar and gold. Let me do this. I want to play a little game here. It's called get Ilya's reaction. Since you've left Twitter, I know you haven't. I'm just joking. Since you've left Twitter with all your left-leaning elite liberal friends and gone over to Blue Sky, I thought I would like to bring Twitter to you. So I'm going to show you a couple of tweets here, and I want to get your reaction. The first one, both of them are quasi politically related, but they're mostly about the market. You ready to do this?
Sure. And of course, I haven't left.
I know.
I haven't left Twitter, as you mentioned. I've just spread my tentacles more broadly.
Give the people your Twitter handle real quick before we get going.
I am at Ilya Spivak everywhere. At Ilya Spivak on Blue Sky. At Ilya Spivak on Twitter, and I will post my musings on markets to any crowd that'll listen. I am absolutely shameless. I put it on my LinkedIn, everywhere.
By the way, let me ask you this question. Do you care about being politically neutral? Like, do you think in your commentary that people can tell which side you lean? And do you think it's important to try to be neutral, or do you find it's okay for you to let your bias, like, to just be honest about what you believe politically? What do you think?
I think if you use your bias as a trader, you're going to lose money, because you can't trade a political bias. You're going to get killed. So,
of course, putting that to the side, though.
Well, no, but to the extent that what we talk about is trading in markets, and what you're going to do as a participant, as a trader in those markets, I think you cannot get too political because it's not important. You have to be setting that bias aside to make your trade decisions. And to the
I agree,
extent
but that's not what I'm asking you. We do a lot of editorial here. So I'm going to ask you, Ilya, do you think that people can tell which political leanings you have?
Yes. Okay. But I also think that they can tell that I am not a doctrinaire believer in this or that thing. I am what you might call radically centrist in my politics.
Okay. I think that's fair. I think that's probably true. It's a very fair self-assessment. All right, let's get going. This one, the first one is by Jem Carson. He put something out earlier that I thought was really worth. It was good context for what's happening. Sure. If you don't already understand the current White House's approach from their budget, Besant is telling you loud and clear if you care to listen. This is what he is saying in plain English. They want to slow demand in the real economy and hence slow inflation by distributing less money to people via slowing wage growth and less social services to Americans in the medium income on down. How? A, cut government employment. B, cut Medicare. C, cut SNAP food assistance and school lunches. D, cut low-income housing assistance. Then, as these cuts take hold in the next 3 to 6 months, I think there was something a transition supposed to be here. Meanwhile, they plan to, in equal amounts, increase supply-side stimulus to get private industry moving. This will send money to the top 0.1% of the top wage earners, not increasing inflation while stimulating economic growth. How? A, massive corporate tax cuts. B, gut the IRS and corporate financial oversight and reduce taxes further. C, deregulate to allow corporations to operate untethered to increase profitability. And D, drill baby drill. The demand side policies take effect quicker than supply side. So as cyclical deflation takes hold in 6 months or so, they plan to respond quickly with loose monetary policy, switching back from QT to QE. So again, that's his assessment of what's taking place from the fiscal side, as well as how monetary policy is going to play into this massive transition, cutting demand side in their policies, increasing supply side dynamics, which will get the economy going from their perspective without increasing inflation, and also looser monetary policy to assist with that transition. Your thoughts? Is that a decent assessment of what you see happening as well? Do you agree with that?
Maybe I agree with a lot of the upshot, but I don't think that I necessarily buy into the kind of conspiratorial reasoning or like the flavor of the conspiratorial reasoning here. I think it's much simpler. I think, and by the way, I have tremendous respect for Sam Carson. I think he's an incredibly good follow and is very insightful.
Where's the conspiratorial part? I'm sorry, just so I know.
It seems like what he's saying is we're going to take away all this money from things that make the average person feel good. Medicare, SNAP assistance, low-income housing, all those things that are kind of feel-good things, and turn them into tax cuts. And that all of this, I generally agree with. I just don't think it's really that complicated. I think there is a set of tax cuts that got passed in the Trump administration version 1. They're up for renewal. They want, as one of the main stays of the administration's policy agenda, to extend them or make them a permanent thing. We know that there's probably going to be a deal done internally with congressional Republicans, particularly those from high tax states, on increasing the threshold that there is to write off state and local taxes, because last time that was gutted to a significant extent. And I think Republicans from states like California, New York, and other high tax states have been groaning about it. So I think there's a deal to be done on that. But otherwise, I think the trajectory is we want to make these tax cuts extended, but better yet, permanent. But you have to pay for that because that would be a big hit to the deficit projected out, let's say 10 years. So you do that by cutting spending elsewhere. And by the way, we already have a crazy situation fiscally. I don't think it's any kind of a threat in the near term, but I very much agree with, let's say, the assessments of people like Jay Powell that say, while we're not concerned about anything like a U.S. default or anything of that sort, this is an unsustainable fiscal trajectory that needs fixing. So I think it's a simpler kind of a thing.
So here's what I hear you saying, and I think I don't think what he's saying is conspiratorial. I think what he's doing is he's assessing what he sees as a strategy. I think he sees a strategy in play, and I think what by your explanation, you don't think there's much of a strategy. You think it's very.
No, I just think it's a very simple strategy.
Yeah, I think you think what's happening is very simple-minded. I want tax cuts. I'm going to cut a bunch of things, and I don't think it's
simple-minded. I just think there is,
meaning there's no broader economic strategy at play here. That's what I'm trying to say.
No, I think there is. I just think I think you can boil the strategy down to saying historically what Republicans push for is deregulation and lower taxes. That's not this administration. That's the past several. I don't think there is a structural difference in intent here. I think those are the things that can pass the Republican Congress, where those kinds of ideas are core ideas. And I think the only way you do that without ramping up, to the tweet's point, the only way you do that without ramping up inflation and blowing out the deficit is cutting spending. And the way you try to do that is through fiscal reform. The question is, can you do it and will it work?
I agree with that. Shout out to Flower Power, who is listening while working out. Hopefully you get a personal best here today. Let's go with the second one, which is a bit more loosely related, I think, to the economy and more in the world of political, but it comes from your friend over there in California, Chamath Palihapitiya. This got a lot of play on Twitter. Trump is more popular with young people than old people. Most young people don't own stocks or homes, aka they are asset light. 2, Trump is more popular amongst working and middle class folks. Most of these folks are also asset light. It stands to reason that a fall in asset prices, stocks down or home prices down, have very little impact on his core constituents. To that end, I won't be surprised if Trump has little reaction then to an equity or home price market correction. Separately, the upside of shrinking these asset prices is that it gives the folks mentioned above a legitimate chance to buy into those markets at lower levels, making equity ownership and or home ownership more possible. Tangentially, if Trump figures out how to get rents lower, he will unite young people and asset-light working people into a reliable voting bloc for the foreseeable future. He will have given them the trifecta: cheaper stocks, cheaper homes, lower rent. Said differently, don't presume that the stock market going up is a useful barometer anymore. In fact, it going down may be a better signal for his popularity. Time will tell. There's a couple things I felt or tickled me a little bit about this. One, I think there was some meme floating around about this tweet. It was like, that meme is like the Drake thing where he's like broke, and where Drake was like, no. He's like asset light. Like, yes. Yeah. So that sort of tickled me a little bit. The third, I thought it's interesting analysis, but it never factors in employment, right? So if you can somehow get all these markets to go down in value and everyone keeps their job, I'm sure he would remain pretty popular. But if these things go down in value and everyone loses their job, I think that could change this calculus just a little bit. Anyways, what do you think? What's Ilya's reaction to his California friend, Chamath Palihapitiya?
To quote a great economic philosopher of our time, Mr. Ace Ventura, fiction can be fun, but I find the reference section much more enlightening.
Go on.
You could say all of these ifs, whens, buts, what have yous, or you can look at the consumer confidence data that's already out. Are consumers happy? No. No, they're not happy. Consumer confidence is tanking. And you're not just hearing that from one source. A multitude of reports now that poll consumers are telling you what's going on. And moreover, this is where it gets really, really fun. The University of Michigan actually takes consumers and breaks them down by political party, because what they notice is magically Republicans became really happy with the economy as soon as Trump took office, and Democrats became really unhappy, even though the economy didn't change very much. So the biases are certainly there on both sides. But the real question here is, first of all, to your point, why are stocks going down? If they're going down because people are looking and saying, oh my God, there's a recession scare, it's not going to get anybody happy, because that's job losses. People's wages are going to fall off a cliff. So that's one thing. The other thing is, let's, for a second, take the premise here. It is certainly accurate. And this, by the way, this is the essence of truly excellent propaganda. Truly excellent propaganda begins with a kernel of verifiable truth. Otherwise, nobody believes it. It is absolutely accurate that folks toward the lower middle and down on the income distribution are asset light, and younger people are asset light. Yes. But also the idea that the stock market has somehow ceased to be a sentiment indicator, magically, and that they don't care is ridiculous.
I don't think so. I actually agree with that part of the statement. I think that his first administration, people were pissed off that he was doing this, that he kept using the stock market as sort of his barometer of success. And I remember a lot of opposition was really pissed off. Like, that's not, the opposition would say that, that's not a reflection of whether or not there's good governance, of whether or not people are happy about the government. I tend to agree with that. And I do tend to agree that this second presidency, I think it depends. I think he'll take what he gets. If you get all-time highs, he'll be cheerleading the stock market. Yeah. But I think that's it's a low probability given the policies that they're implementing and the negotiations that they're attempting. And I think the much more likely scenario is that we're going to have at least the first part of his administration. That's not going to be the case. I don't think he's going to be cheerleading new stock highs. So the likelihood he will be finding other things to champion or to promote than the stock market. I think that's probably likely true.
I agree with you there. What I mean isn't his sentiment. I agree with everything you've just said. I don't buy the idea that people that are asset light are immune to sentiment signals from the stock market going lower just because they're not bought in, or they're not bought in to the same extent. Because I think those optics matter, and I can tell you why I think that. It is because the premise that young people are asset light ignores what they are not light on, and ignores the fact that we're still looking, despite some recent gyrations, at a crypto bubble that is primarily driven by young people's buoyant risk appetite. And they are paying attention. And the only reason you have this crypto bubble is because they are not risk averse. Go ahead, make them risk averse.
That's a really good point. So they might not
see if that doesn't make an impact.
They might not own a home, or they might not own Apple, but they do have a wallet full of fart coin, and so they.
Of course they do.
They're gonna be pissed. They're gonna be pissed off.
See, AMC to the moon, baby, diamond hands. What? No, that's boomer culture. Stop. Come on.
I think I can get down with what you're saying. I think what the faulty premise here is really, to me, is it ignores the idea that if you're asset light, what you are doing to feed yourself, which is exchanging your labor for wage.
Yes.
And it would be some sort of like Virgin Mary miracle if you could get home prices to come down and stock prices to come down, and one of these two things don't also happen. One, you don't lose your job, or a majority of this constituency doesn't lose their job, along with lower stock and home prices. To me, it was like, how does that work? That's number one. Number two would be, why wouldn't, in that scenario, if nobody's lost their job, which means we're in some sort of contraction but not recession, why wouldn't capital just buy up the cheaper houses and the cheaper stocks?
And
so
by
I
the
just
way,
think
what have we seen from the likes of the BlackRocks and the Blackstones of the world, and how much housing they own already?
It's a weird premise. I just don't get the premise that he's speaking to.
I think you can.
So the likelihood that you lose your job means you're pissed off, and if you're pissed off, you don't vote for the incumbent. So I just don't get this magical miracle world that he's painting here. That's my issue.
No, I don't get it either. I don't get it for a whole host of reasons. The one you describe is obviously the most straightforward and the most obvious, but I think there are other things, like this whole premise that Gen Z is immune to asset prices. I mean, these are the people who made all of the money in the tech boom right now. The past 10 years, they're asset light. All of them have 401ks. All of them check those. Like, these are wild generalizations. There is a kernel of truth to them, but
yeah,
I don't follow if X then Y logic that he's laid out here. I think he's ignoring wildly how things really work.
All right, my friend. Let's head back over to a topic. We had some more agreement there than I thought. I thought we'd be arguing about that for the next 30 minutes.
Don't worry, we've got time. We'll find something.
We do have a little bit of time, so let's go to Bitcoin. Why not? When in need of, so I'm not so sure we're going to disagree on this either. So on Sunday night, there was the tweet ahead of. So we got a couple of things coming up. We have Trump's address to Congress tonight, and then on Friday we have the U.S. Crypto Summit. Along with NFP, along with Jerome Powell's speech.
Yeah.
But I just want to focus on the crypto part of this. So on Sunday, President Trump tweets something about the Strategic Working Reserve, that he's instructed this working group, this crypto working group, to move forward with a strategic reserve. He tweets about 5 different crypto assets. I think it was Ripple, Cardano, Solana, Ethereum, and Bitcoin. I think we're the 5. Bitcoin has this crazy run, $10,000 on Sunday night, which gets immediately reversed. So I'm not going to ask you what you think about the price, because I know you're not a big fan. So I think you'll be leaning on the bear side no matter what. $1 is probably too expensive for you.
And you can't really short it, so I'm just standing aside.
But I'm more interested to get your thoughts on this idea of creating a strategic crypto reserve. The idea of allocating taxpayer dollars towards a basket that, of the top 5 most liquid of these crypto assets right now. What does Ilya Spivak think about that?
I was thinking about this the other day as I was reading the article about El Salvador abandoning crypto as legal tender in order to get an IMF loan.
Oh yeah, they were bullied into that. They don't want to.
But they needed the money though. They needed the money. Bottom line is, if they'd figured out the golden opportunity, and if everything was in fact so great, they wouldn't need the money. But they needed the money, and so they had to do what it took to get the money. So facts. They decided that they needed money.
Why would you assume that switching to Bitcoin would fix everything, every economic problem in their country inside of 2 years? I know, but that you just set up that straw man. You basically said
that's the
if everything was so fine, you wouldn't need the money.
That's what naive Bukele was trying to tell us, that he was going to turn El Salvador.
Why does the IMF care? That's why. Isn't that a better question? Why is the IMF bullying?
Because
them
I think the
into
IMF
this move?
cares. Because I think the IMF says we want fiscal rectitude if we're going to give you money, and we do not think it is a responsible thing to spend a bunch of public finances on buying this thing when you are asking us for more money because you are broke. So if you are going to do things,
I could take you to task on that premise.
It doesn't matter. Whether the IMF has made mistakes in the past, boy, have they. It's a long list. Whether they've made mistakes in the past in Latin America, specifically, long list. We could be here until tomorrow going down all the various things the IMF got wrong in Latin America. I'm staying specifically with this topic here now. I don't think it is illogical for the IMF, but that's besides the point. I think the creation of a crypto reserve in the US and the abandoning of crypto as legal tender in El Salvador is it's juicy coincidence.
Why? Explain.
One of the biggest champions of making it legal tender is having to backtrack. Meanwhile, the U.S. wants to lean in. Ultimately, and again, I don't think these things are connected. I don't think they're affecting each other. I just think that's why I call it coincidence. I just think it's fun optics for these things to be happening at the same time.
I agree. It's sort of it's juicy irony, I think.
Yeah, it's juicy irony. Exactly. I think from the U.S. perspective, I don't think the crypto reserve means much. Okay, have one. Fine. And I think ultimately the future of crypto, in my mind, has always been more about the technology than about this or that token. Because I think the technology is much more useful in the creation of a payment system that runs through the Fed efficiently, cuts out the banks, and makes transacting cheaper and faster for those people that are debanked and for those people that don't want to get hit with fees, and basically forces the banks and banking services into the kind of deep discounting and more broadly opening those services to more people that happened with the asset management industry, which used to be the province of rich people and went to deep discount once costs came down, liquidity improved. It had to basically become a mass market retail thing. I think to the extent that full service banking could become that and hasn't yet, and there's still crazy fees and the service kind of sucks if you don't have a bunch of money there. I think that's the disruption that crypto is going to have, and it's because of a digital dollar built on blockchain technology that allows the Fed to basically say we can give people payments clearing without them having to keep their money at a bank necessarily, and to lower those fees that banks charge and all the other juice that the banks extract from the financial system intermediary function, especially at the retail kind of consumer level. So to me, the government becoming a giant holder of crypto after the government basically institutionalized crypto as an on-exchange asset by allowing the ETFs, what it does is it basically takes crypto further and further and further and further away from being an alternative, an anti-government other system, and instead brings it closer into the purview of the man. And I always expected this was what was going to happen.
Bro, it's like we're dancing. Did you watch yesterday's episode or something? I said yesterday, I go the minute BlackRock launches an ETF and starts accumulating this stuff with other people's money and then puts out a report that encourages people to hold 2 to 3% of their wealth in this asset, that's the moment this is no longer an anti-institution.
These aren't pirates anymore. Yeah. If you thought Ross Ulbricht was the dread pirate Roberts, let me tell you, you're living in yesterday's narrative.
I said the same thing, bro. What the hell's going on with this episode? This episode's called Common Ground.
I mean, listen, if you wanted a reason to get on the short Bitcoin side of the equation, let's go. The weather's warm. Because what this means then is, again, that the future of digital money is digital government issued tender. It isn't any of these other things. So if you've been hodling all this time, if you're Michael Saylor and you've been hodling all this time, Bitcoin specifically, you were right thematically that the technology is transformational. What you're not going to get is a parallel anti-legal tender payments system or money.
I'm not so sure. I think it's easier to use Bitcoin as a Trojan horse than it is to introduce a new thing and force everybody into it. I'm not so sure.
You might be right. I don't have a strong. I do see what you're saying, and that was always the case against Bitcoin. That at some point the government can just wave the magic wand, and it's gone. But I think if that was the case, it would have been done already. And if that was the case, I don't think these major institutions would have. They could have easily done this. I don't think they want to kill it. I think they want to co-opt it.
Exactly. It's serving some useful purpose.
No, they want to co-opt it.
I think that's why it's still here.
I don't think they want to kill it. I think they want to co-opt it.
Yeah, I agree. All right, man. This is weird. I don't like agreeing with you. But I don't love the idea for other reasons. So let me run this by you and just get your reaction. I don't love the idea. I think you are somewhat neutral on the idea. I don't love the idea of a Bitcoin or a strategic reserve.
I don't think it's a good idea. I just don't think
I don't think so either. I think he's paying back. I think he's paying back his donors.
Maybe so, yes.
I think he's paying back his donors, and I think I don't love situations where we do government handouts. On the left, it's like, I'm going to give billions of dollars to Intel, and that's how we're going to, you pick a winner and then you give them a bunch of money instead of creating an incentive structure that's going to get a bunch of participants to compete for that outcome. I would much rather see us do smart policies like that, but instead we go, hey, Intel, you're strategically important, or hey, bank, you're too big to fail, here's some money. Like we do that, we say,